Good morning, Pete Momat. I'm Glenn Freibarger. Welcome back to Tasty Live. We've got Forex Focus for you first up. Tuesday morning. How you feeling, Pete?
Good morning. I am feeling fantastic, Glenn. How about you?
All right.
You look great. You know
Thank
what?
you.
Subtle, wonderful shade of green. Very rich, very bold looking.
Thank
you
you.
look fantastic, my friend.
Thank you. I am blending a little bit into the background, but yeah, I don't know. I haven't nailed down.
I got to tell you though, the complexion, the whole cold plunge, red light, whatever, the magic you did over the weekend.
It's the vitamin C shower.
You're all right. I can't. What is that? They give you a chewable and then hit you with a hose?
Yeah, orange flavored.
Yeah.
Yeah, no, they just have a bunch of high C coming out of the faucet.
Like Kid Choice Awards where it comes down, like on the goop.
So
what is the vitamin C shower?
I don't know. It's a regular shower that has like a little extension that with like orange liquid. The water comes out normal, but they say that's where they infuse it. I don't know. I thought
it was the salt scrub thing. It wasn't the salt scrub thing?
There was no salt scrub.
Glenn had a spa day over the weekend, guys. So
I did just a little.
I guess you'd call it. Do they call it a spa or not, or is that like too cliched now?
They call it some sort like a wellness suite or something.
Right.
Something that makes more sense. But yeah, the one thing I haven't nailed down for this morning show is getting rid of the bags under my eyes. Got to figure that one out.
Now, wellness suite, these individual rooms where you went with you and your significant other. Hey, Beth, are you still on? Is Beth there? She's not there. But
we'll
talk
yeah,
about.
She's there.
We'll talk about this. 20 years ago, they used to have wellness suites that were a little bit different. I forget what they were, but I can't remember what they were called.
Sounds like more fun, less fun?
There was no cold plunge. There were pools, but a guy that we all worked with, one of the pools had a slide, and he broke his arm on the slide.
No way.
So, needless to say, yes, stories for another day. But
do you have a slide?
Well,
you don't have a pool, do you?
No, I'd love a pool, but you know what? I mean, it's a 3-month exercise in Chicago.
Yeah.
I mean, you're lucky. It's April 1st. I just put the garbage out. It's freaking 40 degrees. I don't think a pool's going to work.
Yeah, and it takes like a whole summer, so you can't even I'd be impressed if you could stand it up and use it one summer. TJ's got a pool.
Yeah.
Does he have a slide?
TJ's got a beautiful pool.
I'll ask him.
I don't think he's got a slide. But he's got a beautiful pool.
All right.
With kids and everything, yeah, I think it's great. I'd love to have one, but it's just, I don't know. I got to figure out.
If you can, you're in charge. So if you can coordinate a team outing at TJ's pool.
Cut that paste. Let me cut and paste that because I need to deliver that messaging to my family because nobody else ever tells me I'm in charge. So that's good to hear. It's good to hear. Yeah, and you and your guys could. I mean, it would be like open season for you guys.
Oh yeah. Don't let me near TJ's pool.
No, and we put Frank in the jacuzzi because it's only 3 feet deep, so it'd be fine.
Can we still get him the arm floaty stuff?
Oh, the wings? Yeah. Absolutely.
The wings.
Absolutely. Safety first.
And a whole bunch of sunscreen.
Yeah, he just sent me our friend. Mr. Caberna, Frank Caberna in Japan, just sent me some great pictures. Wow.
Oh, really? Yeah, they're on the trail now, right?
Yeah.
Yeah,
so I imagine there's got to be a kimono video coming anytime now.
God, I hope so. I couldn't find. I went senior year of high school with a school-related function, and there is a picture of me in a kimono somewhere. I can't find it. I appropriately scrubbed it. But even now, now that I have no shame, trying to find it again, I don't know where it is.
Yeah, but he is doing, I think, the walking trail thing now, where they stop at I forget the term, but the equivalent of Japanese bed and breakfast, and then start up on this trail. So
exciting
good luck.
stuff.
The pictures look amazing. Every picture looks like a postcard, and friends of mine have gone over there, and it's always the same thing. Every picture looks just. There's not a stone out of place. It just looks beautiful.
Wild.
So,
What are you looking at this
but
morning? What are we getting into?
I don't know. Interesting month end. Interesting in the fact that everything moved but FX.
Yeah.
It was a really quiet. I watched 10 o'clock our time, 10:30, 11. There was nothing. Movement in equities, movements in metals, movements in rates, crude, big up move to crude to almost $72 this morning, but really undersized moves in the dollar. It's probably one of the quieter days we had. Dollar a little bit stronger. We saw some selling in Kiwi, Aussie, and Canada. This morning, euro giving back some ground. Yen, the only thing performing well. Dollar yen being sold a little bit. Everything else pretty quiet. So
yeah, at least you did see some drifting. It wasn't euro definitely inside day, but this yen had an interesting session just with that reversal in rates. I was just looking at the yield on the 10-year, and that chart matched exactly to this one when I was checking in midday that we had overnight. That got hit hard and then right back. So lining up, but bonds this morning back
higher.
Oh, okay.
Yeah, they're actually staging a little bit of rally. They're at their highs right now, and with that rally in bonds, surprise, surprise, we're seeing selling in dollar yen. So we know it's not perfect, doesn't work one-to-one, doesn't work all the time. But my point being, euro's plumbing lows right now. Well,
oh wow,
the yen is plumbing highs, or dollar yen is the yen's plumbing highs, dollar yen plumbing lows. So two currencies moving in absolutely the opposite direction. And you would think, okay, maybe buying some dollar yen down here would be interesting because it should probably catch up to where euro's down, sterling's down, Swiss is relatively flat, but just say euro and sterling. But the one thing that gives me pause is this is why we talk about connectivity and correlations and put it in its place. Not overwhelming, but in its place. I'm not inclined to buy dollar yen down here if the bonds stay at their highs going into the U.S. session. I think maybe if you want to be the contrarian and buy some dollar yen, you do it at better levels.
Sure.
But I don't think this is disconnected from the other dollar pairs. Yes, interesting in terms of a contrarian scalp of buying the range here, which is that lower end of 148.90. I don't know.
Yeah, is 149 interesting? I saw, I think, a commitment of traders report that yen futures, this was the highest level of speculators long yen futures. Is that, I imagine that's a fairly large group of people, but does that have any sort of sway on anything, or is that just kind of an observation?
It's a great question, and what Glenn is referring to is the CFTC puts together for futures market. They bucket traders as asset managers, large hedge funds, large traders, and then small traders. And it used to be that small traders were the dumb money. If small traders were long, you wanted to be short, and vice versa. That doesn't hold true anymore.
That's good.
And especially
reassuring.
It doesn't. And the other thing is too, if you're a primary market like Commitment of Traders report looking at the wheat market is valuable because there's no other way to trade wheat except wheat futures. So that really shows you the mixture of hedgers and users and stuff like that. When we look at that Commitment of Traders in FX,
gotcha.
You don't know what portion of that is people long futures and short spot or hedged without knockout options or whatever. So I think when you look at products like, I know a lot of guys sell studies about ES, Commitment of Traders reports. Again, SPOO positions are always hedged, not always. Obviously, people use them for directional exposure, but so much of that commitment is a lot of times put off against something else.
Right.
So it's not real true commitment. It shows asset managers with a huge long position in SPOOs. Ooh, the smart money is long. Well, no, they're not because there's short calls everywhere else. So I think you look at it with a grain of salt. It's a good call out, but it's something that, like our client sentiment, it's interesting, part of the decision making.
Yeah. So here, I mean, this is interesting because we still have 54% of IG group clients short this dollar yen market. But if we look at the recent time periods, we're seeing more buys recently. So maybe this speaks to a lot of position traders in this market, a lot of people holding short positions. Perhaps, I mean, good for them if it's from 160. But yeah, just not letting go. Does that make sense that more people would have position trades in this market than try and maybe intraday scalp, or is that the wrong way to read it?
No, I think that's a great way to read it. And I think the consistent long we saw in this with the carry, again, you getting paid to be long dollar yen, is a little less interesting. It's still positive, but not as compelling. And you're getting two-way price action. So no. So, and the 54, you just talked about futures being long. Mm-hmm. Futures are quoted as the reciprocal of the way we trade dollar yen.
Right.
They're yen dollar.
Yeah.
So they're both saying the same thing, is that the market itself is wanting to own more yen and wanting to own it for a longer period of time. So I think that is when you look at this, there's a lot of information there. That's a great takeaway from this, Glenn, is you're absolutely right.
Interesting. But would you say because of that carry trade implication, that this market is more susceptible for long-term positions, or do you see people holding euro dollar the same? Excuse me.
No, I think there's a mixture of both. Yen, I mean, euro, lower end of its 15-year range, absolutely. Yen, higher end of its 30-year range, by far. So if you're looking for, there's just going to be a general, all this uncertainty with tomorrow's announcement and everything. Dollar's going to lose its status as an interesting place to hold money, and there's more risk. You could see that play through, and again, being short some dollar yen and holding on to that is kind of a strategic hedge. When you talk about, it's not even correlated to the FX pairs. Mm-hmm. It's weaker, much more weaker correlated, completely uncorrelated to the U.S. equities market. If you're looking for uncorrelated exposure and you're looking to diversify a little bit, those dollar yen shorts or yen longs really start to make a little bit of sense from that perspective on a longer term view.
Yeah. And here, just looking at euro dollar sentiment, seeing the same kind of thing where we have the majority of traders short, as we know, a big run up in recent weeks. But looking at even, I don't know if this month means, I'd hope it means 30 days and not, start of April. But all of this recent trading activity kind of trying to pick more of the range bound that we've established here on the lows, whereas we've got a lot of people just in for the long haul for maybe a reversion towards parity.
Absolutely. And a skosh under 108 is, we've just about covered the range. Yeah. So we had the rocket ship from 104 to 108.5, punched through, almost up through 109.5, 109, 10, 20. And now we're back at the lower end of the range. I think this lends itself to, you take it's funny, this is some time you take the markets as they are.
Right.
And right now, this is giving you a different trading. This is giving you a more active, you look at this chart, if you're a contrarian or a range trader, this is giving you a lot of opportunity on both sides. It's giving you the ability to fade extremes, manage them, reestablish shorts if you want to do that and you have a bias, or buy a reasonable pullback, which I think we can argue a 10.5% pullback is a pretty good pullback to buy and get some joy on it. So this is it. As long as this range holds, this is giving you a really nice setup for back and forth. For dollar yen, not so much. And
Yeah.
Kiwi and Aussie, definitely not.
Fair.
But on sale.
Yeah, definitely. But been on sale for a while now.
Yeah.
Let's get over to some slides I pulled together.
Fantastic.
Just thought it would be a fun exercise. Here we've got, it's April now. Happy April. April Fools. April 1st. So I thought we'd recap what the biggest monthly movers were in major FX pairs for the month of March. And we'll see some not surprises. I'm sure you already have some speculation, some hypotheses for what was moving the most. But I think we'll churn through the top 10 of major dollar and non-dollar pairs, and then try and look for some trends. There's some cool takeaways. When you're looking at this intraday, hard to kind of zoom out and see where we're at. So we'll take it from number 10. We've got Australian dollar, New Zealand dollar, popular Australasian cross, with New Zealand dollar coming out on top. Percent change in March, 0.85%. Coming in at number 9, we've got New Zealand dollar, Canadian dollar, up 0.89% in the month of March. So New Zealand dollar again coming out on top. Number 8, going over to Europe.
Yeah.
We've got the euro versus the pound, change in March plus 1.4%. Coming in at 7, we've got Kiwi, New Zealand dollar versus the U.S. dollar, up. New Zealand dollar gaining on the U.S. dollar in the month of March to the tune of plus 1.42%.
Hey, Glenn, is this from high to low or from low to where we settled the month?
This is start to finish. So not incorporating, and we'll come back to this gigantic run up. New Zealand dollar could have been the outperformer.
Could have been
if we took it mid.
That's still
mid-month.
Interesting. We gave back so much ground, but still a big percentage move.
Yeah, absolutely. Coming in at number 6, we have British pound versus the Japanese yen, up on the month 2.02%. Number 5, U.S. dollar, Swiss franc down 2.03%. Another European currency taking it to the U.S. dollar. Number 4, cable. We've got British pound against the U.S. dollar. Change in March, a pretty staggering plus 2.64%. And coming in at number 3, euro yen. Some say the most popular dollar cross, non-dollar pair. Euro against the yen, appreciating 3.42% in March. Number 2, another euro against the Australian dollar, coming in at plus 3.48%. And number 1, I'm sure you would have guessed it, nothing outperforming better than the euro against the U.S. dollar in March, up 4.05%. Just a crazy move, and took it there very early on. I mean, we got to where we finished by the 10th day of March, and did get higher, but still settled at the time I clipped this yesterday above 108 after starting the month around 104. So here we've got the full list. We can go back to any of the charts you want to see, but just a couple takeaways from me, and then we'll look at the actual tape action. U.S. dollar, not its month in March. A lot of currencies able to capitalize against it, and I mean, dollar yen now would be in the mix here. Yesterday, it ticked back higher above 150 at the time I clipped it. So it was at around 1.2%, and then it got erased yesterday to around only 0.6% to the downside. So that did not make this list, but very easily could have now. Euro across the board taking the 1, 2, and the 3 spot. Sometimes you think that this maybe would have been a dollar story, but now in March, definitely a euro-led story. Taking it to U.S. dollar, Australian dollar, and the yen for a lot of percentage gains. New Zealand dollar was a healthy performer, but man, it could have been a lot more, as we saw and as you called out. Could have been to the tune of multiple percentage points against a lot of pairs, but able to not only capitalize against the U.S. dollar, but against the other commodity currencies as well, Canadian dollar and Australian dollar, to lesser effects. And the British pound also hanging in there, but I don't know, what it looks like to me is a lot of euro momentum, a European Union-led story, where, of course, they're going to get some reciprocal love, but not outperforming in the same way at all, as well as, the Swiss franc taking some of that as well. What are you looking at? What do you want to go back to?
I think this is a fantastic walkthrough because it really adds zooming out a little bit to context and what's tradable. And I think when you look back, I mean, tariffs have been on everybody's mind January, February. Well, tomorrow's supposed to be the big day. You would have thought March would have been all about buying dollars because everything's going to be more expensive. This is how the market prices efficiently. Market was having none of it. They were like, yeah, go ahead. You do whatever you want and possibly damage your economy. We're going to look through the lens of that. And I think that what we saw in terms of movement was really fascinating. For me, I think the idea that overwhelming euro strength from the dollar and non-dollar pairs says that we were just talking about a range to trade in euro, and that's an awful lot. That's a dramatically higher range than it was early last year, which we would have said is 102.5 to 105.
Definitely.
We're now saying it's 107.5 to 109. But when you look at the momentum, not only against the dollar but against everything, you accept the range. Yes, I will buy that, which I would have thought 3 months ago was a very high level because it's 170 pips off the highs. That's a tradable range because you're going to where the market is giving you and demonstrating by a tape action strength. The Kiwi story, boy, it's interesting. The fact it couldn't hold on to the bulk of those gains. I mean, that was multi-year lows it plumbed.
Yeah. Really right around the month start. So, I mean, we got as high as 58. Not sure what the percentage would have been, but I'd guess 3, maybe 4%, low to high.
And here's a case structurally. We're back through where it had paused the first time. If you want to, is it cheap? Sure, it's still cheap. Not quite as on fire cheap as it was at the lows, but tape action wise, it's not telling me that there is a lot of interest to, in other words, the construction of what we're seeing in euro, higher highs. When the pullbacks come to the downside, they're higher lows. They're not plumbing down through the range. Here, it's plumbing through the range. I'm not saying that means it's weak enough for me to sell, but I think when you pick, don't try to pick the catch-up. Well, this is giving back the most, so it should snap back. Accept what the market's giving you, which is a little bit less productive environment. Now, long-term, if you think the dollar is going to have a hard time this year, this is an interesting pair. Aussie too, even though it has a given. But if you're looking for a scalping opportunity, I think you've identified the ones. And things like euro yen, guys, we should all be comfortable that whether it's got a USD in base or quote currency or two others, as long as there's liquidity and tape action, we're good to go with it. It's the whole thing we talk about in the world of tasty options. If the underlying has liquidity, I don't care what symbol it is, as long as I can get in and out and it has volatility. Same thing here. And this is one that is, again, holding an interesting amount of the bounce here, and plays a little bit out the same way. And I think it's this has been a pretty big move for a pair that usually doesn't have that same correlation. Even the euro sterling pair, which was really interesting. And was your sterling number 4? This is a big move. This speaks to, okay, what does that tell me? Euro is killing it against the dollar. It's killing it against everything else it trades against. There's a lot of strength out there. Can that revert? Sure. But I am going to till the market demonstrates it, I'm going to lean. If I want to be long, I'm going to lean on the one that's performing on a pullback. If I want to be short, I'm going to pick one of the others.
Yep, you got it. Yeah, a lot of potential opportunity out there, a lot of different pairs moving. That'll do it for our monthly movers of March. New month, same markets, but new stories every day. So thanks for tuning in with us. Up next, we've got Tom, Tony, and Vanetta coming at you for Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Trade size varies between traders. In a larger sized account, a trader might trade 10 contracts per transaction. In a smaller sized account, a trader might only trade 1 contract per transaction. The term tranche allows us to quantify and size to a common denominator. 1 tranche would represent normal trading quantity. 2 tranches would represent 2 times the normal quantity, signifying a larger trade size. Of course, trade sizing is immensely important. We recommend a tranche being far less than your max exposure.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. happy Wednesday to just you, my friend. You again, I should say. I mean, I had dinner with you last night. It was a late night, Sosnoff. I mean,
It was a late night. It was way past my. We should not be going out on a school night at 6:45.
You know, when you were saying that yesterday, I was kind of laughing at you because it sounds so early. But it's just like when you say, like, we should do this party. Yeah, it sounds like a great idea. Let's do it 3 months from now. Okay, great. Then 3 months comes around. You're like, you don't want to go to the party. It's too late. You don't want to be there. It was the same thing. 2-hour dinner with you guys. I'm in my PJs by then. I mean, I actually had to take my PJs off to get to the restaurant at 6:45. I mean, we didn't take any pictures. We were off our game, Sosnoff, off our game.
I was off my ordering game. I didn't do good.
I never see. I
know.
Really.
I was
sitting at the opposite end of the table for you. We had a beautiful round table, by the way, in the main dining room. I made sure my girl was taken care of. You were facing the bar so that you could get all the wanting stares as people walk by.
Local celebrity. Thank you.
They put you and Slappy facing the bar. How disgusting and disappointing is that for the rest of the patrons? But anyway, they leered at you and gave you a little wink every once in a while. You know how it is. But I was away from you, so you did like a rookie move. Like, you shared a meal. I hope Shark isn't listening right now.
No. I didn't share. We shared 2 meals. We just split steak and chicken. It was like
I know, but nobody does that. That's like going to the smorgasbord, and trying to.
Yeah, honestly, it was a mistake, and it was Jules' idea. I blame him 100%.
Even from the afterlife, Jules is able to screw things up with you. Yes.
Yeah, but you know what? It wasn't great. It wasn't very good. It was not my favorite at all.
You ordered the wrong thing.
I know. My second straight time there ordering the wrong thing. I know. You know what? At that place, you just got to go with steak.
Yeah, or the chicken, Joe. You get what you get.
No, I know. I messed up.
I got the bone-in pounded veal chop parmesan. It was amazing.
It looked good.
I tried to give you some. You didn't want to.
I already had. You know how much food they give you there? It's ridiculous.
It was disgusting. It was true.
Yeah. I couldn't even look at it anymore. But yeah. Listen, it was great. It was good. It was good.
Mm-hmm.
Fun.
It was a fun night. Happy birthday, Slappy. I'm glad it's over.
Yeah, me too.
Yeah. I wonder if Slappy went home and
easy.
Got room service.
I'm not commenting on that.
You don't think he got room service? Single guy, 60 years old. I'm thinking room service. I'm thinking room service for sure.
I'm thinking Todd.
I'm thinking Todd waited by the elevator to escort the room service. That's what I'm thinking.
I don't think so. But you can dare to dream.
Yeah, I know my Slappy. Anyway, happy birthday. So what did you do in the 32 minutes that you were up last night when I didn't see you? It took you about 32 minutes to get home, didn't it? Then you crashed?
Oh, you mean after the game, after dinner? Yeah.
Mm-hmm.
After dinner was no traffic. The traffic was bad going out there. There was no traffic coming home.
Yeah, of course. It lights up after the rush hour for sure.
Yeah, I mean, you know what?
That's the one thing about going home in the wee hours of the night at 8:45 p.m.
That's the worst part about going home in like the 5th or 6th inning of the game. Yeah.
Uh-huh.
I was disappointed in my performance, but whatever.
So were we.
Anyway, it was a fun night. It was really a fun night, and yeah, it was all good.
It was all good. Fun time. And now we wake up, sound up to the evening S&P down just about 50 handles here, making a new low.
I didn't see this coming. It's weird because last night they were down a little bit, and I'm kind of like thinking, you know what? I mean, here, I'll put it up bluntly. On the close yesterday, I thought this morning would be an up opening.
Why don't you tell everybody so we could fade you?
Well, they kind of closed them kind of strong, so I tried to flatten out, buy a few deltas on the close, which I did, which I'm now going to pay for with my.
You told me you weren't adjusting. You said that's it. I'm done adjusting. You even started the show in the afternoon saying you were done adjusting. Now here you say, I'm going to adjust again.
No, I did not adjust yesterday basically at all, and it worked. Today, tough question. I don't know if I will adjust or not.
Well, you went with your assumption yesterday. Yesterday, we thought we would have a chop around day. At least I said it with a lot of conviction. You kind of just rode my coattails on the comment, but you stuck by your guns. Yeah, sure. I'll give you that.
I mean, yeah, yesterday I didn't adjust. Today I felt like, well, today, I don't know. We'll see. I felt like they would open higher today and potentially go lower as the day went on, or they'd work their way. Last night, I think bonds were down about, I want to say almost under 118. I think they got under 118. And I was watching bonds and overnight, and I was watching the S&Ps, and they were down, I don't know, 5, 6, 7, 8, that kind of thing, all night long. And I'm like, all right, this is the typical open down, 5 handles. Next thing you know, they're up 15. And so I felt pretty good about it till this morning when at about 5 a.m. or so, they kind of pulled the plug. Next thing you know, they were down 5. Next thing you know, they were down 30. Yeah. And then now down, 50. This is definitely there's definitely a different tone to this market that we haven't seen for a long time. I mean, we've spent 15 years or 17 years buying every single dip, and now they're selling every single rally.
Yeah, it does seem like it does have a different tone to it, and volatility is kind of reflecting that too. Volatility is already up 95 cents. You remember yesterday when we were at this same level, volatility was only up around 40 cents or so. So it's doubled volatility move for the day, what we saw yesterday. And it does seem like there's overhang in the market that every time it lifts its head up a little bit, it can't sustain more than a day and a half rally. I'm going to give you that too.
Yeah,
but that makes for that two-sided market that we've been looking for years now. I mean, maybe
this is actually starting to remind me a lot of in 2008, in the end of 2008, it was really ugly. This is not nearly as ugly as 2008, but at the end of 2008, it was super ugly. And I remember though, it felt like we didn't go anywhere because even though we were drifting lower, even though we kept drifting lower and drifting lower, it always felt like the rallies were violent, and you never thought they were going to have that another leg down. And this has been kind of the same kind of thing. They look ugly, they drift lower, but you just don't really believe yet that they're going. You don't think that they have 5,000 written on them. That's all.
Yeah, no, totally agree with you, 100%.
Yeah, there's a lot of there is no question. This is the first time in 2020 during the pandemic, I think everybody wasn't really nervous about the market so much as they were just nervous about the unknown. Am I going to die? It's a reasonable question. Am I going to die? And so the market sold off, because people were, just, you get your stuff in order type thing.
Sure.
In most market sell-offs, it looks more like this, where it's kind of like, a stair step down, and the rallies are kind of violent, but the sell-offs feel normal. Whereas in bull markets, the
sell-off feels weird. Like, oh my God, what's going on here? This is such
and they don't hold.
Opportunity.
And they don't hold. And the short sell-offs are a little violent in bull markets, but then they immediately pop back and everything's okay. This seems like the exact opposite. I mean, we'll see how it plays out. But this is across the board. This is across the board.
I think you could almost look at volatility for that scenario that you just painted. If you look here, like in February, before February, this is a year-to-date chart of volatility. So you go January to February, you have that kind of normal-ish market, volatility really going nowhere, contracting most of the time. And then when February came around, you got that stair step, which is kind of like that back and forth action in the market, but those sellers being met, because remember, volatility moves the opposite of the market. Volatility continues to keep going higher. And you get the same thing here for that little blip for, maybe a week or two earlier in March. And now you get that stair step again in that market where the rallies are being met by sellers. And we'll see if that continues now or we continue going sideways. But it gives you a lot of opportunities. So you've got things now where volatility is staying bid in products like the SPY, the Qs, the IWM, where IV rank is in the 30, 40s, and 50s these days, where it used to be in the teens and 20 would be an anomaly. You wouldn't, you would say, wow, volatility is so high in the Qs or SPY. Now it's doubled.
Yeah, last night, I don't have a big position on like in Meta or some stocks like that. But at the end of the day, I was like, God, I can't believe I didn't get long Meta at 575 or 565, whatever.
Now here we are again.
And here I am. And there's other stocks like Nvidia. I'm like, I can't believe I sold out my Nvidia at 109 yesterday. It closed at 110. I'm like, I was so mad at myself. And then you look at it and you're like, what the hell?
Yeah.
And there were some crazy stocks yesterday. I mean, CoreWeave was a nutty stock because it was up like $15, and then
what's that do this morning? CRWV.
Yeah, it's down like $2, but after the close yesterday, it was up like $3 more.
Yeah.
But the crazy stock is that crazy Newsmax. I don't know what it's doing this morning, but
it looks like 170. It's 180, so it looks like it's down around $55 after being up $150 or some crazy number like that. Yeah.
But do you know that after the close yesterday, it was up another like $10 or $20?
What $10, $20 when it's up 150? These numbers are just
No.
I didn't think I'd be quoting those kind of numbers in my career.
I understand, but what's funny is I got to bring up a point about this. And I couldn't care less about Newsmax. I don't have a position on there. We've never traded it.
It could be ABC stock. There's no option.
It could be ABC stock. But here's the interesting thing. When stocks like GameStop had those kind of meme stock moves like this one is now, everybody would be like, oh, it's a gamma squeeze.
Yeah.
Everybody was like, it's a gamma squeeze.
The market makers are short.
The market makers are short.
The public finally got them. Those bastards.
Yeah. It's a gamma squeeze. Uh-huh. Well, how do you argue?
Explain that.
Gamma? Yeah. How is it a gamma squeeze in Newsmax when there's no options?
Yeah.
So that's all I was thinking is like, okay,
it's a preemptive gamma squeeze.
Yeah. I mean, it's just like people just make up stories. We used to say it's not a gamma squeeze because it was always, that always drove me crazy. Mm-hmm. And then, but here in, Newsmax, how's it a gamma squeeze? It can't be. So, I mean, I do think that it was a short squeeze because I do think that, intraday, certain firms for professionals let you sell the stock. And I think they got caught. On the retail side, we don't let people, no retail firm would let anybody short that stock.
It's not a matter of you, that's the rules.
Yeah. We wouldn't, no retail firm would let anybody short that stock. So no retail customers got hurt in that move. But professionals, I think they got destroyed.
Yep. Yeah.
Destroyed.
Yeah.
And that's ugly. Yeah, like I said yesterday, I go, if they had options, the puts that were $150 out of the money would have been trading, almost at full value.
That's correct. We talked about, you saw it in GameStop, basically the same thing.
Yeah.
Yep.
Yeah, GameStop was crazy. Yep. But the only good thing about that Newsmax would be that if they had options, the premium in there would be off the charts.
400, 300, whatever.
Oh yeah, 300 at least. You'd be able to sell 500 calls for like $5.
Right.
And that I think would be interesting,
And you'd be able to sell 100 puts for like $95.
Yeah, but that's what I thought about GameStop, and selling the 500 puts for $5 didn't exactly work when they were 50.
Right.
Yeah. So anyway, this is the fun thing about markets. Those are the kind of stocks you got to be careful. And I'm sure there are plenty of people that thought, oh, this is a $14 offering. When it gets to 50, I'm selling it till my hands bleed. And when it gets to 100, I'm doubling up. But when it gets to 200, I got to buy it back.
Right. Yeah.
Totally. You got to be careful of that stuff.
Yes, you do. Yes, you do.
So pre-market this morning, I mean, I'm looking around. I mean, everything's lower. There's nothing that's let's see if there's anything out there that kind of like is shaking, that rattling trees or something. I don't see it. No.
I mean, there's no
real outliers.
No big commodity move here. I mean, even Bitcoin is hanging in there at 85,000. I think this is all equity related right now. Oil's basically unchained down.
Oh, it's 100%. It's 100% equity related. And
so opportunity, Sosnoff. Here we are back at 56.25 or so. I mean, the lows were a little bit lower at like I don't know, 55.60 or something like that.
I mean, S&P's down 120 today, and there's probably some points down there if you're thinking triple bottom type stuff. If you're a triple bottom player, sure, I like the risk reward at 55.50. I do.
I like the volatility too.
I like the risk reward there. I like the volatility there. I'm not buying them here. I mean, we're going to be a little long on the opening just because that's how our positions are going to play out. The question is, do we roll down calls? And
I was just going to ask it to you. So do you?
I think so.
I think you have to. I think today's a different day than yesterday, and I think you're going to get whipped around. I think you're going to end up being paid in the long run if you stay mechanical.
I think so too. I think you're going to get paid, but I think it's going to be a tough morning. You're going to have to suck it up and roll in the hole, and I mean, I'm only going to probably roll 5 different stocks, and I'll roll them all in the hole. And
do you play a little one-day move? I'm just trying to think, what the future brings. I'm trying to play the crystal ball. If let's say we are down 50, 75 on the E-mini S&Ps, do you play a little longish delta one-day play, puts a little bit closer than calls, and play that game, or do you do nothing in a 0 day?
I'm probably not going to do anything today. I'm trying to tighten on my positions because I'm going to be on the road for the next 2 days.
That's why I put the 0 day out there and not a long-term position. Yeah.
No, I got to be careful because I have made.
Because your wife gets mad at you on when you're on holiday. She
does not get. She does never. She does get mad at me, but never for trading. But
because you have to be offline. Didn't you make a promise to your son? It's your son's wedding, right? I mean, you're going to be offline for the weekend.
No. I just said I'm not answering emails. I'm not working this weekend. But I mean, I'll be online. I'll be trading tomorrow morning and on Friday morning. But
okay,
I just disappear. I just go into like I'll go out by I go into the cabana at the pool and I'll just sit there. It'll be
commode.
It'll be like
sit there.
It'll be like 6:30 in the morning. It'll be 45 degrees and I'll be sitting there by myself and I'll be as happy as could be.
With the towel over you and one of those big curtains that block you because you're just like a celebrity.
Yes. Yeah. Don't worry. My wife will be fine. She'll be like, good riddance. Get the hell out of here. I'll be fine.
Good. Well, we've got an option jive at the top of the hour. We got what's your assumption after the market opens at 8:40. So you're going to be putting some trades on. Then we got the skinny on options math. Also, we got Johnny trades today. So we got a full show for you, Sadnoff. Why don't we take a quick 90-second break? We'll come back. We got the anticipated and long awaited for Confirm and Send, Sadnoff. We'll be back in.
Yeah, you got Jacob in the house today, and also Dylan and I are doing Truth or Skepticism at 1:00. So we got some fun topics today. So it's going to be a good one.
Very good. We'll be back in 90 seconds. Let's Tasty Live.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, my friend, with confirm and send. Let's do it. We just talked about the market. We don't have to do that again. It hasn't changed in that 90 seconds.
No, it really hasn't. It really hasn't. And I don't know. I think the next 3 days, they're going to be pretty volatile.
I tend to agree with you. I mean,
which is no different.
Chin straps, my friends.
Which is no different than the last 3 days, but it's going to be pretty damn volatile.
Mm-hmm.
So, yeah, you're right. Button up your chin straps. All right. Well, we got a lot of confirm and send questions today because Vanetta is playing hooky.
Yeah. She'll be back on Monday.
No, she's doing the show tomorrow.
No, Friday. Tomorrow. Oh,
yeah.
No,
good. She's on air.
Hardest working gal at Tasty.
What's she doing?
Hardest working girl at Tasty. She's
100%, 100%. I saw her hotel room. She doesn't look like she's working that hard. Look at that nice hotel room. She must have like an upgraded points and stuff like that. If you put me on the road, my hotel room never looks like that.
In New York City, my last hotel room in New York City, when I was on the road, was like, I couldn't fit in it.
It was so big.
Yeah. All right, let's do it. Let's see what we got.
I'm ready. Let's go.
A little confirm and send. Hold on one second. Let's just take one quick look here. Perfect. Okay, so these are emails that came into us overnight from viewers all over. Parts unknown, as we like to say. This person writes, let's say I opened a new position, selling a put spread, for example. But after a couple of days or a week, I don't like my position anymore. So although I haven't reached the 50% max profit or a significant loss, I just don't want the position. And here's the question. Is it important to stick with the position if the implied volatility is still elevated, or should I trust my gut feeling and just take the position off?
I mean, here's where a little bit of market awareness comes in. Here's where a little bit of your own opinion comes in. And as I read through here, I think you kind of lean in the same way I would lean on this kind of hypothetical question you're asking. I would look to close it. I mean, if a high IV rank and you still like the stock, I would put on another strategy. I mean, there's no wrong answer here because I don't know what the future is going to hold. But I like ringing the register and recentering or repositioning, or maybe I had a position with undefined risk and I put a position on with defined risk. I like being active more than anything. I think as active as you can be is probably as smart as you can be.
You know, So
if you said IB rank was low in here, I would say close it. Doesn't matter to me. Now you said it's high, so that's why I answered the way I did.
Yeah. So what are you doing? Are you keeping it on or taking it off?
I am probably taking it off, Savnov.
Okay. Here's the thing. You should never do something, or you should never have a position on that makes you in any way, shape, or form uncomfortable. So that your comfort level pretty much overrule. If you're indifferent, then you leave the trade on if IV is elevated.
Right.
If you're uncomfortable because you don't like that position, take it off.
Mm-hmm.
Doesn't matter whether it's a small win or a small loss. It doesn't make any difference at all. If you're uncomfortable with the position, take the position off. You should never have a position on that you are uncomfortable with at all. If you are indifferent completely and the implied volatility is low, take it off. If the implied volatility stays high, implied volatility rank, then you leave it on. But if you're uncomfortable, take the damn position off. Don't even think about it again.
Mm-hmm. Mm-hmm.
You know, you should never have something on that. This is where you get to make the decision. It's your call. Take it off. All right. Next slide, Beth. So this person writes, I've been trading ES strangles. That's S&P 500 future strangles. When the delta exposure of the position gets to around 15 long or short, I look to make an adjustment.
Okay.
Rather than roll the untested side, I recenter the position, but only for something close to a scratch. I know the tasty mechanics dictate only rolling the untested side, but why is rolling the untested side a better strategy than recentering for a scratch?
Well, rolling the untested side doesn't use any more buying power. If you're doing what you want to do, you're probably not using any more buying power also, but you are putting on a completely new trade. I guess, you know what? I don't have any problem with this because you're probably using the same amount of buying power. You're probably putting on a trade that has similar probability of success. Your probability of success might even be a little bit greater. You are taking a loss. Let's just assume the position was a loss, but you're taking a loss on one side, an hour trade too. You know what? I don't have a problem with this. I think you're just going to find yourself being, possibly opening up yourself to a little bit of being whipped around, but I don't have a problem with it. But the only problem I have here is the subjectivity of the whole thing. Like, it's a little bit, sometimes you're going to do it, sometimes you're going to not.
So I don't have any issue with this either. In fact, I do this all the time. My first choice is to roll the untested side, but my second choice is to recenter the position by buying the guts and selling the wings. And I do it all day long, both of them. So I have zero issue with this too. Just like Tony said, our whole thing is not using new money, not throwing good money after bad, not adding pump money to a losing position, not, we just don't want it. We don't want to reach into our pockets for that. We have no problem either rolling down the untested side or rolling up the untested side, or buying the guts, selling the wings, and recentering the entire position as a single trade. Either way works for us. It neither requires any additional capital. So the answer is yes, we have no issue, none whatsoever. Let's go to the next slide. It's not a mistake or anything like that. So this person writes in and says, "Hey guys, how do you calculate the P&L for a wheel trade? First, explain what a wheel trade is, and then how do you calculate the P&L?"
Sure. So a wheel trade is something I don't typically do, but I know Liz and Jenny like to do this on a longer term time frame. They're bullish on a stock, and they sell a naked put, and then they wait to get assigned. That's the thing I don't do. I don't wait to get assigned. I roll at 21 days, but they wait to get assigned on that put. Now they have stock where they come in on Monday after expiration and they sell a call, and they just keep doing that. And they reduce their cost basis on entry, meaning they're selling a put that's out of the money, collected the premium. They sell a call when they get the stock, continually reducing their cost basis, which I like that part of the approach. I just don't like waiting. That's just me. So that's a wheel trade. How do you calculate the P&L for that? You can't, because in a best case scenario, you want to sell that naked put. And if you're holding it till expiration, you want that naked put to go out of the money. So you would collect all that premium. So you really can't calculate the P&L for a wheel trade.
Well, you can look at your P&L because it'll be.
You can look at your P&L. I thought you meant you want to calculate like a future, like a return on capital or something like that.
No.
I was going too deep into it. I mean, your P&L is going to be sitting right there. You can look at your P&L year to date. You can look at your P&L daily. That's what I look on all my trades.
Yeah, I mean, when you sell a naked put, you collect X number of dollars. Mm-hmm. When the put goes in the money, it could still be a winner. Like it doesn't necessarily have to be a loser. It could be a winner. It could be a loser, whatever. Mm-hmm. Mm-hmm. And wherever you end up buying the stock at that point, you're either up a few dollars or down a few dollars. Yeah. I don't know. And then so that's your new basis. And then you sell the call against it and you're just in the trade. And then you just figure out your covered call P&L. I mean, it's not as complicated as I think you're thinking it is. It's pretty straightforward. Yeah. What's your P&L on the short put, and then what's your P&L on the covered call, and then just add them together.
Agreed. I mean, it's just like any other position you put on. I mean, you may think it's the wheel strategy that you're going to get stock or anything else like that, but the fact of the matter is, it's just a naked put that's out of the money. You want the stock to go higher.
Yeah, you don't know that you're wheeling it until the stock's until the stock's in the money. I'm sorry, until the put's in the money, and then at that point, you'll have a P&L. It could be up or down. Yep. You might have collected $5 for the put, and the stock closes $1 in the money, so you're up $400, and then you have the wheel on. So then you're long stock, and you sell a call, and you have a $400 credit already on the position. Yes, and then you see what happens.
Yep.
All right, let's go to the next slide. So, would you ever use pairs trading for a scalp or a day trade to capture the difference between spot futures and an index such as NQ or NDX or ES and SPX? I've been watching the charts, and there's a good amount of divergence or convergence during the day. So what they're looking at here is they want to use a pairs trading or scalp, but trying to capture the difference between the spot futures price and the index itself.
Yeah, no, and with an exclamation point, maybe. I'm not being forceful enough with my answer. I mean, you're basically saying, is there any way to scalp between 6 of one and half dozen of another? They're still 6. They're still the same thing. / NQ and NDX are exactly the same thing. I get it. They're at different prices. One's a future, one's an index. There is no stock in NDX. There is no stock in SPX. It's just a difference between the cost to carry of the leverage that the future provides that the equity or the index doesn't provide. There's no ARB here, is my point of view. You can ARB between or look at the divergence or the difference between E-mini S&Ps and NASDAQ if you want to. But you can't do NASDAQ NDX ES versus SPX.
So as somebody that kind of started doing program trading back in the 80s, which is me, I can tell you without...
Yes, I was too intelligent to try to do something that was technologically and actually intellectually dumb to do. But you tried to do it and failed miserably by trying to do it. But go ahead.
I did not fail miserably, but I did believe a long time ago that I thought you could capture this edge by buying this stock of SPX, buying as many of the 500 stocks as you could to try to capture the difference between the ES futures premium and the SPX cash.
Yeah,
it is not only is it. I mean, there are a bunch of firms that have been able to do it over the years based on the speed of their technology and their ability to track the indices. But as a retail customer, you can't buy all 100 stocks simultaneously. This software doesn't exist for retail customers. Like we would build our own software to buy 500 stocks at one, on the click of a button. And if we were 500 milliseconds late, somebody else would beat us to it. So it's impossible as a retail customer. The only way you can do it is to create a option synthetic where you buy the call, sell the put, or buy the put, sell the call. So you create a what they call that a combo, and you create the synthetic equivalent of the underlying future, and then you trade it against the future itself. And if you could make money on that, you would be the first person ever. So
good punchline.
The answer to this question is no. That divergence is not tradable.
Kind of with an exclamation point.
With an exclamation point, it will close before you can even have a chance to catch it.
Yep.
And I don't even care if you're a professional, you can't do it. Let's go next slide. So this person writes, and this is a fun one. I'm 22 years old, graduating this semester, and will be working a job in investment banking. I have been trading since I was 16 and been following Tasty for the last 2 years. I love everything about trading and want to do all I can to continue trading, but I'll be required to work long hours in my career. How would you recommend I manage positions if I can only look at my account maybe once per day during market hours, but can evaluate my portfolio at night? Should I lean more defined than undefined risk?
Wow, really tough question. I mean, you're 22 years old, and you've been, it seems like a long time, the last 6 years watching the market I got to say on a part-time basis. I have a 15-year-old son. You're probably better than he is at watching the market, but it's still a part-time at best. You got so many other things going on in your life, and I know you've been watching Tasty for 2 years. I think you should probably default to more defined risk. You can go wide. There's nothing wrong with a $10, $20, $30 wide iron condor. It'll move a lot slower than, say, a strangle that has undefined risk. And I think you'll like the P&L swings a lot better with defined risk than undefined risk. I would just hate to see you go very tight, $3, $5 wide on an iron condor. I don't think you'll be giving yourself those are basically 50, 55% shots. I don't think you'll be giving yourself a chance to win. So yeah, I don't have a problem with it. I would probably turn to something like, 80-20 defined risk versus undefined risk or something like that.
So yeah, I thought about this for a while, and at first I was inclined to say, sure, do more defined risk. But then I thought about it and I'm like, no, just do what you do. Just keep your size small and do what you do. It's a better learning experience. You'll have a higher probability of profit. And I don't, first of all, I believe everything you said, except you'd be surprised, like,
you can watch the market during the day, like there's mobile apps. I mean, there's
that's the whole thing. Like, it's a little different. They can't trade, but you got your mobile app. You got a computer, an iPad. I mean, I traded from the delivery room. I mean, you can do anything.
If you're willing to suffer the consequences, and it's not going to be the consequences of the trades, it's kind of like my son called me last night, View Anger or something like that.
A what?
Well, it's a term for teenagers. I'm butchering it. A screen anger. Screen anger?
Screen anger?
Yeah, screen anger. I had never heard it before. I'm not as cool as you, Sadno. So you are, you get all your information now from TikTok. So he said, Dad, you're a screen anger. I said, my hearing's not that great as it is. I'm like, what? He's like, screen anger. What's this? What are you talking about? He goes, that's what they call us teenagers that are always on our screens. I was watching the market, so you can do it.
Yeah, that's what I think. You can do it. You can do it. And it will help your career in investment banking dramatically. So,
because you'll know what the market's doing. You'll be looking at bonds and say, bonds are up to rates are falling. Maybe we should lock this in. That kind of thing. It's just great. You'll be intelligent conversation.
Yeah, you'll be the only kid that can articulate volatility, that can talk about trading strategies. You shouldn't give up a thing.
Mm-hmm.
You really shouldn't. You shouldn't. You can reduce your size, but you shouldn't change your trading style at all. Just go for it.
Yep.
And you can watch it. So much easier to watch all this stuff than you think it is.
Yep.
Hey, we're two boomers. If we could do it, you could do it.
That's right. That's right. We don't even know our Apple password right now, okay? And we could still do it.
I have no idea my Apple password. Let's go to the next slide. Your mechanics are to sell options at 45 DTE, then manage a 21 DTE with a 50% profit taking. Does this mean if you hit 50% before 21 days, you exit the trade, or would you wait until 21 DTE to take 50% or roll out?
The first part of the question, the first part, does that mean you hit 50% before 21 days, you exit the trade? Yes, with an exclamation point, the same exclamation point I used with the no a few confirm and sends ago. So yeah, if I hit 50%, and that's Nirvana, by the way, I mean, that's the, that's optimal in under 21 days. I run like a thief in the night. I've been taking profits sooner than that too on my podcast trades, just to kind of lead everybody to water if I could. And then, you do what you want from there. But yeah, absolutely. I'm doing that. I'm not waiting to 21 days to get the 50%. I got 40% earlier. I'm taking it. Who cares? Sure.
Yeah. Our research, all it does is optimize all the mechanics. But if you got a profit and you're, 14 days, 7 days, 16 days, and you're there and you want to take your profits, goodbye, see you later.
Mm-hmm.
Great. Nice trade. Move on. Yeah, we don't even think about that stuff.
Oh my God, this is what I want to happen.
Yeah, our default is always to take profits.
Mm-hmm.
We always default to taking profits.
Yep.
Let's go to the next slide. I realize it's a high-class problem. This person writes, I realize it's a high-class problem, but if the market moves up and tests my covered calls, and I still want to hold a position, is there any way to manage it?
The market moves up and tests my covered call. Is there any way? Sure. I mean, look, even on Liberation Day, it's still America. We can do whatever you want in the trading world. We haven't changed anything here. And I know when you think about buying this call back, let's say this call is a strike in the money now. It's exactly what you want it to happen. You're maximizing your long delta that you had, but you haven't maximized that trade's full potential because there's still time left and time has value. So let's use that same time value, assuming you're still bullish on the stock, and buy back that call and sell another call, either in the same monthly cycle. I'm going to assume some time has gone by. I would probably go to the next option series that might have 45 to 60 days to expiration and sell the at the money there, or the strike one or two out of the money. Or if you want to go back to that 30 delta, go back to the 30 delta if you're extremely bullish. It all depends on how bullish you are on the stock still. But I would have no problem with this, and it's probably the mechanical thing to do.
First of all, my first problem is with this whole Liberation Day thing. Doesn't it sound very Soviet to you? Very European?
Yeah. It sounds French to me, actually.
Really? No.
Yeah.
It sounds.
Yeah. Well, French being liberated, liberation.
Sounds very Eastern European to me.
Yeah. I'll give
very
you that.
Russian.
Yeah, I'm not a big fan of the moniker, to be honest with you.
No.
I love the Gulf of America, but I'm not a fan of the Liberation Day. So I'm 500%, 50-50.
Yeah. You should change. They should just change Cabo to make it America. Make it easier. Make it a domestic flight.
Once we're done with Canada, maybe we'll get there.
Okay. I realize that it's a high-class problem, this person writes, but if the market moves up and tests my covered calls, well, if the market moves up and tests your covered calls and you still want to hold the position, there's a couple different ways to do it.
You can stay in that position because you still have, I'm assuming that, it's happened a week later. It's the best thing that can happen. There's still plenty of premium in that call.
Of course. So you could just stay in the position and roll the in-the-money call. You can pay a little bit money and roll it up and out. Okay, so you just, pay a little money, roll it up and out. So you're not taking a loss. You're just rolling it up and out.
Yep.
And those are the kind of normal.
Well, you know what? People get very granular and they say, I sold this call at $3. This call is now $6. I'm taking a loss on that call. No.
It's the stock's $10 higher.
Right. It's the totality of the trade.
Yeah.
That
you're up money. If you're rolling if you have a covered call on, you're rolling an in the money call higher, you're up money.
Yep.
You're up money. It's impossible to be down money. You're up money.
Yep.
And if you roll the same strike, you could do that too. Or, if you don't mind taking the stock off, one of the things we say is let the stock be called away or close the stock position and just sell a near out of the money put. You save some money, you save some, it's more capital efficient, and you get right back in the trade. So you can do any of the above. Roll, if you don't want to sell the stock, just buy the call back and roll up to another strike.
Yep.
Or roll the same strike. Who cares? So winning, you got a great trade on. Who cares?
Yep.
All right, next slide.
Next slide it is, Thomas.
So this person writes, I often notice your traders, meaning the people on the follow page, will pick a 38-day or a 55-day time frame for a trade instead of an expiration cycle with 45 days. Why is that? Or why is that decision made, and on what insight? What's the most important thing, the amount of time or the premium collected? If you go to 38 days instead of 45 days, what is your likely reason?
Probably liquidity and bid ask on the option series. Now, I mean, if you're going to an SPY or a Qs, for us, it's just the ease of keeping everything in the same month. You could probably go to the 38 days, the 14 days, whatever you want to do, because the markets are basically going to be a penny or 3 cents wide. They're going to be very, very liquid and tight. You go to a Baidu or some other stock like that we trade all the time that has liquid markets and the monthly options, they won't have the same type of market. They may have 5-10 cent wide in the monthly options, and they'll have 30 to 50 to $1 wide in the weekly options, and that would be the reason why the depth of the markets and the liquidity of the option markets.
Yeah, this whole thing just comes down to the reality of this thing. Everything just comes down to liquidity and simplicity. Us, the reason we go to 38 days or 55 days is when that is the new monthly cycle. Like, we don't go to the weeklies. Yeah. We try to keep everything in the monthlies. Like, if you have a lot of other stuff on your plate, like we do, we just try to stay away from the weeklies so we keep everything lined up. But if you're comfortable managing the weeklies and it's liquid, go ahead. I don't care. Yeah. 45 days is the perfect time frame, but sometimes 55 is the right site, is the current monthly cycle. Sometimes 38 or 36 or 33 is, so that's it. We just don't try to overthink this. Doesn't matter which one you use, but if there's a 45, use the 45. But we tend to stay to the monthlies. That's why we do it.
Yep, agreed.
Let's go next slide. And the last one. How do you protect against a VIX spike? Do you carry short deltas? And if so, do you do it, and how much do you carry?
And how do you carry? I mean, look, this question used to be written a year ago. Like, why are you having any of this short delta? Because every sell-off is met with a rally, and it's been hurting your return. Now that we've had a little bit of two-sided action in a very short period of time, it's been helping mitigate those down moves and this volatility spike. Because usually when volatility spikes in the equities, meaning ETFs and like SPYQs, SPX, volatility expands on the way down, not on the way up. So having a little bit of short delta in there mitigates some of that volatility expansion of the options that you have that are short. What's the ratio used? That's kind of a tough one, a little bit subjective. We've gone with in the past. I think we've been a little bit light on this as of late because the market has not had any sustained downturns. Usually on a theta basis, for every 1,000 theta, we have maybe 100 in short delta, that kind of thing.
Yeah. So the easiest way to protect against the VIX spike, honestly, is to keep your position size small.
Sure, on entry, on everything.
Yeah. The easiest way is just don't get too crazy. Like, no matter how much you think or however sure you are about things, it never kind of works out that way. So just keep your position size small. That's the best protection. Yep. That's the actual thing that you can control. But we tend to carry short delta, although we don't have any this morning. And if you do, like usually when the markets are closer to highs, we're definitely not at a high. We just sold off 10%. So when we sell off 10%, we usually get pretty flat. But if you talk about when the market's at highs, we tend to, if you wrote me an email, I would say we tend to cover, we tend to carry between 100 and 200 short deltas for every 100,000. So like, that's just, that's 200 SPY deltas is about $110,000 worth of notional. So, and 100 deltas is about 55,000. So somewhere in that range, it's not a lot of short delta, but that's what we tend to cover. In this kind of market here, we tend to be pretty flat. Like, it just depends. If we think we're at a top on a bullish extreme, we carry short delta. If we think we're at a bottom and we think the market's capitulating, we tend to carry long delta. It's kind of a classic contrarian thing.
Yep.
The biggest risk of a VIX spike is not when the VIX is trading where it's trading today at 22. The biggest risk of a VIX spike is when it's trading at 13, 14, 15, not 22, 23, 25.
Agreed. All right, my friend, we did a good job here, Sadnov. Even the S&P is not doing a great job right now. Even the S&Ps are down 51 as we speak, just making new lows, about 10 handles lower than this. NASDAQ is your big loser to the downside, down 225 and change. I guess even the S&P down almost 1% is the same. Russell down a little over 1%, down 22, and the Dow down 300. I guess they're all down around the same, with the NASDAQ and the Russell being a little bit weaker. Volatility is keeping its head up, keeping this down move going too. Also, Sadnov down up almost 90 cents, which is a 4% move. Bonds surprisingly staying bid too. Sadnov, you think this is a little bit of an opportunity here on the downside once we get a little bit of an opening here with the S&P down 50, bonds higher, but volatility still supporting this down move. What are you thinking here?
There's no question. This is a little bit of a flight to quality today. Gold's up again, bonds up. They're scaring the children a little bit this morning. This is the first morning I've seen, vol up this much pre-market, almost 5%. Pre-market vol up 5%. That's a pretty damn big number.
Yes, it is. On top of elevated volatility already, right? It's not like volatility was 18 or 18 and a quarter. We're coming off volatility being 21, 20 and a half, 21.
And this is also one of these mornings so far, last hour and a half, not even an uptick, not even a one lot uptick, like one tick. So it's kind of ugly right now. It's too early for me to declare anything, but I would be, like everybody else right here, very, very cautious. I'm not buying the opening. Let's put it that way.
The bigger question, Sadnov, is, and I saw the video from yesterday. I believe you saw it too, because I saw you smiling from ear to ear, where you were modeling your clothes for the wedding. And I watched you last night, and you said something in the video like you're on your, this is your shred for the wed week. I believe you said something like that.
I did not say that.
You did. You said you were cutting back week and stuff like that. Last night had any indication. I mean, unless you're basically going to yogurt all day today, I didn't see it.
Oh yeah, well, the diet starts today.
Starts today. Good job out of you. Nice work. We're gonna take it to the clothes fit. Are you good? How are you gonna pack those clothes, by the way? Do you have a hanging bag?
No.
Oy.
I will make a trip downtown.
No.
Great point.
No, I have plenty of stuff. I don't need your help.
No, you need a hanging bag. I'm being dead serious with you.
I have a hanging bag. Oh my.
I just asked you. You said no.
Yeah, because I didn't realize that you would then start to make a big deal out of it. So the answer is yes, I have one, but no, I'm not going to bring it. I'm an expert packer. I don't really need to bring hanging bags. And what would I hang in the bag?
How about the shirts? How about the jacket? Your shoes?
No.
Sadnov. I'm being reminded of photo shoots that you had where you would pull out your jacket from the backpack that you were carrying, okay, and then put it on and say it looks fine, kind of thing. You can't embarrass me like this, Sadnov. You can't.
Don't worry.
Want me to bring my hanging bag to you? I have a nice. It's a carry-on. So
have.
So look. If you don't bring your Merce with you, and you just bring your. Do you have a bag with wheels in it yet? Yeah. So if you bring a bag with wheels and my hanging bag, you'll be good. You don't have to check anything because my hanging bag is you can carry it on.
Don't worry. I got this. I'm not a first timer. Okay. This is my second wedding for kids.
Did you hear us last night? There was 6 of us and we counted up how many divorces we had. Did you know what the total was? Did you hear the total?
I did not.
It was like good. 8 divorces and 2 houses was the final total between the 6 of us, and 1 common law. So it's like almost 9 divorces, pretty much.
Oh, there has to be more than that. Let's see, 2, 4. I don't know. I'm not asking.
We're gonna take a quick 90-second. But you want to be a trader? Yeah, okay. Let me see. You want to be a trader? We're gonna take a quick 90-second break. Come back. We got more Tasty Live after this. What do we got coming up next, Saz? That's right, an option jive.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, that's serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? Oh. First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
It's option. Jive.
Oh my God, Sosnoff, we got to film the breaks. Seriously. So you have a sport coat.
Yeah.
How are you gonna pack the sport coat? You were just modeling it for us, by the way. It's very nice. I mean, you're not built for off the rack. Like things need to be taken in. They need to be let out. You need a helper putting it on. I mean, you remember left arm first, right arm's injured.
Left arm's injured.
Oh, left arm first, right arm. Left arm first. It's the injured one. Right arm next, so you can bend that one.
Yeah.
Do a try-on haul.
What?
Do a try-on haul.
I don't know what that means.
It's a thing on TikTok. You put on, you test out what you bought.
Oh, no.
He did that in the office. Did you see the video?
Oh, yeah.
Yeah. No, it's all going to be good. I got this all. I got it all. I got everything. I'm all good.
No, seriously. How are you going to pack the jacket and the shirts?
Oh,
yeah, be honest.
So like,
no.
See, I'm going to fold it like this, and then like this, and like this, and like this, and then roll it up, and there it is, packed.
And then you're going to stick it in your Merce?
I'm going to stick it in my backpack.
It really is like putting a skirt on a pig. You really are so disappointing sometimes. It's like you can almost get you there, and then you fail miserably. Like you just got to go a little bit further. I mean, in your accelerated age, don't you think it's time to make other people proud?
Who are these people?
Your son who's getting married, and more importantly, your new future daughter-in-law. I mean, don't show them behind the curtain and meet everything. Like, hide something. Think of it almost as like, as like foreplay, Sadnov. You don't go just diving right in. You got to kind of warm up the motor a little bit.
I think they'll be fine with me. I think they got bigger fish to fry than worrying about what I'm wearing.
You'd be surprised, Sadnov, if when they're taking pictures and you line up and you go in the middle of the picture kind of closer to your son, maybe you let your wife stand next to your son and then you next to her, and the photographer goes, "Excuse me, sir, in the beautiful sport coat, can you move to the end of the line so we can put you on the end?" So this way, when they take the picture, they can crop you out of it. You know you're in trouble and you should have listened to the bat.
Okay, I hope that's the case. I'll be fine.
I did that with my son-in-law, who's now my son-in-law. I didn't think he was going to make the cut personally.
So you put him on the end so you can crop him out?
100%. 150%.
I do like the strategy. I think I will. Yeah.
You should probably stand on the end just as like a courtesy. Like it's like a courtesy, It's like preemptive, Trust me. You'll thank me in the future.
Stand on the end.
The courtesy to you.
Hey, Dad, what are you staying on the end for? It's just a courtesy to you. It's my wedding present.
And then you look across the line at the other guy on the end and you give him a knowing nod, like, and then you smile for the picture.
I like it.
You should do it.
All right.
Option jive.
Oh my God.
Sadlo, these are pro tips I'm throwing out at you.
I'm going to send this to my son today.
You should.
I'm going to send this to him. I'm going to say, hey, here, this is what Tony told me. It said, stand on the end. Actually, you know what? I'm going to use that on my speech. I need a good line.
Go ahead. You've stolen everything else I've given you, sure.
That's a really good line.
You might use everything.
I'm going to use that on my toast. I have to give the toast. I'm going to use that as my kind of my takeaway, my joke line on the toast.
You get
Tony
to give
told
a
me
toast.
to What?
You get to give a toast.
I get to give a toast. Thank you.
That's right. You get the privilege.
So I get the privilege of giving a toast. So when I give a toast, I'm going to say, yep, and Tony gave me a great idea. I'm supposed to stand. He told me to stand on the end so that it's easier to crop me out.
That's right. That's right. That's right.
Yeah.
Without being asked. That's the key. Without being asked. You got to do it without being asked. It's a courtesy.
Yeah. All right.
Yep.
Yeah, that's pretty funny, actually.
Yep.
All right. Let's see what else we got here.
Do it. Option jive.
All about options neutrality.
Yep.
Do. Well, actually, this is a fun piece. Let's go through it. One of the benefits of option trading is the ability to be directionally neutral on trades, if you want to. This is kind of that market now that almost screams neutrality.
Yep.
However,
it's high. You're selling both sides. You're not confident in direction here. We haven't had a directional. Even a chartist will tell you haven't had a directional bias, right? We've been going back and forth. I'm sorry. Did I interrupt you? I apologize.
No, but directionally neutral can be defined in several different ways. What's the difference between each definition of neutral, and when should each be used? Let's look at some examples. So delta neutral, and this is what you hear us talk about a lot on the show. Delta neutral strangles have the put and call deltas that are equally far apart from at the money, or the deltas are equal. Delta is the theoretical change in an options price given a $1 move in the underlying. For contracts with deltas between approximately 10 and 30, delta can also be used as a proxy for the probability that that contract will expire in the money. Let me give you an example. This morning, I rolled a couple of positions from April to May because they were futures options. And we're almost at tomorrow's 21 days. I think today's 22 days in soybeans, gold, things like that. So I rolled my positions forward. When I roll my positions forward, what I do is I buy back the front month and I just go out because the IB rank's still high. I go out to the back month and I go to like the 20. In this case, I think this morning I went basically to the 20 or 22 deltas on every single underlying. Delta neutral, just set myself up, recenter the trade, go back to the 20 deltas and start all over for another month.
Yep.
So this strategy gives a trade where there's an equal probability of the underlying reaching either strike based on the option pricing models. And if you want to know your probability of success, because first of all, you can only lose one way. You can't lose both ways. But
Sure.
the probability of success for the out-of-the-money deltas you sell is just add them together and subtract from 100.
Right.
Let's go to the next slide. So the next one is price neutral. And I do this a lot too. I'm not stuck with just delta neutrality. A lot of times I'll do price neutral, especially when I'm trading like ETFs like SPY, Qs, IWM. I use price neutrality all the time. And that consists of selling a put and call that are approximately the same price. The puts will be further out of the money than the calls, but that's just how we do it. This strategy
that would be if you're looking at an ETF like SPY or Qs. If you look at something like an NVIDIA, you might get call skew.
Exactly. And
any type of NASDAQ stock, you're going to have just the opposite, where the calls are going to be higher. Go ahead. I'm so sorry.
But the problem is that, I shouldn't say the problem. Most of the time, we use price neutral when there's a big skew. And we use delta neutral for mostly everything else. Our default's delta neutral. Price skew is when there's a big, pricing difference between, whatever it is. Just either call skew or put skew. Most of the time it's put skew. Yep. Let's go to the next slide. And the next one's just simple, equidistant. Hey, you know what? I'm going, let's just say, for example, we look at the SPX 0 day and the expected move is $40. Then we're just going $40 higher, $40 lower. It doesn't matter what the deltas are. So equidistant strangles have a put and call strikes that are equal dollar amount from the current, equal strike amount from the current price of the underlying. This strategy gives a neutral trade based on the assumption there's a 50-50 chance of an up day or down day in the underlying. And the magnitude of these moves will be approximately the same. And when you're talking about, like in the 0 day, for example, the skew comes less into play in a 0 day, and the expected move really takes over, right? I mean, you'd say that.
Sure,
you don't really skew anything in the 0 day.
No. Unless I'm skewing by delta, and we're not. That's not what we're talking about here. We're talking about delta neutrality.
Let's go to the next slide. So when you are delta neutral, your goal is to maintain net neutral by having multiple positions that limit directional risk as the markets are random and unpredictable day to day. The benefits of delta neutrality are systemic management strategy, take the stress out of trying to decide the right direction, and non-correlation and true diversification are easier to set up. I mean, again, delta neutrality is kind of our default. Let's go next slide. But to create a delta neutral portfolio, you can also mix bullish, bearish, and neutral positions using the beta weighted delta at the top of the page to determine kind of the overall position. To gauge the neutrality of a position, look at your beta weighted delta that is automatically calculated on the tastytrade platform on the top of the center of the platform. Also, when you enter a trade, you can see your beta weighted, what's going to happen to your beta weighted deltas at the bottom of the page when you're entering a trade too, which is kind of a cool thing. The below strategies are the most common ones we trade. And so you have bullish, neutral, and bearish. They're all kind of just variations of the same. Next slide, please. So while a delta neutral strategy starts off with no immediate directional exposure, it will become directional if the stock price approaches one side of the trade. This is when rolling comes into play. This is when rolling up the puts if we're rallying, rolling down the calls if we're selling off. That's where this comes into play.
Yeah.
I mean, it's pretty straightforward. There's nothing here is new, but we're just kind of breaking it down into the different ways to do it, which is like either you go equidistant, either you go by price, or you go by delta. And we use all three depending on different scenarios. Our default is delta, price we use for ETFs, and equidistant we use for like 0 days. All three come into play. Let's go to the next slide. A common question we get is, what do we mean by managing a trade? One way to manage it is to roll it. Rolling is just a fancy term that means simultaneously closing our existing position and opening a new one. We can change the strike, duration, or both. At tastylive, we look at rolling as a defensive tactic, and we roll for duration to keep the dream alive, as we say.
Yeah. Right.
And to adjust our deltas. If we roll, we will roll if our assumption is still the same and if implied volatility rank stays high. We always stay in the trade as long as we can if the assumption stays the same and if implied volatility stays high.
Yep.
Let's go to the next slide. The new delta, or directional exposure of a delta neutral trade, is the opposite of a stocks movement. Anyway, we just had a little fun here, but stock price goes up, your new delta exposure is going to be negative. Stock price goes down, your new delta exposure is going to be long. Your delta exposure is always going to be the opposite of what the market direction is. And again, they made it really simple here. This is a really good reference piece, but possible adjustments to balance deltas. When you have a short delta, you roll the put side up. When you have too many long deltas, you roll the call side down.
Makes sense, right? I mean, this is, we've been through this thousands of times probably, but it's a very good refresher on what to do, right? For those who might be new. And you're going to get a little bit of this market action today where it's going to come in handy.
Let's go to the next slide. So the takeaways. Neutral strategies have various definitions based on different option variables. Delta, default, price, ETFs, distance, 0 days. That's how we break this down. And combining them provides the best portfolio diversification. Mixing bull, bear, and neutral strategies can keep your overall portfolio neutral while balancing risk and return. And lastly, delta neutral positions can profit from time decay or volatility drops, but may become directional if the stock trends. And this market's been moving. So it requires adjustments along the way. And you don't have to be crazy, but it just requires adjustments along the way.
Yeah, and that's why we say when we're looking to reduce delta, we're usually looking to reduce delta by 50%, right? Like we're typically not looking to go from no delta to 25 delta to no delta again. We're going to go from no delta, say your number is 25, to 10 delta or 15 delta or 5 delta. So if you do get a little bit of movement back in the other direction, I'm going to assume it's in the opposite direction, volatility is going to contract. And when volatility contracts, the delta on the option that you sold actually contracts with it. Remember, if volatility is high, the options further out of the money are actually going to have a higher delta. When volatility contracts, those same options and the product hasn't moved and time really hasn't gone by, it's the same day, those options are going to have a smaller delta than when volatility is high. Because when volatility is high, the expected move is so much greater that it reflects a larger delta in the options. When volatility contracts, that volatility contracts, the options delta contracts along with it. So it's almost like a win-win when it doesn't move outside of the expected move on a whip back or a whipsaw, what people call it. Correct so far, Sadnov? I mean, I've only been doing this since 1983. Did I make any mistakes there, or would you even be able to tell?
I mean, you're a bit of a slow learner, but sure, that's okay.
You just reminded me of Lerner. We're going to take a quick 90-second break. We got more Tasty Live after this. We got the opening bell coming at you. We'll be back in 90 seconds with Tasty Live. A little weakness. Back in 90 seconds.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20 because that's how many underlyings are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trading 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1/365, because that's the square root of time for one day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for one day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do. Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was. And basically, instantaneously, like, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring. And then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from Tasty Live to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right, my friend, with the opening bell. Sadnov, what are you thinking here?
It no look good.
Yeah, I'm going to give you the same thing. Even the S&Ps are down 55 or so. They really haven't had an uptick at all. NASDAQ is down 250. Again, back down, not down to its spiky low that we had for a few days ago, 2 days ago, but back down near the lows where we were for most of the last 3 days or so in the ES, NASDAQ, and the Russell here, Sadnov. Dow down 300 is doing basically the same, probably a little bit better than the rest of the market. Even the S&P, NASDAQ, and Russell selling off more than the Dow, but it's only the Dow 30. Volatility up by 92 cents. It stayed bid, and I think it's going to stay bid for most of the day here. Tesla, I had conflicting reports here, and I don't know if anything came out in Tesla. I know they had some sales reports, I believe, Sadna, but Tesla's down about $12 or so, trading back to 256 or so. What are you thinking here, Saz?
Tesla looked really strong yesterday, but yeah, I don't think their Tesla numbers have come out yet.
I don't think so either, but I think it's after the close.
Yeah, I just think the stock's down. I mean, Meta's down $11, Tesla's down $12, Nvidia's down, $3. I think these are just pretty normal moves. Apple's down $2, Amazon's down $4. I don't think these are anything weird.
No, I think it's just the market itself. Yep.
Yeah, Microsoft's down $4. I think that's Spoo's down 50.
Microsoft was one of the leaders yesterday. For most of the day, it was strong, nicely strong too. But back down at 378 though. Sadov now, like you said, down around $4, $4 or $5.
Yeah, every single stock on the board that I'm looking at is lower and lower by a lot.
Google doing its thing lower also, finally caught its first bid, kind of like Microsoft yesterday, continues its sell-off today, as you would expect. I think you're going to be hard-pressed to find the positive stock on the opening today. You might get like your UNHs of the world, which really hasn't had one of the downticks in the market. It's been the strongest in the Dow, probably the reason why the Dow is overperforming, even be so slightly between even the S&P, NASDAQ, and the Russell.
CoreWeave up $2.
Is it really?
Pre-market.
Yeah.
That's your big winner. And I don't think you're going to find a lot of other. I don't think you're going to find a lot of other winners. Let's put it that way.
No, and that's subject to change too, right? I mean, CoreWeave's had what, 1,000 shares trading or something?
Oh, I have no idea. I didn't even look at the volume.
1.29.
That's not bad.
Yeah.
Yeah. Anyway, I'm ready.
But you got about 6 minutes before the market.
Oh, man. I was going to say, turn those machines on. Let's go.
Oh, you got time. You've been talking about gold and getting short gold. Gold continues its rally today, back to 31.59. Sadnov. Good IV ranking gold of 52. What do you think about gold? Silver's cooperating with gold for one of the first times, Sadnov, at least trying to do a little bit of damage control to your gold-silver ratio that you have.
I am being told that the Tesla numbers did come out.
They did come out. Let's see.
Yes, I'm being told from multiple sources.
Oh, okay. Multiple Taiwanese sources?
No, these are not Taiwanese sources for sure. These are good old-fashioned sources from America.
Yeah. It says Tesla reports 336,000 vehicles delivered in first quarter. They are 100% correct, Sadnov. You are solid as a rock.
Solid as a rock, yes. Yeah, Tesla.
A 13% drop from a year ago. I mean, I don't know what that means out of context, but I'm just reading the headline for you.
I would think their next quarter is going to be the rough one for Tesla. The protest didn't start till recently. I think the next one's going to be really rough, but we'll see. We will see. And I can't imagine that countries where, Tesla's biggest growth, I thought, was in like China and places like, different places. And I don't think they're going to look too kindly, on the reverse tariff type thing. So I don't think they're going to do very well going forward, but who knows? They'll recover some other way. Yeah. I told you yesterday, I already know the game plan for Tesla. Tesla's going to stay as is until XAI buys Tesla.
Like it bought Twitter, you mean?
Like it bought Twitter. Yeah. Yeah. I just hope those investors are ready, because that's what you're going to get. I don't know how you pull that stuff off, because if I tried to pull that stuff off, I'd be in front of a board being hung by my fingernails. But somehow they do it.
Yeah, it is crazy. And
it is crazy. I mean, if I was an XAI investor, why would I want Twitter? Like, that's not what I paid for.
At basically the same price that he bought it for, right? With depreciation and
I know.
Debt.
Why would you want that as an investor? I mean, why?
I mean, I would want a bidding war on it and then sell it to them for the price. If I was trying to get like transparency, like, somebody else bid for it too at or similar type price, and then
they don't want that. That'll be like 10 billion then.
I don't know. That's the problem. You know what I mean? That's the murky water of the whole thing.
Yeah. The whole thing.
Oh, I'm getting Taiwanese sources that told me too. I didn't look at my email. So thank you, everybody. I appreciate it. And yes, you did give it to me before, Tom. I just didn't look. I apologize. Tom just has to sit here and look pretty for the show. I actually have to run the show and do a lot of other things. So I apologize.
Really hard to sit around and look pretty. Let me tell you something. It's a job.
For you, yeah, sure.
You guys are great at it.
It's an unsurmountable feat.
All right, Beth, turn these machines on. I'm ready to
working on it.
Yep.
Yep. You're gonna have to wait. You're gonna have to wait, Sadnov. You still got about a minute and a half.
Yeah.
What's your game plan, Sadnov?
I don't have one. That's the crazy thing. I didn't have down 58 this morning as my kind of as where I was going to be starting my day. So I'm not exactly sure. I don't want to roll.
Volatility staying bid, Sadnov, up 92 cents, 21.80. I think you got to let a little delta out here, Sadnov, even if it's with both sides, maybe with a little bit of long-ish delta to the move. I think you got to let something out, Sadnov, in these equities. I mean, these ETFs like an SPY or Qs.
I think so too. And I think I'm going to be challenged.
Yeah. Yep.
I got to roll down some calls in IWM. I got to roll down some calls in the Qs. Let's see, what are the Qs looking down? About $5, $6 on the open.
Yep.
That's a lot.
Yeah. Big move.
And I got to roll down some calls in spiders. And what are they looking down? $5, over $5, $6.
Yeah.
Yeah. We got some work to do, Johnny.
Don't worry. This guessing will all be over in a minute.
Yep.
Mm-hmm.
So what I did is I just put some orders in pre-market, and then when they open, then I'll adjust.
Yep. Good.
But I don't like my positions.
There you go, my friend.
Youch.
There you go. Opening bell. Even the S&P down 60 and change. Rivian also reported a sharp decline in its electric vehicles too, Sadnov. Rivian down 31 cents to under $13.
Where is Lucid? Because that's the company that I need to stay in business.
Lucid is trading down 3 cents, probably in conjunction a little bit with Tesla here. That's a nothing move. Stock's $2.50.
Perfect.
Rivian delivered 8,600 vehicles in the quarter compared to 13,500 a year ago. So they're too a little bit of weakness there. That comes from my Taiwanese source, Ryan.
Well,
But I think all this means nothing when you've got a market that's moving the way you have now with even the S&P down 63. We're not going to care about numbers. Those numbers could have been great. It was still going to be bad for the overall market and any stock. All stocks are going to be affected by this market lower. Let's see what's moving this market lower, Sadnov. Well, SPX obviously down almost 60. Tesla down 16. Meta down 10. Netflix down 8. Goldman Sachs down 8. CRWD down 7. Microsoft down almost 5, 4.5. Reddit down 4 and change. Those are your normal stocks. Nvidia down 3 that we look to trade. On the upside, not a lot, Saznoff. On the upside, it's all volatility products. TLT, which are bonds. Bonds are up 10 ticks. I'm talking about /ZB. And then you've got a little bit of GLD up 30 cents. Sadnov, it's pretty broad-based. Baidu up small, 20, 30 cents. They're coming for the pigs, Sadnov, coming for the pigs.
All right. Well, I did my rolls. I did them. I closed my eyes and I rolled on calls in Tesla, SPY, IWM, QQQ. That's it.
Okay.
And neutralized my deltas like a good delta neutrals person that just studied the option drive we just did.
Like a good Johnny that you are.
Like a good Johnny that I am. I did what I'm supposed to do. And I'm not sure what else to do here. I hate to do this, but I think I got to buy a little NVIDIA here. Just a tiny little bit, because this is where it was yesterday. And I think you got to just nibble on a couple little things. Maybe a little NVIDIA, not touching Tesla, by the way. I do not like.
I can see that. I can see that.
Yeah. Do not like that stock. And maybe Apple if it gets a little bit lower. I don't know. What do you think?
Okie dokie.
Worst performers for us today are Tesla. That's it.
Yes.
Yeah, Tesla.
So far, so good.
Yeah.
Kind of.
I'm not sure exactly what to do in Tesla. I think maybe keep rolling down a little bit, but I'm going to wait and see what happens for a few minutes. I'm not sure how they I'm not sure how Tesla digs its way out of this thing. What time is today's April 2nd. So what time is all the
I actually think after the close, Sadnov.
After the close.
Am I wrong? I mean, again,
I don't know.
I'm not the best with this, Sadnov. I really.
Usually on Wednesdays, everything comes out right when I'm going to do my show with Dylan Radigan. So the Fed is perfect. 1:00 on Wednesdays every time with me and Dylan. S&Ps now, they're down 42. They just rallied 20 handles.
Yes, they have.
Yes. Well, I made my adjustments. I made my bed. I'm sleeping in it now.
Beautiful.
I don't know.
Is that the right thing to do?
I don't know.
3 p.m. Central, I'm being told by my Taiwanese sources that everything gets announced for the tariffs one way or the other.
Okay.
All right, Sadlov. Volatility up by, 67 cents to 21.
Yeah, it came in about a third. It was down almost $1. Came about a third, about 30 cents. Maybe, 1.5%, 2%. I know this is going to sound weird. It's a stronger opening than I thought.
Yeah, it does sound weird, but yes, it is a stronger opening than I thought too.
I mean, pre-market, they look like it looked uglier. The only carry made is we bought some NVIDIA, which so far so good. Other than that, we just rolled some stuff down, at near the lows of the day. But I think you had to do it just to keep your sanity.
Yep. Okay, sounds good, my friend. Would you like to take a quick 90-second break?
Sure.
We're going to come back. We got what's your assumption, Sadlov? That's where our viewers, that means you out there, came to bat for us with assumptions on what to do. We'll figure out that in about 90 seconds. Let's see if you can be 10 for 10, Sadlov. I'm not optimistic. I think I'm going to give you 7, Sadlov, because we're friends. I really would make the line up under over 6. What do you say pre-market?
Oh, what
How many trades will you get done?
Oh, of the what's your assumption?
Yeah.
Probably my market's 8.
Sold. We'll be back in 90 seconds. Let's Tasty Live. We got more with what's your assumption next.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
Twitter versus Facebook. A rap battle. First up, Facebook. Twitter, I'll snuff you out like I did to MySpace. I'ma have to erase your little Twitter face. Warm it up, Facebook, I'm about to. Did they make an Oscar-nominated movie about you? Check my school out, I'm at the top of my class. My main interest is listed as kicking your ass. I help dictators get thrown over. You help the cast of Jersey Shore get overexposure, I'm too Titanic for you Twitter retweets. You bird-ass tweets, stick to the branches. I'm root deep, universal expansive. Twitter better get lost before you get poked. What?
Yeah, this is Twitter. Check it. At Facebook, can I attack you? Yes, and I could do it in 140 characters or less. Brevity's the soul of wit. I'll make this quick. Hash mark. Facebook is a dick. Retweet. Yeah, I'm backing that ass, and I'm young and I'm brash, and I'm packing that cash. Stick with the kid, I'm an early adapter. Your old Facebook played out like Napster. I make it real easy for family to talk. I make ex-girlfriends real easy to stalk. I show you life in real time that's completely amazing. I show you which celebrities are totally crazy. From Blitzer to Sheen to Kanye to Rom. I run with stars. Facebook is a place for your mom. What's the matter, Zuckerberg? Don't like how that sounds? I got 1 million customizable backgrounds. It's so totally boring. My card's on the table. Hash mark. Facebook is disabled.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
TastyTrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Tomas, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live. Side up. What do we have for a little bit more Tasty Live with? That's right, we've got What's Your Assumption? I love the ding, Sadnoff. Even the S&P is down 25, Sadnoff. They reversed their sell-off by about 50%, Sadnoff. NASDAQ down 87, Russell down 4 and change, and the Dow down 105. Sadnoff, I tried to get you to do a little bit of longish delta on the opening. You wouldn't do it. Do I have to do everything?
Well, the only thing I bought was some...
you bought some NVIDIA.
The only thing I bought was some NVIDIA, but the reality is that you know what? I was like, I am not going to get caught. 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 And I got caught. Not a lot.
Hey, the day's not over.
Not a lot.
You're going to have plenty of opportunities, Sadnoff.
Yeah, I know. Not a lot, but I got caught. All right, let's see what we got here. Let's take a look at all our positions. The only one that's giving me a hard time today, you know what it is? It's what? Netflix.
Netflix?
Yeah.
What's Netflix doing? Netflix up $10. Where did this go?
I know.
How did that happen?
How that happen?
How'd that happen? Netflix traded down at the 9.16 Sadnoff. It opened at 9.22, so it went down around $4 or $5 after the opening. It's now up 10, 9.37. That's a big move.
Yeah. So I already adjusted my position, and I got us into where we're pretty flat. So we'll see what happens. But
okie dokie.
Yeah, the best trade we made today was buying NVIDIA in the 106 handle.
Just under 107, I believe so.
Just under 107. The worst trade we made was everything else, every other adjustment.
Yes, sir. Yes, sir, Senator.
Let's see. What else do we got here? All right. So let's do it. Let's do a little What's Your Assumption.
I'm ready.
Do. All right.
Ready.
Let's see what we got, Beth.
I'm ready. Let's do it.
Nick from La Salle, Illinois.
Who?
Nick from LaSalle. Gold seems to be stretched. Nick, I could not agree with you more. Where's gold this morning? GC up $20.
It is up, Sadnoff, as usual, as foretold.
My first question, could margin calls from a broader stock sell-off finally trigger selling in gold, in GC and gold? And how close could we get to that? That's a good question. I don't know. But to play the pullback, how about a May 16th broken wing butterfly in gold? Let's check it out. We haven't done anything in there in a while. We do have GLD positions on that have not served us as well as we would have liked.
Okay.
Let's see what we got here, dude. What does he want to do? 293, 294. Those are a little tight.
Yeah. What I hate about this. Go ahead.
Yeah. These are a little tight. Let's say we did something like bought the 293s, sold the 296s, but instead of buying the 299s, let's just, a second. Let's figure out where we have to go to get a credit.
Okie dokie, let's do that. You're going to have to move.
How about the 305s? Let's move these up one. 294, 297, 305.
Mm-hmm.
How's that?
Okay.
Let's call it
a minuscule credit.
80-cent credit. 82-cent credit, maybe. Not the easiest fill, but let's try it. Nothing done yet. I think 80 is more realistic. Nothing done. I'm working it. We'll try to get a fill here. Let's go to the next slide. We'll keep working it. It now they made the mid price like 78 or something.
Yeah, I hate gold.
You hate what? Gold?
I hate gold and gold options. I mean, you got to go into GC, I think, because it's a bigger product, and you got to have a direction.
I know. I already have positions on everywhere.
Yep, I get it.
Okay, hold on. Let's try one more price. I'm trying to get it filled. Damn. You would think with the stock up today, I should be filled.
You would.
Next, I'm still working it. Ivan. And, what do I got here? Ivan from EEU. I'm not exactly sure what EEU is, but
let's take a look. Go ahead. I'll get it for you. I don't know yet.
Don't worry, I'm still trying to work this other trade. I can't believe I hate gold. You're right. I hate GLD.
I told you.
GC.
How many countries are in the EEU, Sadnov? 27 countries like Australia and Belgium and Denmark and Germany, France.
S&P is only down 16. They were down 64 when we opened.
As foretold.
NVIDIA up to 9.5. Tesla's only down 8. You did not foretell any of that. You were bearish like me.
I tried to tell you a little short-term, little bullish. Never mind. I tried to help you.
Oh my God, you're such a poser. I see. Gold just dropped $10.
Yes, it did. You're gonna get more. You're gonna get more opportunity today, Sadnov. Don't worry about it. Even the S&Ps are gonna make a big move lower too today. You're gonna get another chance, I think.
So says the bet. DAL. Delta Airlines. Delta. Don't ever leave the airport. Coming up with earnings next week, right?
Yeah.
Making money in the airlines is tough, but Delta buyers stepped in 2 straight days at the bottom, selling the May. He wants to be bullish in here on Delta. Stock's up 10 cents today. Been killed. He wants to sell the May 40 puts. The expected move in Delta in May is $6. So we're going to go, there's not really a $6 play. I think you sell the 38 puts in here. Who is this? Ivan? I sell the 38 puts. Market's kind of wide. I don't love these Delta markets. When did they get so wide?
Yeah, I think after these stocks took a little bit of a beating here, I think the market's got a little bit less desirable than we like.
Yeah, wow, this is a crazy wide market on a cheap option. Sold 142. I don't know if it's a good price or not. Sold 142.
Well, it's an accurate price, Sosnoff. I mean, if you could have got filled at 143, you would have been price improved.
I guess. Let's go to the next slide.
Did you sign up for price improvement when you opened your Tasty Trade account, Sosnoff? Oh, I forget. It's automatic now, Sosnoff. You don't even have to sign up for that. It's automatic.
Alan from Idaho, looking at Kava. Man, I haven't traded Kava in a while. Neutral to bullish. Big decline recently with good IVR. Kava. Let's see where Kava is. Oh, wow. They did hit this stock. Wasn't this stock like 120, 30, some 40? I don't know. Kava. Let's take a look. He wants to do maybe a Jade Lizard. Sure. Expected move is $11. That takes us to the 75 puts. I would sell the 75 puts and maybe the 100, 105 call spread. For 335. I mean, you're not going to do it for more than the width of the strikes, but I kind of like this trade. Let's take a look here. Who is this, Alan? Alan, let's see. Again, if you look at the volume here, it's almost zero. I don't even know if an option's traded in May in here, so we just got to be careful. I don't hate your play. I just don't. These are not the most liquid underlyings. We're working it in Kava. Let's go to the next slide. Still working it. It's just it doesn't trade much. It's only traded 137,000 shares, and the options in May have not traded.
I'm working it, boss.
I'm working it. Let's go to the next slide. Terry from Fairfax, Virginia, is looking at Humana. I don't think we've traded Humana in a couple of years, Terry. This stock is kind of mid-range. He's neutral. Okay. High IVR. IVR is 100.
That's a good IVR.
What does he want to do? Does this trade at all? Neutral trade. It's a $260 stock. I mean, it's another one with virtually no volume. This has got to be an Iron Condor candidate. The expected move in May is $46. The current stock is trading for $263. So we're going to go to the 215s. And on the put side and on the call side, we're going to go to the, let's say $46. That's 100. Let's say we'll go to the 350. We go higher. We'll go to 320s. And only because this is a very, like, no options have traded here in May. $5 wide, outside the expected move, $5 wide Iron Condor is, here's the problem. It's really wide. Like, I don't even know what's a fair price.
Right. Is it worth it to make a trade in here?
I don't know. I'm working it, Terry. These are hard. Like, it hasn't, not a single option in Humana or Kava in May have traded yet today.
Yeah.
So, and I'm pushing it here. I don't really know. Let's go next slide. Patrick in the SPX. He wants to sell. He's at the Polo Lounge in the Beverly Hills Hotel. All right, Patrick. We've been there, done that. Sell an Iron Condor and hopefully get out of 25% max profit. Well, we did that yesterday and it worked. SPX. And we're going to go to the 0 day. And the expected move is $43, let's say. So we'll go to 46.18. We'll drop it by 50. So 46.20 down to 7. We'll go 65. 65.60. And we'll go up an equal number. 85, 65.70. Mid prices. Oh, shoot. I messed this up. I'm trying. Mid price is, I don't know, a buck 75. Yesterday, I think we sold this, Patrick, for 195. I can't remember. So far, nothing done. Working it.
Okie dokie.
Now, there's no excuse here for not getting a fill. So, not like the other stocks. Filled 170. Did the best I could. Humana, we'll go back there and we'll see if I give up a couple pennies. Nothing done. Kava, we'll go back there and we'll try to give up a couple pennies. Nothing done there. GLD. Gold keeps dropping, which I'm not upset about, but we did not.
Yeah. Because of existing position.
Nick, yeah, I'm really short in gold, so I'm not upset at all. But since you put that, I put that order in when gold's up 20. It's up $7 now.
Right.
Let's go. Let's go forward. Paul from Ariel Israel. Cool. Hey, Paul, welcome to the show. Let's do this. PLTR. This stock has really had a nice fall from grace, but it's up $2 today. Good call. Short put spread. What does he want to do here? Sell the 70, 60 in May?
Mm-hmm.
Now, normally I don't do this when it's after this kind of a rally.
Even the S&P down 23, hardly a rally. I mean, rally.
Well, I mean, PLTR is up $2.
Right.
Yeah, and PLTR does look kind of good here. I mean, we'll keep it small. But we'll put it on because we're not getting the other. At least it's liquid. We also have a long position on already in PLTR, so it's doing good for us today. Let's go to the next slide. Filled. Blake from Oshkosh, or Balaki as they say. NET. This is. Let's see. What does he want to do? Clean, neutral, strangle. We'll go to May. The stock is trading for 116. There's a little bit of volume in here. We'll go to the expected move, which is $20. Mm-hmm. But 116 takes us down to the 95 puts and takes us up to the. We're probably going to go to the 140 calls because there's a little call skew in here. We'll reduce our size. And IV rank is good. This trades around around 650-ish, 648. I don't know. 648. We'll give it a shot. Haven't traded this, Blake, in a long time, so we'll see. Let's go next slide. Filled. Blue Horseshoe from the Upper East Side. This is one of your old friends, Tony. Blue Horseshoe. Blue Horseshoe loves the Jets.
Uh-huh.
Boeing, bullish. Let's take a look.
Boeing, so now get that Boeing going.
Yeah, well, this Boeing usually needs to get going.
Boeing down $1 and change right now, $1.20 south of mid-range. Let's just call it over the last year. And by last year, I mean the last 4 months and 2 days.
Boeing, this is going to be a little easier for me because I already have some Boeing positions on, but I'm a put seller in here. Take a fill. Sold the 160 puts. Why did I chose the 150 puts. The reason I sold the 150 puts is because the expected move is $15 and the stock is 166. That takes me right to the 150s, right?
That's correct.
That's the logic we use. Go to the expected move, sell that put. Bullish. Let's go to the next slide. Thank you, Blue Horseshoe. Ron from MetaView. And he goes back and forth between Arizona and Vegas. May monthly expiration, good volume, dividends coming, Strangler Iron Condor at the expected move. Walmart. We're going to take a look at Sprawl Mart. We currently have the 87 straddle on. Where's the stock? 88.60. That's not bad.
Mm-hmm. No, that's good.
So we're going to close our
basically at the money, right? I mean, that's what you want.
Time for us to get out to change this anyway. And let's see, where would we go? Man, there's not a lot. Oh, we have April. Hold on. We got filled in gold.
Oh, look at that. Gold must have rallied a little bit.
It did. It's tried $7.
There you go.
All right, let's do this. So we are going to, in Sprawl Mart, we're going to sell the 95 calls and the 82.5 puts. Stock's a little bit on its butt. And that's the spread we're going to do. Take a fill, Phil. 275. Let's go to the next slide. Daniel from Southern Oregon. He wants mags minus gold. Help me here.
Okay.
Gold overvalued and large cap tech beaten up. But what does mags minus gold mean? What's mags?
I don't know. MAGS is a stock that down 31 cents. It's listed as Listed Funds Trust Roundhouse Magnificent 7. Let me do a little bit more digging here, Sadnov. I don't know what this is, to be quite frank with you.
I don't either. Kava filled.
MAGS.
Wow. Did not expect that, Phil.
I didn't either, to be quite frank with you. Markets must be moving. Round Hill Magnificent 7 ETF. It's the Magnificent 7 stock, Sosnoff, basically.
Oh.
It's what it comes down to. It's Apple, Microsoft, NVIDIA, Google, Amazon, Meta, and Tesla. Those 7, which have lost about 10.5%. So that's what you'd be buying.
What's the ratio here?
Good question. How would I look to figure that out? I don't know the notional value.
What is the implied volatility of the mags?
Implied volatility is going to be around 34, Sosnoff. Markets are fairly tight on the options. I mean, 20.
Yeah.
So
34.
That's accurate. 34.
Okay, so it's 2 times gold. So we'll cut gold in. So we'll cut gold in half, and we will do. It's gold in half, and it's what price is the mags?
Mags is $49.50. $46.50.
So if you cut, so it's 3 to 1. That's vol adjusted notional. 3 to 1. Okay.
Okay.
So I will I bought the mags, and I will sell the GLD.
Okie dokie.
Filled. Okay. It's a little weird, but we did the ratio 3 to 1. So we bought 3 shares of mags and sold 1 share of GLD. NASDAQ futures up on the day.
Yeah, they are, Son, up 3. Volatility, wow. Yeah, volatility still green / VX by 7 cents only.
Yeah, once again, I paid the price for adjusting.
You said you weren't going to do it. You actually promised me you weren't going to do it.
I know. And Tesla, it rallied all the way back. I cannot believe this. I cannot believe it.
Well, Sosnoff, Tesla down 280. You are correct.
Let's take a look. We're short a $9 put, $10 call. It's not the worst thing in the world. Well, what are you going to do? All right, let's go to the...
You know what you're going to do, Sosnoff? You're going to enjoy your son's wedding. That's what you're going to do.
You damn straight. Oh, we got it. That's all done. So the only one we didn't fill was Humana Iron Condor, which, you know what? It doesn't really trade much.
Yeah, I'm going to say that. That to me is a stretch.
GLD, we did a broken wing butterfly. We sold a call broken wing butterfly, so it's a little bit bearish. In Delta Airlines, we sold a naked put. In Kava, we sold Jade Lizard, which meant we got long Kava. We did nothing. SPX, we did a 0-day Iron Condor in the SPX. We did it for 175, and I'll put in our 125 bid because that's about 25%, right?
Yep.
Okay, I entered it. We'll leave it in there. In PLTR, we sold a naked put spread, so we got a little bit long this morning. In NET, which we haven't traded in a while, we sold a strangle. In Boeing, we sold a naked put. That should be a naked put. So a bunch of longs. In Walmart, we sold a strangle. And in a pairs trade that we've never done before, we bought the Mag 7 stock 3 times and sold 1 time GLD. So we got short gold, long Mag 7s. It is a I guess you would it's just a weird kind of pairs trade, but we'll check it out.
Okay. I listen, it was something new, right? I mean, we've never done that pairs trade before. It's something new.
And in the only scalp we've done all day, we bought some NVIDIA this morning, and we are going to sell it out now. We made almost 2 points on it.
Mm-hmm.
I'm sorry, almost 3 points.
Good job out of you.
That is a very strange stock scalp for us, but we'll take it.
You mean a positive one so quickly?
A positive stock scalp is a very strange world for me. Doesn't happen that often. Happens. Not that.
Don't get used to it, Sadnov. Keep your streak alive. We're gonna take a quick 90-second break, Sadnov, and come back. You know, it's almost the top of the hour, 9:05. You know what that means. We got the Skinny on Options, Matt. That's right, with my man Jake up next. We'll be back in 90 seconds with Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient, and Tasty Live does it again. They teach it in a way that is fun, it's easy to understand, and you're learning from people that have done it for 40 years.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. And you know what that means? Time for a little bit more Tasty Live with this man. That's right.
Good morning.
Jacob, that's right. Is in the house. My man. What's going on, brother?
Yeah,
Not so much. Not so much. Though I hear we've got a day late April Fool's going on Wall Street.
With the market itself, you mean, or somewhere else?
Oh no, I meant with the statue.
We're working it. We're getting our stuff in. We'll see how it goes. We'll let everybody know.
We had to wait till April 2nd, so you know we were serious.
Yeah,
not a joke. It's very serious.
Good
it's
stuff.
Not really as much fun as we thought because we were really hoping that Vanetta got arrested, and we were hoping for some fun outcomes, but it didn't happen.
But everyone is rolling with the punches.
Yeah, everybody's rolling with the punches.
Yeah. Well, then people enjoy it. That's also good.
That's true.
And maybe we'll raise awareness about testicular cancer. That's also part of the point, I guess.
Yes. Agreed.
How are you, Tony? How's your day?
I'm doing great, man. I'm doing great. I got SARS in the house here. Even the S&P's back down 22. NASDAQ's down 85 after being green for a moment. You got volatility across the board. Sad enough, we're not over yet. You're going to have time to readjust your adjustments.
I already did.
Good job out of you.
You can keep going. It's only 9 a.m.
I adjusted. I rolled calls down at the bottom and rolled calls down at the absolute bottom, rolled puts down at the top. So my man. Every once in a while, they get you.
Of course.
Today, they got me.
Every once in a while, every day of your life.
Yep.
I do good things. I try to be a good person, and every once in a while, they come in and they just slappy.
Yeah. Truly, no one has ever been so.
I should have just stuck to trading NVIDIA today because I bought the bottom and sold the top. So I should have just stuck to NVIDIA because that seems to be a better trade.
Yes, for sure.
All right. Well, you've still got. Wait, are you still on the consecutive winning days streak though?
Not really.
All right.
He's going to pull it out today. I think volatility is going to stay bid for most of the day. That's going to hurt your accounts out enough, but I think you'll make up for it come Thursday, so you'll be fine. You're just going to have to wait a little bit.
Oh, I really feel better knowing that you think that that's what's going to happen.
Listen, Tony is the oracle of the market. He knows
the volatility is going to stay bid. You're going to suffer today, Sadnov. You're screwed.
All right. Well, let's get into how we can be a little bit less cavalier in our.
Let's do it.
So I want to talk about the law of large numbers and what I like to call stochastic synecdoche, which is not a popular phrase, but I really like it. Synecdoche is the rhetorical device where you use a part of a thing to stand in for the whole thing. So, right, the classic example is in the Iliad when Homer's listing the Greek heroes going. He's like, and Argus went with 100 sails, and he meant he had 100 ships and all the people and the soldiers on the ships, but he just says sails to mean ships.
Mm-hmm.
And I think that a similar thing happens when people are using data a lot, where they'll take the average and they'll just use the average as if it was the absolute uniform, as if every single case was the average. And that's why I call stochastic synecdoche. And I think it's a real common pitfall, and the law of large numbers is sort of the reason that, or the justification that people can have for falling into it. So I want to sort of disentangle the two.
Mm-hmm.
And then because, Tom, I know you love a new paradox, we'll also have a brief discussion of Simpson's paradox.
Yep.
Thank God, because I was going to use that same example of Schenectady.
Schenectady is a town in upstate New York.
Yes, I've been there.
Synecdoche is a Latin term for piece of rhetoric. Anyway, let's talk about the law of large numbers real quick, and sort of why, when we say expectation, we mean the mathematical formal idea of the mean of a random variable. So Jacob Bernoulli, not to be confused with Daniel Bernoulli or any of the other Bernoullis who all made advances in mathematics. It's a big successful Swiss family. But originally proved the law of large numbers. He called it the golden theorem, but the law of large numbers is the name that stuck. And it states that if you have many independent cases that are all the same, right? So of xi's and they're all identically distributed and independent. And I look at their average of the first n of them, right? So x bar n is the sum of the first n xi's divided by n. And this is the one of the things that trips things up, is that each xi they're identical. So if they have any of them have a mean, they'll all have the same mean, but they must have a real mean. And not all random variables have a mean. Some are too heavy tail. Generally, it's because of heavy tails that prevent something from having a mean. And so the question of so log normal distribution has relatively heavy tails, but does have a well-defined mean. Something like the Cauchy distribution does not have a well-defined mean, or its mean is infinite. So that's a conundrum. But if those things are the case, then the probability that the limit of the averages is the mean is 1. It will almost certainly be the case, right? That's what probability 1 means. And so this is sort of the justification for why this formal definition on the bottom, that's what the mean of a random variable is, where it's the sum of all of its values times the probability of it getting that value. Why that is what we use to refer to as the expectation is because the law of large numbers says that it's this very important feature, that if we keep averaging independent copies, we'll get it in the limit. But getting it in the limit isn't really necessarily what we want. Let's look forward to sort of why averages are not the whole story, or not enough of a story. So there's a pretty classic picture, I think, Beth can go forward on, of if you want to compare sort of two investment strategies, and one of them is slightly more profitable over the long run, has higher average returns in total, the blue line does end higher than the green line. But it's much more volatile. It has a much more spiky downs and much more spiky ups, and the green one is much more steady growth. And if you ask an investor which of these portfolios do you want to have, I think it's a pretty safe thing to say that you'd rather have the green one, even though the blue one does wind up a little bit higher at the end. And if you had, an infinite tolerance for risk, you'd take the blue one because it's more profitable at the end of the day. The green one is just a much more reliable. It goes up more often. It's pretty steady. And that's more appealing, right? So that's an example of how the average is missing out on a lot of the story of the wild swings. Or on the next slide, we've got a classic joke story where the statistician drowns in a river. Go forward one, Beth. Yeah. The statistician looks at the river, computes that the average depth of the river is 3 feet, says, well, that's no problem, I'm taller than that, and decides to walk across the river. Of course, average depth is not the deepest part, and when he hits, most of it's very shallow, but when he hits the one deep part that results in the average being 3 feet, he sinks like a stone and drowns. And this is, I think, sort of the right metaphor for what goes wrong in our trading, right? When we have these studies and it lists the average P&L per trade and the win percentage and the conditional value at risk. And you've got to remember that while the average depth might be an appealing number, right? The average P&L per trade might be appealing. That conditional value at risk is the potentiality for a deep hole in the river, and you don't want to fall into those and drown. So it's important to not assume that every instance is going to be the same as the average, but rather to take the average as sort of your starting point for thinking about something, but make sure to include the variability. And in particular, I think, especially for traders, sort of the downside outliers are the most substantive way that the average can lead you astray, because the average will sweep them under the rug if they're rare. The last one, before we go to it, has a good little kind of gotcha-ish question, right? So common knowledge, men are taller than women. That's pretty widely agreed upon. No one's disputing it. But if you took if you took a random man and a random woman, what are the odds that that man is taller than that woman?
I would assume good.
Good. I mean, be a little bit more specific. Give me like a
60-40, I'm gonna say.
Okay, well, yeah, it's actually it's a little higher than that, but it's like 85%. It's still not. I think a lot of people take the stochastic route and say the man will be taller than the woman, but if that's not the case, because let's roll forward one. We'll have a little example. Right, women follow this graph on this pink curve. Men follow this blue curve. We've talked about how distribution works, right? So those heights are on the bottom, and the height of the curve is how likely you are to get a person of that height. And what you see is that if they're both normally distributed and they're independent because you're picking a random man and a random woman separately, then the difference between the two is also going to be normally distributed. The difference of two independent normals is normal. The difference of any normals is normal. And if they're independent, you get that their standard deviations are going to be the square root of the sum of the squares, which means that the variability of men and the variability in women will combine, and the difference between the two peaks isn't that far. And once you've combined the two variabilities, it's not that hard to get across them. So while it is more likely for the man to be taller, it's not really that likely, right? It's not that hard to find a woman who's taller than a man, right? If you go into the office, I'm sure you can find plenty of men shorter than plenty of the women. And this is sort of the key idea, is that you can't just assume that the averages will play out in any particular case. And I think that that's sort of a real risk, in that when we try to rely on the law of large numbers and we want to do lots of independent trades and try to get these long-term results, we need to be aware that that's only in the very long term, and that in the short term, we need to be more prepared for variability, right? Because the standard deviations, while it's not the sum of the standard deviations, the square root of the sum of the squares, which is less, it's still more than either of them were variable by themselves. So the variability does increase. It just doesn't increase fully, linearly. It increases with this parabolic curve to it. Yeah. So let's look at Simpson's paradox. Simpson's paradox is nice because it can be illustrated in this one animation. And it says that if you have a trend or an average that exists in several subgroups of a data set, when you look at the entire data set, the whole trend can reverse, right? So in each of these little subclusters, there's this upward tilting line of best fit, right? The pink one, the blue one, the green one. But if you take all of the data together, there's a downward sloping line. Now, this isn't a paradox, right? There's nothing untrue happening here, right? There's no contradiction, but it is unintuitive that you get this result where a bunch of subthings don't carry out, right? There's a famous example having to do with Caltech admissions, where someone did a study where they looked at how many men applied to Caltech, how many were accepted, how many women applied to Caltech, how many were accepted, and it looked like there was a big bias against women. Women had a way lower acceptance rate. But then, right, so like the total curve has a downward slope. But then they broke it up by departments. And it turned out that what was happening was that women were applying to the much more competitive departments, and men were applying more so to the really broad, it was easier to get into Caltech as an engineer than it was as an English major. And so the fact that women were disproportionately applying as English majors meant that they looked like women were being biased against. But actually, in each department, women were slightly favorably biased. It's just that the vast majority of women were applying to more competitive departments. Right, so this is what's going on. Or to have a sort of simpler example, we'll do some baseball stats on the next slide. In both 1995 and 1996, David Justice had a better batting average than Derek Jeter. But when you look at the 2 years combined, Derek Jeter was the better hitter.
Okay, sure, I get that. All right, that's a good analogy.
Yeah, right. Mm-hmm. It's because they both performed better in 1996 than they did in 95, but in 96 Jeter had way more at bats than Justice. And so even though in both 96 and 95, Justice had a higher batting average, together, Derek Jeter hit more. So it's not a true paradox. It's just an unintuitive result. But we need to really keep it in mind before we start inferring, right? If we've seen, our zero DTE iron condors have been paying off, really have been doing, wide iron condors have been doing worse than the narrow iron condors every individual week of the past year, doesn't mean that they're just always better, right? Even if something is in each subset better, it might be worse overall based on how the subsets align. So you can't really infer these transitive there's no transitive inequalities coming from subsets of data unless you also account for the size of the data set and all the confounding variables. Mm-hmm. So it's worth keeping in mind that this is how things can go wrong. And that's really all I wanted to talk about today, was these sort of dangers of looking at average and then trying to infer beyond the scope of that average. It's important to remember when you take an average or when you look at an average that it applies very narrowly to that context. And that when you're looking at something much more broad, you need to enhance your understanding. You can't just look at the average P&L of a trade. You have to also consider what its downside risk is, what the current volatility situation is. There's a lot more details that you should try to consider before you just trust in, this one paid off more on average over the past 20 years. It's the trade I'm going to make every day. And it's why I try to include CVARs and things like that in our studies, because I think that that's sort of the most relevant feature for people at home, is you want to enhance your understanding of the average with a real cognizance of the downside potentialities.
Mm-hmm.
Yeah, let's go to
good point. I'm going to give you a
point. I'm I'm a little bent out of shape that you pulled David Justice out of like, well, I'm not sure where you got that, but I don't think
this is an old paper on the subject.
I was going to say, because there's no way you remember David Justice.
No, I did not.
Okay.
No, this is from the What?
Mm-hmm.
All right. Yeah. So the law of large numbers says the net result of many independent trials will tend to be the same as the repeated mean. And so this can lead to a tempting mental shortcut where we rely on it and substitute average outcomes for each outcome in our thinking, right? We think about every trade as if it were going to produce its average P&L. But unless we had infinitely many chances, right, and an enormous account and could suffer any arbitrary number of losses, this is really missing some very important information. And that mostly can boil down to awareness of the degree of variability, so paying attention to standard deviations or volatility, and especially downside outliers, so measures like condition value at risk or worst loser or largest drawdown. Those will really help you avoid drowning in a shallow river, which I think we can agree is a silly way to go.
Agree there, it seems like, from what you tell me.
Thank you, Tony.
Sadnov, you agree?
I agree. That's actually a really good study. That's really good.
Very nice. Very good over our head, and we appreciate your time. We're going to take a quick 90-second break, Sadnov, and come back. I mean, we might have a special guest, but I know we have Mr. Scott Sheridan. I know, Sadnov, I know. Don't look at me like that. You'll be fine. I know we have Mr. Scott Sheridan coming in the house. We also have Johnny Trades coming in the house, too, Sadnov. We'll be back in 90 seconds. This is Tasty Live. Thank you so much, my friend.
Thank you, Tony. Thank you, Tom. Enjoy your wedding, Tom.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient, and tastylive does it. Again, they teach it in a way that is fun, it's easy to understand, and you're learning from people that have done it for 40 years.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call two real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks.
Thank you, man. Thank you. I really appreciate it. Very kind word.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Wait, breaking news. Did it. That's right. No, not Mr. Scott Sheridan. My friend Vanetta, what are you doing?
Hi.
Oh, we got everyone. Beautiful. What's happening here?
So you guys sent me to New York to deface a national treasure, and I did not get arrested. No, in partnership with a testicular cancer charity, we mounted cherries onto the back of the charging bull on Wall Street, and it was awesome. We did a test run last night at midnight under the cover of darkness. There's an NYPD pod cam. Thought we were all going to the pokey. And then, so Levi Sheridan, Scott's son, 3D printed these cherries. They weigh 15 pounds. Bobby has them in a suitcase. He looks like a homeless man. We're running up the street. We have 4 people with cameras, GoPros, lights, everything. And Levi is so smart, so he's got a 100-pound test fishing line, zip ties. We put them on. People went nuts for this. Some guy yelled at us, and this other guy was like, oh, he's just cranky. But it's all for a good cause. We're out there for a couple of hours. It took months of planning, but it really turned out better than I thought. You said that you weren't going to post bail for me. But yeah, Levi, it took him like 70 hours to 3D print these. He put like a glaze and a top coat on them. The stems are removable. It takes 2 people to hang them because that bull's ass is pretty tall. People like to rub his balls. You can see they're lighter in color there for good luck. Yeah, so that's why I'm in New York.
Those cherries got some good hang to them.
Mm-hmm. Yeah.
Some low-hanging fruit.
Yeah, so you guys should all touch yourselves. Check yourselves for testicular cancer.
100%. Good job, Vanetta. Good job.
Good job out of you.
Yeah, so just wanted to give an update. Check us out, Tasty Trade, everywhere on social, Instagram, Twitter, LinkedIn, whatever. Please retweet so we can get the message out. But I just wanted to say hey, so.
Awesome.
Vanetta, more importantly, are you going to go a little bit north to Russ and Daughters and bring home some treats?
I'm here the rest of the week, honey. I got plans. I got plans.
Ooh, do tell.
Anyway, I will let you go. Scott Sheridan's in the house. Nikki Bat's in the house. You guys have a good day, but I'll be on the show tomorrow.
Yes.
So
thank you, Vanetta. Appreciate the update.
Bye.
I know the rest of you three aren't in the office, but the rest of us are also supporting testicular cancer today. So we've all got a little.
Impure Batiste.
Just kind of showing them off a little bit.
Oh my God.
Hello, low hanging fruit there for you guys.
I'm supporting
They're so
them too.
big I can't even sit down with them.
Let me show you.
Yeah, come on, Dad.
Wow.
So it's really a good day in the office today.
You go first.
Yeah, let's see them. Come on, whip them out.
Hold on, I'm a little cold in here right now. Let me fluff for a moment. You're not going to see my hands for the next 5 minutes.
It's making me think of the Family Guy episode with the FCC.
Oh yeah, where he has the wheelbarrow with the balls. I'm talking South Park.
No, the FCC with the FCC. The beep. He's a beep.
Oh, too funny.
Yes.
Who's too funny?
Yes.
That's awesome. Really awesome.
Yes.
So shouts out. I didn't realize this was testicular cancer month. Everybody's getting a month.
Yeah. Well, go check after the show. The 6 can help. Maybe. I don't know if you guys still do that anymore. I don't know about you.
Oh, yeah. I'm going to go tell it. Right, Tony?
Yep. I'm not going to work.
I think that's somebody else's job.
Yeah.
So I think that's fair. So we just missed Who's Were Up. That was pretty good from down.
They were up. Us on the Dow are still up, although up small, but big movement in the market today.
Strong to quite strong.
Mm-hmm.
Yep.
Okay. Yeah. I like it. Both Tom, you're in a t-shirt. That's a little scary because it can't be warm in Chicago. Yeah, right. Okay, right. Mid-70s for sure. More importantly, how was your dinner? I'm not asking how Steve's dinner was. I'm asking how your dinner was. Did you enjoy yourself? Then we'll get to Steve.
No, I didn't. I ordered the wrong food.
You didn't get the sausage and peppers?
Yeah, we did. That was
that
good.
was the best. I had to order that. For the table.
That was the best thing we had all night. I messed up. You know what? I wanted to do something different, so I went. Jules and I split 2 dishes, and it was a mistake.
You and Jules split 2 dishes. If I said Steve and I split 2 dishes or Tony and I split 2 dishes, you'd be like, you know what?
No. We wanted to get. I wanted to try the skirt steak, and he wanted to try the chicken Vesuvio. So I said, all right, we'll split it.
Yeah, can you skirt to your right just a little bit, Sadnov? Can you go to your right just a little bit?
I didn't change anything, but that's
blame Bath. Yeah, blame Bath.
Wait, which was not good? The skirt steak or the Vesuvio?
Both of them.
Oof.
I had a beautiful veal chop Parmesan that was out of this.
Tony's look good.
You gotta order the right thing, son. It's like you go to a Chinese restaurant and order a burger. Like,
oh my God.
You know, I mean, that guy.
Wait. Skirt steak is not that complicated. And chicken Vesuvio, if this place is everything you say it is, they should be able to nail a chicken Vesuvio.
Yeah, but he's supposed to do the chicken Joe, which is the best.
Chicken Joe with the pepper, right? That's what the peppers and sauce.
He didn't do that.
I ordered the peppers on the side.
Rookie move.
Thank you.
Well, he did the same thing. He split his with another guy for chicken Vesuvio.
I didn't split mine with nobody. Okay, Todd came up with some bull crap. I just knew I was going to have a plate full of food that I can't eat because of how I got a physique to keep up, unlike you, Sadnov, who said he was going to a wedding and he was going to diet this week, and you ordered 2 meals.
Wait, more importantly, what did the birthday boy order? Please tell me he did not go back to his roots and get a filet. Please.
No, he did not. He ordered a New
Okay.
York strip, and it looks beautiful.
Perfect.
And I got to tell you something. He is methodical with that thing. He cuts it in a straight line.
Yes,
They cuts it into pieces, and then he is.
It's like a surgeon.
He's very slow.
You know
such
him better than I.
He's so slow. He's painfully slow. Yeah, like if it wasn't his birthday,
he eats like he drives. He does.
If it wasn't his birthday, I would have hit him.
You got to watch the 6 when he's out here. The 6, it drives her insane. It drives her insane. He's like, how can anybody put up with that?
I don't know how you can. He's so slow. Everything he does.
It was a 2-hour meal. We were done in 45 minutes, but he was still eating, so we had to wait.
And what'd you get him for dessert? I saw the candles. Got the candles.
Key lime pie. Key lime pie.
I like a good key lime pie. How was it?
It's okay.
I didn't try it. It was good though, I think. I have a question for you. The big question of the day.
I like key lime pie tart.
Me too. How do you have tart key lime pie?
Tom, Scott, he's not happy unless he's unhappy. Okay, so like everything has to be. It could have been a little bit better this way. I brought him like from Florida. He likes those what are they called? Sadnov, those
oranges.
No, those
patties.
Coconut patties. They only make the lime coconut patties. Now he goes, if they're lime, I don't want them. Like he's just that guy now. That's what he's become. My big question for you, and you know Slappy as he's gotten older,
First
a little
of
bit
all,
better than me.
I told you that before you said anything. I said, if you bought lime ones, I don't like them.
It doesn't matter if it's. I had them on me, and I wanted to present them.
If you brought 5 of the regular and 1 lime, he'd still say, "What's wrong with you? I told you I don't want lime." He wouldn't say thank you for the other one. So it would just be, "What's wrong with you? I told you I don't want lime."
They don't have the other ones anymore. I can't find them. The ones he won, I can't find. I know what he's talking about. They don't. I can't find them.
What do you want to know about Steve?
Do you think after dinner, it was his 60th birthday?
No. Don't do it.
Do you?
Tony, Beth knows Tony better than I know Steve.
Do you think he ordered in? Do you think he ordered in after dinner?
I have no idea what you're talking about, and I am just going to move on from this conversation. I'm with Beth. No.
That was like Minority Report, like a pre-crime Omaha. You know, like she knew the Omaha was coming. Like she got the little ball that came down and was like, okay, Tony's gonna go there. Gotta put it in.
Vacation was good for you. Vacation was good for you.
Yeah.
Thank you.
He's got a little pep in his step. I think it's the sun.
You do. Your battery is totally charged. I mean, you are on full. You are on go.
Yeah.
I am. I'm ready. Somebody's got to pick up Sadnov. I mean, Julia did a great job last week, but I mean, she doesn't have the experience to carry Sadnov for a week. I got the emails.
Oh my God.
Yeah, I could see it. All right. Well, listen. You have real talent in the house with Johnny Trade, so why don't I get to business?
Let's do it.
And I'll exit stage left. All right.
Beautiful.
Top 15 symbols going through the system. First 40 minutes today. No broad-based indices or futures. Time for you, number 15, Walmart. Have you ever been to a Walmart? Honestly. Have you ever been to Walmart? The only time I'll say yes, maybe when you were taking Case or Cole to camp and you needed something. But other than that, I'm going to sell you at ever being in a Walmart.
I don't think so.
Okay. All right, Walmart.
A real man of the people.
Well, there's not a lot of Walmarts in the city of Chicago, right?
No, there aren't.
No.
You got it because they take so much space.
Yeah.
But again,
I mean, where's
if you take
there
your
a
kids to
Walmart? I would go to a Walmart, but I
was just in one on Sunday. I mean,
I think they closed them all in the city.
The crazy thing about Walmart is if you compare it to Costco, I think, don't hold me to this number, but it's something like this. Costco has like 4,500 SKUs and Walmart has like 40,000 SKUs. It's crazy the amount of product. Crazy amount of products at Walmart. Okay, anyway, Walmart at a 56 for everybody else. Tesla at a 68, Nvidia at a 26, PLTR at a 76, TQQQ at a 70, TLT at a 49, Meta at a 64, AMD at a 43, Amazon at a 79, MSTR at a 27, GLD at a 53, Netflix at a 94, Apple at a 68, TSLL at a 69, Costco at a 48, and number 15 for Tom, Walmart at a 56. Rounding out the next 10, SoFi at a 74, Microsoft at a 73, Hood at a 90, Coin at a 30, XLV at a 64, and Google with an L at a 75.
Beautiful.
That's all I get.
I mean, that's all you're getting from this group. I mean, I'm the only one that participates for you.
And you do. I appreciate that.
I mean, it's a load here I got to carry.
And look at this. If you just turned your computer on, you'd say, oh, no big deal. SPOO's unchanged.
Unchanged. NASDAQ unchanged, down 5. Russell up 7. Dow up 30. Tariffs might be off now, Sosnoff. The Secretary of State came out and said maybe they're just a cap or something. I don't know. We'll see. Right now, you're on a need-to-know basis, and you don't need to know.
that Newsmax stock we were talking about yesterday, what do you think it's doing? Don't look. What do you think it's doing today?
Down 75.
Down 110.
I didn't know. I didn't look.
No, I know. I'm saying I think they got. I think the people that thought they were jumping the gun by shorting it too early yesterday paid with their lives.
Yeah. And there was nothing that us retail investors.
The good thing is it was so expensive. I mean, it was really hard to get locates on that one.
No. It was hard. It was hard to borrow stock. There were no options. There was nothing a retail investor could do there. You couldn't short anything.
There were professionals who were short it.
I think options are coming out in a week.
Yeah.
Really?
Nice.
Now, it'll be back to 20 by then.
Yeah.
Right.
And damn.
Yep. Very good. Well, thank you, Mr. Sheridan, for your time. I appreciate it.
Now you can bring in the real talent. Hey,
let's play some music.
Goodbye.
There it is. Donnie Trades.
My friend. How are you, son?
I wish I would have played into the cherry balls a little more today and done some like big balls trades. So maybe I'll help you make these, big boy trades, even though they're Johnny trades.
Something you don't know is we've got a song parody we did. Beth, can you bring up our AC/DC song parody?
AC/DC's song parody. You think she has this in it? You think she has this stuff in her back pocket or something?
Yes, I'm looking for it.
What do you think? Oh, hold on. Let me get it for you.
No, she's got it. We did an AC/DC song parody, the Big Balls song parody.
Yes, we have it. We're working on it.
All
Talk
right.
amongst yourself.
Yeah, we'll find it. You want me to go to the trades first?
Yeah.
All right,
Sure.
and then you'll bring them in. Okay, let's do some trades. Couple trades for you, Thomas.
Sadnuf, try to pay attention now.
Yeah. You didn't give any love to the cherry picks yesterday. It was all talk about you and your opinions and all that stuff. You didn't talk about cherry picks. We looked at the gold-silver ratio, which has gotten even further to the upside here. It was at like 91, 92 yesterday. It's come in a little bit today. So some of the trades here, I'm going to play into that. But the first trade, I'm looking at SPY. I'm doing a dynamic iron condor. I put you in one of these for the Qs last week or maybe 2 weeks ago. It's a nice, $100 or so winner. I don't know if you took it off or capitulated or whatnot. But we're doing the same thing in SPY. So I'm selling around the 21 delta short options. I'm going to about the 16 delta for the long options. I did this a little earlier this morning. We were down a little bit, so it's probably moved a tiny bit. But it's the 525, 515 put spread, so you're 10 points wide. The 586, 591 call spread. It's completely delta neutral when you start the trade because you're going to the same delta short options, same delta long options. So you're flat delta at the start, a little bit less risk in total risk to the upside because of the skew that you have. Plays into volatility, into what is, a pretty volatile moment here on Liberation Day 2025.
Yeah, I mean, it's not bad. It doesn't fit my position.
All right. That's fair.
Yeah, I'm good.
For the Johnnies out there, if you're looking to short vol, this is really a pure short vol position because you have no delta at the start. Any sort of dynamic iron condor, whether you do 20 delta, 5 delta, 20 delta, 10 delta, whatever for the spreads, completely delta neutral. All right.
Beautiful.
0 for 1. Maybe you'll like this one. I think you'll like this one. It's a little spicy, bigger ball trade. Silver has not participated as much in the upside as gold has. If you want to be short the gold-silver ratio, you belong silver, short gold, which is what I'm setting up here. This position is a poor man's covered call / ratio spread. It will give you a risk profile like an upside straddle because you're selling an extra call on the upside. So I'm buying June, the 28 strike call. It's basically a synthetic long stock position. If you want to just buy the stock, you certainly could. You'll use a little bit extra capital to do that. Buying the 28 strike call, I'm selling 2 of the May 32 strike calls against it. I'm selling those 2 calls at about 65-ish cents a piece. So you're reducing your overall basis on your long stock or synthetic long stock position by about half. You do this at $1.82 debit. Put your break even down at like 29-ish. For silver, you have a little bit of upside skew here, with $1.50-ish upside here with $1.50-ish in premium that's going to decay. So it gives you a nice potential return on capital if you do get a move higher in silver. You could probably hate it. If you want to do this 1x4 with stock, like you could do this like as a stock position, like a 1x3 or 1x4, you basically, finance the call, the long call.
Yeah.
What do you think? So a little direction here.
So my challenge here is I don't mind the trade, except that I'm already long silver because I'm short gold, long silver. I have the silver gold ratio spread on. So I was silver gold pairs trade on, and
on a ratio that you
on a ratio. Yeah. So I'm really long silver already. So I don't really want to. I think gold and silver are both going lower.
Yeah.
But I think silver's going lower at a slower rate than gold.
Yeah.
Yeah.
Yep.
So it's not like I don't really hate this trade. It just doesn't fit me because I'm already long silver.
That's very fair. The way I'm setting up this trade, I have less upside risk I have less risk to the downside on my silver position than I do on the gold position going down. So the next trade that I have, I just did a call spread in the gold futures /GC. So I sold a call spread out in the 50 some odd day. It's the May. I'm sorry. I don't think it's the May 16th. It's the.
Which one did you do? May 27th?
Yeah, May 27th. The 50 some odd day call spread.
Yes, 55. Which spread did you sell?
So I sold the 3,300, 33.15, and I did it at $3.20. So if gold and silver both go lower in this situation, and let's say my silver position expires worthless, I lose the $180. I've got a gold position that I would make 300-ish on. So it would be a net profit if both of these go down. If both silver and gold go down, as your assumption fits, I would make.
Where'd you sell it at?
I sold it at 320 credit.
Yeah, it's right around there. It's like it may be 330 right now.
The markets are a little bit wide.
The higher credit, the better it is for you.
No, of course. But I got to tell you something. It's so hard to get filled in there on vertical spreads.
I know. It's because of the call skew. So these spreads, they all trade the same amount.
I know. I tried yesterday to sell call verticals in there for hours, and I didn't get filled on a one lot.
Well, you're stubborn.
I think you got filled later on, didn't you? On something?
No.
No.
It's easy to sell strangles. You can get filled on adjustments. You can get filled on, but to sell naked verticals.
Come on, an adjustment is a vertical spread. I mean, you're just being more aggressive with your pricing. You're just not getting filled around mid price, and that's what you're judging it by.
Yeah, that's true. Okay.
Yeah. Yeah, you're a stubborn Johnny. You gotta get mid-price.
I hate to correct the creator, but I will compliment you, son. You bring a good way of
Nikki,
looking at.
Dad, I bring the balls.
I'm sorry, I thought the middle of my sentence got in the way of the beginning of Tom's. I'll start again. You bring a strategic way and a nice way of saying why you're placing the trade and what the trade will do afterwards if it fits that person's assumption. So, good job out of you.
Thank you. Tom's eyes fell back in his brain.
I did your trade at 330, working more at 340. Hey, here's the song.
And they're such long calls, wordy long calls. And he's got long calls, and she's got long calls. But we've got the longest calls of them all. And my calls are always trolls.
Wow, guys.
You don't know the words, Tom?
This is amazing.
And everybody's
I know the words.
shaking their heads.
Sing it.
Sing it.
If your name is on
We
that
just
list,
replaced
no one can take
something with something. We replaced balls with calls.
I'm gonna take a quick 90-second break right here with the music playing. Beth, do we have Tony coming on from
We do.
Tony MX?
Yes, we do.
That's awesome, ladies and gentlemen, because if you haven't seen, you can follow Tony's trades, who will be with Jenny in just a minute. Going right down here to the follow page, you go to Tony MX right here on the right. You'll see he trades a lot of SPX, SPY trades. So if you're an SPX, SPY trader, stay tuned next. We got Jenny and my man Tony, who's on the follow page.
Hang loose, everybody.
Hang.
And they're such long calls, wordy long calls. And he's got long calls.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back? But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
Kentucky.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the Fed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
Well, I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Hello, everybody, and welcome to the Jenny and Tony Show. This is a very special edition for me because I don't know when the last time was that I did a show with you, Tony. I don't like to bother you because you are the busiest person I know. Thank you so much for giving up an hour of your day to come on the show.
It's a pleasure. I love coming on. Mostly I've come on with Liz when you're on vacation, but I like going on with you too. It's a lot of fun.
Oh, I'm really happy. I never want to bother you. And so when you said, oh, I'd be happy to come on, I was thrilled. And when I say Tony is the busiest person I know, how many businesses are you running?
Right now, I think 11.
So I'm not kidding. I'm not kidding when I say Tony is the busiest person I know. God. He is amazing. He's been part of the Tasty family since we started, and he has written books. If you don't know Tony from Mexico, he's definitely someone you need to know, and a wealth of knowledge. And we love you. Liz and I love you, Tony, and so I really appreciate you.
Thank you so much. You know, my two passions are trading and starting companies and, just working. I have very few hobbies. I started playing pickleball and recently, like a year and a half ago. And now I have a pickleball business and maybe two more pickleball businesses. So that's the problem.
Tell me about your pickleball business because there's this property. So there's this little like vacation community on Lake Michigan, and there's this big property that's for sale, and I keep wishing someone would buy it and turn it into a pickleball courts.
I'll buy it. So let me tell you. So I wanted to get into the club business, owning clubs, pickleball clubs, and it's very hard in California here where I live. So I decided to open a pickleball shop called Get to 11. Sorry for the commercial. So now we've become the largest pickleball retailer in Southern California. We have shops at the two largest facilities. But now I'm back hunting for land, and I'm very close to buying a piece of land in Austin, Texas, and another piece of land here in California. So pretty soon, hopefully, I'll have my shops and some pickleball clubs. And I'm always looking for land. I'm serious. If you think that's a good piece of land, I mean, I'll fly over there and we can buy it.
All right, Tony, if next time you're in the Chicago area, I'll take you over there because I'll send you some information on this area because
I can be there tomorrow. Yeah,
it's developing. It's getting, but there's like an old dilapidated warehouse on the land that would have to be removed.
That's fine. I mean, if you see the land that I'm buying in California, it has more issues than the National Geographic. So I'm used to that problem.
Okay. All right. Well, I will. Yes, because I've been looking at this land for so long thinking I wish someone would turn it into something because this area is so busy. All the beachgoers, it's packed. As long as the weather's warm, it's packed. And there's so many kids on the beach and so many people there year round now. And there's nothing to do but the beach.
Yeah, the only problem with starting businesses with your new hobby is that you don't get to do your new hobby that much. So that's what happened to me in my golf business. Now it's happening. I'm working more than playing pickleball. So, but it's
now. Speaking of your golf business, will you get to go to the Masters?
This year, I don't have tickets, so I'm still hoping I get a last-minute invite from John, my friend. So I'm still have hopes. Luckily I've gone many times, and so I can't complain. So I've gone 6 times, so I think more than my share. So I would love to go.
So we have viewers who are tuning in. They know you're coming on today, and you're great because you manage accounts, but you also have other investments. And I think we have a lot of viewers who say, yeah, I want to trade, but I have other money that I don't want to worry about. And it's interesting to hear you having 11 other businesses too, that you're investing in so many other things, which is really cool. And we've got a lot of viewers out there who want to diversify in various ways. I know you were starting up that laundromat business. How is that going?
So that laundromat business, I see the old Tony would have still had it and be losing $500,000 a year. And it wasn't like a technology-based washing thing where you left your clothes on a locker and then would pick it up and return. So we were making like 50 cents per load. So the new Tony decided to shut it down.
Oh, you know what? Good for you. I think that that's growth, right? It's just like in trading when sometimes you take a position and you think, I'm just going to get finished. I'm done with it. I don't need to make my money back here. I'm just going to take the loss and be done with this position. Yeah.
No, definitely. The old Tony would have still be trying to work it. And when the margins are not there, it doesn't make any sense to keep at it, especially at my age. I don't have that many years left to do stuff.
Well, so I love the new pickleball business. Now, do you still have kids in New York?
I have my 2 oldest live in New York. Yep. And the youngest lives here in San Diego.
Okay, well, send your New Yorkers over to the financial district because I didn't know what was going on. I was in the office and Vanetta and Garrett, and there were a group of Tasty workers going to New York. They were all kind of laughing and this seemed like a big to-do, but I didn't really know what was going on. John, can you show the art card of what they did? They literally flew to New York and did this last night.
I love that. I love it. Absolutely love it. Wow.
So it's in honor of April is Testicular Cancer Month. So that's why they put it up there. But they did it last night and think in the middle of the night, put that on. I'm so relieved that Vanetta and the crew did not get arrested. I didn't know what would happen, but it's still up there. So send your kids, tell them to take a picture.
Send Nicole. The golden child is here because he's going to attend. He's friends with Tom's son. So he came to, I didn't get the nod, but my son did. So it's good.
I was going to ask, so your son's going to the wedding. Maybe he could take you as his +1.
Probably not.
No, dude, you know how excited Tom would be if you walked into the wedding?
Oh my God, probably. I don't know. Poor Tom. Yeah, it would be fun. Oh my goodness.
All right. Well, Tony,
for your viewers that don't have a lot of time, I'd like to first, before we go into trades, I'd like to, if it's okay with you, tell people how I look at investments. So I look at my financial investments in quadrants, in four quadrants. And I think this is how a lot of the very smart macro traders, macro investors think of putting their money. So let me go through each of the 4 quadrants. So, and also think of the quadrants as a football team. You need defenders, you need goalkeepers, you need attackers, you need middle linebackers, right? And then to make a good team. So the 4 quadrants are, quadrant number 1 would be your cash quadrant, where you have liquidity. Liquidity for what? Liquidity to use as investments, liquidity as collateral for your trades, liquidity, we never use 100% of our accounts, right? Mm-hmm. So quadrant number 1 would be my liquidity quadrant. And after we talk about the 4 quadrants, we'll talk about the percentages of each quadrant. So The second quadrant would be your fixed income quadrant, where you would buy from the least risky would be U.S. T-bills. Then you can a little more risky because of the fluctuations in price at U.S. Treasuries. Then you would go into AAA credit, then you would go AA, BB plus, B, C, junk, international credit, foreign debt, etc. So the second quadrant is mainly your bond quadrant, where I would say it can be both a defender and an attacker, but it's also more of a steady running back that can get you 3-4 yards towards the first down. Then the third quadrant, I would say, is the equity quadrant. Here in equities, you can, for me, my equity quadrant is mainly the S&P 500, but you can put anything you want. You can buy domestic stocks, foreign stocks, any kind of equity that you want. I would put it on the third quadrant. And the fourth quadrant is my alternative quadrant. The alternatives that I like the most are gold and Bitcoin, but people can put there any other stuff that they want. Credit default swaps. They can put all sorts of digital assets. You can put any other stuff that is not a bond or an equity. And for currencies, for example, could be an alternative if you want to hedge your portfolio against the weakening dollar, etc. So this is how I look at my portfolio or my team. So I have to recruit a good team in order for me to be successful. And how risky and how conservative your portfolio will be is based on the percentages you allocate to each quadrant. For example, if we have a 95% T-bill portfolio and a 5% SPY position, I would say that's a very, very conservative portfolio. You have many more defenders than attackers, so you're not going to score a lot of points, but you're also not going to get blown out of the game. So depending on your risk tolerance is how you should allocate those percentages on your wealth, on your liquid wealth. So, and some people like to allocate, for example, for me, I like to allocate 5 to 10% on alternatives. I'm heavy in gold, and I'm less heavy, but heavy also in Bitcoin. And I do believe if you want to outperform, you need someone who's a heavy scorer, and I think gold and Bitcoin could do heavy scoring for you. If you want the S&P 500, although this year has been down, it's a very steady 8% return investment, and bonds are return normally 4 to 5%. So depending on how much you want to risk is how much I would allocate to each of those quadrants.
I love the analogy, and I really like talking about the defenders versus the scorers. And if you want to have a safer portfolio, you can't expect to have lots of scores. You're just getting a slow return. I love that. I love that analogy. Now, when you talk about your cash account, I know Liz and I will keep some money in BOX or in the T-bill, in BIL or BOXX. Yep. But we feel like that's almost like cash because you could sell it and have that money right away. It's not necessarily. So when you talk about your different money in the different quadrants, your cash, do you always have that in something as well? So it's not just
of course, because you don't want to have the cash just sitting idle when you can get 4%. In the old days when you got nothing for cash, it doesn't make sense to put it in something. But yeah, your cash should be put into something. But some sort of cash instrument that doesn't move. For example, the 10-year treasury is not a cash position because it moves. It moves a lot. So I would consider short-term treasuries, and bill, box, etc. Of course, cash equivalent.
And so since we're on that topic, if we can go to the platform, I'm just going to pull up just what we were just mentioning. So here is BIL, where it's this 1 to 3 month T-bill ETF, and you can see it just so basically, if you put money into this, you just keep getting more. Your position just keeps growing.
Right.
And it doesn't. So this is something I think of. Okay, if money that I'm not using, throw it in this, or throw it in the BOXX, which is this works just like the SPX box.
Yes. Yes. Yeah, I also sometimes buy a little box for tax reasons, but I normally like to do my own boxes. But yeah, box works perfectly fine.
And that was a question we had. Whether you put it in BOXX or do your own boxes in SPX, someone asked why one over the other, is one better than the other? Why would you want to do your own versus this? So that was a question that came in.
So the reason why you would do box X instead of doing your own boxes would be, number one, if you want to have a permanent allocation of your quadrant to that strategy, and you're not going to sell it, then I would keep it there, and this thing keeps reinvesting, and you don't get capital gains. Now, if you think you might need the money, then I would do my own box at a certain expiration that I know I might need the money. Also, the box charges a little fee, right, for doing it. And if you do it yourself, the only fee is maybe the amount of energy you waste by clicking a button. So
and also, and I don't know about BOXX, but I know SPX is taxed, 60-40. So it's like part long-term, part short-term. Right. So there are some tax benefits to SPX. I'm not sure on the BOXX, but to your point,
but I think it gets taxed regularly.
Right. So can you walk our viewers through the box that you would look at putting on, just for people who are unfamiliar with it?
Of course. First, I would decide if I want to invest my money 3 months, 6 months, 9 months, or 12 months. Normally, I don't go more than 12 months.
Okay.
And let's say you want to put your money. I wouldn't do it in December, because then that would generate a taxable event in December. Maybe I would use a January expiration, January 2026.
Okay.
And what I like to do is, so it doesn't matter how large or how small you do the box, it's always going to work out to the treasury, right? So, but Tony's, I like to use $300 both ways from the money. For example, let's pretend we're at 5,600. So I would buy the 5,300 call.
Okay.
And then I would sell the 5,900 call.
Okay.
And then I would box it by buying the 59 put and selling the 53 put. Yep.
So you put this on.
Yep.
And
so the difference between 600, because it's a 600 wide trade, is how much money you're going to make. So you're guaranteed to make, 2150. So if you divide 2150 divided by 580, which is your investment, you're going to make 3.7%. And if you compare that, how much you would get in treasuries right now, if you invested your money 288 days, it would be very close to 3.7%.
Okay, so this is a way for people to have their money in something that's going to return the same as treasuries, but you can take this off whenever you want. If you don't want to have this on anymore, you can take it off.
But there's a benefit. So treasuries, the U.S. tax system that I've become an expert in, so charges you by bucket, right? The dividend bucket, the interest bucket, the capital gains bucket, the passive income bucket. So this trade would be considered a capital gains bucket, but since you're using SPX, it would be a capital gains classified 60-40.
Right.
So it does have a few advantages from doing, instead of buying a U.S. Treasury.
Now, do you mostly trade SPX when you were talking about, if in having your equity quadrant and trading maybe just the S&P 500? Are you mostly just trading SPX?
Mainly, yes. I know I should trade more stuff, but mainly I do.
We meet many people on the road who say, after all these years, I mostly just trade SPX.
Yeah. I don't have enough hair to trade Tesla or the Mag 7 or stuff like that. So.
Oh, it's funny because I was looking at some puts yesterday in Tesla, and we were sitting at the table, and I said, "Oh, these puts look kind of juicy. I'm tempted to sell them." And we were having that discussion. Are you better off? And I even had Dr. Data on yesterday talking about, do you want to kind of safer bet and just be in an ETF like the Spider or the Qs or the Russell versus all these individual products which have a higher volatility and a little more risk?
Yeah. Yeah, I would not sell like myself naked put on Tesla, but I would do a 111 on Tesla for sure.
A 111 on Tesla.
Yes.
Let's,
We can try it if you want. We can take a look at it.
Let's look. So a 111 on Tesla.
So
would you go to May?
I would go. So they have earnings soon. So yeah, let's go to May.
Okay.
So I like to start on the 25 delta, which would be the let's say the 230.
Okay.
Then I would go to the expected move. That would be my go-to. So I would, in order to make a little bit of money, I would probably I would sell the 215.
So you buy the 230.
Yeah.
Sell the 215.
Yeah, that's
okay.
345, and then I would probably sell the 190.
Okay, so you have essentially a long put spread, and then selling a put outside of beyond that to pay for that long put spread. So this is the 111.
So hopefully, in a dream scenario, Tesla has earnings that disappoint, and then the stock moves to like 210, 205, and you can collect your long put vertical, and then hopefully the stock doesn't go to 190, and you can also keep that credit. So you would make 15 points would be very, very nice.
And your break even is so far, your break even is at the 175 level. And honestly, I like this better. Yesterday I was looking at selling the 200 puts, and my break even would be 195. So in this trade, your break even's 175, which sounds a lot better.
Yeah, plus you can benefit if the stock moves down.
So now, the 111 is buying a put spread and then selling a further out of the money put to pay for the cost of the put spread.
Yeah. Now, if Tesla goes to 150, you won't be happy either way.
But that's just
at least I feel that I collected $15, and on the first bounce, I already have $15 in my pocket. So that money helped me go back to break even faster than just selling the put.
Right. Yes. And then, and here I see you're taking in a credit for it, very small credit, almost putting it on, but it is a credit. So this goes back to your old saying of death by debit, where a lot of people would just buy a put spread thinking, oh, if it goes down, I'm buying a put spread, but death by debit. Yeah,
because that debit spread is expensive. We were paying $4 or $5, right? $4 for it.
Right.
So, I mean, it's an expensive trade, especially Tesla's 270 and we're buying the 230. So, it's a very low probability trade if we just bought the put spread.
But if you have trades like this on, you're not hurt as much in this down move this down move for me, the down move has been painful, right? I had a nice profit back in January and that's gone. And then some. So the down move has been a little painful. I don't know how you've been faring during the.
I've been very lucky. I only do these types of trades. I do the 111, the 120. I do broken wing butterfly. So mainly everything is the same trade. And normally I try to make 1.2% a month, and I finished March with 6.1, and I'm still up 6% this year.
Good for you, Tony. Good for you.
Yeah.
I don't know if you heard that noise in the background, the thunder. It's really storming here.
Oh my goodness. No, and right now I'm only using 21% of my capital, and when it got really ugly, it went up to like 45% for a few days.
And so you mostly just have on the 111, 121, or 120.
Yeah, and the broken wing.
And so all of those downside positions.
Yes.
Are they there to offset or protect your long equity portfolio?
In my trading portfolio, I have no equities. I don't have long equities. I have another portfolio that I do allocate it as a quadrant portfolio, and I don't touch.
Okay.
I might sell some calls against it sometimes, but I really try not to touch it. Especially if I touch gold and Bitcoin, I'm going to be trading them, and I just want to hold them.
I see. It's hard. It's so hard. For me, it's hard to just not touch anything. And sometimes I'll say, like, I'm never going to touch this. And I do. So that, core weave, what was that?
Yeah.
CR. What is the symbol? Oh, here it is, CRWV. So yeah. I bought some core weave in the office. We were all buying it. I bought some, and I said, I'm just going to buy this and I'm not going to sell it. Well, this morning I sold it. It's hard for me to just hold on to things.
So the only way to do it is to put it in a separate trading account or investment account, and have someone change the password on you, and that's it.
It's funny. That's funny.
That's the only way to buy and hold.
When my son turned 18 and we opened an account for him, I thought, okay, this is going to be good because this is going to be things that he just puts in here, we put in here, and it just doesn't get touched. It just like stays. Yeah. But then I'm always calling him like, hey, I know you have this and it's up this much. Maybe you should think of selling it. That's very hard for me to hold on to things.
It is. But, with inflation, they're printing so much money. I know they're trying to cut government waste right now and whatever, but they're going to keep printing money because there's not enough income to offset all the expenditures from the government. So they're going to keep printing. And the only way to pay for the debt is to debase the currency and devalue it. So I tell my kids any extra money that they have should be going to assets. And when I mean assets, it should be going to the SPY, to GLD, to Bitcoin, to some real estate, some digital assets, anything that can hold your value. Because if you keep it in cash, that cash, you're losing about 8 to 10% purchasing power every year. So in 7 years, you almost lost half of your money. So you have to train the kids, and I'm trying to train my kids to keep accumulating assets.
Just keep accumulating assets.
Yes. Every $500 that they have, they should buy a SPY. Every $300 extra, they should buy one GLD.
But what do you think of and I know this is tasty, and we're traders, and we trade, and you have your trading account, and you're an active trader, and I'm an active trader, but we also have other accounts that you may not, that we're not actively trading all of our money. So what do you think of people who just have dividend paying stocks and they let them sit there versus having those dividend paying stocks and you're selling calls against it?
So, I mean, it's very valid to have your dividend stocks and just that. But the problem with the dividend stock, it has individual risk. So even it might feel that it's safe, but that company could implode and go bankrupt. So if you're going to do a dividend portfolio, I would be actively checking every 3 months what their earnings are and see if you still want to keep it in their portfolio. Because sometimes dividend stocks that pay a high dividend, so everything in life is risk reward, right? So a high dividend also means high risk. So if you want to have a dividend portfolio, I have no problems with that. I would be selling calls, maybe to the 30 delta, 20 delta on top of, to enhance that dividend. Mm-hmm. But I would not just be sitting passive on them. I would be checking every stock that I have, every quarterly report, and be on the lookout for bad earnings, for cutting sometimes they cut their dividend, and to see if I would not just keep it as a passive portfolio.
Got it. 100%. Okay, here's a question that came in that I'm going to read so our viewers know what we're talking about. But this came in from a viewer. His question was, if he has $500,000 and wants to earn $500 a week with as little risk as possible, he wants to put a new trade on every Monday, but it doesn't have to come off at the end of the week. And he wants a trade where he won't lose sleep over it. So how could he take $500,000 and make $500 a week, which comes out to be somewhere between $25,000 and $30,000 a year off that $500,000, which is not a big percent, but that's all he's looking to do.
And 52 weeks is $26,000. So
$26,000.
$26,000 on 500,000. It's just 5%, right?
Right. It's just a very small percent.
So he can practically get that by buying 1-year treasuries without a lot of risk. But that would not get you to the 5%. So, for example, let's try to do a trade that I like to do with my kids that actually provides not necessarily a $500 a week, but we can translate it into a weekly thing. If we go to SPY.
Okay.
So this trade will give you 12% a year, not 5% a year.
Oh, so double what he's
Yeah.
looking for.
Double what he's looking for, but I would not put 100% of my money in it, right?
Okay.
So let's go to March.
To May? Oh, March 2026. Okay, so a year from now. Okay.
A year from now. Okay. So pretend you have a property that's worth $100,000. What do you think it's a good return on that? You know, they talk about cap rates. Normally, a good property has 5, 6, 7% cap rate, which means it yields like 7% on your money, right? So you could probably get, $7,000 rent on your $100,000 house, which is about $500 a month, not a year, a month, right? Mm-hmm. But you have to spend $100,000 in an asset to get that 7%. Now, if we want to make 1% a month, so 1% a month would be in the S&P 500 would be, let's say, $12. Let's try to look for a put that's worth $12.
Okay, so the 480 put?
For the 480 put, and let's take a look-see at how much capital it's using.
$4,800.
So it's using $4,800, and you're returning $1,234, right? So it's mm-hmm. not 1%. It actually looks right now. Those returns, I'm not saying they're fake, but they're not necessarily what they're going to be. Divided on 4,800, so that's a 25% return on your investment, right? It's a pretty good return. And why do I say it's only 12%, not 25%? If you clear that and sell the at-the-money put, I just want to see the capital required to sell the at-the-money put. So the capital required to sell the at-the-money put is actually $11,000, right? So if nothing happens, you did get that 25% return on your money on the 480. But let's say the stock market crashes to your level. So the capital required to keep that trade on, or the amount of money required to keep that property in your possession, goes from 4,000 to 10,000. So I call that planned capital. So even though the computer right now is telling me I only need 4,000, I would plan $11,000 of capital for this money. So the $1,200 actually is the 1% a month on the 10,000.
And I'm glad you were talking about that, how your margin can increase, your buying power can increase. So if you start with that out of the money put using 4,000 and it ends up at the money, it's going to be using 11,000 or maybe 12,000 or maybe a little more depending on.
Or maybe 9,000. Depends on the VIX. Yeah.
Sure.
But look at the beauty of this trade. Look, so we're 480, right? 480 is 80 points below the at the money. 80 divided by 560. So the stock market can go down 14%, right?
And it's already down.
It's already down. It could go down 14%, and you're still going to make your 1% a month. I mean, just show me what better trade is that? I mean, it's ridiculous. And
so this is what you're teaching your kids.
Yes. Yes. And let me tell you how you manage it. So let's try to go 6 months, 180 days out, and look at the 480 put, if you have a chance.
6 months. So just go 6 months out.
Yeah, 180 days.
Okay, here's September with 170.
September would be perfect. Let's see the 480.
It's $6.50. Mm-hmm.
So we already collected half of the money. What I would do then to reduce the gamma risk of the portfolio, I would shut it down and then redeploy it again a year out. And you see, that way.
Oh, so you're saying halfway through, you're saying like halfway through, when you're halfway through, buy it back for half the price. So, 6 months pass, that $12 put is worth $6, and buy it back and then put a new one on a year out.
Yes. So that's the tasting mechanics. So we buy it at 50% profit, right?
Yes.
Now, sometimes you don't have to wait 6 months. Sometimes if you sell it correctly on a down day, sometimes it's 3 or 4 months. So it's like inventory turns on a business. How many times can you use that $4,000 or $5,000 of collateral to get your money? So if nothing happens, you can do it twice. Every 6 months you can turn this thing.
And again, this is only in this trade here.
Yes.
It's not even using, if you put your whole $500,000 into this trade, you'd be getting, like you said, way more than what he's looking for. But I wouldn't put it all in. This would just be one piece of many other trades.
I would do this on treasuries, and he can easily achieve this. So let's say he had $500,000. So I would put, let's pretend each trade, Jenny, each trade is $11,000, right?
Okay. All right. Let's pretend, even though this is only using 4,700. So you would say 11,000 at the money margin. You wouldn't look at it as notional value.
No, I would use $11,000, and then I would look. So I'm gonna make $1,200. So he wants to make $25,000 a year divided by 1,200. So that means he has to do 21 of these.
So we could go to 2 SPX too, right? We can.
Yeah, but let's keep it in SPY let's see if we do 21 of these. How much capital would it require?
151,000. And that's at the 4,000. But if we're looking at 10 or 11,000, then you're looking at like $25,000.
Yeah, if you.
Not 250,000.
Yeah, you can move the 480 to at the money, and we can see what happens.
Oh, right. Oh, and if we have to do 21, sorry.
21. Yep.
21 of these, so 230,000.
Yeah, so he would have $230,000 invested here, and he would have $270,000 invested in treasuries. So this will give him $25,000 a year, and then the treasuries, 270 times 4%, would give him another $11,000. So he would make $36,000 divided by 52 weeks. He would make $690, so almost $700 a week by doing this.
So more than what he's looking for of the $500 a week. Now, do you ever, would you say this is put this on, close your computer and don't look at it? Because if you look at this daily, quarterly, whatever, it is going to move and you will experience some pain and it could fluctuate up and down. And if the SPY is below 480 in 352 days, then you've got to keep rolling these puts.
Yeah. So if I was starting this thing, I would start it in 4 months. I would not go all in, for example. I would do it in 4 or 5 months. Maybe if we have a down month, maybe I would put in 4 units of this trade, even if I make less money. The next month, I would put, and then I would go to another expiration and do another 4. The next month, I would do another 4, and that way until I get to my 21 units. And that way, by the time you're putting on the last of your units, you're going to start taking off the front units, and then you're not all in at one level. So if I was starting this, I would do it staggered. That's how I do it. I would not start with 21 the first day.
Okay. So start and slowly put them on.
Yeah, I would put 4, 4, 4, 5 maybe, and then I have the 2021.
Uh-huh.
And by the time you put the last 5 on, you're probably taking off the first month. If you're opportunistic and only sell these puts, every month has a few down days. So I would only put them on down days. I would take him off at 50%. So by the time he's fully invested, he's probably taking off some of the puts already.
Got it. And I know he said like a don't lose sleep trade, which
well, I mean, you're buying the S&P at 470. I mean, right?
Right. Now, Tony, I still remember. You know how we can't forget trades.
Let it go to 200. What? Imagine if you sell, then you get assigned, right? And then you either roll the put or you sell the calls against it.
Mm-hmm.
If you sell the calls against it, let's say if it goes to 480, you're getting $100 for every covered call. Let's say
then it turns into covered calls.
And then it turns into a covered call or a Wheel of Fortune type of thing. But
it's interesting to think. Well, and we're actually in a good spot right now, I think, having already come down 10% to start a strategy like this, because we've already come down. If we go down another 10%, these will expand, but they're not. I was before after we started moving down, I was selling some December puts, and then we continued to move down. They didn't experience the same kind of pain that my April positions experience.
Right. So take a look. If you just bought the S&P 500 hoping for 8%, I would rather do this and have a 15% buffer on a market crash.
Right.
And then I'm not going for 8%, I'm going for 12%.
Right.
On my money. So if the stock market crashes, you're going to lose, one by one. But here, the first 15% of the crash, you don't own it, right? And maybe 2 or 3% more because you got $12. So maybe the first 16 or 17% of the crash, you're okay with. You're okay. So if you're going to buy and hold S&P for 8% a year,
you're better off doing this.
You're way off to better do this.
Now, this is why I love having you on, because you use this. You're like the smart man's guide to using the market, right? Instead of just buying it and looking for that 8%, you're coming up with better ways to earn more, which is why the viewers love you. And honestly, I will take tweets. If anyone has any questions for Tony, you could send a tweet, include the hashtag LIZJNY. I'll pop into Twitter so we can see if anyone has any other questions for you, because you're always a wealth of knowledge. It's so nice to have you here with me. And I think this was a great discussion and a great idea when you're looking at comparing just people going in and buying the S&P and looking for that percentage. Do you ever trade the 0 DTE?
Yeah, now if you want more gas, I have another trade that I do.
Oh, sure.
For people that have a full set of hair. So we go 45 to 60 days out. And I do a straddle.
Okay, 45 days out would take the May. Okay.
Yeah. Normally you get between 16 and 18, because now with volatility, the straddle is probably paying more than 25, I'm guessing.
Yeah, almost $29.
$29, right? So this one I would take off when you make 20%, which would mean $6.
But just the straddle, nothing else. There's no protection here.
No, nothing.
Tony, you're crazy.
No, why crazy? I mean, this is a very good strategy. You're selling the most expensive options on the board. How can that be crazy? Crazy is the person who buys the straddle. You think if you buy the straddle, you're going to make money? Just think of it opposite.
Well, I just didn't know if I was waiting for the next step, if there were some long options somewhere to protect yourself. No.
But I always think on the other side. Let's say, Jenny, would you buy this straddle?
No, never. No.
Okay. If you won't buy it, why not sell it?
You know what's so interesting though, Tony? So Liz and I are on the floor every Wednesday. We're in the SPX pit. And those traders, some of them we've been talking to, they're just net long units. And all they're doing is gamma scalping, meaning when the market goes up, they're getting longer delta and they're selling the futures. And as the market goes down, they're getting shorter deltas and they're buying the futures. That's when your long units and your long gamma. And that's what the traders in the pit have been doing, which surprised me kind of.
Yeah, well, they like excitement, I guess. Yeah.
So you are probably one of the few people who you weren't hurt in this last move down, because I've gotten some questions on, hey, I had short puts and I lost so much in my short puts. Is there something I can do to try to make that back rather than just sell another short put and maybe I'll make a third back of what I lost. I'm not going to make it all back. Do you ever switch from short puts? Do you ever switch from short puts to something else?
Let's say you sold the 580 put, for example, in May, right? You're in the house of pain.
Right.
So you probably sold it, if you were like me, you sold it for $10, it's $21 now. So what I would do, I would sell one call for every 2 puts. I would sell the 580 call.
Okay.
Once for every 2 puts that I had.
Okay, so just once for every 2 puts. And if you're rolling these out, are you rolling these out and keeping the same strike, or are you moving the strike?
The correct way is to roll it for a credit down and out. But for me to keep track, even though we have the option chains, I will roll it to the same strike.
Okay.
I want to be truthful. If I was teaching someone, I would roll it down and out, yes, for the same credit, for a credit.
And down and out would mean, taking it from May and then going out
to July, let's say. So what put gives me $21 in July?
Oh, and you can go to the 570. So move
you 10 points down. Yeah.
And then if you add on calls and add on
and then I would sell the 580. I would sell the 580 call, which is where I started. Yeah, something.
Okay. And then still like one call for every 2 puts.
Yes. Yeah. If I only had one put, I would not sell the call unless we have a big rally. I
see. Because a rally is going to help you, and if it goes through the calls,
then you have more problems.
And I remember one of our conversations where we said like we hate naked calls, and I don't know if that. And Tony, when we were looking at selling those, 480 puts out in SPY, out in time, I still remember during COVID selling the 305 calls in SPY.
So this is an alternative to selling calls. So for June, I would buy the at the money call once. If you can clear the board, Jenny, sorry.
Oh, sure.
Let's say I would buy the at the money call, let's say the 565.
Okay.
And then I would look for something that's half of that value. Would be
so like sell the 540.
No, the 580 call.
Okay. And sell it?
Sell it twice.
Oh, I see.
So to me, this is an alternative to selling a naked call. So what happens? If we go, so it's a 120 to the upside. You cannot do 111s to the upside because the volatility smile or whatever, the proper term, doesn't work like in the puts. And on the puts, the more you go out of the money, the higher the implied volatility of the option. On the calls, it's opposite. So here, you can only do it. So your break even will be here, 595, right?
Right.
Plus $2, 597. And think of it, if you are long short puts and long delta, and the market goes to 597, all your other stuff is going to be fine, right?
Yeah, you're not going to be mad about losing up at the 597 level.
No. And if we have a small bounce to 580, hey, you make 15 points.
Right. So you are like the king of the ratio spreads.
I am. Yeah. Because I don't like to pay debits. So I always try to finance something with a debt,
But in order to make the money, the full amount or close to the full amount of the width of these ratio spreads, you almost have to leave them to the end. So when you're putting these on, are you leaving them till expiration?
No, I put them on for a credit and take them off for a credit, believe it or not.
Okay.
So if you put this thing on for a $2 credit, which in SPX would be like $28, and if we go down a little bit, this trade will also give me maybe $1 or $2 of it would become a debit. Let's say, can you move the whole thing? Let's move it up, so you can see that I'm telling the truth.
I see.
Boom, and now it's a debit. So if I own something for a credit that's now a debit, if I sell it, I get a credit.
Sell it for a credit. So you're putting it on for a credit and off for a credit.
Yes.
Because it's wide enough. If it were too narrow of a ratio spread, it wouldn't work like that. But because it's wide enough, here's 15 points wide, you're able to sell it for a credit.
Exactly. And the only way to max out your $15 is to go into pain. So the only times I've made the full amount is when the product goes past my strike, and then it comes back to my strike.
Right. And then you're just sitting there waiting. And sometimes we do it if we put on a wider ratio spread or wider broken wing butterfly in order to give us some protection to that side.
Yeah.
Sometimes you feel like you have to leave it because that's why you put it there.
Yeah.
I don't know.
Yeah. Now, if we go down, another way to play this is to butterfly it off. Let's say you had a $2 credit. You can maybe, if for 50 cents, you can make it a butterfly, lock in, instead of making $2.50 credit, you spend $50, 50 cents making it a butterfly. Then you took all the risk off and you still have the upside possibility.
And I like that strategy because then you can leave it and then you have a little bit of protection to that side. And you can leave it and you don't have the risk. But in order to do that, you have to take in a big enough credit to begin with the first time.
Yeah, because look at the 615, that's going to deteriorate really fast if we go down. And then you can put a DTC trade on and then you're maybe playing pickleball and then you complete your butterfly.
I love that you're playing pickleball now. Tony, I have tried to play, but I want to play with friends. I don't like to play where it's like you put down your racket and then you're in line and you just put with strangers. Is that how your places are running?
Well, I think that's normally play with friends. That's called open play when you meet friends. But I've met a lot of people by doing that, by going and see who I meet.
I would do that if I were better. I'm just not good enough yet. So I want to get better by playing with friends because I don't want to show up, put my racket down and get paired with some people and I'm terrible.
So if I get my chance to run my club, I want, it's so hard. I see it with my kids and stuff. It's so hard to meet good people. So where do you meet people? If a friend of yours introduces you, or let's say at a bar, or let's say at a church, or something. So I'm thinking of doing open play for dating.
I love that idea. And someone in our local town just posted. They said, where can a 30-something, 40-something meet other people? And one of the answers was at pickleball. So I think that's the new bar. That's the new dating scene. That's where people can meet each other at a pickleball court.
And like in the golf course, you can see someone's personality. If he cheats, if he calls balls out that they're in, that's a red flag. If he gets, anger tantrums, that's a red flag. So you can easily identify someone by watching them play because they can hide it for a few days, but sooner or later their personality is going to come out, and then you can judge a person by that.
Well, Tony, if you will fly out here, I will show you the location of your next pickleball club.
No, I'm not kidding. I'm very interested. Yeah, me too. Okay. Because I have this dream of having 5 clubs in the next 5 years. So
really,
yeah.
I love it. Okay, I'm gonna pop into Twitter just in case.
Let's see what's going on. Yeah.
Just in case. I don't know if you follow our Twitter. Okay, here's Punish Pixels. Morning, Jenny and Tony. Any thoughts on the below back test? How about a skewed iron condor calendar, trademark pending, seems to do well in backtest and is positive theta trade. So I'm going to zoom in here if I can to see what he has.
See,
so
I never do calendars myself. I always do same expiration. But I don't see any reason why it wouldn't work.
It looks like he's selling the 45 DTE put and call 30 strangle. So he's selling the 30 delta strangle 45 DTE.
Yeah.
And he's buying the 60 DTE 30 delta around the 30 delta.
Yeah, the back test looks reasonable. Yeah, I like it. I wouldn't do it because I don't like calendarized trades myself, but it looks fine to me. Yeah.
And you could see average profit loss per trade, $270. So if he's selling the 45 DT, buying the 60 DT, it's not using a lot of capital because you're buying the longer dated. So you're not using that naked option buying power. I mean, these results look pretty good.
When volatility is inverted, I mean, when the front end is higher, I like this page called VIX Central. I don't know if you used it.
No.
I don't know if we can go to VIX Central. It shows you the volatility curve, and then you can see if the front end is higher than the back end. That's a perfect time to do this trade.
So what is it? VIXCentral.com?
VIXCentral.com. Yeah.
Let's see if I can do that here.
Yeah.
Let's see. VIXCentral.com. Okay, so what do you use on this site? What are you looking for?
Now you can see that the front end April is higher than May, right? Normally, the more you go out, the higher. So this is an inverted trade, right? So there's contango, right? Instead of backwardation. So this is a good time to do this trade because you want to sell the expensive one and buy the cheaper one, right? So the April is expensive and May is cheaper. So that's a perfect time to do that trade. So I like this gentleman's trade, but I would do it when we're in contango, which we are right now.
And even May is a little, because he was looking at 45 days, 60 days.
Yeah, there's not much, but for example, I don't like June to July.
Don't do it where you're selling June and buying July, where you're buying a much higher VIX. Yeah. I like the VIX Central.
Yeah. Yeah.
I'm gonna look for this trade and see how much it is. He was selling 45-day 30 delta 30 delta. So, and I'm not even going to worry about what strike it is. I'm just looking at delta.
Yeah.
And then buying 60-day.
Yeah.
So I'll look at this 58-day and then buying 30 delta 30 delta. So
right.
It's pretty close because you're not too far apart.
Right.
So 1180 credit.
Oh
wait, no, sorry. I was okay, here, I had it in wrong. $1.92 credit.
Yeah.
And using only $492 in buying power.
Not bad, no.
I'll ship it. We'll watch it. Now, my strikes aren't quite the same, 581 and 584, 542 and 543. I don't know. He may have had the exact same strikes in.
No, I think he's dynamic strikes because he's using deltas, I think.
Okay, so it's only using $495 in buying power. Yeah, I'll ship that. Oh, Tony, I can't believe that we're out of time.
We're out of time.
I know. I can't believe we're out of time.
Oh my God.
Just want to.
I didn't even have a bathroom break.
and let's see. Herb came in too on your spike trade with very small credit. This is a trade from yesterday, I think. Let's see. Herb, on your spike trade, very small credit, profit target is 25% of what? 75. So in this, Herb, where there was a butterfly, it was like 45, 60, 75, $15 white butterfly. So that butterfly could be worth $15. It was a 20% of that butterfly width. That would be the target on it.
I like that trade. I love spikes. Yeah.
Yeah, where you put on that big white butterfly and cover the cost by selling 2 puts.
Yeah, I like it. Especially in high volatility. I do like it. Yeah.
Okay, I do like the spike trade too. And yesterday, Dr. Data back tested it and the results were good. So
yeah.
All right, Tony, I can't believe our hour's up. I'm gonna email you. I'll email you with all the information I have. Hopefully, you'll be owning a pickleball club nearby.
The only way a business, this is for everyone, businesses are people. So I would do it if you find me. I'm looking for two qualifications. Honesty, I don't care if they're smart. Honesty and hardworking. That's it. Any business can fail if you don't have an honest human being working in that business. So if you find me a piece of land and an honest human being, we're going to own a pickleball club together.
Oh my gosh, Tony, I love it. Thank you for coming on. Everybody, the viewers love you.
Thank you.
Anytime you want to come, you're welcome on our show anytime. Everybody out there, thanks for watching. And remember to trade small, trade often, laugh with us, learn with us, and watch the Liz and Jenny show. I will see you tomorrow with TP.
Thank you. And remember, you got to risk it to get the biscuit, baby.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really tastylive until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batiste. I got my man, Mikey Butler, and of course, Thomas Westwater for our Westwater Wednesdays. We're bringing it back. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day gets spent with my buddies, Mike and Thomas. Thomas, welcome back, sir. We missed you.
Thank you. Yeah, I missed you guys.
Went out there. I felt like I was Kevin Costner in Waterworld coming to work today. So
classic.
Yeah.
Classic.
Waterworld.
It's a good one.
You've seen? Have you seen?
Yeah.
Yeah.
That was like the precursor to all those movies with the sand people. You know.
Dune?
No, not Dune. The crazy one, Mad Max.
Mad Max.
Yeah, Mad Max.
No, but Mad Max.
It was after.
It was after.
Waterworld
Well,
is after. Yeah.
The old Mad Max, yes, but it was just like that's just the whole thing. It's like if you put people in these weird places, they're gonna watch these movies.
Yeah, Waterworld.
We need a new Waterworld, is what I'm saying.
Those
We've got the new Mad Max. We need the new Waterworld.
Furiosa was really good. I liked it.
That was
really
good.
good.
Yeah.
Yeah,
and the newest, was that the newest one or was that the one before?
I think there's an even newer one.
Yeah.
There's the one with what's her name? The chess girl. The chess show on Netflix.
Yeah.
I forget her name.
That one was good too. I mean, all the Mad Max, all of those are just pure entertainment.
Yeah,
they are.
That is
chaos.
We need more of those.
We do.
Just pure entertainment movies, you know?
Waterworld.
Yeah, the Waterworlds of the world.
Yeah.
Yes.
You know, at the time, that was the most expensive movie ever made.
Really?
'Cause I guess the whole entire set had to be done on water, and it was destroyed by like a storm, so they had to redo it again, and then, yeah.
The classic.
Yeah. The most expensive show ever made was the Rings of Power show.
I knew that, and it got destroyed.
It was fine.
Yeah, it
wasn't like anything. It was just too. It wasn't. I don't know.
There's
It
too much
wasn't
going
dark
on.
enough.
Yeah, but there's just too much. You know, you got too spread thin.
But yeah, it's a very gloomy day out here in Chicagoland. But
you know what's not gloomy though?
The markets?
No, those shiny balls on the Wall Street Bull. Those are nice and vibrant. No gloom there.
Yeah, if you are wondering what we're talking about,
Yes.
check out the video we've got here. But it's on the social medias everywhere.
Yes.
There you go. There you go.
Yeah.
Balls to Wall Street. Yeah.
I wonder if anybody got arrested for doing this. Did we do any?
Probably
Are we
not.
doing any jail time here? Like, did
All you have to
Vanetta?
say is what it is for, which is testicular cancer.
Yeah.
What are they going to do? Arrest you for that?
Yeah,
Bringing
but
awareness to testicular cancer.
Yeah, but this is like, you know, defacing, you know, public property, sort of
It
thing.
looks good though. I mean, I don't know about you guys, but nothing gets me going like seeing a pair of, you know,
Voluptuous.
I don't
right
think it's
ball.
defacing. I think it's you hang something on top of the tail. You're not like it's not like vandalism.
I will say, if we were going to send a representative to represent us in jail, Vanetta would probably be top of the list. I think she could really, like, I think she could fend off, you know.
She'd be getting her daily allotment of cigarettes, no doubt.
Yeah, I would not be messing with Vanetta. So
it might be a Venezuelan jail. Who knows?
I would put Vanetta up against those. MS-13 ain't got nothing on her.
But what's funny about if you ever go here to see the bull in real life, the line to take a picture with the balls is like 3 times as long as the front of the bull, which is kind of funny. Like we saw that when we were there. It was like, you gotta be kidding me with this. But this is where we're at, people.
Yes.
But yes, great job by the marketing team.
Yes.
Bringing awareness. Oh, there you go.
There are my balls. Yes, Thomas, don't touch those ones on the table there. They were hanging from my belt.
I've been tempted.
There, yeah, they were very near my nether region. Yes, I had to play into it. Oh, look at that.
There you go. Yeah, your dad
look at how
really-
proud my dad is.
Yeah, your dad really loved that one.
Yeah. Well, he motioned as if he was going to stand up too, and we were all. Beth was, I know, sitting there with like the like cancel button to cut his stream, because you know you never know what could happen if he stands up. We don't know if he's wearing any pants or not, so could have been bad. Brings me back to the Bat Moon image, a classic Tasty moment in history, pre-corporate Tasty. There was a mooning that happened pre-market.
A mooning.
Yes.
Pre-market.
Yes.
Classic.
Yes.
Yeah. Testicular cancer awareness. Got to bring it to the light.
Yes.
It is affecting many people.
Yeah. Maybe this year we do the Movember again. Remember when we did that last? Did we do that COVID? I think COVID. That was when I had the big mustache. Looked like a porn star. It was sweet. Yeah.
Yeah, you got to be checking.
Yeah.
My
Thomas could
mustache
grow a
does come in pretty heavy.
Yeah.
If I don't shave it down.
Yeah. We could get some.
We could definitely do it.
Yeah, we could do that.
I could do a stash.
Yeah.
Why not?
I mean, it's a great excuse to grow out the stash.
Yeah.
I mean,
Gus already is rocking it.
I actually had to call paramedics for my brother last week. He's fine now, but all the firefighters, they all had their stashes going. Full-blown mode is
very manly.
Glorious.
Yeah. And then you have the excuse. You could be tell the wifey that this is for a good cause and I have to do this sort of thing. So I like it.
Love it. What's going on in the markets?
I'll give you a quick little market update. We got E-minis up 16 here, not quite the high, but they have been strong over the last hour or so. Had a little bit of weakness in the morning. They were down about 50 at the low or around the open here. We actually opened the session, the overnight session at 56.72, got as low as 56.10. We're now sitting at 56.91, got as high as 57.02. So about a 90, almost 100-point intraday range today. Obviously have lots of things baked into today with the tariff announcements coming at the close today. So, I expect there to be some back and forth throughout the day. I don't know if we're going to sit right here, but it's certainly been a nice little rally back over the last two sessions. Really, yesterday was strong as well after the sell-off in the morning. We got into the 55-50-ish range on the E-minis, I think was kind of the low of the session. 50, yeah, where do we get here? 55.33 was the low of the session earlier this week. NASDAQ up 90, you got the Dow up 111, you got the Russell up 20. Some of the big movers underneath the surface, you had Tesla going from 250 to 280 this morning, so it's up about $12 now. You had Nvidia going from red to basically flat here, Apple as well. It's been a turnaround in all the Mag 7s here. Apple up a little bit, Amazon up 2 and change. You had Google even participating to some degree. Some of the higher beta stuff, like I was looking at CrowdStrike this morning, up $8 and change. You got your Apple Lovins, your Carvanas, stuff like this is really moving as well. Definitely seems like there's a little bit of a risk on as we get down to volatility here. The oil futures up 36 cents, volatility down 43 cents here. We had a spike in volatility earlier this morning, and it's remained relatively bid throughout the week, despite what has been sort of after the open Monday, which was a significant down move. Since then, it's been a nice little rally higher, but volatility has stayed bid, which is not totally a shock given what we have coming at the end of today, or at least what we think is coming. Who knows what is really coming? Bonds down 15 ticks. They've had a nice rally through the week. Gold and silver both continuing to move higher. Gold's up $25, silver up 41 cents, 42 cents now, so a big move in silver. That gold-silver ratio continuing to get higher. It's coming in a tiny bit today with silver outperforming, but is near highs. And then Bitcoin kind of confirming this risk-on move, or at least moving on the backs of it. It's up 2,000 on the futures, 2,200 on the spot. Things are moving.
Yeah. Feels like things are shifting higher. Tesla's up 13 now. Apparently, Elon is moving out of his role here, moving back to Tesla potentially. That's what's being said.
Yes.
But yes, we do have a lot to consider with the rest of the week. Even though it's Wednesday, we've still got a 115-point expected move through the end of the week. We have tariff information coming out later.
Yeah.
Lots to unpack.
Yeah. I also wanted to just do a PSA because we've talked a lot about this Netflix earnings, the weirdness of it. I don't know if you've seen it. I think they moved their earnings, and they have it on the 17th, on April 17th. in the middle of April. It's the expiration day. I forgot about Good Friday.
Yeah.
So Good Friday is April 18th, which is why April 17th is a Thursday expiration. And it's still weird that Netflix has their earnings on an expiration, but it is a Thursday. It's not a Friday going into the weekend. It doesn't change anything with the situation in terms of like having a position on in there. It's very, very odd. You have the earnings that come out after the close. The option market is closed, so you can't manage or do anything with your positions. And if there is a big move, which Netflix at a $900 stock, is going to have or projected a $77 expected move, it could certainly be, more than that. If you have spreads, even like tight spreads, 5-point wide, 10-point wide spreads, whatever, where you have a couple $100 in risk, there's a lot of expiration risk here, because if Netflix moves in the aftermarket, in the after hours of the market, those 30 minutes, you can get exercised or assigned on positions without really knowing until Monday. So those are exercises that can happen in the post-market trade. It's called expiration risk. It applies to any equities, but with something like an earnings where it's very binary, you can have a 100-point move in either direction. So even if you have a spread, and let's say the stock, Netflix goes in the money, and you're short a call there, and you could get assigned in the overnight session, and your long option, you have to declare that you want to exercise it without even knowing that your short got exercised. So you have to be very, very careful here. You can come in Monday with long or short stock, depending on where the stock moves. If those options were at the money or slightly in the money or even out of the money, you could have, exercises being triggered on those options. So if you do have a position in Netflix, I would highly, highly, highly suggest doing something with it prior to expiration. I would not be looking to do a weekly trade in the April 17th expiration. I would not want to hold anything there. I would roll it to May, close it, do something with it, because there's a lot of extra risk, especially with the size of Netflix. If you're short into Monday and Netflix has another 20 or 30-point move to the upside, instead of losing a couple $100, you're out $2, $3, $4 grand, and that is a bad problem. Big problem. Big and bad problem. So just close it.
Yeah, it almost makes the April 17th cycle a no-go for
yes,
all accounts, unless you are literally okay with having shares of Netflix, long or short, coming. Because if it goes in the money, you're going to get assigned. Like, that's pretty much it. Because you don't have a day, you don't have that Friday to manage it, which is normally what you would have on a Thursday after the close announcement.
Yes.
This time, you have no potential to manage it because there's no trading day on the 18th.
Yes.
So we will not be doing short premium in the April 17th cycle. If we're trading earnings in Netflix, probably something defined risk in May, like a vertical spread, something like that.
Yes, and I just looked at the earnings calendar. It's really the only stock. There's MRTN, which is Martin Transport. I've never heard of it. So it's basically the only one that's on Thursday after the close there. So it's really the only thing you have to worry about. But yes, agreed with everything Mike just said. Close your positions, move on. Scratch it, take a little bit of a loss, roll it, whatever, do something.
Mm-hmm. We're streaming live on YouTube. If you want to join us there, pop on over. You can throw in your trade ideas, questions along the right-hand side chat. I've got the Cherry Picks newsletter pinned to the top of the chat. But yes, it is Westwater Wednesday. We've got some
throwback,
glorious content for you. So why don't we pop over to the slides? We can run through that, and we'll get back to the YouTube chat after that. Ooh, look at this. Yippee-yo, yippee-yay.
Yippee-yi-o, yippee-yi-yay.
Yes.
There you go.
I had a very hard time reading from the vertical lines.
Mm-hmm.
But yes, what do we got here? Live cattle futures.
Yeah, I got long just before the show with a long call spread.
Love it.
So I'm expecting us to go up. I'll just say that, but we'll look over a few slides, go over demand, exports, and positioning. Right here we are breaking into recent highs. So actually, yeah, we're making a nice move up, 207. on the live cattle futures contract. We had that little bit of a pullback last week. That was some profit taking. We held the January swing high level very nicely, right around 202. So that was an encouraging movement, and we'll look at positioning. Bulls are getting back in, or longs are getting back into the market on a speculative basis. So yippee-yi-yo, yippee-ki-yay. I believe that's what cowboys say when they're excited. When I hear that, I always think of the Johnny Cash song, Ghost Riders or something. Let's go to the first slide. This is U.S. beef exports. So the green line is the current year. You see that over in January. Comparing that to the past 2 years, so 2023, 2024, we see that we're starting on higher ground here. So that's just an encouraging development to start the year. Export sales, they do go on a weekly basis. This last week was kind of weak, but the market's brushing that off, and we are still going higher. So it looks like it's a good year. Demand is pretty strong, especially domestic demand in the U.S., which we'll take a look at in the next slide. So we can go to the slide 2. This is what's called like box beef prices. So whereas exports, the slide we just looked at, that's more of a proxy for demand outside of the U.S. This is more of telling of demand inside of the U.S. So as we see, there's choice select. When you go to buy a steak at the butcher or the store, you could get the select cut, you could get the choice cut, you could get the prime cut. These are for choice and select, which are the two biggest markets for beef cuts in the U.S. We see a really nice, strong uptrend starting last year, and now we've resumed that uptrend again after that little pullback there. That kind of coincided with the recent dip we saw. Choice breaking into new highs here for the chart period. Select is on the way up and about to break the yearly high. So demand in the U.S. really strong. Now there's two cattle futures markets. There's live cattle futures, which is what we're trading here, and there's feeder cattle. So live cattle futures are considered fed cattle. They're pretty much ready to go right to the market. They're about to get slaughtered. Feeder cattle is a little bit lower down on the supply chain. These are younger cattle that are brought into feedlots, and they're fed this special diet that beefs them up. We don't trade the feeder cattle on Tasty Trade, but that symbol trades on the CME under the symbol, I believe it's GF. And those prices as well, it's reflecting the prices we're seeing in live cattle. So both parts of these supply chains are showing really strong bullish tendencies right now, which is definitely good to see if you want to get on the long side. So let's just go to the next slide. We'll take a look at positioning, and of course the market. This green line here is the longs, the orange is the shorts, and the blue line is live cattle futures prices. We saw longs pulled back. They took some profit, but now we're getting back into the market. And this is off of Friday's COT report. So this data is good up until last Tuesday. In 2 days on Friday, we'll get another update. It'll show us the activity up until this Tuesday as of yesterday. But I would expect to see, with the price rise, that longs are going to continue to increase. We're going to break, into this multi-year long positioning high here. We see that shorts, they're still pretty suppressed. They came up a little bit after the recent dip. Some shorts trying to see that pullback extending perhaps. So what I expect to see on Friday is these shorts come back out of the market. Bulls stay in full control. You see this green line representing longs continue to increase. And, also notable is we're going into the summer months. Now, seasonality is largely priced in on a trading basis, but it just speaks to the tendency where that underlying demand, it has the potential to get stronger. If a lot of people are, feeling good, the weather's nice and warm, throwing parties, ordering those ribs, those steaks, all the beef,
burgers,
stuff like that, burgers. We could expect some seasonal strength here to come in. And, prices, we're at good levels here. We're breaking into new highs, and new highs beget new highs. So I got long. I feel pretty comfortable with the position. I did 65 days out, so giving myself plenty of time here.
Okay.
With the 208, 210 call spread.
Okay.
June 6th. I believe it's max profit 400 with the buying power just a little bit under that. So going to see how this trade plays out for the next few weeks. Can we expect some dips as we move into new highs, some profit taking? Yes, but with the way demand is, with the way the feeder cattle market is, and everything, I think we're going to continue this trend. And the chart has a nice, strong technical uptrend here. There's pullbacks along the way, especially going since the start of 2024, but those have been bought and we've continued to make higher highs. So, this is a really nice setup, I think. I feel pretty good about it. And yeah.
Is this on the table risk for tariffs? Like, is it?
Potentially, yeah. I mean, if we're going to export all products, other countries, China, places like that, they could tariff. China gets a lot of beef, which is actually it's not cow beef. It's what do they use? I think bison or something.
Okay.
It's not bison. It's something besides what we use. But anyways, the U.S. is one of the top exporters, but we're not like the top two.
Okay.
We're about half of the volume that Brazil does. So the market already is going to other places.
Yeah.
Whereas the U.S., we do consume a lot of the beef that we produce. So tariffs, yeah, they do have an impact, but not as much as something unlike soybeans where we rely on a really big export market. So right now the market is focused really on this domestic demand, those boxed beef prices that we looked at. As long as those keep rising higher, that could keep us supported. The feeder cattle futures going higher. That means the feeder cattle prices are based on that more intermediate supply chain, kind of how gasoline is for crude oil. And, as long as those are going up too, that means a lot of farmers are taking in this feeder cattle because they're expecting that demand to continue. So that's just another really good sign for this trade.
I like it. I did both sides. I did an iron condor, but I like the story. We had a couple trades in here in as well as in hogs.
The hoggies, yeah.
Yeah. Does this sort of story apply to the hogs as well? Because they've moved they've come off the highs, but they've had a strong.
Yeah. The hogs aren't doing quite as strong as the cattle's doing, but they're correlated, right? Meat demand overall. You kind of go for pork, beef, whatever have you. So yeah, it's correlated to a degree. They usually do have above zero correlation for the prices, but not perfect like a 1 correlation.
I went with a 215 calendar spread. Bought the 65-day, sold the 30-day. Both settled to the M contract for $500. So if we get up there, this will be like a $200-$300 winner, I would assume.
All right, I like it.
Yeah.
We had the grain. Is it the COT report or the WASD?
We had the quarterly grain stocks report Monday, and we also had the prospective planting report on Monday as well. Soybeans and corn, wheat, they got a bid from that. Wheat pulling back a little bit here today, corn too. We got a nice little bounce. I think some acreage was taken off on the prospective plantings. Quarterly grain stocks looked like they were a little under trade estimates. So, a nice little bounce there. It wasn't huge though. The numbers that I looked at, it wasn't enough to go full out on longs, and the market's not really, following that story either. There's some upside. We'll see how it goes. There's still a downtrend in place. We need to break some of these descending highs that we have. So technically it's not the greatest setup, but it's still tradable, especially with tariffs and things like that. If you're trying to anticipate some of these trade measures. You could,
Volatility's remained high in all of these. I mean, like when you look at an IV rank of all these, they're all above 30. So, I mean, volatility is certainly in here. You think there's, on the tariff news, reactionary moves, do you think there's more risk upside or downside? Just given that, if they come out with, if there's tariffs on, I know we export a lot of the soybeans, but on any of these products, like, is there a bigger risk to one of them that you see to upside or downside based on tariffs?
Yeah, I'm cautious right now on getting along the grains because these responsive tariffs, China could come out and say they're going to increase the rate even more. China's a major buyer. And now you're getting some coordination from these countries, Japan, Korea, and China, I think,
I saw that one as
forming a preemptive pact saying they're going to coordinate their responses. That could, but at the same time, you're getting news flows saying the Trump administration is going to dial back.
Yes.
So it could go either way. You never know. These tariffs are hard to get a grip on, and I think that's why the volatility is high. There's uncertainty in the market. Same with the equity market. These products are subject to those tariffs directly, and you just don't really know which way the administration is going to go one day to the next.
Is this the most uncertain event you've experienced?
For soybeans, the first soybean trade war in 2018, when China came back with those big reciprocal tariffs, those were, that kind of crushed the actual U.S. soybean market. We had to bail out the soybean farmers. And now there's talks of another farm bailout happening as well because these tariffs are expected to, hit the producers a bit.
Sir, are there any single name stocks? Like I was thinking like Monsanto, but MOS, isn't Monsanto didn't they have some sort of merger?
I think they're with Bayer now. So Bayer stock.
What is that ticker? Do you know?
Bayer? I'm not sure.
I think they got taken.
There's ADM, Archers, Daniels, Midland.
Okay. These stocks have been just killed.
Yeah.
This one's in the dumps. I guess you could maybe, I don't know, a John Deere or Caterpillar as a play on
you can do
something
that.
like that.
Tariffs are going to make John Deere equipment more expensive. They're not all made in the U.S., I don't believe. You have things like FMC Corporation, which is fertilizers and insecticides, things like that. So if you're planting less or you're going to plant less, you're using less, all this insecticide, herbicides, fertilizers, stuff like that.
What about oil and gas? You think there's any big? I know you're bullish the metals, and those have just been an absolute banger of a trade.
Yeah, oil is going up right now because of what's happening with Iran. Anyone who's been paying attention to the geopolitical headlines, we're moving B-2 bombers over to the region. News just came out today. We're moving a Patriot defense battery over to the Middle East, an additional one.
Yeah.
A carrier strike group is going to the Middle East, which has, the cruise ships that launch missiles that interdict air defenses and everything like that. That's all saying that, they're preparing for a potential conflict with Iran.
Yeah.
And if something pops off, it's going to just not even for Iran's supply, but the entire region. The Middle East is very oil-centric. That can disrupt supply lines. It could cause, political tensions with OPEC in the U.S., et cetera, et cetera. So oil's catching more of a bid than I thought here. I did get long at that dip back in early March. I took that off last week, and then we get this nice, bigger pop up. So
yeah, it's kind of interesting that volatility hasn't really moved much. If you look at OVX at 30 and change, it's basically the lows. We're right at the bottom, with all the stuff that's going on, tariffs, war, fears of recession, blah, blah, blah. It seems like there's not much fear here, unfortunately.
We might see soon if the S-300 can handle B-2 bombers. Nobody knows. It's pretty crazy.
Yeah.
Crazy indeed. But yeah, volatility coming in a little bit right now, but we're still flat across the board, just like yesterday. So I think the entire market is waiting to see what happens today, which is kind of wild.
Of course.
And I think it's especially ominous that all of the volatility futures contracts are basically flat, which for me just says big question mark. There's no pricing in of contango, and right now there's no backwardation that's meaningful.
Tomorrow it's not going to be flat.
Yeah.
It's good. There's going to be something.
Yeah, there'll be something. But normally when we see these short-term times of turmoil, you can still see priced in contango in the further dated cycles. Where right now everything's just at 20. So it's just like they've hit the reset button and they're just waiting to see what happens after the close. That's what it tells me, at least.
What's your lean, Thomas? How do you feel into this
I'm not
Liberation
bullish.
Day?
I mean, I'm just waiting until we establish a clear trend. I don't want to get caught up in all this chop with equities. So
I think that's a fair assessment.
Yeah, my portfolio is mostly, the only equity position I have is I'm long FXI.
Okay.
And, I got long pretty much when Chinese equities stopped going higher and we pulled back a little bit.
Yeah.
So I don't know. I'm not too confident in the trade. I just want to have some exposure on just a little bit, but I'm mostly in oil, bonds, AG products. And
you think it's a vol crush event or a vol?
Eventually. Eventually.
You would think so.
Yeah. So.
I know. I feel like I know Vecchio was talking about like record VIX long exposure, like long vol exposure.
Yeah.
And that seems too easy. That seems like the consensus easy trade. You got these tariffs coming, recession, market going to crash, you got to get long vol, and everybody's piling into that. So it seems like the real pain trade, because I think there's people on both sides of the tail. I think the tails are fat. Like, people think there's 5% upside downside moves coming this week. The real pain trade is like a vol crush market kind of flat / slightly up. Like, that would be painful for everybody because the long vol gets vaporized. The long calls that are everybody's playing for this like convexity and gamma to the upside, those get vaporized too. Like, that is the ultimate pain trade. And I'm like, wouldn't it be funny? The market just spanked everybody.
Yeah. Yeah, it wouldn't be funny, but it would be.
No, but
it would be
ironic.
It would be. It's almost as if the long VIX call holders are offsetting the long equity call holders.
Yeah, and it's a net zero.
Yeah.
And like everybody just like, goes back to work. Everything's like the hunky dory after that.
The people that are looking for their retirement exit trade have to go back to work.
Yes, that's like what it feels like. Everybody is like fully on for this.
Yeah.
Yeah.
So I don't know. Who knows? Just a thought in my mind.
In not so surprising news, Newsmax down 103.
Yes.
It's been halted multiple times today, at least once that I saw.
Yes.
Down 45%.
There is now a borrow rate in there. I know yesterday I had some emails, chats about it. Almost 500% annualized. It at about $130. It would come out to be like almost $150, $160 per 100 shares a day to be short it.
Yeah.
So very expensive to be short it, but it's one of those things like you don't want to mess with this.
No.
And the options, when the options come out, which I believe will be middle of next week, be very, very careful of what you are trading in there because you will see call spreads, in the money call spreads trading. If it's a $5 wide, I think the stock will be at like 20 or 30 by the time the options open. That's not a recommendation to short it, but I think that's probably what's going to happen. But if you're looking at call spreads, these call spreads are going to trade for more than the width of the strikes. It is not free money. That borrow rate is baked into it. So if you sell those call spreads and you get assigned overnight, instead of making 10 or 20 cents, you're actually going to lose $100.
Yeah.
Because of the borrow fee.
Yeah.
So just don't, if you're going to do something here, buy put spreads, buy in the money puts. Don't be selling in the money calls in any fashion here.
Yeah.
And just avoid it in general. The markets have been volatile enough and opportunistic enough to find other things to do than Newsmax, a cable company.
Yeah, that's a crazy one.
Why would they?
Yeah, it halted like dozens of times already. I mean,
dude, this thing opened at $10. I mean, it's an unbelievable move.
It's pretty wild.
It happens every year, people.
Yes.
Multiple times a year.
Yes.
Every year. It's always something. All right, beautiful. So I'm long the Lean Hogs calendar, 215, long June, short May, for $500.
Very nice.
You did the Iron Condor?
I did an Iron Condor. I did it in the shorter, the 30-day. 200, 197, 215, 218. So.
And then Thomas is in the 208, 210 call vertical, 65 days out. Lovely.
Fantastic.
I just closed my wheat call vertical. I had the 545.60. 50 days out for 70-cent profit.
Nice.
It's just one of those things where I don't really need to have the exposure of wheat, especially into this big unknown today. So I'd rather just take the profit and close it and focus on other things.
I like it. Taking what the market's giving ya.
Indeed. All right, popping over to the YouTube chat now. Let's see your questions. Let's see your trade ideas. Let's kick it off with Ron. I've got the April 17th SPX 58.30, 58.20 put spread for $1.40 premium. Should I roll to May now or should I wait? You can't roll now for a credit. So for us, this is one we're holding. Yeah, 58.30, 58.20, pretty deep in the money.
Yeah.
Still within the expected move, though.
Yes.
So you're right at the expected move. You have $300 left to lose, $700 left to gain. So if you're willing to take that risk, I actually don't mind holding it. If you think that the market is going to go on a bull run the next 2 weeks, you don't need that much. 130 points could happen today. Or we could go down 130 points. So the risk is still there. But I would just be, personally, I would be holding on to this just because you're within the expected move. And lots could happen. If you don't want to have this in the money risk, you could close it and then go to May and sell an out of the money spread. It's a more conservative way to approach it, but you can't roll this current one for credit, so there's nothing to do with this current one. If you wanted to roll for credit, you had to roll before it went in the money. So you would have had to roll it when SPX was near 58.30. You could have moved it out to May for a small credit then, but that's what you got to do with these spreads.
Agreed.
What's that?
I said agreed. It's a 50-50 shot.
Yeah.
You do the old No Country for Old Men, flip the coin, decide.
Tesla's so on fire right now. What do you think?
No, it's tough. I mean, it's gonna squeeze higher. If the market is up tomorrow, it's going higher.
Yeah. Would not surprise me.
Yeah.
Especially because it's just been so destroyed.
Yeah, it might be an interesting time to play a little bit of both sides. Maybe an Iron Condor, because you do typically see vol expanding, and you're getting it. You're getting some vol expansion today. Ivy rank is 65. It's still in play here. 225, 215, 350, 360. Who says no?
I don't.
Tell me. You do have earnings coming up, but they just released the deliveries today, so you kind of know. You should probably know that it's probably not going to be big numbers out of Tesla.
I don't mind it.
I think this is the play. Just a little small dabble on some short premium here. under? 308.
Yeah, I just have this leftover 375 call in April from some kind of trade gone wrong 37 days ago. But
Yeah, I mean, the stock went down 50%. So,
Yeah.
You know, sometimes you just can't, you can't get that back.
yeah, it's still trading for something, but I think I'm going to just wait and see what happens with Tesla and then go from there. But yeah, I don't mind that trade. H. Montero looking at a poor man's covered put on SPY.
Ooh.
June 590, May 535. Wide one.
June.
With vol high. The tail end of the expected move is juicy to reduce buying power.
Yeah.
590, 535. Yeah.
Yeah. I like it. And you could do this as a sort of crab trade if you wanted to. I mean, you make it really, really wide. Yeah. Certainly could play into that. I'm kind of neutral delta here. I have an SPX Iron Condor. I have this upside crab trade. So I'm leaning neutral / slightly bullish. So it's not my trade setup. But if you're trying to get some short delta, you're getting, you know, a 30, 40 point move today plus volatility at the lows of the week. There's been no better time, generally speaking, to be short delta than right this moment. So if you are looking to get short, it's an interesting time right now.
Let's
see where
ES 6000 is the obvious pain trade for the W pattern.
Oh, the Westwater pattern.
Yeah.
Give us the W.
The inverse McGarrigle pattern.
Yeah, the 1 day W pattern. That would be. I think that would be something.
If ES went to 6,000 today.
I think that's what the gentleman was suggesting, that would be the pain trade, and I don't think that's the pain trade. The pain trade, I think, is nowhere.
Yeah.
Is right here.
The pain trade is definitely a non-movement.
There's nobody that thinks that nothing's going to happen.
Correct. It's like the times where I say, "There's no way this doesn't move after earnings,"
And then you wake up and it's, you know,
flat.
yeah,
to the penny.
yeah.
But yeah, I mean, 700 point expected move in the E-minis through the end of the year. So 6,000 is well within the expected.
Mm-hmm. Oh yeah.
And so is the target. What was the end of the year target from your analysis for
man.
Q1? What was it? 6,600? I think it was 6,600.
I actually have it somewhere.
Which is
the
right
Wall
there.
Street one was
The Wall Street.
6,600.
Yeah. So that's right there too.
Yeah.
So-
But that'll change. If vol comes in 2 points,
Yeah.
your expected move is now 6,300.
Yeah. So yeah, we everything's on the table.
Yes.
Which I think is what is being reflected in volatility futures right now, with no sort of picture at all. Literally everything that I'm looking at is 20 point some kind of change. I've never seen that before.
Yes, I agree. We're waiting.
This is the eye of the storm.
This is the eye of the storm. Do you think there's a catch up in silver versus gold? I pitched it to Tom, and we talked about it in the cherry picks this week. The ratio has continued higher. I did sort of a neutral / bullish trade in silver and a short delta trade in gold, far out of the money, 3,300. So like I can take some upside.
Yeah.
Tom's kind of thought was that both have downside, but silver is going to be a lesser downside, which would play into my trade idea.
Mm-hmm.
I'm wondering what your feel is, because I know you're in the space a little bit more.
Yeah, I mean, I'm long silver as of last week. Bought a call spread 32, 35, 44 days out.
Okay.
I was thinking about getting long gold too. Probably should have, but I'm just doing the silver right now. So.
Okay, so you're all right.
Yeah, I think it continues to catch up. I mean, if there's still safe haven flows, if yields are going lower, dollars going lower, it kind of depends on the tariffs, right?
Yeah.
If the tariffs come off, are economic projections going to immediately rebound? I don't think so. I mean, I think they'll ease off, but I think some of the weakness is already set in, even without the tariffs, with sentiment so low, not only for traders, but, you know, if you look at CFO sentiment, CEO sentiment, things like that. So,
Are you long bonds?
Yeah, I'm long ZB, long ZN.
Okay. All right.
The ZB position has been doing really well. I was thinking about taking it off at 70% profit yesterday and letting it ride a little more, and then I'll probably just get back in or roll it.
Yeah, I imagine there should be some movement in the bond market tomorrow.
There should.
I would expect that to play. So maybe there's something there too.
Yeah, what's the interest rate? Looking like 90%. 90% we stand pat for May. 60% we get a 25 basis point cut in June. So that's the layout for the next two. I want Tesla to hit 300 so I can get some puts back. Well, good news is Tesla's expected move is to 300 or to 260 by the end of the week. So 20-point range through the end of the week. You could get it. You could get it by the end of the week if you get a rally, continued rallies.
I just saw somebody, Amazon puts in a last-minute bid to acquire all of TikTok. Interesting. Stock up $4 or $5 on the news.
You know, Zuckerberg is reportedly at the White House right now. So
really,
yeah.
We need to get the my location on him. See where.
God, the amount of things that could, so you've got So you got the tariff stuff. Oh yeah, and we're buying TikTok. Oh yeah, and we're Bitcoin, whatever. There's so many.
We're not taxing tips anymore.
Not taxing tips. There is just so much that could happen today.
Yeah.
Woo.
And this says it perfectly. What bad news can Trump deliver that we don't know already? There will be new tariffs. Sell the news and go long. Yeah, the market is pricing in anything can happen. I think we're on board with that, where the tariffs are coming a little light, the market rallies. However, you have to remember that it is Trump at the end of the day. I think that's really seriously, a lot of the volatility, I think, is just that, where you just don't know what's going to happen because, even if you think you know, there's always going to be that unknown. And that was, like you said, the first presidency that he held was very much that. There's a lot of two-sided market movement. And a lot of unknown factors. So, yeah, we will see in just a few hours.
Mm-hmm.
Carvana looking a little overbought, at least in the short term.
Mm-hmm.
The car vending machine company. How about a 260, 250 short call spread in May? Great return on capital, but markets are a bit wide.
260, 250. Yeah, you're 50-50 type shot. You do have earnings coming up on May 7th. This thing moves. I would probably try and move it out of the money a little bit. You can even see with the skew here, because there's tons of call skew. The at the money 230 call is a 55 delta, and that just represents the skew that you have on the upside. You can see it in the distribution here. It's just, So, which means that call spreads are going to trade relatively cheap. I don't know. I don't know if I want that on my conscience.
That's kind of a tariff trade too, because if new autos are more expensive, more people buying used cars, more business for Carvana.
Stock up $16 today, 7 and change. You gotta, and
is Carvana the market indicators?
Well, but then a month ago, you had the Hindenburg or one of the short reports saying that it was and I don't know if it was a month ago or 2 months ago, something like that, in this period of time, saying that it was accounting fraud and the numbers don't make any sense. So again, it's the same thing with that APP stock. It's you really want to get face ripped to either side in one of these stocks with what's going on in the market. The markets are moving. Trade, I think, my opinion on Carvana. Go to Tesla or Amazon or something like that.
They do have a beautiful vending machine on 290 though. That always catches my eye.
Is there anything in it?
Yeah, there's cars in it.
Really?
Yeah.
But they had that moment where there were no cars in them. They were just empty vending machines.
Yeah, not Carvana.
Right.
Those things are full.
Yeah. Okay.
A couple minutes left here. What do we got?
Take your pick.
Silver trade. What is your exact silver trade? Do we have one?
So I did a similar trade in here as I did for the Johnny trades, but it's sort of a poor man's covered call / crab trade kind of setup here. So I'm long this June 28 call, and then I'm short in this account the 31.5 calls in April 2 times. So you're naked and extra call on the upside. The trade hasn't really moved all that much, but in my Johnny Trader account, I use the May contract, which I'll be rolling to soon here. But the interesting thing with this trade is that you're basically long stock via the 28 call, and then you're short out of the money premium. So you kind of want an upside move, not a tail type upside move, but you want a little bit of a drift higher. If I pull up the analysis mode here just to show this, of just how the spread changes through time. It gives you that typical crab trade type setup. If you do get that move higher, you roll those calls out again. You could even roll just to 1 call in May and turn it into more of your typical poor man's covered call. But it's a neutral / bullish skewed trade that I did in both this account and the Johnny Trader account.
Love it.
Yeah.
I just got in a 30-31 May call zebra for $200. That's the nice thing about these products is the IV is really not that high at all. So you can get into these cheap zebras and rent 100 deltas for a couple $100.
Yeah.
Less than 10% of the notional value of the stock price for 100 shares. Love to see it.
Where are these coins coming from?
Like that?
I like this.
You take that one.
I'll take
yours.
For you? Yeah.
It's
They're
your
like
new, poker protector.
Yeah.
That's what I have it for. I will not use it for anything else.
Really?
Yeah.
Oh, that is probably good.
It's nice and heavy.
Yeah.
It's very clear that it's a card protector.
When did we
It's got
get
the
those?
logo on it. I have no idea.
Yeah. Those are special edition.
Yeah, these are nice.
Those
I've got a little coin collection at home.
Oh, there you go.
Yeah.
In there. I have mine in my golf bag, but it's a little big.
For a ball marker,
It's huge.
if someone tried to roll over that, it would just send.
I know,
the ball in a
but
different direction.
yeah.
But I guess that's your thing. Like, don't hit this marker.
Yeah, this is my line.
Yeah. Oh man. All right. A couple
One more?
minutes left. Yeah.
Couple more?
We have no earnings that matter.
You have a massive world-changing binary event after the close. You think you were trading whatever junky stock for earnings? No way.
It is nice timing though because the banks will be next week. Friday before the open. And then the week after that is when you'll get a lot of these tech stocks reporting earnings. So I think what we hear today could play a role in earnings for a lot of different companies in the next cycle. So next earnings cycle, I think, is going to be exciting.
Yes.
RH earnings?
No.
No. Can't do it.
Overpriced furniture. Isn't that Restoration Hardware?
I
think it is. I believe it is.
I think so, yeah.
No.
It doesn't. I literally can't. It doesn't say.
Yeah, it's just
on the Googles. So that's not a good thing either.
One more. Pick a winner.
I like the zebra. Seems to work best for me to take directional trades. Yeah, for low IV products like 30% or less implied volatility, zebra is always going to be in play.
Yeah.
Just because it's going to be really cheap to get that delta. 50% and over implied volatility, that's when we're usually selling premium because implied volatility is higher relative to the notional value of the stock. All right, let's get out of here.
Yeah, lunchtime. JP.
Lunchtime.
Graziano's. Mr. G, the best sandwich. One of the best sandwiches
I would
in
agree.
the city.
It's good.
I actually would agree.
It's good.
One of my favorites.
I'll load it up with the jardinara.
Oh, yeah. Oh, yeah.
Especially when John brings in his jardiner.
Yeah,
That's when you're in the sweet spot.
We got the hookup for some fresh foods. Eggs, peppers.
Smash it all together.
Yeah.
We make a pepper and egg with JP's bread.
Call.
When is Trump's hour-long speech? 3 o'clock, right?
3 o'clock today.
3 o'clock Central.
Yes.
Yeah. All right, that's it for us. Thanks for tuning in. If you got any further questions, you can reach us on the Twitters. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Thomas is at FX Westwater. We've got those trades in lean hogs. We're bullish to neutral, and we've got some other trades on. We'll post it to the follow page shortly. Thanks for tuning in. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. We will be staying tuned at 3 o'clock. See what happens with the futures market. The futures market will be all telling. But yeah, exciting times, exciting times. We'll see you same time, same place, 11 a.m. Central tomorrow.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9.
Yeah.
It's same thing. It was right there. Right when we
So
started.
He was my friend first, clearly. Met at work.
Yeah, Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer.
Say it. Say it.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day. Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Forbes called us best online for options trading. With stockbrokers.com, we're number 1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We are ready to build. This is make or break for this team. It's down to the last 2 minutes, and it's time to rock and roll, baby. That's all I got is 2 minutes, and that's on a good night. I don't know if they're going to be able to make it, but I think they can just slip right on by and maybe take it through to overtime. I think we're going to overtime. Here it comes. man, he hit the boards hard on that. Wait, this is football, right? Woof! Woof!
Take one.
Hey, baby. I like the looks.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on tastylive.
We are back. It is Tuesday, April 2nd, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, it's not quite a Tariff Tuesday here in this market, but it's a Tariff Wednesday.
We'll take it. I mean, we're a few hours away from the announcement. Market seems to not know what we're going to get, so it'll be interesting.
What will we get? I think that's the question here. We've had the 20% across the board tariffs floated. We also heard late in the day yesterday that the Wall Street Journal was indicating a third option was being prepared for Trump. Scott Bessent, the Secretary of Treasury, was out telling us that the 20% would be a hard cap and would give room for countries to negotiate down from there if they were to reduce trade barriers as well. Of course, the announcement today is at 4 p.m. Eastern, 3 Central Time. We'll be covering that live on Overtime. But this day has been marked by expectations and perhaps hopes that we're going to see a less strict, less bull in China shop kind of tariff approach here, and one that offers off-ramps akin to how the Canada-Mexico tariffs had off-ramps and ability to take them lower. Perhaps there's room for a squeeze to the upside here. Thomas, I think one of the important facets, though, of these tariffs coming into play is the fact that if there is a clear schedule ahead of us, the market is expecting the Federal Reserve to respond with lower interest rates. That shouldn't be a surprise. The Fed has told us as recently as last meeting that they are more concerned with the loss in real economic output than they are with the rise in prices. Why? Because the rise in prices can simply be a temporary one. We've done this visual before, but inflation's going up. It adjusts with the tariffs, and it keeps along the same current path. That's what the Fed believes. So they're more concerned with the hit to growth, to labor. Quietly behind the scenes, Thomas, we've seen additional rate cuts come into play moving forward through the end of next year, if only to suggest that the market sees that these tariffs are likely to have a longer tail, if you will. We will see the effects here moving forward. So the cuts right now for an anchoring point as we go into this, tumultuous Tariff Wednesday announcement here, let's consider the fact that we have a cut scheduled for June. We have another one for September, another one for December this year. That's 3. We're also looking at an additional 4th one by April, and then a 5th by the end of next year in December. So 5 cuts now scheduled for the Federal Reserve through the end of next year, 2026. That is higher than the 3 or so that we saw about a month ago. If you get the clarity from the fiscal side of the equation, the monetary side is looking like it's more supportive right now. So perhaps we're due for a bounce.
Perhaps. I mean, there's a couple questions, not only with what the level will be, what kind of clarity are we going to get? How long are these going to last? What are they looking for from other countries, et cetera? Is Trump going to say anything that's unexpected? You know, if the Fed is cutting more and these odds have increased and the equity market has failed to respond, it means, you know, the market is still focused mostly on tariffs. If the Fed has to cut because the economy is lagging more, not necessarily the best scenario for, you know, the end of year S&P target and things like that. I'm doing this more by being long in bonds and kind of staying out of the equity market lately. That's how I'm playing it, because I don't think the market knows which way it's going to go. If today they come out and it's 10% versus 20%, yeah, we'll probably rally. But playing that right now, it's a big question mark.
Right. I mean, I think what Besant told us is really the most important feature of all this. Is this the escalation to de-escalate? Or is this a step in the escalation chain? Besant's comments would indicate that it's the former. We're going to go to 20%. We're going to give room for people to work their way down as we get certain trade arrangements resettled. I think the market would love that if that's how it's portrayed. If Trump comes out and says we're only doing 10% and there's room to the upside for that and more, and who knows how high we'll go, the market's going to hate it. I think that's really the key, what we're turning on right now for market sentiment. Now, the breadcrumbs dropped by the administration in the run-up to this tells me they're still debating and they're not settled on 20% across the board tariffs. Why? Press Secretary Leavitt, maybe she rescheduled it, but from when I last saw, her press conference this afternoon was canceled. That to me says that they don't have any firm information yet. So they're still trying to land on the final number. But again, if they're not, they're still trying to land on a final number, it probably means that it's not just going to be 20% across the board. That's potentially the read-through here, 57.34. What was a day where we were down and looking at yesterday's lows, we are now through yesterday's high and then some, 57.33. That's a 1.04% here in the S&P. It's higher by 1.31% on the NASDAQ, 19,865. Even the Russell, the beleaguered Russell, joining in on the party. That's up by 1.78% right now. This early contours of perhaps a double bottom coming into play here, Thomas. Volatility is coming in a little bit, 35.8 IVR. What are you looking for this afternoon? And I guess more importantly, if you're going to trade stocks, are you placing any trades before the announcement, or would you rather just keep your wrist tight and then put some chips on the table thereafter?
I'm going to wait until after. You know, the move over the today and the past couple of days, does it leave more room for disappointment? Is this, you know, pricing in of a more dovish announcement on tariffs? So you know, it's some traders are obviously getting positioned long ahead of this announcement. But my view is that we don't know what's going to be said. So the thing I'm going to be looking at is pretty much the 1 minute price action as this announcement is happening and right after, and base my trades on that.
You know, I'm looking at the 4-hour chart here on the S&P 500. On Monday this week, Ilya and I flagged the fact that we had a bullish reversal candle down here at the low, the daily, or the 4-hour key reversal, if you will, because it's at the bottom of a trend. You get the bullish engulfing bar yesterday, which is a continuation pattern to the upside. And while we don't trade significantly higher immediately, upon a pullback, we really don't clear out those former lows. And then again, this morning, another bullish engulfing bar. So there are stepping stones here, right? Little by little of the market trying to make and climb its way up. That's all well and good. It also reverses some of the losses that we saw from the end of last week. That's well and good. So we've covered everything from Friday. It's now technically looking like you're in the rows of a potential double bottom being carved out, which is obviously welcome news if you're a bull. I've been writing out the short put spread here in ES, not comfortably, with zero conviction whatsoever. So this is playing into my hands for now, but I have no love for this position at all. I think waiting until after is going to be the prudent thing. The vol crush is probably going to occur immediately. Now, this also sets up an interesting dynamic, because if this announcement's at 4, or if it's delayed a little bit to 4:15 or 4:30. Now it's 4:45 and you're not trading anything. And this announcement comes out in the hour between futures market sessions, right? We get that lovely order for batch processing between 5 and 6 p.m. Eastern. And the announcement comes out then, you're going to see an interesting open on the other side. And thankfully, Thomas, we get it all today. I'm on for overtime at 4, and then when the markets reopen, I'm with Vic for the price of truth. So I'll certainly be buckled up and dialed in. This is a tough spot to place it. This is a tough spot to place a trade, though. I want to just be clear about that. If you don't already have a position on off the low, if you're already short near the swing highs, you find yourself dead set in the range that hopefully we're liberated from today, roughly 55.60 up to about 58.40. I think the worst outcome for me personally is just more chop.
Yeah, Nick was just saying that on OTCL. Vol coming in, the market just, stays neutral. Trades get crushed on both sides. Where do you go from there, right?
Right. It's a great question. I'm keeping it light here. We also can't ignore the fact that there were some interesting headlines out helping the stock market today for the tariff announcement, and they're directly related to Tesla. Political reports today in Politico magazine, which is not their breaking news venue. They report in Politico magazine that there have been talks within the cabinet and Trump's inner circle that Musk is going to be leaving soon. Now, of course, the context of this story being released today comes after the Wisconsin Supreme Court results last night. Musk sunk $25 million into the Supreme Court race and lost. And the other statewide Wisconsin race that he didn't pay any attention to, Republicans actually ran better there. So there's the chattering classes today are saying that is Musk a liability for Trump? And so now you have the story coming out. Musk will be leaving soon. He's going to be doing it to go back to focus on Tesla. Tesla obviously having a fantastic day with this news coming out because it's also a day where they report a 13% drop in sales, in orders. And that was hurting the stock a lot this morning. So Tesla's up, consumer discretionary is up on the day. And now we find ourselves looking at a NASDAQ that's running higher by 1.31%. I suppose the read through there on one hand, Mr. Westwater, is that if Musk is leaving the government, then Doge is going to stop with its bull in the China shop routine. Do you think that's an accurate assessment?
Yeah, I mean, you could say special government employee, 130 days, this was expected. Would it still happen if Musk was having an outsized positive impact on the electorate? Who knows? I mean, the thing is, the elections last night did shift margins to Democrats, so you have some midterm implications there. However, you got to be cautious reading that because the losing party in the election, the presidential election, typically does see, special elections up until and the midterms, go the other way. Those suburban contrarians, typically just, they vote the other way. That has happened for quite a while now. How does it work into the market? Will the market like, a higher chance of Democrats retaking the House and Senate, which could provide some, stability perhaps and just the balancing of powers? It's still pretty early to say. I think, you have a couple elections that gives you some hints, but it doesn't necessarily, indicate too much when you have this much time left. But the calculus that we're on right now is, shooting for a more balanced executive and legislative branch, at least for right now. But, the short-term focus is going to remain on these tariffs, the announcement this afternoon. And Tesla has shaken off poor order numbers in the past. It's had disappointing order delivery numbers, and the stock has, risen beyond that. So the market for Tesla, and it's a big weight to the market, so of course it's helping drag the market higher. But for Tesla specifically, investors seem to like Elon Musk just coming back into more of the CEO role and being more active in that. So Tesla, I actually like along right now in it. Didn't take the trade yet. I'm looking at it. Might put it on today, might not. But yeah, I think, you got to be cautious reading the political tea leaves here.
I mean, what you bring up about the whiplash after an election year makes a lot of sense. There's actually this little Phil Murphy in New Jersey, for example. New Jersey has this really odd governor election cycle where it's always the year after the major 4-year term. So, you know, we do POTUS in 2016. New Jersey does governor in 2017. And so you have this effect. Phil Murphy, the Democratic governor right now, he was reelected in 2021. That was the first time going back to the 1980s where New Jersey hadn't elected a governor opposite the party that just won the presidency in the preceding year. And so there's this typical whiplash, right? A new power gets in charge, a new party gets in charge. Those voters, they sit back, they go, we accomplished what we wanted to accomplish. The other party, they're all fired up because they're angry that they don't have power. Those people turn out. So that's not unusual per se, but the Tesla influence, that's the big one here. And if Musk is leaving, and we heard reports yesterday that maybe Lutnick could be leaving soon, some of the more vocally brash people who have been pushing for some more of the aggressive, disruptive policies with respect to tariffs, as we've seen, they start to, and government spending cuts, those voices are pushed down. Maybe the market thinks that we're getting a little bit more stability out of DC coming soon. At 34.3 IVR, though. Go ahead.
If you get less spending cuts, which, you know, if Lutnick out, Musk out, potentially a less steep curve to those cuts, that's good for the overall economy because government spending does feed into GDP, right? So, and it feeds into not only government jobs, but a lot of contracting and stuff as well. So somewhat of a positive influence there.
Somewhat of a positive influence there. Thomas, the Russell setup is obviously the most clean or the cleanest in terms of a potential double bottom being formed. It also likewise already has the completed move towards the low on March 13th, which represents the finalization of this bearish rising wedge. So now we're seeing what today, we have that long hammer candle down there on Monday. Today would be a bullish engulfing bar, not quite a key reversal, but we did move below yesterday's low. We could be pacing to close above yesterday's high of 2044.40. You begin to see the contours then of how a double bottom looks here in the Russell. And if the Russell is rallying, goodness, if small caps are able to rally, which I think over the last 3 years they have still have a negative return, brutal place to have been a long-term investor. This becomes an interesting floor to work around, and it's a pretty big floor to work around. We're talking about a range near 2140 down to, we'll call it 2000, 140 points. That brings you up to 2280 or so. That's kind of right in the teeth of where the market was grinding sideways in before you break down with that S&P Global report back on February 21st. So technically there's something potentially to work with. 36.0 IVR. Now's the time to do it because you may not have time to do it once the announcement comes out. It could be in the in-between hours. But that's also the flip side of this, Mr. Westwater. If you put something on right now in expectation that you won't be able to trade during the in-between hours, you can get caught with your pants down.
Yeah,
it's
a
really fun day. You're locked in. You're locked in. You're flipping a coin. You have to just be aware of that. So personally, I'm not taking any new equity exposure here today. And broadly speaking, I've pushed out duration and rolled out where I can. I don't want anything that has like 22 or 23 days to expiry if I'm expected to roll on Friday. It's the typical tasty 45 and 21 day out window. Why play? I'm treating it like it's a 1 or 2 DTE option effectively. So give myself more time. Don't get caught on the wrong side of a potential move that could be very, very short term in nature. Longer duration's your friend if you have the opportunity to get to it.
Yeah, I agree.
We talk about sectors here. It's a good day. We talk about a decent tape. Pretty decent tape today. Tick values are up. Volumes are a little bit higher. We've seen that people are 1.14 million contracts traded already here as we make our way nearly halfway through this futures power hour. That is a nice, healthy bit of trading going on. Only 2 sectors underwater today, Thomas, of the 25 that we track here, XLP and GDX. That's probably a good sign that gold and the consumer staples are not on top of the leaderboard anymore. We've seen some rallies in recent weeks and months where it's like, yeah, the market's going up, but look who's in charge. It's not any of the growth stuff. The growth stuff is in charge today.
Yeah, I mean, you got Tesla helping the discretionaries a lot, XLK, XLI doing well. XLP, GDX, the only red. So yeah, it's looking like a nice rotation. Certainly a risk-on rotation.
Certainly looking like a risk-on rotation here. XRT is up 2.7%. XLY is up 2.26%. XRT, of course, draws my interest for the main reason that it has historically been the ETF that's most sensitive to recession concerns in markets. It falls first, it falls the hardest, has the biggest drawdown during recession periods. What are we looking at down here? XRT is showing signs that it may be working through a bottom right now, which I know this isn't index level future stuff, but XRT broke down first in December, never rallied back after the Fed meeting, and it cracked hardest as the tariff announcements came into play. We have a breakdown of this downtrend. We have a triangle that formed here, typically continuation in the midst of a top left to bottom right move on your screen. Now it's reversing to the upside here. XRT gets through 72, recent swing highs or so, retail bottoming out, recession fears turning off. I don't think we need to look through it further than that. As Druckenmiller said, the best economist I know lives inside the stock market.
Yeah, I mean, XRT, a pretty direct proxy to this tariff stuff and things like that. So is it sending a signal?
We shall see. XLY, similar territory, you get through about 206.5. Then you can make a case that you've carved out a double bottom here. And if discretionary and retail are behaving that way, one would have to turn their attention to semiconductors, which again, up 1.54% today, leading the broader market. Nasdaq's only up 1.27. It's early days. It's 3 days up in a row, so it's not the exact low, but we're getting through the 1 week here. We're through the prior swing lows. Okay, we get the clarity on tariffs, a cap, no further escalation. 5 cuts now are priced in through the end of next year. That seems like a bounce window. I don't know what the tariffs are going to do themselves, Thomas. I don't think anyone does, including Trump himself. There's a reason why they haven't settled on an option yet and why they were procuring another option yesterday. But as long as this is the end of the road for escalation, maybe this is the risk clearing event that half the people I talk to think it's going to be.
Yeah, and I mean, do they know what they're doing already? Is this more of a day-by-day thing? I think it is, where they're, moving pieces around the board, and you don't know exactly what your next move is going to be because it's dependent on what other countries are saying and doing. So you have this really dynamic situation. The announcement today going to bring some clarity. The question is how much? Where do we go from here? So
where do we go from here? Trying to be hopeful and optimistic, Thomas. But hope is a terrible trading strategy. Nevertheless, that is the tape action today. We turn our attention to bonds here. I made an adjustment this morning. I pinged you on this. ZN, the position I was in earlier today when we popped up into 112 and the long 111, 113 call spread, I got out of that position. We were up at the range highs. There's 23 days to expiration. As noted yesterday, as noted today, my plan is to clear the deck of anything that was supposed to roll this week before this tariff announcement. And so I still have on the long 115, 117 call spread, but that has much more time. It's in the ZN-U5 contract. I ultimately do think that if we get the tariffs even in a graduated fashion, it is still going to be an overhang on growth. It's not going to be as bad as we fear, but it's still going to be an overhang on growth. Is recession possible in the short term? Yes. That doesn't change. The tariff implementation will take months, but this has the makings of a near-term top within the range for bonds and notes right now. You can see it here in ZN-U5. We poke up to a new high. We're closing below yesterday's low. That would be a bearish key reversal up after a bounce. And again, it's occurring right at the range highs that we've seen in recent weeks. So would that be a surprise then after a risk clearing event for stocks, people relax with the bonds, right? You see those rate cut odds come back in a little bit because we're not going to get the 20% across the bow. I like being long bonds structurally on a long enough timeline. But this week, right now, if you're 23 DTE, look what's happened today. It's worth giving yourself a little bit more duration. So that's my plan. That's what I've done.
Yeah, I just got out of my ZB long. Nice little profit. Still in ZN. I'm going to keep that on just because the trade for me right now is flat. I got 51 days. I got into it a little later than I should have. Going to keep that on. Got out of ZB. I'll probably get back into ZB. I'll wait until after the tariff announcement, so I'll probably make a decision on the trade Thursday or Friday to get back in. But a little drop here, a little dip after the price action we've had. It doesn't concern me too much that the technical structure is broken down. It's just strategizing the trade here, taking profit where I can, getting back in at a lower price.
Right. I'm still holding in my ZBU5 short put spread as well, but nothing in the EM contract anymore. No reason to do so, as far as I'm concerned. It's a 42.5 IVR as well. That is something to consider right now, which in ZB, as frequently noted here, ZB is twice the size of ZN. So if you're new to futures trading, keep an eye on those tick values and overnight margin requirement. And ZB can be a little bit intimidating for someone who's new to the space. Again, size does matter there. You don't want to put yourself in an uncomfortable position where you're wiped out because you get too much on. TLT fills that void, it being the ETF for the long end of the curve. And you'll find the exact same IVR as you see in ZB as you do in TLT. In any event, though, Thomas, right, if we think about this being a market that has 5 cuts priced in, because we're at apex recession fears, any clarity that comes out could ultimately mean a pullback in those rate cut odds, could ultimately mean a pullback in bond prices for a little while. This is an area of important support in the 10-year yield, for example, right? This could be the neckline of a head and shoulders pattern. Maybe it's just a continuation effort where yields are going to continue to march higher because, after all, what has happened with the budget? Like, have we made any substantive spending cuts? No. Don't listen to the noise. Look at the actual money that's being spent. You can go online and look to various CBO, for example. They track the spending. We're spending more money this year in this fiscal year 2025 than we did in fiscal year 2024 still. And we're looking at a $4 to $5 trillion debt limit increase on the next tax bill that's currently being debated in the Senate and the House. That's deficit spending. It may be deficit spending in different areas of the economy, but it's not balancing the budget. So perhaps, we get the clarity here, Thomas. This is the swing low. Yields bounce up. If we start to make our way through 4.35, that's the other side of the range equivalent in ZN, then you actually have a potential significant play for higher yields, lower bond prices. I'm going to sit tight for today. I've made my adjustments.
Yeah, and I mean, with the deficit, you could look at the CBO. You could also, if you look at the last Treasury quarterly refinancing announcement, they didn't touch it. If you're expecting lower spending, you would expect that to show up in the Treasury funding, which isn't happening as of yet. But things can change. But right now, you're right. There's not a different trajectory for the debt level.
Not a great trajectory for the debt level, and in a world where there are potentially more alternatives than the U.S., then incrementally, why are you going to keep supporting the Treasury market? And this is the whole thing about trade. We run these large trade deficits. Trade deficits are not the same as budget deficits, which I think people are confusing. Trade deficits, though, what do those countries do with all these dollars that we send them for their stuff? They typically buy treasuries.
Yeah.
Makes sense. They have a vested interest in making sure that their customer base, right? You want your customer base to have stability. If our yields are jumping up and down and going back and forth, we couldn't possibly be good customers. We couldn't manage our cash flows well. So there's a natural incentive within trade. We give them excess dollars. They take those dollars, they put them back into the treasury market. Keeps our bond rates low. Amidst all this, Mr. Westwater, you know what's doing fine? It's not seeing the volatility, seeing the troubles. Gold, silver. Gold and silver continue to advance. It's been a good place to hide this year. I've made my adjustments as well in here. I'm no longer in GCM5. Took profit on the 30, let's just double check, 30, 25, 30, 50 call spread here in the follow account. Now also in the follow account, GCQ5, long 32.50, short the 32.75. Rolling out another long in this call spread, Mr. Westwater. It continues to work. We have yet to reach the 100% extension of the targeted move that we see from the December swing low, February high, the low that we have here at the end of February. So no reason to get off the train. I'm a momentum guy after all, and this is the place where I have a good deal of conviction, and it served me well. So I'm not going to abandon baby gold here.
Yeah, I like gold. I'm in long silver. I'm not long gold right now. I took that position off early last week. Prematurely. That said, I'm looking to get back in. The next pullback, I probably will, assuming the backdrop doesn't change too much on tariffs and the growth outlook. But the backdrop, fundamentally, technically, gold is looking like a really nice long here.
It's riding that 1 week moving average still. We had a brief catch here in the late part of March where it held up as support, but this has been that line of verticality. One of the reasons why I extended duration today and continue to roll out, again, 23 days, but also if there is a pullback here, I want to be able to ride it out without having to say like, oh, I can't believe I just gave up $60 in gold right before I have to roll my position. It's a 51.4 IVR as well. It's not exactly at the highest levels we've seen in recent months, although it has bounced back neatly. And that is one of those defining features that you really want to see with a gold rally. You want to see the volatility expansion. So vol's not pulling over and falling off right now. If it starts to fall off, like we've seen on so many other occasions when vol comes in, it's probably going to mean, it's a precursor to gold's rally slowing down. But right now it's not. The tariffs today, I don't know if they make a material difference for gold because gold has been going up thanks to this idea that the U.S. is a less reliable counterparty moving forward. And that's not going to change after today. Silver as well, up by nearly 1% here. It's catching in its EMA cloud. It's still holding its breakout potential. 20 IVR as well. So a nice little bounce back in silver vol here over the past week or so. Why silver over gold? Is this simply a play on the gold-silver ratio?
Yeah, that's pretty much right. Typical precious metal bulls markets, we've seen silver traditionally lag gold, but it eventually catches up at some point in the cycle. So it's pretty much a play on that. The gold-silver ratio at pretty elevated levels right here. I believe it's still above 90. So it's just a play on that. I'm not in the silver futures. I got into SLV just for a little more liquidity there versus silver. Sometimes hard to fill certain positions on that. But like I said, I'll be getting back into gold too. I believe they're both going to position to go up. And you have geopolitical risk now coming back into the fold with this. You see that in oil more than anything, but it does benefit the precious metals as well.
Yeah, oil. We're going to have an interesting discussion with oil in a little bit here. There was an interesting cabinet level with Emmanuel Macron today in France that directly relates to oil's outcomes and some other conversation we've been having here. Before we get there, however, let's keep an eye on what's happening in copper. Copper itself continues to trade along very clean technical fault lines insofar as it's respecting candlestick patterns over the past several months to a very accurate degree, a very high degree of accuracy, I should say. What I mean by that is when you see a bottoming or a topping candle, are you finding immediate follow through? And is it proving to be something that you can trust as a directional signal? And I've highlighted a few of these events over the past several months where you've had very clear, distinctive types of topping or bottoming candlestick patterns, going back to where we were in September with that bearish outside engulfing bar / key reversal at the high. You have the Morningstar candlestick cluster here at the lows right at the start of the year that signals a potential bottom where, quite frankly, we had seen lows back in August. We then had that intermediate key reversal here marking the high. We had another one marking a temporary high. We have one marking a low, a bullish reversal. We have one here, an evening star candlestick pattern that immediately, again, sees a bit of a pullback right now. This is a place, though, where tariffs are eyed, and there have been imbalances, and the U.S. is a net steel consumer, not producer. We consume about 1.9 million tons per year, produce about 1.1 million tons. So we got to fill the gap from abroad. Do you feel like the copper topping process is finishing up as we're getting close to our 1 month moving average again? This yellow line in the chart that's been support all year long. Feel like I'd like to get long against there if you give me approval. Make me feel better about this.
Yeah, I'm waiting for it to drop more into those levels you've outlined on the chart. We had this rush of copper into the U.S. to get ahead of these tariffs. The U.S. announced an investigation back in February under Section 232 of the National Security, whatever it's called. You have 270 days of an upper limit to do that investigation. But the market thinks it's going to match the steel and aluminum tariffs, which is 25%. So, all these traders have been rushing to get copper into the U.S., sucking it out of the LME, some out of Shanghai. That's driven most of this move here. If the tariffs actually do go on, it's like, does this become a sell the news event? Do all these elevated long positions say they're going to, take our profit and, look elsewhere for the time being? It's hard right now. There's compelling arguments for both sides of the trade. You have China preparing to do even more stimulus. They're a major consumer. But if the tariff sell the news event happens, then all that copper stops coming into the U.S. and then is subject to tariffs, which will reduce the flow into the U.S. So you have these conflicting stories. So right now it's about being strategic in the trade, finding a level that's going to give you the best risk to reward, and then, executing on that. I think we're due for a little bit more of a pullback. I'd like to see a little more come out and then take another stab at the long side, assuming today's announcement or an announcement in the coming days doesn't materially alter that outlook.
Yeah. I think this is a place where it's a different kind of metal exposure as well. It's a little bit more growthy. Of course, there was a divergence between like New York and London copper prices for a while, and the threats of tariffs has helped close that gap. This year, there have been multiple trades taken in copper. If it's been long call spread, short put spread, around the basis of if we get pullbacks into that 1 month, it's a good place to just take a swing because it's been so reliable. This is, again, one of those blushes. Maybe it came on Monday. Maybe it hasn't happened yet, although this somewhat of a shooting star inverted hammer here against that 1 week makes me still feel like there's a little bit more downside momentum here in the tank. I'm going to delete this rectangle and posit something different instead. There's a zone here where the market has previously peaked out before breaking out ultimately. That kind of is nestled right within that 1 month moving average area too. So if we have a drop down really into 4.8, 4.95 down to 4.8, it becomes an area where if you have, again, enough time on your side, typical 45, maybe even 60 days in a copper contract, we can look to something like this 55 here. That's probably sufficient. You could do a short put spread. And as long as we hold that zone, as long as we don't fall back below 480, you can make the case that, this is a market that is probably finding some sort of low. I'll take a stab on that side. This feels like it's a tariff play, but also a little bit more China-centric. And so while tariffs may go on and off elsewhere, I have just this hankering. My spidey sense is saying that copper is probably not going to be given so much grace if this is a way to try to turn the screws on China.
Yeah, I agree with that. It's right now I'm not touching it. Like I said, I'm going to wait a little bit here, see how headlines develop, etc., how prices, hoping they come back to that February, early March levels, and then, decide on the trade there.
Let's turn our attention to those energy markets, and I think energy looks too quiet. There was a cabinet level meeting today in France, which I know most people are saying, what on earth are you talking about? It's meaningful for the particular reason that when Emmanuel Macron convenes these high-level cabinet meetings, they typically don't have any stated purpose. Today's stated purpose was about the Iranian nuclear situation. Now, I bring that up in particular because we have seen in recent weeks, and as we've covered here, the U.S. has been moving a significant amount of military assets to Diego Garcia in the Indian Ocean, which would be a staging ground if you want to, say, attack Iran. And given what we've seen historically when countries are doing things like this, it may be a precursor for other action. In 2021, in December 21 and January 22, there were reports of Russia, of course, moving all these troops and supplies to the front line of Ukraine. A lot of people dismissed it. And then they started setting up blood tents, which if you're doing a military training exercise, why on earth do you need to have places where soldiers would need to, get amputated or get significant blood transfusions or infusions? That turned out to be something that was worth following, because then Russia invaded Ukraine a few weeks later, and ultimately, if you were positioned for that in gold and oil, right, if you picked up those breadcrumbs, it worked out. We're obviously not rooting for any war here, Mr. Westwater. But at a 14.5 IVR with some of these headlines coming out of the global market, while we've all been distracted by Trump and the tariffs here at home, there are some things that are occurring abroad. I'm going to do something a little outside of the box. I haven't traded oil in several months, going back to last fall. I haven't found a particularly compelling setup. I think oil vol may be understated from some of the headlines that we may be seeing come down the pipeline. This is a total insurance trade. Not that, quite frankly, I need insurance in my pocket because I have very little equity market exposure. And in a world where there is something going on with Iran and the U.S. military, one would surmise that gold would do quite fine. But at a 14.5 IVR and the looming threat now, it seems, of U.S. military action against Iran, or U.S. and Israeli military action against Iran, I think we should have something in our pocket to hedge against oil spiking up. So the long 80-82 call spread right now, 75 days to expiration. You're not getting a lot of delta between the deltas. It's 18 and the 14, but it's risking 2 to make, we'll call it risking 1 to make 9. In this case, $200 for 18. This isn't the tasty trade way. This is just, again, having a hunch, wanting to have some protection here. I think oil vol could be understated right now. Geopolitics seem to be flaring up. It's unrelated perhaps to the tariffs story today, although you can make a case that U.S. imports, exports, particularly those involving oil, are fairly significant. I'll stop rambling here. Am I missing something, Thomas? Do you have a really astute eye for some of this, these military news and these happenings around the world? If only to prop up your credibility here for a quick moment. Given your own service, you flagged an incident in Lithuania last week, and you said, I wouldn't be surprised if this was like a vehicle getting caught in a flood or something, given where they were training. And we just found out yesterday that these soldiers who did pass away, they died because their vehicle got stuck in a bog. And that's obviously something you just surmised from your own, sense ability of having, been a participant in that world. So tell me, am I off my rocker here and connecting these dots and seeing U.S. activity in the Indian Ocean and a high-level French cabinet meeting specifically about Iran as a good or bad rationale for looking long oil delta here?
Yeah, I mean, at first in March, the upside was simply that we were going to put export controls on Iranian oil, Venezuelan oil. Now the situation is evolving to where these pieces are moving around the board. These really powerful military assets are getting shifted to the Middle East, the carrier strike group. You got the B-2 bombers going to the Pacific. If you're looking at the military analysis of this, it looks like, the U.S. is preparing for a strike on Iran. B-2 bombers, of course, can carry nuclear ordnance. I don't think that would happen, but they can carry what's called an MOP, a massive ordnance penetrator. It's the biggest, pretty much non-nuclear ordnance you could have. They could go through, multiple feet of bedrock where these some of these facilities in Iran are suspected to be. You got a lot of stuff happening. Turkey is moving air defense assets into central Syria. The Middle East is heating up again, and oil prices are reflecting that. If you get another conflict that breaks out, it's not only going to be centric to what Iran exports, it's going to be the entire supply chains of the Middle East, a major oil producing region. You're going to get shipping lanes, you're going to get these military assets around the shipping lanes again. You're going to get all kinds of things happening. And just the fear premium of geopolitical tensions is coming back right now. That's what we're seeing priced in. Iran is dead set on acquiring a nuclear weapon. A lot of hardliners in the IRGC think that that's the only way they can ultimately deter U.S. military intervention. So the race is on now. The timeline is very short to them getting a nuclear capable warhead. And the U.S., and Western allies have been for years dead set on stopping that with limited effect because they have assistance from Russia to develop these nuclear weapons. And the supreme leader, his senior advisor, Larjani, or however you pronounce it, he's just been unveiled he made another secret trip to Moscow just last week, where these scientists, exchanged these trade secrets. And, producing a nuclear weapon, all this enriched uranium is still, it's a high endeavor. It's capital intensive. You have to have the technology to do it. All signs are pointing that Iran, is potentially only weeks away from this. So if something happens, it needs to happen sooner rather than later. And with the shifting of these military assets, it's looking like, is this a bluff? Is it the U.S. trying to deter something? What would the goal there be? Are they simply going to go through these back channels? Iran has said they don't want to directly negotiate, but they'll indirectly negotiate with some, Middle Eastern states. This puts the pressure on. It doesn't necessarily mean a strike is going to happen, but the U.S. is flexing its muscle, and that's in preparation for what I believe these indirect negotiations to happen. So in the meantime, oil is going to price in this higher geopolitical tension, just by the virtue of the military buildup and these things happening. Are we going to get an actual conflict? I think the chances for that are still relatively low, but we're going to see within this year, within the next couple weeks and months, these negotiations have to go on what they call Trump time. They're going to have to be accelerated. There's going to have to be concessions on both sides. Whatever those are is unknown at this point. Iran is probably going to want some military assets that are more permanent in nature shifted away, to which will give a lesser technical advantage to the U.S. So who knows how it's going to play out, but the fact is right now oil prices are pricing in a higher geopolitical premium. It's not just about, tariffs, things like that. And then on the other hand, you have Trump, appearing to be more frustrated with Putin, these negotiations not going forward. We're shifting more Patriot defense batteries to Poland, where they're going to eventually be fed into Ukraine. And you also have the shadow fleet. The trade measures we do now, they're relatively light. They're not enforced as well as they could be on the shadow fleet. So that can be elevated for more restrictions. And all of that is going to, affect the global supply chain. And how high is oil going to go right now? I don't really have a good read on that. I'm actually just got short earlier this week, so it's running a little bit higher than I expected. But geopolitical premium is what you want to watch right now. How are these negotiations with Iran going to go?
Yeah, I'm certainly not making a bet on oil for any growth-related reasons at all.
Right.
Oil demand has a correlation with global GDP over the past 30 years on a quarterly basis of about 0.92. So if we're talking about slowing down trade thanks to tariff barriers, then ultimately what we're talking about is less demand for oil. Again, this is not a strong conviction idea. This is just something is going off in my head saying that we have a lot of noise right now in the media, and there are some things that may be happening, below our noses that we're not really privy to. But we got to connect some dots here just in case you don't want to get caught flat-footed. FX perks up here a little bit today. As we close this out, it's worth noting that the yen is one of the bigger losers on the session. It was up earlier. Now it's down. Everything else has turned higher versus the U.S. dollar. The Mexican peso is fading off of some of its losses as well. The Canadian dollar turned green here, Thomas. Lots of volatility in these charts. 53 IVR in the Canadian dollar. You have a 69 IVR in the euro. The yen is a little bit weaker at 29. What's your take on the dollar here quickly, as we do need a wrap in 1 minute for truth or skepticism?
I'm still staying long my euro long. I like it right now. The yen a little less, but I'm still staying long there as well. I'm just going to stay long non-dollars right now. I think with the tariffs, we could get some a rise to the dollar perhaps, but it's a big question mark. So I'm still staying long non-dollars, but my positions could shift later this week depending on how this goes.
Well, how will it go? We will find out later. We'll be on overtime, 4 p.m. Eastern. Hopefully they start then. We'll get the market reaction if they do it in between sessions with the price of truth. So today is all tariff day for me, Thomas. I can't escape it. Not if I tried. What's on the calendar for tomorrow? ISM Services is the most interesting thing, of course. It is a precursor for the non-farm payrolls report on Friday, which, mind you, ADP came out today a little bit firmer than anticipated. So private payrolls are holding up in the face of what's been a barrage of negative soft data, right? The surveys have been terrible. As you do at the end of one of these shows, we'll encourage a brief bit of education here. Head over to tastylive.com, top banner, Learn Beginner Futures. There you can find the coursework put together by the fine folks on the Tasty Live research team. You'd be looking at market products today. You can get there directly by clicking the blue link here at the bottom of this slide. But you'll have to do it on your own because it's Truth or Skepticism Wednesday. We need to make room. So we'll see everyone in a little bit. Stick around after the break. Radigan and Sosnoff coming up next.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
My favorite time to read is when I'm away on vacation. I'm on like an island somewhere and I have nothing to do except sit under a hut. That's my favorite time. But I don't see that happening anytime soon.
You believe this shit? The favorite time you like to read is when you're under a hut on an island. That's pretty specific.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on, take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
And the jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean, I
This is moving so fast, and I like it.
Yeah.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Hello, everybody. We're back. I'm Tom Sosnoff. I'm here with Dylan Radigan, and it's time again for Truth or Skepticism. Mr. Radigan, how are you?
I'm pretty excited. Liberation Day. I always like a new holiday, and so I.
Is this officially a holiday now?
It's an official global celebration of the liberation.
I don't even know what it means, but it sounds very Russian/Eastern European to me.
It sounds very old, very like dictatorship vibes, like Chinese, very Chinese dictator.
It does not sound. It's not an American holiday. I don't like those things. I don't like the idea of liberation. I'm not sure I don't even know where we're being liberated from. But whatever.
Ilya said everybody's getting liberated from their money.
Yeah, that's not bad. But. Anyway.
But so before I know we got something else to talk about, I just want to talk on not to get into the whole tariff madness, but I was talking to our good friend Angeline this morning in London, with the IG crew, and what we were talking about was forget all the unknowns, who knows this, that, whatever. The known fact is the cost of everything's going up. Meaning the cost of an international transaction. The friction in an international transaction is higher, and as a result, the value of everything is lower. Maybe it's by 5%, maybe it's by 10%, whatever, and that the probability of recession is higher. Angelina and I were playing a game where we're like, what are the things that we can definitively say that we know? And our assertion was that at the average cost of every transaction is going higher by some amount, smaller, large. That the average value of everything goes down when the average cost of everything goes up. And when the average cost goes up and the average value goes down, the probability of slowing economic activity goes up. Do you think that those three truths are valid? Or are you willing to accept those three truths?
It depends. If you're talking about Americans, yes. If you're talking about the rest of the world, you said you're having this conversation with Angeline.
In London.
In her world, I would not agree. If you're talking to me as Dylan Radigan, Italian citizen, I would not agree.
Sure.
If you're talking to me, Dylan Radigan, US.
Why is that? Why don't you think that the non-Americans get a higher cost basis for everything?
I think non-Americans get a huge advantage from everything that's going on here today. I think you saw it today with the because there's a certain amount of independence. There's a certain amount of opportunity that we are creating now for everybody else with what we are doing. So the one side of it is to look at it as that it's just one way. I'm actually looking at it as the other way. And, being a shareholder, Tasty was bought out by, a UK firm. And so Tasty's listed, we're listed on the London Stock Exchange, right? Okay, and that exchange, just as an example, I'm just using, it's really,
could be one,
it's very fair for me to use us as an example because we're a good example. So I've been kind of gotten dirty with the, being a listed company in London and watched when all of the UK stocks did absolutely nothing for the last couple of years and the US stocks exploded, right? And the UK stocks are not, they're not living on an island. It's most of the rest of the world. It's Europe. It's all of Europe. It's different places. I mean, I know some of the markets are up, but also some of the markets have all the markets have grossly underperformed, the U.S. markets over a period of time. So I think what the unintentional consequence of what's happened with everything that's going on in the U.S. right now in this whole, isolationist policy of this whole tariff policy, what's actually going on is we're providing an opening that didn't exist before. Europe was shut out for all intents and purposes. Europe was completely shut out. The door was closed. And I know this.
You're saying whether it's for listings or whether it's just for any first prioritization, it was always a second option or a non-option.
Of course, yeah, it was definitely a second option, a long distance second option. Distant. And I think what just happened is, and this didn't apply just to listed, it didn't apply just for market structure. It also applied for things like, capital financing of different things. It could be financing of
raising
defense
money
contracts.
For a new company or a new project, just raising money.
Well, when you think about it, it's defense, it's space, it's communications, it's basically it's finance, it's anything you can get your hands on. There's always been this dependence on the U.S. and this reluctance to do anything domestically, because you can't compete with the scale, and you can't compete with the ability to capital.
Well, the Milan Stock Exchange is a classic example, just to use a familiar reference.
Every stock exchange
so shallow, but it's so thin. Yeah. You know why? What are you talking about? Frankfurt, so thin, so shallow. Like, what are we doing? Paris, come on.
The London Stock Exchange. The London Stock Exchange is a ghost town, and so after being listed in London now, for 4 years and watching what happens over there and the amount of interest and how people buy equities and how they think about investing, it's a horrible place to be. The flip side of that is something for the rest of the world the rest of the world just got a wake up call, and they got slapped. They've been stepped on for so long that they just got a slap in the face. They woke up, and all of a sudden they're like, you know what? We can do this. F you guys. We can do this.
There's more of us than there are of you, basically, whether it's the Chinese with the Japanese.
There is more of them. There is more of them. And when you look at different places, I mean, talk about, look what we did for Mexico. I mean, Claudia Sheinbaum went from being, kind of not a very popular political figure to being one of the most powerful women in the world. The new prime minister in Canada, because it's a parliamentary system.
Oh, Mark Carney.
Yeah, Mark Carney. I mean, he's probably the most popular of anybody there ever already, because
he said "F you," I got this.
Just right, exactly. Right. Hey, we've got there's other vehicles, and so and everybody in Europe has kind of taken that approach, they went from having no leverage. I think the miscalculation that the Trump administration made, and it truly is a miscalculation, is that they had all the leverage, and
that America has all the economic leverage, full stop.
We had
whether it's on whether it's as a market, capital markets, consumer markets, any market.
We had all the leverage. We had leverage every which way. We have all the money. We had all the leverage. What the miscalculation and the mistake that this administration made, and anybody can yak about, we didn't make a mistake, or this is just the beginning, and 3 years from now you're going to get paid, whatever. I don't care. The mistake, everybody, they emboldened everybody. They gave everybody the power back. They lost all the leverage, and now it's just a game. Now everybody's going to negotiate, and in the end, they're going to say, "Okay, you remove this tariff, we'll remove this tariff, blah 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 blah." But it doesn't matter because they've empowered everybody.
Because they've awoken the beast, whether it's the German, French, British alliance, or whether it's the Korean, Japanese, Chinese alliance, or whether it's the Mexico, Canada, England alliance, or the Italian, whatever. Like everybody's active now. They've created a dynamic non-U.S. economic world.
That's right. And they've essentially said, if you look at the way money is flowing right now, the money flow now is out of is out of U.S., is out of kind of some traditional products, and into like, listen, we'll do this ourselves.
Mm-hmm.
We can do this ourselves.
So
Go ahead.
So to that end, there's been discussion. Because it's sort of interesting. It's fascinating to watch it every day, right? Like, again, I'm really fascinated because when was the last time Japan, China, and Korea were aligned? I don't know if it's ever happened.
I don't know if it's ever happened.
Because they're mortal enemies, or at least rivals. I won't say mortal enemies, but certainly not friends. And you see the same thing in Europe, whether it's, again, the Germans and the French, and then the Germans and the French plus the British. And anyway, the incremental sort of advancement of the awakening of the beast and the kicking off of the cobwebs, and basically just dealing with the hassle of like, well, which language are we going to use and which regulatory regime? Like, everybody just kind of avoided it. They're like, no, we're going to be French and you're going to be German and we'll just all work in New York and Chicago. And now it's like, well, hang on, we're not going to work in New York and Chicago. We're going to work in Europe, so we better figure out a language, which will be English, obviously, for everybody, for contract law, and we got to figure out a regulatory regime. Do you actually believe that there's a possibility of a deeper, more relevant, more active capital market in Europe as a result of this?
No, I don't believe that there is right now. But what I do believe is that the momentum has shifted. And what I know for a fact, the momentum has shifted. And I know for a fact right now, for the first time in 4 years, since we've been part of a UK company, for the first time, there's actually interest, not because our business changed overnight, because it hasn't, but simply because there's a money flow that's going in a different direction. Like, they reverse direction on the money flow, and the money flow is now going into a lot of the European markets. And
there's a natural bid for IG Group, or for that matter, UBS.
There's a natural bid for everything. It doesn't even matter.
For Daimler-Benz or Volkswagen or Fiat or.
There's an appreciation for a different marketplace for the first time. And what you're seeing is some of the money flow out, and not even reluctantly. You're seeing some of the money, just like you're seeing a huge sector rotation take place right in front of our eyes, and it's self-inflicted. Now, you can go back just 3 or 4 years, and you can play the tape, and you can watch what China did. And it's so similar and so scary.
Different, you mean in terms of the self-inflicted damage from when China went full crazy pants.
Yep, exactly. And it's the concept of self-inflicted disruption. You got to remember that disruption is something that big corporations need to do to stay relevant, because they have to stay at the forefront of their technology, and they have to stay at the forefront of innovation, and they have to stay at the forefront of buying other businesses so they can stay out in front of everybody. Governments are not the same thing. Economies are not necessarily the same thing. You can't disrupt an economy like you can disrupt a corporation. And so China learned the hard way. They basically stifled their tech companies and learned the hard way how that destroyed their real estate market, their economy, everything else. I'm nervous that this current administration took a page out of that playbook under the guise of, oh, we're getting rid of all the bloat and all the inefficiencies. So what we're doing is we're cleaning up the inefficiencies like you would, like we're laying off, like a corporation would come in and lay off 10% of the workforce in an effort to,
But it's sort of the style where it's like everybody with an even numbered social security number, like sort of the randomized madness.
Well, it works on a corporate level because you get your expense ratio way down, and you clean up your balance sheet, and then you attract investors. It doesn't work the same way for countries and for governments, because it's just not the same thing, and you can't run a government like you run a business. And you would love business people to be involved in government, but you can't run it the same way. So the approach here of just slice everything off and then try to rebuild, what it does is it sets you behind. I mean, I don't understand why we couldn't look at the Chinese model and see, I can't believe we couldn't look at like how disastrous the Russian model was, but that market was so thin to start with. The Chinese market wasn't that thin. You got to be careful when you go with full-scale disruption. And again, why? Why? The argument that you're just trying to lower the cost of your future debt, I don't buy it. It doesn't work that way. And so this is the problem, that we've kind of made our own problem. We went from having no real issues to having big problems because we've emboldened the rest of the world. And I don't know what that ultimately means, but we've lost the leverage.
Who is there a point? Is the leverage? I mean, this is going to be impossible. I'm trying to ask this question in a way that is answerable. Where has the leverage most clearly shifted in your opinion? Obviously, it's sort of diaspora. It's sort of the reason it's like not a great question, I guess, is because it sort of diffuses to the world. Is it in Canada, But is there a clear locus of power that's emerging relative to, in the sense of leverage, whether it's the coalition in Asia or a coalition in Europe, or it's too soon to know?
I think it's too soon to know. I don't know the answer to that. I think it's too soon to know. But leverage is really interesting. Leverage is something, we were negotiating a real estate deal for Tasty, and one of the things I pointed out to the other party was there was an article this week in Cranes, and it said Chicago commercial vacancies in the downtown area were at 11, were for 11 straight quarters have gone up. So it's record amount of vacant space.
Inventory.
And the argument is, okay, that's great. That means leverage is in our favor. We're negotiating a deal. Leverage.
You guys are trying to get in. You're trying to pick up some inventory. You're saying you're on the buy side.
Yeah, we're trying to pick up inventory, and when you're trying to pick up inventory, when vacancies are at 11 straight down quarters, the leverage is in your favor. It's not rocket science. There's more sellers than buyers. And that's when you do your best work. And I'm fearful now that you got to, the idea of you raise money when you can, not when you have to. And I feel like we've had such an easy go at raising capital in this country, and now it's going to be a harder go because the money's going to look elsewhere.
Mm-hmm. There's the leverage. My one quick leverage story I'll tell you is in the years when I was hosting Fast Money and I was living in lower Manhattan, and because Fast Money, if that I guess probably still is, but at that time the show I was doing was ended every day at 6 o'clock, and I would get home at 6 around dinner time. I would be walking home basically between 6:30 and 7. And one of the regulars in the neighborhood where I was living was a man named Harvey Keitel, who was a well-known actor.
Yeah. Sure, I remember him. Harvey Keitel. Sure. Yeah.
Right. And Harvey was actually a fan of it, would watch the TV show. He was like, but he don't have 2 cents. He obviously wouldn't watch every day, but he would watch it. And so we became like sidewalk friends in the New York sense of the word, like just to chat on the corner. And the show had become a big hit and whatever, and I had leverage in a contract negotiation basically with NBC. And Harvey knew that I told him that the deal's like, he's like, "You gonna stay?" I'm like, "Oh, the deal is up. We'll see, whatever." I was young. I was probably 33 or 4, something like that. And Harvey pulls me aside on the corner and like in his full like character, you know. And he's like, "Remember, kid," he's like, "when you've got him by the balls, squeeze gently." And I always thought that was very good advice. And I think that that's something that Trump has not done here. Like, Trump basically felt like America has the world by the balls, which is true, as a capital market, as a consumer market, as a reserve currency. And he would have been much better served to take Mr. Keitel's advice to squeeze gently in the negotiations, as opposed to this insanity where he's basically just horrified everybody to run away as far as they can, as fast as they can, anywhere they can, as soon as they can.
No question. You're 100% spot on. But Trump's MO is, his strength is in sales.
Okay.
People get confused because his strongest attribute is that, you know, he can sell anything to anybody, and he's obviously done that. He's been president twice.
He sold the world that he should be the president.
Of course.
And so the American, not the world, the American voter, I guess.
He could teach a master class in sales. That's the upside of Trump, is that he's a good salesman. The downside is he's a horrible business person, and he doesn't understand it, and he doesn't want to understand it. He doesn't spend the time to understand it, and he's dangerous in that capacity. So, you know, that's where
Meaning he does not know how to use leverage to get what he wants because he overestimates his position, basically. Or he doesn't know how to manage his position, whatever that means.
He's just a bad business person. I mean, that's why so many bankruptcies. But he's, the other side to him, he's a great salesman. So he keeps raising money, you know, and that's a skill. There's an art to being a great salesman. And, you know, and nobody can take that away from him because he's effectively done that.
So let's say that the yard is now open for the Germans, for the French, for the Italians, obviously for the British, for the Chinese, for the Japanese, for the Mexicans, for the Canadians, whatever. Let's say 10 to 15 economies of some consequence. Sure. In Asia, North America. I mean, would you go so far as to, as American investors, which we both are, and most of the audience of this podcast, I believe, likely is it to the point where you would allocate either trading or investing activity? Are you inclined to follow the changing flows away from the United States in any way?
I don't.
Other than the fact that you're already naturally there because you sold your stock to a British
I'm naturally
company.
there. But if I wasn't naturally there, my answer would be no. It's not an easy thing to do. You know, for people that live in other places around the world, it's relatively easy to invest in the U.S. because almost every financial service company offers access to U.S. markets. There is no U.S. There's almost no, I shouldn't say there's no, but there's almost no U.S. financial service company that offers access to markets anywhere else. I mean, you know, there used to be an E-Trade ad that ran, I don't know, 25 years ago, and there'd be some, you know, the kids would clap because they'd be like, "Daddy just made a trade in Japan." No, he didn't. That was all bull. Like they never offered Japanese stocks. You know, one company that we compete with, Interactive Brokers, has a global network, but it's not black and white. I mean, you have to convert currency. There's a lot of things you have to do. I'm a proponent of tokenization for the sole reason that I want to invest in other products and other markets, but I don't want to, you know, I don't want to own different currencies all over the world. And because I think it gets a little bit confusing and it gets a little bit disorienting. And I also, you know, you have to clear different places. There's just so much work involved in investing all over the world, and it's very difficult to do. And I give people that live other places a lot of credit for being able to trade U.S. markets, but they crave the liquidity that we have. You know, it's not going to be good for U.S. investors to get into markets where we don't even understand how they work. Like, just to give you an example, Scott and I managed a fund once in Japan, and it took us like 2 years to figure out how to buy stocks there. Like a round lot in Japan for one stock could be 1 share, for another stock could be 10 shares, and for another stock could be 100 shares. And those are all round lots. And just figuring out how to access, the Japanese, the Nikkei, and how to trade in that marketplace, was an obstacle we couldn't overcome as professional traders. So it is not easy to do. And on top of that, we're very ethnocentric when it comes to currency. So most other places around the world know what their currency is to the US dollar, but go ask any American on the street, nobody has any idea how currencies work. I mean, maybe
do you think that any of the world markets, do you think that any one of these countries is better positioned than any other to exploit the opportunity? London, because of the language, would be the kind of obvious one, and because of the culture,
because of the London hours and stuff. I mean, London
and the culture, and they're already it's a Wall Street culture, and it's the language, and
yeah, but it's London. The problem in the UK is the problem in much of Europe. They're still, the investing and the strategic mentality there in the world of finance is still 20 years behind the US or 10 years behind the US. And so they have a lot of issues. They have know-how issues. They have cultural issues. They have just, their issues have issues. So I think it's going to be very difficult. I think they're about to get a huge influx of capital, because just like you said the key word before, you said if you add it all together, they're bigger. They're bigger than us. And so if you're talking about pure size, and there's a lot of wealth too, we're talking about size and wealth. Yeah, I mean, there is an incredible amount of potential there.
No, there's more people and more money. Yeah, it's just poorly organized and inefficient and compartmentalized and trapped in noble families and different languages and trusts in France and weirdness in Japan and whatever. And that was what I was thinking and listening to you is, does the adversarialism of America finally incentivize?
Yeah,
basically,
I think it does.
Tearing up these legal contracts in Japan and Italy and France and Germany to make things move around more efficiently. You think it does?
There's one of the things that's always held back the rest of the world is there's a lot of conflicts. And what I mean by conflicts is, people all over the world are really smart. And it doesn't take a genius to realize when the executive branch in whatever country you're in has conflicts with, what they're allowed to do, how much they're allowed to take, what they're allowed to invest in, all that kind of stuff. When the executive branch has conflicts with the public marketplace has no integrity. The U.S. has always had this separation of politics and financial markets, or the executive branch and financial markets. And we've been very clear not to cross over that line until now. And so that line's been crossed, and now it gets murky and it's cloudy. And so, that's what's at risk here is the integrity of the marketplace. How much are people going to be willing to? I mean, you see the blowback on Elon. Okay, you see the blowback there. World's richest person. He didn't need to do this. Now you see the blowback. And
he was a hero 5 or 10 years ago.
Sure.
Now he's a villain, right?
That's right. So why do this? Like, what was the point? And you're going to end up with the same. Well, I mean, it's easy to figure that out, but I'm just saying, now the conflicts are too great. Now you look at Elon, you say, the first thing you say is, well, behind the guise of cutting, whatever they entitlements on down, you well, they replaced the communication system with Starlink. They replaced the space program with SpaceX.
Tariffs benefit Tesla.
Car benefit Tesla. Potential military contracts benefit, for electric trucks and things like that benefit Tesla. So now you've got them, replacing, essentially it just goes straight down the line. You can make an argument.
It goes to the rotting of the integrity of the American system,
right.
which was the differentiating factor relative to Italy or Russia or France or anywhere where it was like, oh, well, the rich families control the government and the rich families control the companies, and they take care of each other. I mean, it's taken for granted. It's not even a point of, it's like, yeah, what are you going to do? And America was always not that. America was exactly the opposite of that. The reason America was aspirational. So I guess the next question is, let's assume that's obviously been impaired or destroyed or whatever. Do you think it's recoverable?
Sure, everything's recoverable. I mean, America is. Let's be fair about one thing. America's too big to fail. If you think J.P. Morgan's too big to fail, America's too big to fail in 100 different ways. I mean, China was too big to fail. India's too big to fail. Even Russia, which couldn't have been worse than they've been, is kind of too big to fail. You know, so yeah, America's way too big to fail. There's not even a remote chance. So for America, it's just how bad is the damage before we figure everything out and everybody, you know, revolts, straightens everything out, you know, says, hey, this is not cool anymore, you know, which will happen. But no, America's way too big to fail.
I was talking to Josh, who's our producer, about this earlier, and it's like, on the one hand, how do I say this? On the one hand, once you expose yourself as a lunatic, it's not easy to just become trusted. Like if you don't have a great professional relationship for decades, which we have and we do, and then you or I and if somebody displays some really hostile and bizarre behavior, you know, it's hard to pretend that didn't happen and just continue. You know, that you know, or if you're in a romantic relationship and it's all good, and then somebody pulls out a knife in the kitchen and threatens to chop off your finger, you know, it's not easy to go back the next day and be like, oh, well, never mind about the whole knife thing in the kitchen, like it's fine, you know. And I just wonder the degree to which, you know, the American behavior makes it hard to go back to they've already authorized a military. The drone army in Europe is underway, right, with the German debt cap waiver and all. You know, there are structural restructuring actions that are underway that are not easily reversed, I guess, is my point. That there is a case we made for a permanent degradation of the relative power of the United States. But for the fact, I think it's in everybody's interest for America to be fabulously productive and powerful. I think it's in Europe's interest, Asia's interest. No, everybody wants a strong United States, I believe.
You know, years ago, I remember like great sports teams like the 1985 Bears and the Bulls when they were in their heyday with Michael. And one of the things that great teams do is they never give the opponent a chance to come back. Like when you have your opponent down, you step on their neck. You help them up and then finish the job. And one of the things,
you don't take Michael Jordan out of the game because he's scoring.
You just don't let him come back. You know, the 85 Bears didn't let anybody come back. They just would pound you to the end of the game. The Bulls did the same thing. They would just beat the crap out of you to the end of the game because Michael was so competitive. The great teams do that in sports. And in the, you know, when it comes to kind of the economy, it's a little bit the same thing. You're not going to step on everybody's throat because you need them as trading partners, but you don't give anybody the incentive. You don't give them the bulletin board material to come back at you. You know, you don't let them all gang up against you.
Yeah, well, there's just no reason to activate everybody else in the world to try to figure out everything they can possibly do so that you can never screw them over like this ever again. I mean, they're like, we need to make sure that we're never this vulnerable ever again, whether it's, you know, all these countries.
Yeah. So anyway, that's kind of like, you know, in a weird way, I feel like that's where we've ended up. in the very short term. I don't know if we stay here. I don't know how bad or it gets or whatever it is. I assume it's going to be very, very cyclical from here on out. I assume that it's going to be, it's going to look great one day and horrible the next day, and that cycle is not going to change that much, because that's what it kind of looks like right now. But listen, we've already done enough damage. I don't think we need to do any more.
Do you think that this is, as Chris Vecchio would say, that whatever happens with the tariff announcements later today is ultimately a risk clearing event, in the sense that that it'll be viewed as, okay, well, now whatever it is, that's what the uncertainty will be removed, whatever the numbers are? Or is that wishful thinking? Because
no, that's not wishful thinking. That's exactly what's going to happen. That's what always happens. In this case, it's a sell the rumor, buy the news. And so, because the worst of whatever has happened, the worst of it is already out. I can't believe, I know there's a big number on Friday and stuff like that, but as far as the whole tariff thing goes, today will be the end of this will be the absolute end of that whole, at least I think for the short term, this will be the end of it.
So from a trading perspective, does that give you, I know I haven't looked at the market since we've been talking, but I know there was more of a bid than not coming in here. Does it make you more optimistic as a trader coming off of the back of this thing for those reasons?
Well, I think that the market's already ahead of that today. We were down when we opened this morning, we were down 60 handles, and the whole rest of the day we've spent up 10, up 20, up 30. We got up 60. Sure. So there's been 120. There's been from 1% down to 1% up. So I think the market's already priced that in, and the market, the market woke up at some point late morning and just said, you know what, you're right. This thing is all going to be over today, one way or another. And I think that's priced in now.
Right. Although I'm just looking, you can see for yourself, we're back to dead even right now.
Yeah, we're back to unchanged now, but the kind of tape action that we've seen today, if we were in a huge heap of trouble, the volatility wouldn't be down 2% today. And I don't see this as I don't see the tape action right now as any kind of a precursor to anything really ugly happening. If anything, I would say the tape action is relatively bullish today. And I don't see this as a bad situation at all.
Mm-hmm. Do you think that the flow of funds into Euro equities or that the money keeps moving the way it's moving, whether it's into London or Frankfurt or Paris or Milan or Tokyo or whatever?
I think that it's long overdue to have money shift into multiple places. I have a buddy that manages a private equity fund out of London, and for 10 years he's been telling me that this is what's going to happen. And it hasn't happened for 10 years, and it's finally flowing into other places. So I don't think this is any kind of a surprise. I think it's a long time coming, and it finally, it needed an event trigger. It got it. And now I think it's kind of like, okay. I think everybody was waiting for this, myself included.
There's got to be some obvious beneficiaries that I'm not even thinking of that are like, I don't know if they're tradable, but like the accounting firms, the law firms, like part of the flow of resources in this way has to move around accounting and legal streamlining to make it easier to do. Somebody's going to make a bunch of money doing this, I guess is my point. Just on the facilitation side,
Global business laws are really bad, and they've always been really bad.
Exactly.
A story that I like to tell is that in 2006, we tried to buy a dev firm in St. Petersburg with 80 developers. And we negotiated a price, and we had a done deal. So we flew to St. Petersburg to close the deal. We spent 3 or 4 days in the legal offices of some huge New York law firm that happened to have an office in St. Petersburg. And they were representing us. The local firm was representing the Russian company, dev company. But they were a global firm. They weren't like a Russian firm. These are both global firms. We could not do the deal. we agreed on everything. Price, we're friends. We're still friends to this day. We could not do the deal because Russian business law, we had no idea what we were buying. Like we weren't sure what we end up buying.
Once the asset, once the title transfer occurred, you didn't know what the title was, what the rights to the title represented.
Exactly. And it ended up falling apart after 3 or 4 days of just trying to negotiate the terms, because we had agreed on price before we even flew over there. Everything was done. And there was no argument between the two CEOs, between the founders.
The two principals were fine, but you couldn't get the legal to line up.
And it was just, the whole deal fell apart. And
I feel like that's going to be that's kind of the primary issue for all business around the world, meaning actually, and then one of the most appealing things about the United States is easy, liquid, reliable contract law, Delaware courts, all the things we all know, blah, 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 the banks. This probably creates an incentive to get rid of, to solve that. The point is, now that with the wake-up call, like if the only reason you can't take money into England or Russia or Germany is because of some archaic corporate law, if there was ever an incentive to update or amend or change the law, the Trump presidency surely would be it.
The one of the beauties of decentralization was kind of that philosophy, is that, in order to level the playing field, in order to equalize opportunity, from whether it's from some country in Africa that has an amazing startup, or it's some company or some country in Eastern Europe, or it's another country in Asia or Australia, whatever, anywhere close to, is that everything will be commoditized and normalized through decentralization and through potentially eventually through tokenization, but just say through decentralization, it normalizes everything, because it makes doing business easier, and it hasn't happened that way yet. I'm still hopeful, but global.
But maybe that's the silver lining of the Trump presidency, is that it will actually accelerate the 21st century global business infrastructure to make movement of ideas and capital around the world more liquid and more viable.
For all the wrong reasons, yes. I mean, everything always works out, but sometimes it's not for the right reasons. It's not very genuine, but we'll see. Anyway, it's a heavy discussion, and we're out of time today, Dylan, but that was good. It was really good. Just a little.
Yeah, well, it's interesting. I actually think this is going to be a really fascinating time. I mean, I know, not to dwell on it, and it's not just about capital markets, but I do think that it'll sort of, like, for the first time, it was always the default was like, of course we could figure this out in Milan, or we could figure this out in Frankfurt, or we could figure this out in Tokyo, but why bother? The center of gravity is New York. It's easy to do it in New York. Everybody's got a lawyer in New York. Everybody's got a bank in New York. Like, who needs the trouble? And so, but that's not because they can't do it in Tokyo or Hong Kong or Berlin or London or. It's because there's no why. Who needs the hassle? Like, it's easier for everybody if we just do this in New York, whatever it is from a business perspective. And now's really the first time in our lifetimes, I believe, that we're going to see what's possible outside. I mean, I had lunch with an Italian defense contractor who basically can't even believe his luck. I mean, he was irrelevant. I mean, he was a tiny little company. He wasn't like, it was like a startup. He had already sold another company. It was like fun for him. He's like, oh, we'll do like this materials thing. Well, I'll hire these engineers. I can work with the kids. I like materials engineering. Yeah. It's like it was like a toy. He had already done he had a big Wall Street career at JP Morgan and whatever. He'd moved back after being in London as a proper banker. And it was just a thing. He's like, the kids, whatever, his kid had gone to school, was an engineer, whatever. All of a sudden, it's going crazy, and Canada's calling, saying, well, will you build a factory here? All the rest of it. My point is, it's going to be I think it's going to be very fascinating. I do hope ultimately it's not at America's expense. It's obviously not going to be without a price for America, unfortunately. But a healthy America is the best thing for the world. So hopefully this whole thing works itself out.
I'm Tom Sosnoff. He's Dylan Radigan. This is Truth or Skepticism. We do this every Wednesday at 1 p.m. Dylan, have a great week. I'll see you next Wednesday.
All right. We'll see you next Wednesday.
Bye.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
What is going on, and welcome back to today's assignment. And today we're back with Dr. Jim on another pivotal moment in history today, Dr. Jim. Your tweet did not disappoint, to say the least. If anybody missed it, 90 minutes from one of the most important tariff announcements since the British tried to get Americans to pay an extra 20 cents for their sleepy time tea and the American Revolution was started. If you think we make it through this, think again. What do you mean by? Can you break that down and unpack that for us, Dr. Jim?
I mean, you already unpacked it for us, man. This is this. They're gonna write about this day for centuries to come, my friend. Centuries to come. Like, this is one of the most pivotal moments in global history. Like, we are standing on the precipice of, greatness, of despair. I'm not exactly sure, like, which fork in the road are we going to take? But we're 13 minutes away from, you get a tariff, I get a tariff, everybody gets a tariff. And so, you just gotta wait. I think our portfolios are going to get like a 25% tariff, which that's always a good sign.
Yeah.
So I don't know, man.
Yeah.
Like, I don't know. I don't know what to.
No. I mean, we're gonna get a lot of volatility. Supposedly, we'll see what we get. I have some positions I want to break down. It'll be nice to see the volatility kick in while we're in the middle of this. So we'll definitely check out the overall market when we do that. But we got a few new positions on in here since we last spoke, Dr. Jim. But I got to ask before we get into the portfolio and some of the things that I got on. How's the week so far? Third week into the week, or third day into the trading week. Tariffs have been the headlines. Tesla has been in the headlines. I know there's been a lot of remarks to Trump and Elon and conversations around that again. How are we holding up midway into the week, Dr. Jim? How we doing?
No, we're hanging in there, man. We're hanging in there. We're just one day at a time. And you know what's funny is if we see it to the other side of this today, which I mean that's only like a 15 or 18 delta.
What do you mean by that?
I'm just saying what does that mean? Just saying that we're breathing air tomorrow. I'm just saying that we're seeing sunlight tomorrow, right? Again, this is not my opinion. If you look at the options board, there's a 15 delta that we're able to do that. Let's assume that we hit that. Dude, Friday, we've got NFP, we've got Powell on Friday, dude. It's gonna be If today's not the day. Like Friday's gonna be the gauntlet, man. Like that's it.
I mean,
I don't know what to tell
you. We'll see what we get because I mean, a couple days until Friday, we're sitting at about just under a 22 on VIX, Dr. Jim. So I mean, things are the volatility is cranking up a little bit. Nothing too crazy. Again, ahead of NFP and the other events you mentioned here on Friday. So I'm looking forward to that. But until then, the thing is, again, it's always bittersweet because a move up in the market would be nice, but then that would mean the volatility is probably going to contract on me. So I got a few positions on. If we can get that contraction, I'll take it. Or if we can get that expansion, I'll take advantage of that. But I'm gonna get on break down the rest of these positions here, Dr. Jim. We got.
Oh, there it is. There it is. Oh yeah,
there we go,
bro. Talk
there we go.
Talk to me about.
I know we
saw. Where are we at on this? Come on.
And I was debating on even leaving this one on, Dr. Jim.
Oh, it's still open. It's still.
I know. I know.
Wow. So we get to see how the sausage is made. Like I'm not looking at the after product. I'm not looking at the the Instagram filtered version. I'm seeing it happen. Oh yeah.
Yeah.
Talk to me.
But I do have to say, holding through any type of uncertainty like that always has you always need an extra level of caution. So we're going to keep a close eye on this one just because with the volatility, I mean, we can drop 50 points in 2 minutes if we want to. We've seen that within the last couple weeks. So we'll keep an eye on it, engage that volatility. But we do have a micro open as of now, Dr. Jim. We put this one on not too long ago. Once we gave back all the gains from, I think it was midday today, we had an insane rally all morning up until midday, and then we gave back a lot of those gains. I'm going to skip down here quickly to QQQ. So yes.
Well, no, hold on.
Yeah.
Man, Q, I got questions, bro. I got questions.
Yeah, absolutely.
So talk to me about your profit target. Talk to me about what you're going for that's going to motivate
this one.
Get out of this trade.
This one is more so trading the overall market sentiment, I guess you could say. Like there's just a lot of uncertainty prior to this. So I'm never really even in anything through an event like this, but I still wanted to do this one. But I can give us a little quick breakdown on what I'm looking for and how I'll manage this one and how I'm going to manage the risk on it. This was a very actively traded level from last week. So that's why I was even paying attention to this level in the first place. This morning, I got long some zebras. So we got long some more zebras too, Dr. Jim. So that's QQQ. And this is why I'm going to be even more focused on managing this micro is because I have a zebra on in QQQ. So it's almost like having two micro contracts on in NASDAQ right now. But essentially, I was getting long at around this high level. It's called the value area high, just one of the highs from the most active traded levels from the previous week. So that's just what I'm getting long off of. And I mean, if we sell off down near 19,600 or we start holding down there, I'm going to look to manage this trade. And then that'll be manageable for the account because the entry is 653. The exit would need to be, it would be about 53. So about 2.5, that's about a 50-point stop. So that's not too bad off of one micro.
So what's the upside target?
The upside target is going to be the day. If we run to the day high, I mean, we only have about an hour left to market open, but you never know what we can get in the last hour. And if then I'll be managing overnight, but I'll take it off once we can get to this high, whether that's tonight Maybe I get stopped out before that happens, but if that happens in the last hour of the day, or if that happens after hours, I'll take it off after we start trading through this high again. So that's kind of what I'm looking for. Nothing crazy, Dr. Jim, but I'm fortunate for the little bounce that we had right when I entered the position. So provides a little bit of a cushion.
No, I mean it's a little something, and it's fun for me to get to see how the sausage is made because again, I had it, and I was like, I think he's using garlic, I think he's using brown sugar, but I'm not sure.
Oh yeah.
Now I get to see it, and now I know for sure, so it's good.
Yeah, and you recognize I'm just using sugar, nothing special, but I'm definitely gonna manage that risk.
Oh, look at that DraftKings trade! I remember.
I know that one's struggling. I did it for March Madness. I had to. You don't have a team.
Well, of course it's struggling. DraftKings, bro. Like, of course it's struggling.
I know. Their CEO was, again, I just wanted to get a little exposure to that industry, especially now around March Madness. But CEO came out, said a lot of things to get himself in some headlines, just probably market a little bit more around this time. But I wanted to take part in it. I knew it would be a little volatile. Sold a naked put. It was a little cheaper, so wanted to do that. And right now, just kind of in there, being patient. 44 days till expiration, so I'm not on a time crunch on that one, but it's definitely not sitting where I want it to be as of now. You got something against DraftKings or this application, Dr. Jim? What's going on?
No, it's all good fun. So my question is, so are you going to do anything to control the risk there other than just sit tight? Now, fair with you, just sitting tight, in my opinion, is a great strategy with the short put. So don't feel like you have to have an answer. I'm just curious if you're thinking about doing anything else to help to maybe mitigate some risk.
No, it's more so just going to be keeping an eye on it day to day. I know once I get down twice the credit received or down price of credit received on this trade, I'm going to look to just cut it and get out. But other than that, not too much. Again, 44 days till expiration. It is naked. That's another reason why I went a little bit further out, so I didn't have to manage in a week or 2 weeks. I wanted to give it a little bit more time, especially on a naked put, and then with this account size. So that's why we went with DraftKings. Wanted to take part of that March Madness volatility that we might see with all the speculation going on around this month. Meta not doing too high. I know we touched on this last week too, Dr. Jim. The market had rallied, and clearly in hindsight now it was just a short-term relief pop that we got for maybe a day or two, and then we sold back off. This one is 15 days till expiration now, past 21 days till expiration when I needed to manage it last Friday, but we are still sitting in the same boat as we are today. So that one, I'm just gonna have to let the next 2 weeks ride on that one, and maybe we get a rally in the overall market. I mean, I'm leaning pretty long delta on all these positions, so that would help out all four of these. But that one's Meta, very similar to the QQQ position that I have on. 15 days till expiration, not talking about the zebra, but the out of the money put spread that I sold. And again, sitting in the same boat, 15 days till expiration, gonna have to be patient on that one. And maybe we get a rally in the overall market and it sends those ones higher as well. But that's what we're working with so far, Dr. Jim.
So what are you going to do with the zebra? Like, what's the exit strategy?
So yesterday, the zebra was from yesterday. Gus and I on our segment, which is Risk to Reward. If anybody wants to come check us out, we'll be on there Tuesdays and Thursdays at 4:30 Central Time. Excuse me. And what we're doing is whenever we're hopping on a Tuesday, we're picking the risk of the week. So he had chose the Bitcoin ETF, and I went with QQQ, Old Faithful, off the first one. And I wanted to do something a little bit more aggressive to put a little bit more risk on. So I went with the zebra. That's a pretty aggressive trade in my eyes, considering it is the indice. But, if we get a rally in the overall market, I just got to keep an eye on it. If the market drops 5 points, it's not like selling a put spread, so you can get into some trouble with this if you're not careful with it. But that was the whole reason for having the zebra on. We're doing those on Gus and I's segment, and we're going to come back after a week and see how those played out.
I like it. So you're showing Gus the ropes with the zebras now, I'm assuming, right? That's new for him.
Yeah. Honestly, like the Liz and Jenny videos that are out, those are so easy to follow along and learn from those ones. So I was kind of plugging the Liz and Jenny link for that one because, again, I know they pioneered it. But even earlier today, Dr. Jim, this one cost a little bit more. It was around $3,000 in buying power. But I mean, earlier today, the position was up about $500 off of that initial rally that we had. But again, I'm going to save that one. I'm going to manage the risk if I need to, but I need to hold that one a little bit longer so that we can finish kind of the little game that we're playing with Gus on that one. But that one was up a decent amount today. But that's kind of how those directional positions can be bittersweet, because if you're not if you're not prepared to just take it off of the table and take your profit, you're going to be sitting around break even in the snap of a finger. But that one's going to be fun. So we'll circle back around to that one on Thursday. You got to tune into one of them, Dr. Jim, and we'll see how we manage that zebra out. But things are going to get volatile. It's a very directional trade. If you don't know what a zebra is, it's a synthetic stock position. So I essentially have near 100 delta on this position. So if QQQ goes up 1 point, right, your P&L is going to go up $100 and so on and so forth. So because it's very directional, that's why I'm keeping an eye on this micro as well, because I almost have two very, very similar positions on almost the same position, just in a different underlying. But that's where we're sitting right now, Dr. Jim.
No, I like it. I like it a lot. And I mean, you're exactly right. It's a stock synthetic. You're the thinking is, the hope is you get that 1-for-1 move with the stock, but you have to be cognizant of the risk. You have to be cognizant of the fact that if it goes against you, it can kind of act more like a leveraged long position. So you have to be careful with that. Yeah. But yeah, I mean, you had a nice payday earlier today. It's too bad that you didn't have. It's too bad that you weren't freer to take it off, because that was.
No, I mean, I was here watching it and looking at it, but that would have been just too short time of a position for the thing that we're doing too. So we're gonna just let it cook for a little bit. We'll manage the micro, but we're gonna leave that zebra on for a little bit. So if we got to take a beat on the zebra, that's fine. We'll do that for the next couple days. But the market's selling off a little bit here now, Dr. Jim. Looking like volatility is kicking in just a minute before 2 Central.
Yeah, apparently, like I'm looking at the chat a little bit, and it looks like maybe it's kicked out until 4 o'clock. People are saying now.
Really?
Maybe. I don't know.
So you have to go edit your tweet then. So go ahead and do that.
Yeah. I'm just gonna delete the tweet if I need to. I'm not gonna. I'll just get rid of it. It never happened. But yeah. So I got a
screenshot. I got it right here. I screenshotted it already. Yeah.
There you go. You got it. No. So how are you gonna play it? You got anything up your sleeve here for end of the day today, or even NFP Friday? What are you gonna do?
I mean, for the most part, I was looking at more of the blue chips. Again, I was taking another look at oil. I got out of that one not too long ago. That was the other zebra in directional position that I had put on last. That one worked out pretty well. And again, oil was one I've always been a little bit more keen on being a little more active in. But I've also been keen on getting a little bit more crypto exposure too. So I've kind of been sitting in between those two boats, oil and crypto, and keeping an eye on those. I know you don't trade too much oil. Do you, Dr. Jim?
I'll do it from time to time. No, I'll definitely do a little bit from time to time. I mean, USO fine. I mean, MCL is CL and MCL is they're really nice futures products. Lots, especially MCL, the micros in there, very liquid. Really, really nice thing to trade if you want to do something. USO is fine too, because it's $77 now, so that's not really an issue in terms of premiums and things like that. But for MCL, I mean, I remember, you probably don't remember this, but I remember when USO was like $20 or $15, and you couldn't trade it, because there was no premium there. And so it's not the case anymore. But MCL, CL, USO, there's a lot of things you could do in oil.
Yeah, I'm going to check out both of them. Oil is just one of those. If we're not really trading, like visually looking at the chart, if we're not trading at the bottom of a range, I have a difficult time pulling the trigger, just because when oil goes on a run, oil can really, oil can really go on a run. So it just has that kind of tendency within those underlyings. I've been keeping an eye on that as well.
Oh, yeah. If you're going to trade oil, like, you've got to buckle up. You've got to absolutely buckle up. It can be very, very whippy. The moves in oil, whether it be USO, MCL, CL, whatever, like, they can be very, very fast. So you have to make sure that you are microscopic with your position size, because it can cut you up really, really badly, really, really quickly.
Oh, definitely. I was just looking at VIX off to the left, Dr. Jim. I saw VIX was above 22, so I was like, I had to go check that position real quick. I was like, yo, why is vol expanding right now? What's going on?
Got a little
I was looking at a little bit of IB. I was looking at that. I really like the IVR is pretty decent. It's a cheaper underlying. It's liquid enough. It's got a lot of volume traded too. So I want to check out the options chain on this one. I'm not opposed to oil, but I did want some crypto exposure on as well.
Well, the nice thing about IBIT is, I mean, I think that you can probably go in there and do something undefined risk for a pretty manageable buying power. Like, go sell like a 16 delta strangle, or even 20 delta, whatever. I mean,
let's see what we get.
But
I could even go.
Look at your buying power, $1,300. That's pretty good. Like,
This
what's the level that
1260%
you
pop.
try to? What's the level you try to stay under when it comes to buying?
In terms of buying power?
Yeah. Do you have a number?
Usually, I would say usually the most is usually around $1,000. And I know it's kind of funny because I just put on a zebra that takes about $3,000 of buying power, but I am actively managing that one. But around $1,000 in buying power, because the largest I'll typically go is a $10 wide vertical spread, which is going to leave me with about 750 worth of risk if I'm taking it, or a little less than that. It'll leave me about $600 to $700 worth of risk if I'm taking it around $3 worth of premium. So kind of that range, but I'm still comfortable with the 12 to 1,300 bucks on this buying power. It's not too bad.
Okay.
For a strangle.
Well,
I'm pretty far.
You could try move the 56 call to the 57. Let's just see if you're being margin on the call side or the put side. Okay, you're being margin on the put side. So you'd have to move the put out to get some relief if you wanted to. But yeah, like if you move the put from 42 to 41, you're probably, yeah, see, you get a little bit of help there. So, you could start to finagle with the strikes a little bit like we're doing right now and widen them out a bit. But, at a certain point, you don't want to totally take away all the premium from the position just to save, $130 in buying power. And so it has to be, obviously, you have to kind of use experience and judgment to decide, what makes the most sense. But yeah, I mean, if you're okay with 1,000, 1,200, I mean, this IBIT strangle, I mean, it looks solid. The IVR is not too bad. 24 is not amazing, but it's also okay. The pop at 65 is great. The credit at $2 is pretty solid.
I mean, I'm looking at the 20 delta as well. Get a little bit, just slightly more aggressive, just slightly more, not leading as negative delta as I was at least, as bearish.
And there you go. It's a neutral play on crypto. There you go.
65% pop, $1,300 in buying power. We're going to send this one through, get some exposure to crypto. I know Black was talking the other day about them being excited about how almost any asset or anything is going to have the ability to be tokenized. Are you familiar with the tokenization of other assets and things like that? I know BlackRock was talking about that yesterday. So I don't know if you got any thoughts on that, Dr. Jim, but I know
I don't have too many thoughts.
Have their place.
Yeah, I know that it can be done. I don't know what it is. I don't even know what it is, though. Like, I don't even know what it means. Like, I really don't. So explain it to me like I'm 5.
Like, for example, one industry they're really trying to tokenize is something like the real estate industry for many reasons. And that would be the buyer and the seller having the ability to make that transaction on the blockchain. So it's almost like that asset has a digital form, like the value of that asset or that can be tracked on the blockchain. And then the blockchain will facilitate that transaction. So that's kind of tokenizing it. And then it cuts out the middleman completely, right? So it's like you got all these closing costs. You know how expensive it can be whenever you're buying a property. You have all these little fees left and right. The middleman, they get their cut. And it's just like at the end of the day, the cost, you're paying a lot more for what the cost of the house is with all these fees. And something like the blockchain and tokenizing that could solve that a little bit. It's like you're cutting out the middleman. You're having something that is on the blockchain that is operated and is facilitated amongst itself, and it's making that transaction without it taking anything from the middleman. So like kind of tokenizing things in that way, like being able to have tangible assets be tracked on a blockchain on something digital, like a digital ledger, and being able to have like tangible assets tracked to that. And it's a whole process, but that's what the tokenization of other assets would be. It's like being able to buy and sell things without having the middleman and it living on the blockchain. But
so is it also okay? So yeah, it's also something where, like, using the house example,
right?
Like, because I mean, I own this house, right? So if I got this house tokenized and I put it on the blockchain, whatever that means, put it on the blockchain, right? If I wanted to sell my house, could a buyer then find it on the blockchain? Like, can we do the transaction like with like that day? Or like the next day, as opposed to it being a big, long process of like open houses, people coming out, blah, blah, blah.
Yeah.
Like, is that another thing, like the speed of the transaction?
Well, that's it. Well, that's a really good point that you make. And I think for example, I think that makes a great argument for why VR and being able to view houses from your living room is going to be, helpful, because like you just said, you're going to have to be able to go check out the house, see if you even like it. So it's like, okay, if you can just buy an asset like that on the blockchain, how about the process of you even seeing if you want this asset in the first place? So you're right. That's why one of the reasons why it's not super developed yet. But there has been conversations of that being done and happening. So
Yeah, no, that seems like a pretty easy fix. I wasn't even saying what you said as like a hit against it. I actually was thinking about it.
Oh no, yeah. Well,
yeah,
it's super under
the VR thing, that's easy. Like you can do that. Like that's not that.
Yeah.
But in terms of the speed of the transaction, that's pretty interesting.
Yeah. No, definitely. As I get filled here, or trying to get.
Did you get filled on the IBIT?
I didn't even get filled. I think that canceled the position out. Go back in there.
Get in there and do it again.
They don't want me. Volatility is sitting just under 22 right now, Dr. Jim. It's looking like the market might be bouncing just a little bit. We'll double check.
Well, the market really hasn't done much. Apparently, I mean, I'm assuming that the tariffs thing did get pushed out to 4 o'clock, only because there hasn't been a lot of movement either way. And I would expect there to be a lot of movement. It may not go anywhere ultimately, but I would expect there to be at least a lot of back and forth whenever this comes out, whatever the announcement is. Because there's still some uncertainty, right? Like, is it going to be, a 10% across the board? Is it going to be 20% across the board? Is it going to be certain numbers for certain countries? Like, I think there's still a lot of uncertainty around what it's ultimately going to be.
Yeah, we'll see what we get. We'll just keep an eye on this. We could set a stop loss too. That's always one thing. I know you're not the proponent of a stop loss, Dr. Jim, but if you're ever a little uncomfy in a trade and you're not actively watching it, like after hours, we could throw one in there too. And I'm going to do that right now. I think it's a great example. I'm going to put it around. We'll do around 15,000. We'll throw it in at 19,590 as of right now.
So are you a stop market guy or a stop limit guy?
You know what, Dr. Jim, on the entries, if it's directional trades intraday, I gotta be a market.
I know that.
I know
that.
Yeah,
I'm not talking about that.
Again.
I know that. Let's not go down that road because that gets me very upset with you. I'm talking about stop orders. For a stop order, do you do stop market or stop limit?
Oh, I use stop market. Okay. Which again, that can be risky because whenever.
No, that makes sense. I mean, stop. To me, you're right. I'm not a stop guy. But if I were, I would probably have to. That would be the time you'd want to do the stop market. Now, of course, if it's super chaotic and like you're in a limit down, like it's completely chaos, like that stop market may hurt you. But it could also save you, right? Because if you do a stop limit and it goes through and never actually stays at that price long enough to get you filled on the limit order, then it's like you didn't have a stop order.
Again,
to me, that's the bigger risk if you're using stops.
So I learned a saying by a very wise man before, and it says every gimme's got a gotcha. And I know even with the stock market orders, Dr. Jim,
even with the stock market orders, you got it.
Well, with the stock market orders, if the market is really volatile, and let's say the market is moving very quickly and it runs through your stock market, and this is one thing that took me a while to learn after even just getting into the market, was that it's not a limit order, right? Like it's a market order that changes to a market order whenever that price is triggered. So if the market's moving really quickly and the market price is 10, 15 points, which we call slippage, beneath where you had your stop market order, you're going to get slipped down 10, 15 points. So, every gimme does have a gotcha because you can use a stop limit and maybe you don't eventually get filled, but also you're probably less likely going to get slipped 10 to 15 points on a quick move in the market. So still great points.
That's true. But again, like think about what the spirit of the stop order is, right? The spirit of the stop order is essentially to prevent a modest, manageable loser from becoming a catastrophic loser, right? I mean, that's the basic idea. I understand it might be nuanced and whatever, but if that's the basic idea, then going in with a stop limit doesn't really make a lot of sense, in my opinion, because it's like, again, it could blow right through it, never actually stays there for your limit order, and now all of a sudden it's like, man, the thing you were trying to prevent and you had the order in to prevent it didn't even execute the way that it needed to because of the way that you set it up. That doesn't really make sense to me. So I think you're right about the stop markets. I think that's probably how I would do it too.
I got you. I'm definitely just going to leave this floating in there. A lot of the times I would really just gauge where I would exit. But just because we do have that zebra on, I don't want to over leverage or over risk or stick my neck out too far on the same asset, essentially being too long. So I'm going to make sure we're managing this micro as we should. But yeah, things are getting a little quiet right now, Dr. Jim. I know we just got a couple minutes left. We'll see how these positions played out. I did get filled on IBIT. I collected about $1.99, so not $2, but I collected $1.99. And we'll see how this one plays out, and we'll manage from there. But anything to add on the portfolio before we hop out of here?
No, it's looking good. I appreciate you letting me in on the secret sauce for the MNQ. Like, I feel like I have a better handle on,
we're break even
chef,
right now, Dr. Jim.
how the chef makes those Michelin meals, and so I feel good about that.
No, good to know. We'll see what kind of volatility we get in your close today, Dr. Jim, and we'll manage these positions accordingly. Thanks for tuning in today on today's assignment. And Dr. Jim, we always appreciate having you here. Be sure to stay tuned for Tim Knight coming on next, and we'll see you guys next time. Peace.
Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Hello. Well, happy Liberation Day, everybody. Tim Knight here. And I guess in about 45 minutes, if they keep to their schedule, they'll be doing the liberating. Yesterday, I mentioned that that event would be at 3 EST, and it was. But I guess it dawned on somebody at the White House that, wait a second, the market's still open. So they made it exactly the close. Of course, you know how these government things are. They don't necessarily happen on time. It could be 15 minutes late, 30 minutes late. But the important thing is they didn't want it during market hours. They wanted people to have a chance to digest the news, I guess. I don't know how much new news there's going to be. I mean, they've kind of laid it all out, but maybe the nuance or the tone or something will help inform people. Earnings season is interesting after hours this time if you're not usually, but this could be an interesting afternoon and evening session in the futures. Today by itself has been a weird day. We opened very, very weak. Everything was deeply red. And then for no particular reason, things rallied all day long. On the ES alone, a triple digit reversal, about 110 points, hundreds and hundreds of points on the NQ. It's fading now to some degree, but we're green across the board. So we've gone from completely red to completely green, and now we're just a little less green. So I'm not sure if people think he's going to get up on the podium and say, never mind, I wasn't serious or what. But we had a big, big intraday rally, like right at the moment the bell rang, up until about, 2 hours ago. It peaked. So we'll see. Interesting day. I've got my charts ready for you, of course, and let's dive in with both feet. Here we have the spider, and we have been working with a number of ranges here. So the initial chunk and quite the fake out was right here, this pattern right here, and it looked like back in mid-January that things were about to fall. It didn't. It went flying higher. And the ultimate peak happened on Feb 19, and then began the fun. And so from Feb 19 all the way down to March 13, so not even a month, it was kind of an unmitigated bear fest. Huge bounce higher, which I was moaning about the whole way up, although I knew it was coming. And then we started to fall again, matching and then beating by a little bit the low we'd seen on the 13th of March. And then, of course, over the past few days, this massive rally higher. So we're kind of, I don't know, there's no real clear place to put this line. In fact, you know what? That line's just not doing much good to anybody. We'll just say goodbye. The only line of import is the peak, the wave 2 peak, if you will, that we had hit on the spider right up here last, a week ago, I guess it would be. And, like I said, the way the market's been, Wednesdays are strong. You get weak, weeks are kind of like this, and Wednesday, for whatever reason, is where all the strength goes in, because weekends are just full of uncertainty. So between the Make America Wealthy Again, that's really what they're calling it, event this afternoon, and the jobs report Friday before the open, should be an interesting couple of trading days left this week. The XLI industrial, like so. We still got a fairly well-formed top, getting kind of messy around here. Teased us here, teasing the bulls up there. Once again, this line doesn't do us a heck of a lot of good, so we'll just keep tracking that. The breakdown hasn't yielded anything yet. It's just been, like I say, a tease. Small caps, IWM, also up, in fact, quite strongly. These had bottomed on Monday at the low, and we'd rallying. And as with the spider, the only thing that really matters is that we don't exceed the peak from last Wednesday. That wave 2 peak has to stay intact. The cubes, a little bit strong, about 1/5%. And here too, we had cracked to a new low on Monday, but shook that off, up, and up. Let's change this to a candlestick to make that green more evident right here. Bang, 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 like so. Again, we just have to stay below the peak from last, was it Tuesday really? Yeah, maybe it was Tuesday, I beg your pardon. Tuesday, Wednesday, the middle of last week. There was that wave 2 exhaustion point. And then SMH is actually down a skosh. And there was the wave 2 peak there, and we've been slipping lower, kind of messy down here. And I'm amazed that the SMH is selling off at all, because the semiconductors, whether it's ON or AMD or NVDA, any of those have just been so mushed that they just can't seem to get off the mat. So rather extraordinary. EFA overseas, not necessarily overseas, but equities outside North America, the gap has held. The gap I'm referring to was created on Monday. It's right there. 82.29 is the level. I mentioned this trade yesterday, very clean trade, I think. And so provided it doesn't exceed that level, still in that on the short side. And more specifically, FXI, China, down again. Like I said yesterday, it just tends to slip every day by 0.5% or so, just with rare exceptions, just kind of just melting away. The slow burn. Well, one thing I got to stop doing is messing around with precious metals in any bearish position, because they are monsters. As big a fan as I am of precious metals, I have on occasion recently tried to get cute and maybe short miners or short gold or short silver. Every single one I fail. So I'm not doing that anymore. I've said for months now that the thesis is simple: bullish precious metals, bearish equities, end of story. So Tim, stop that. Stop being bearish on what you're bullish about. So gold is just raging higher still. It is just eyes are popping out at this, at the front month up almost $20, 31.64. 3,000 used to be the big goal, and now it just kind of keeps it ratcheting higher. So gold, another lifetime high. PSLV, which is kind of the lesser known silver ETF. I show this mainly to show how interested the market's getting in this. Look at the increase in volume. Let's make that nice and big to illustrate that. Look how people are pouring in to PSLV. It hasn't been a clean run higher, but it's been getting there on the whole. Look at weekly or monthly, so a little more, a little less agita. But the whole thesis thing that I keep referring to is these charts you've seen over and over and over again, which is the ratio chart of equities versus a given metal, be it gold, be it silver, platinum, palladium, you name it. This one here is the all world equities divided by gold. This is the third major top on this. My data doesn't go back that far on this one. It goes back to the start of the millennium. But this is the mother of all tops here. This is a gargantuan. How big is this thing? It goes all the way back. 12 years? A dozen years. A dozen years is a big top. This has just been falling as stocks have been weakening and gold has been really strong. And this is not just one quirky exception. They all look like this. Here's another one with longer data. This is the Dow Jones Composite divided by silver. Two different components. This goes back to when Ronald Reagan, actually I think Jimmy Carter was still president when this data began. So that's how far back this goes. Monster top here. And this terminated and completed early in 2006. And then monster top here, still in formation. Got some work to do to complete the top, and should the top complete, years, I think, of descent from there. So this is kind of the, make it into a poster, slap it on the wall, and that's the go-to trend. Just one other twist of this, and a bit of a warning. This is the silver to gold ratio by way of the long-term continuous contracts. It doesn't look good for silver because this is broken, this triangle. I mean, silver's been kind of weak and sloppy anyway. Gold just sort of like boldly blasts higher, and silver kind of tags along more or less and sometimes doesn't. And this illustrates that the silver gold ratio is not only low, but it's kind of cracking below what should have been kind of a basing foundation for this. So I guess the story being gold continues to rule the roost. The silver's just doing its best to tag along, but not doing a great job at it. Another chart that sort of augments the importance of not getting cute against oil or gold or silver, any of that stuff, is the DBC. This is the ETF for commodities, not particularly heavily traded, but it has an interesting property in that for a number of years, it was tracking lower in this channel, and it continued to do so until here. That stopped early this year. And since then, and even before then, it's been hammering out this very nice basing pattern here, all of which is to say commodities are getting ready to rock higher. It's a pretty clean picture. I would also add that my obsession with XOP finally terminated today. I'm like, okay, forget it. It's just not working. So I've stepped aside anything to do with oil or metals or XOP or any of that business. Just too strong. While staying with a bullish on energy theme, here's our old friend, the sine wave, natural gas NG. This sine wave has been rocking the free world for 17 years now. Not bad. Look at that. And so this looks like it's projecting strong natural gas prices for many months to come. And kind of inefficient, but one way to play this short term is oil, which is up today about 4%. But of course, being a leveraged instrument, it will have severe degradation. And so certainly not a great way to play it long term. But my point being, natural gas looks like it's got a very good future for at least the balance of this year. Today, Tesla had their announcement of deliveries, and they were very weak. And of course, it was a particular import because folks are wondering, okay, how much does Elon's participation in politics, how much does that diminish the interest in buying Teslas? And it looks like it's diminished it a lot because the deliveries were lower than even the lowest Wall Street expectations. The stock's reaction, blasting higher. So I guess the view was that it was going to be really horrible, and it was less horrible than people feared. But Tesla is up almost $12, over 4%, and still banging around Fibonacci land. And so we've been hammering around here. There's also a lot of confusion about, because what I had said starting whenever the Doge thing was announced last year was that he will lose interest before April's out. That might be true, but there's some denials going around. There's talk about, no, he's going to get back to his businesses and so forth. It's like, no, he's not. No, he's not. We'll see. I stand by my wild guess that he's just going to go back to SpaceX and Tesla and XAI and all those other things and leave Doge to itself. Perhaps that is one of the reasons Tesla's strong today, because the businesses would kind of like their boss back. So in any case, it's having a good day. With this counter-turn rally going on, my onshore positions are on the whole not doing great. There's a few exceptions to that. We've got little splashes of red here and there. Merck is down about 0.7%. Not the cleanest chart in the world, but it's going the right direction slowly, maybe surely. NEE, Next Era Energy, this one's down about 0.2%. Again, not a super clean chart. United Healthcare Group, UNH. This one closed its gap and then some, and seems to have stalled out at the peak yesterday. So I've got a hard stop there just above yesterday's peak. That was down just a little bit. And our old friend Wendy's also down just a little below its diamond pattern. So far, so good on that. And these are all, as I so often say, these are long-term positions expiring, most of them either September or even next January. One ETF I haven't touched in a while but decided to get in today was materials, XLB. In this instance, XLB has a nice looking diamond pattern. I've got a quite tight stop on this, probably too tight, but these days I'm a little bit paranoid, just above recent highs. So 87.25 is the stop on that one. And what we want to see, of course, is a failure of this long-term trend line. Hasn't really happened yet. Been some fractures here and there, but nothing really that constitutes what I would call a break. Just to wrap things up, half an hour until we get wealthy again. Here's InQ, which is green, and this is the core failure right here, this trend line failure, and the critical level not to exceed is right like so, which was middle of last week. As far as the ES goes, here too, we've got this channel on and on and on. Failure right here. You can see it took some doing, some wiggling and waggling there, but it did finally break for real on this day. And here too, this is the key zone, not to exceed that level on the ES, be it tomorrow post press conference or Friday post jobs report. So that is the lay of the land. Going to go watch the event in half an hour. Should be interesting. And I will see you tomorrow. We'll see what it all wound up doing. So thanks. See you Thursday.
If you missed the live show, here's our cherry on top weekly recap.
I had the, what do you call the hot girls dinner?
Oh, you had girl dinner.
Cheese plate?
No.
Popcorn and wine?
Crackers?
I went snorkeling.
You went snorkeling?
But I said the last time I went snorkeling.
The fact that you've ever been snorkeling is pretty amazing.
That it also implies a future time that you will be snorkeling, right? Not because you didn't say the only time I went snorkeling. You said the last.
The last time. It kind of has the implication.
What did you say? The fact that I've ever been snorkeling is amazing?
Yeah.
Why?
Because she studies physics and it's not supposed to work.
It just doesn't, yeah.
Wait, you're going to Vegas?
I am going to Vegas, yeah.
Ooh, for what? For just funsies?
For my birthday.
Oh, wait, I didn't know it was your birthday this weekend?
Yeah.
Oh, happy birthday.
There you go.
I didn't know you were an Aries.
I am an Aries.
Yeah, that kind of tracks.
Something. What is your sign?
I'm an Aquarius.
Aquarius?
I'm an Aquarius, yeah. Tom's a Pisces.
Pisces.
Yeah.
That makes a lot of sense.
It does.
Yeah.
It really does.
That kind of tracks.
I don't even know what that means. Sure. Whatever.
I think it means you like fish.
What happened, girl, during last call?
I lost my
You want to talk about it?
I lost my beret.
You didn't lose it.
I found it.
So you got
Thinking of getting rid of it.
Oh, new look?
I'm thinking of the new look.
You should do a faux hawk.
Oh,
What
I
is
think you nailed it. I don't know.
No,
What is-
cornrows.
I could see rocking some cornrows.
Yes, cornrows.
I think you should go to Flavortown and just get the Guy Fieri spikes.
Boom, platinum tips.
Platinum, yep.
Is it true? Did you skip the beret yesterday?
On the clothes.
Oh, it looked like it looked like a decrepit old grandmother. It was so gross.
It's like that old monster from Tales from the Crypt.
Get the full scoop by checking out the archives at tastylive.com.
I started trading around 2018, soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right. With the closing bell sounding off, even the S&Ps have been all over the place today. They were down about 90 handles from here. They were higher by about 30 handles from here. They're at the mid-higher range, up 29. About 15 minutes ago, they were flirting with unchanged. NASDAQ up 123. The Russell's the leader of the group, up 25 on a percentage basis, up twice as much as the NASDAQ and even the S&Ps. And the Dow is up 185. All four indices were red this morning, and significantly red, Sadnoff, a bright red, with volatility expanding all the way up to almost 22. We were under 20 today. 2025 right now, down 63 cents. Big move in volatility, big move in the market. Bonds are down 15 ticks, traded all the way up to 109 and change. They're 119.09. They traded down to 117.19 last night. They're 118 right in the middle of the range right now. Bitcoin hanging in there, up 1,400. Flirting with 87,000, the higher end of its most recent range over the last month or so. Oil continues its rally, up another 60 cents today. Gold continues its rally. Commodities continue to be moving in the same pace, sad enough that they've been moving, but the market itself has been quite two-sided these last few days.
The only commodity market that's messing me up is gold. Can't get ahead of that little sucker, that's for sure.
I know.
Everything else is fine. I don't really have big positions. I don't really have any surprises. But yeah, gold, you taking me down, gold.
I know. If you could do away with gold, you could have had a decent day today. As it is, you're flirting with unchanged. You're good today on a kind of a crazy day. You didn't trade it.
I chopped myself up. I was
gonna say you didn't trade it great. I was
down big this morning. I was up big this afternoon. Now I'm about unchanged. Yeah, it was just all over the place. I think they pumped a little vol back in here this afternoon.
It's funny that you say that. I agree with you too. I mean, volatility is obviously down, definitely off of its highs, but positions that I have that are fairly delta neutral have seen a little bit of a. I'm not getting paid as much as I should. At least it seems like yesterday, even with volatility higher, it seems like I got paid a little bit more.
Yeah, well, I negative scalped some today. Every time they looked like they were going to flirt with going back down in the day, they got back basically to unchanged, and now they're up 30 again. So it's a little bit of a challenge. Biggest loser for us today was Tesla. Everything else was
up about $15, right? 14.
Yeah, I got a little double whammied in there. I got a little double whammied. Like this morning, the stock looked, opened down 15. Now
Yeah, there's no other way to candy coat it. So I'm not right. It opened at 254. It's 282.
Yeah, that's a tough stock to stay in front of if you're short premium.
Mm-hmm.
I mean, we're in front of it. It's just, that's it.
Putting up a good fight.
Trying.
Yep.
Trying. Putting up a good fight is right. I'm trying to stay on top of everything else, but it's fine. No big deal. No harm, no foul. If you had asked me how was this day going to go yesterday afternoon, this is exactly what I thought. Literally exactly what I thought.
But you just didn't expect that opening the way we had.
I didn't expect that opening of down 60. And It messed me up because I'm sitting there watching that opening of down 60 and I'm like, oh, little bastards, like that. That's, I told you this morning, I go, that's the only thing that opening messed me up because I positioned myself well in the close yesterday and I just didn't, this is right where I want us to be this morning, up 30.
Yeah. Well, they made,
I will tell you,
made it a little tougher for you.
Yeah, they made it tough. I will tell you one thing. I don't, whatever tariff news comes out this afternoon, it's a non-event.
They do seem,
it's a non-event. It's in the market already, period.
We rallied 100 handles off of the lows. It could,
yeah,
I guess,
listen,
I don't know if that had some effect, but it does seem like business as usual. I'll give you that.
Okay. The last couple of days, they've rallied 100 points off the low in the last couple of days, every single day. That's not the tape action where you're going sharply lower. The tape action, if you're going sharply lower, is when they sell off 100 points into the close every day and not rally 100 points. So my gut says that we're, my gut says that the worst is out. It's done.
Oh my God! Close all watertight doors. I would
no.
I a little bit more bullish.
The volatility. The worst of the volatility. I think you might get a big move on Friday because that's what the expected move is telling us for the, whatever unemployment or whatever it is on Friday. You might get a big move Friday, but the tariff move this afternoon, it's in already.
Yeah, listen, they're talking about Canada removing their tariffs now. No,
I don't care what they're talking about. I don't care what the news is. I don't even care what it is. I'm just saying it's in whatever it is, it's in the market. There's nothing possible that's going to come out that's not already priced in. Could they jump up 30 handles? What's the expected move for tomorrow?
I was just going to go to you and ask you to remind you what the expected move for the week was, because expected move for tomorrow is about 90 handles the one day.
Okay, that's huge. One day is 90?
Yeah. 37% vol, 90. Yeah, 90. For April 3rd. Because if you remember, wasn't it like 150 on Monday when we talked with Kai?
135.
135. Well, we had a low of, let's just call it 5,600, and we've had a high of 5,739. We've had that 100 and, we've had it already, Saz.
The weird thing is that there's an $8 expected move built into the spies for tomorrow. But by Friday afternoon on the close, there's only a $10.5, $11 move. So it's like, it's almost they're pricing everything in for tomorrow. That's kind of weird.
Yeah, you're looking at this $113 expected move for 2 days, $90 for 1 day. They're expecting a lot of movement after the close today. That's why volatility is staying bid, Sadnov. That's why you said a lot of your positions look like they haven't come in.
Yeah. Agreed. So how are you setting yourself up to this? I mean, I'm flat.
I'm pretty flat myself. I'm trying to stay mechanical. You're right. Tesla, I had to roll up today. I had long delta coming in. I didn't do anything, but a $15 move to the upside is too much in 1 day. So I had to roll up some. Tesla. I got a little SPY long delta. Not really getting paid too much on it. Apple up.
I'm not getting paid anything in the SPY today.
Yeah, no, I'm not either. I just said that. Apple at 225 here, 224 and change. I needed to sit for a little while. It's right in between my two short strikes, but I needed a rally in Apple over the last couple of days to get it. I put a new trade on in Baidu, which is fairly delta. I'm fairly delta neutral, Sadnov. I did take advantage of some of the plays. I was able to close some bullish plays that put on dips, but that's about it. Even the S&P is up 36, 37 now, rallying into the close here. We'll see how they do on the very end of the day.
Yeah, I'm looking at my positions to see if I've got any problem children, and maybe Amazon, but I don't really. My positions are.
Amazon might be buying TikTok, Sosnoff. They're trying to put a bid in for it.
Well, I'm sure everybody's trying to buy. Why would Amazon want TikTok? That's interesting to me. I mean, I personally do not want Bezos to own TikTok. I don't want it, but I'm curious. Why do you think Amazon would want to buy TikTok?
I can't.
I mean, the TikTok store, maybe for the TikTok store, but it doesn't seem like their MO. You know,
Amazon and the OnlyFans founder is in the mix, Sadnov.
Amazon and the OnlyFans founder.
They submitted bids. I know you submitted a bid. They didn't mention you, so your bid must be too low.
My bid's way too low. But I will be honest with you.
Why would the OnlyFans founder want that? A group led by the OnlyFans founder.
I don't know who that is. I don't know.
Startup Zoop, ZOOP, which is run by Stokely, founder of adult content social media site OnlyFans, has partnered with Cryptocurrency Foundation to submit a late-stage plan to bid for TikTok, according to Reuters.
Hey, I've never seen a move like this. I did not trade a one lot, so that's not that important. But Newsmax, I have not seen a move like this ever.
You know what? I've been watching it, but not intentively. But man, yesterday, remember I told you this. We both said it, but I said it. I said it out loud, and then you piggybacked what I said. But okay. I said the 90 crash mode is what I use. I don't use the word crash very lightly, but I said crash mode all over it. But there's nothing you can do about it.
No, I know. Have you ever seen a $200 stock down 180?
No.
Yesterday, Tony and I were joking. Tony and I were joking that the stock was like, what, 240 or something? I don't know.
Yeah.
And we were joking that the 9,500 put spread would probably
be trading at
$4.95. Yeah, $4.95. And people email me after that. They go, "What? Are you guys out of your mind? It's $150 out of the money. Why would it trade at $4.95?" And I go, because that's probably what it's worth. And not yet, it's worth $5. Is the bottom line.
Yeah.
I mean, as a market maker, that's where I would have sold it at $5.
My Taiwanese sources, the answer to your question, Sadnov, is your Amazon. Why would Amazon want it? It's.
I'm curious. I'd love your Taiwanese sources to tell me why.
Product advertising for the store.
I mean, I understand the TikTok store, but I don't think the TikTok store is where TikTok makes its money. But sure.
I mean, they say they're the only company other than Meta that could actually handle it.
Okay. Well, let's see. I would be shocked if TikTok does a deal with Amazon. I don't think it makes.
And if you want more insight from that Taiwanese source, you can see him live tomorrow. That's right. Sosnoff is taking a long weekend for whatever reason. Nobody works here. But my man, Nick Batista, I also know him as my son, will be filling in for the Sosnoff, and we will be taking over tomorrow. We're going to have Victor Jones in the house. It's going to be beautiful.
God.
Yeah. It's payback for last week, Sosnoff. Oh, yeah.
That's probably
Going to
the
be a
worst.
three-way love fest, Sosnoff. Three-way love fest.
That's the worst sausage fest I've ever seen. But you guys can have a party. I don't care because I will be tomorrow.
You'll be over there on the left coast, Sosnoff. That's right. That's where you will be.
I will be in a cabana by the pool, and
By
ordering.
yourself, I might add.
Well, I want to be by myself. Unfortunately, I think I'd be with about 50 people. So, yeah, don't worry about me. I'll be good.
That's
and
not
don't call me
at all.
And don't call me. And don't text me. And make sure Victor doesn't text me.
I won't. I promise.
All right, let's see what else we got here as we're not stumbling into the close. I thought about an hour ago, I'm like, oh, please don't close them down today. Like
It looked like we were flirting with Unchanged.
I know. I thought they were going to be down there.
Yeah.
They looked ugly.
They look
ugly.
They've rallied about 25 handles since we've been talking. 15 minutes.
Oh yeah. 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 So anyway, Tony and Nick will be doing the show tomorrow. Nick and Mike will be doing the show on Friday. I'll be back. No, I won't be back Sunday night. Somebody else will be doing the show Sunday night along with Victor, Pete, and Ilya. I think it's Chris. And then I'll be back Monday for the whole thing. The young prince is getting married this weekend, so I have to be on my best behavior.
I'd love to be a fly on that wall for sure.
All right.
How about that CRWV, Sosnoff? Have you looked at that
today? I didn't look at it.
I don't want to tell you. Up another $8 over $60. All right, I told you.
Honestly, that did not surprise me. That's why I thought I called it the other day. I said it reminds me of Facebook and it reminds me of PLTR when they went down the day after the IPO.
You did say it reminds you of,
and
I will give you
that's
that.
why I bought it. That's why I bought it because it just kind of had this. It just reminded me of those other moves, and those are the kind of moves where, man, I don't. I've watched that movie too many times. That first day of selling. You know what that is? Those are what we call the week.
The weak hands, Sosnoff. That's what we call those. Those are the people that got in on the cheap that know somebody but don't really know anything. And they got weak hands, paper hands, as the kids say.
No. Those are the people that bought. Well, actually, if you bought the stock pre-IPO, you can't sell it. So if you bought the stock
for 6 months, right?
Yeah, for 6 months. But if you bought the stock on the IPO, you're asked not to sell it, but you can sell it. If you bought the stock pre-IPO, you can't sell it for 6 months.
Right.
So, all right. Any other massive takeaways from today? I mean, any other things that jump out off the screen at you? And I mean, the turnaround in Tesla for me, the turnaround in some of the NASDAQ stocks. I mean, the NASDAQ was down 100. NASDAQ had
NASDAQ was one of the weaker of the group. Yeah, I agree with you.
Yeah, had a huge reversal today. And let's see. You know what? I was going to say, what do you think the VIX don't look. What do you think the VIX one day is right now? One day. And it's
the futures are like $20 or something like that. Is that
no, the VIX one day. The VIX one day for
VIX you're talking about? The
VIX
expected move?
Yeah. No, the VIX one day, the implied volatility of the VIX one day. It's over 30. It's over 30. You don't see that very often.
Oh, you're talking about VVIX. I thought you were going to say
No. VIX 1D.
Oh, I'm so sorry. I didn't know what you meant. I thought you meant VIX volatility. I was going to say it's probably 90 or something like that. But
No, the VIX one day is 30. That's about the highest I've seen in there. And the
yeah, you can see it right here. It's the highest that we've seen since March. But really, prior to that, you were back in December.
Yep. Anyway,
yeah, it's big. That's big, and that's why you've got that expected move of 115 handles or whatever it was in /ES. That's what that one day move is showing you. It's the same exact thing. It's just two ways of looking at it. So enough. You look at ES and you say here that, oh man, they just took some premium out. Well, 82 now for the one day. It was 90 something and 113 for the 2 days. Oh, you just took out a little bit premium on the upside.
Wow, they did. Hey, all right, what's your call for tomorrow?
Oh,
I already told you.
The lows are in, Sosnoff. I mean,
I already told you it's a non-event. So what do you want to? What's your call?
Sosnoff, the lows are. I think like you'll see volatility down 3% today on a $40 move on ES. I think you're going to see volatility down twice as much on a similar move on the ES if you go to the upside. If we go to the downside, I don't think you're going to see volatility move very much at all to the downside. If the market goes lower, I don't think volatility is going to catch a bid. So for me, it would be looking to put on more positions if I didn't have them on already tomorrow for sure. So market wise, I think we kind of grind higher, but go lower much faster on a move. But I think ultimately we grind higher. Like it seems like even like you watch this move this afternoon, we've just been upticking. When we went down, we seem to go down with a lot more velocity. So I don't think the move is finished yet to the downside, but I think the lows are in. I think you see a little two-sided action with grind up and faster moves to the downside, which you need to take advantage of.
All right, you want my call?
Yeah, go ahead.
Tomorrow morning up 50, end of the day unchanged.
I mean, I think you just ruined it for everybody.
I think so, but that's my call. Up 50 in the morning, unchanged.
We always have big movement when you leave. I think you can double those numbers. Up 100, down 50. We always have big movement when you go. Just on the Sosnoff factor.
Well, I will be in the air tomorrow morning, and I will have Wi-Fi. So you better get your helmet on because you're going to hear a lot of dings going off.
I got some dings going off in my head here right now. I've got some guys from the.
Sure.
Hello,
gentlemen.
There they go. We have Dylan. Oh no, Dylan. I just did a podcast with Dylan, so he should be coming on in a minute. I said up 50, boys, tomorrow, and then close unched on the day. Up 50 in the morning, close unched on the day. Vecchio, you give me the first crack here. What do you think on the opening, and what do you think on the close tomorrow? Doesn't mean anything. We're just having fun.
Yeah, I think the tariffs are gonna come in light. I think we're gonna be higher tomorrow, given everything I've seen today. I have my 2 tariff preparedness kits in front of me. If things go out well, I have this little dum lollipop. If they don't go out well, I have some nicotine lozenges in my passport, ready to make a drive to Canada. So I'm set either way.
Yeah, you are. You're
they say you can't hedge trades, but it looks like you have.
The only prepper on this board right now is Tony Batista. So let's see, Ilya, what do you got?
Me a prepper?
You're more of a prepper than the rest of us.
Really? I think I'm more optimistic than the rest of you.
No. Like, I mean, if anybody's got like the bunker, you'd be the one of the 4 of us to have a bunker. Victor Jones is the only true prepper we have at Tasty. Like, I mean, he's legit has a bunker in the backyard. But
no, I don't need no bunker, but I'm going to be able to protect myself. I'll tell you that right now. That I'll be able to do. I don't know.
You see thunder and lightning here, Tom?
Avocado.
Thunder and lightning. Yeah, he's got thunder and lightning. Oh my God!
Oh, well played, Chris.
Hey,
well
little
played.
Italian guy, you must have just seen Rocky. Okay.
Okay. When I have to come down and rescue you, Sosnoff, I'll remember this.
Okay.
Should I bring thunder, or should I bring lightning, or should I bring them both? Okay.
All right, Ilya, what do you think?
I'm also prepared, but not quite as deeply as Chris. Clearly, I've just bought some bonds because I think whatever that this thing means, it'll be lower rates that come out of it. But I don't think that there's going to be a huge, big thing. I think it'll be sort of similar to today, where you get a seesaw up and down. You go up a lot, you go down a lot, but then ultimately you settle kind of within the recent range. I think 50 points makes sense. I mean, today we've net moved about 40 open to close with all the hoopla back and forth. I think not a dissimilar day tomorrow, as long as there's some semblance that you can extrapolate this stuff and people can go, okay, I now have a framework to build expectations. If they're left no more enlightened and no more able to extrapolate after, I think that's really the risk. If markets come back and go, I don't know what's going to happen next any more than I did yesterday, then that would not be good.
Okie dokie. Sadnov, what do you think of that?
I bought a 5,800 call that expires on Friday. That's what I think of that.
That's a lottery ticket. Although it is inside the expected move. I mean, ES expected move for the week is 100 and change, and you're right there at 5,700. If you get it all to the upside, I mean, as the lottery ticket would have to go all your way.
Exposure-wise, kind of ignoring all of the noise and just trading the price action, I'm a little long bonds from the bottom of the range. I'm a little short S&P and NASDAQ because I think Friday was a meaningful thing that was different from the thing before. I'm both long and short the dollar, depending. I'm long euro and short Aussie. So more defensive, less growth oriented around the dollar. That's about it.
All the play is in equities. That's even in Europe. Absolutely. Even in Europe, the European markets were very strong today, and most of the global markets were really strong today. That was the big difference. And so Dylan and I talked about that a lot today. Just the strength of the rest of the world right now, which is interesting because it hasn't been strong forever. So it's getting strong at a weird time. But
it's interesting because European markets from the peak in March are down. UK markets, Eurozone markets, Japan from the start of the year is down. China's down. So when you look at a lot of this stuff in dollar terms, so you look at the ETFs that we have here, the exchange rate flatters what that looks like quite a bit. Because when you look at the actual stocks index in euro, FTSE in pounds, stocks in mainland in particular in yuan terms, it's all very soggy.
All right, boys.
Perfect timing. Even the S&P is going to close the day up 36 and change. NASDAQ up 150. Russell up 30. And Dow up 240. Sad enough, you didn't see that coming.
You know what's funny is I feel like this is the fun part about this is it feels like this is a market earnings day.
It does. You're right.
The entire market.
Yeah. The whole market. Yeah.
The whole market. It feels like it's an earnings day. But we didn't sell any. I guess we should have sold some far out 0 days because it probably would have. I don't know what I was thinking. I wasn't. Tony, you distracted me.
My fault as always, me lord. Let's take a quick 90-second break and come back. We got more overtime after this. Peace.
Well, I couldn't see you because you blended into the background. Okay.
I gotcha. I gotcha. Yeah.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that, and I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, like, I was hooked. I'd always seen all the stuff on tastylive with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from tastylive to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
What happens when 2 titans of trading come together to harness the power of their prowess? You get a massive display of, whatever this is. Oh, thought he had it there. Come on, gents, it's not that hard. Hit the ball with your paddle, mate. Oh, for the love of... Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market, trade ideas, and more delivered right to your inbox. Sign up at tastylive.com/newsletters.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
T-Day has arrived. It is Wednesday, April 2nd, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Mike Butler in Chicago, filling in for Dylan Radigan today. Because, of course, we need Mike Butler here today to balance out Ilya's bearishness. Someone needs to be getting on this rocket to the moon with me. Will the tariffs allow this to proceed, however? We're going to find out any moment now. Trump expected to speak here right at the top of the hour, running a little bit behind. But the audience is gathered in the Rose Garden, so we watch and we wait. If you're already on the platform, if you're watching us on tastylive.com, thanks for joining. Be sure to come over to youtube.com, telling us what you're trading, and join the conversation. Getting a lot of background echo there all of a sudden, studio. In any event, if we take a look at these charts, we look at what's happening in this session. It was a day where we were down and then up and then down and up, and now we're up a little bit. S&P 500 on a chart, 5710 right now, ahead of the tariff announcement, 0.64% gain. NASDAQ up by 0.75%. The Russell up 1.55% here. Bonds reverse off the highs. Yields actually move higher over the course of the session. We do see that gold and silver continue to move up, and we have a dollar that is in retreat. Mike, you're the returning champion here on Overtime, guest champion. So we'll start with you. What are you thinking about what's going to happen here over the next hour? Is it too late to do anything if you're trading futures? What's the plan?
That's a great question. I would say there's a couple of things that are in play. I think my personal feel is that the market is pricing in uncertainty just because it is Trump at the end of the day, and you never know what's going to happen. I think the last 4-year cycle that he had showed us that, with a lot of volatility in the markets, two-sided action, et cetera, et cetera. But when you look at the volatility curve from the J contract all the way to the Z, everything is in the 20s. I shouldn't say 20s, it's 20 point some number. So every single futures contract is at 20, which I've never seen before, which I think just adds to the spookiness of the scenario. And then you have a lot of people buying upside calls in the VIX, but then you also have a lot of people buying upside calls in the S&P and NASDAQ. So I think you could see this come in a lot lighter than expected and see the market start to try and recover. Or it could just be a big nothing burger with all of the call buying and volatility assets and equity assets offsetting each other. So I personally do not see a real bearish situation here. I think it's really fear the announcement, and then once the announcement is out and everything is on the table, then you digest the information and the market kind of either sputters or moves to the upside. But who am I? I'm just a guy waiting for the actual announcement to take place, just like everyone else. But what do you think?
Trump just got to the podium, so I suppose we're going to find out any minute now. Look, there were reports coming out this afternoon that the Trump administration had reached out to the UK government, which in turn passed on information to private industry. And in that conversation, there would be 3 tiers of tariffs, 10, 15, and 20%. Those different tiers or bands, if you will, would apply differently by country and by industry. We're going to find out, I suppose, any second now. 5705 here, S&P 500 losing a little bit of ground as Trump starts to speak. The Make America Wealthy Again event has officially begun. As we find out more information, we'll be happy to pass it along here. Ilya, net, what do you make of today's action as we await these tariffs?
I think it really speaks to the idea that the market waited until February to get worried about tariffs that they knew were broadly coming in November. And November was the latest. I mean, really, the markets were probably pricing this in earlier as it looked like Trump was going to win. But after the election, the idea that there would be tariffs should have been baked in. I don't think the markets are afraid of tariffs. I think the markets are afraid of the implementation and what that implementation has meant for growth, which is why they waited until February to see the business confidence data, the consumer confidence data start to roll over and go, okay, it's not the tariffs. It's that there's a legitimate headwind to growth from worries about what the tariffs will be and how they'll ultimately look. It's the back and forth. It's the implementation. And so you see the markets today, they're not panicked going into this. And they're not panicked ostensibly because if they get clarity, if they get something of a tariff scheme that they can extrapolate forward in some kind of a forecastable 6-month, 12-month, 24-month way, where they can say, okay, this is what this means, adjust expectations for inventories and hiring and consumption and investment as follows. They'll price it in and on we go. The issue is if the announcement is nonspecific and leaves lots to the interpretation, and if it sounds like whatever the announcement ends up being is negotiable because the tariffs are a negotiating vehicle, not a remaking of global trade vehicle, which means that whatever is announced is impermanent. And then that's what the markets really don't want to see. So I think when you look at the price action today, I think the market isn't scared. It hopes for clarity. The issue is that is really if the clarity doesn't come, and then the economic data for the rest of the week, ISM, NFP, tells you the economy is already in a bad way. And no clarity plus already a hit from that uncertainty to growth, that's the worst of all worlds.
Trump is talking. He's just, I wouldn't say vamping, but in terms of the actual numbers for what the tariff thresholds are, we still haven't heard those yet here. He has not provided any details. I'm trying to listen in one ear and this in the other. It's usually how the voices in my head sound, but not perhaps the best way to go about doing a show. Right now, I mean, I think that, Ilya, you're spot on. Again, Oren Cass of American Compass, he's an economist who bills himself as someone who's part of the new right, not part of the old like George W. Bush, Reagan right. He's trying to provide the intellectual heft. There's that word, intellectual heft behind Trumpism. And so, as we discussed briefly yesterday, he was on the Daily Show with Jon Stewart the other night, and that interview made rounds. It was all over my Twitter feed, at least. He was retweeting it into my Twitter feed, perhaps. But the point I'm getting to is that he said that it's not the tariffs themselves, right? It's the actual implementation. We have all the costs and chaos of tariffs without the actual, potential benefits and upside of them. We do see that stocks here are off a little bit now, 56.96 here. I think a 5-minute chart better encapsulates what we want to look at as these remarks go on. I still see what appears to be just chatter. There hasn't been a number just yet. We could talk about equities here a little bit, though. Mike, I want to to bring the Tesla conversation into this discussion because we've clearly seen some headlines around Tesla today. Elon Musk potentially leaving the White House in some capacity, although I've been questioning all day long whether or not this is actually news because Politico reported it on Monday night. It was in Brett Baer's interview with Elon Musk over the weekend where they talked about him leaving in May. But clearly the stock liked it, up 5.33%. Have you been playing in Tesla? What do you think about Tesla here, basically? Is this finally turning a corner?
I think it's an interesting move to the upside for sure. You kind of saw that spike higher, about 20 points higher, around 10-15, and it didn't really look back after that. So we can try and align like when that news hit the wire. But yeah, I think when you consider they released numbers early, some of their preliminary numbers before their projected earnings announcement, which should take place in the April 25th options expiration. So there's still plenty of implied volatility in that cycle. Plus minus 42 points on a $280 stock price is not anything to be scoffed at. Ooh, market's up 60 now. Look at that.
Oh,
hello.
I think they're coming in light.
80. Wow. Bitcoin's up 2K. What's volatility doing? Wow, volatility getting crushed here.
Gold is getting smacked around too.
Good. I rolled out of my position today, so now I'm supposed to roll this.
Good.
I got rid of everything that had like 35 days or under DTE. I just pushed out today, except at the end of the session when I told Nick and Thomas, I'm like, guys, I feel like I'm not a scalper, but I am an idiot, so I'm going to buy these 1,500 calls that expire on Friday, just because of the reporting the reporting is accurate. Then, right? Like Besson said, cap. That means no more escalation.
Yeah,
means we can only go down.
Wow, gold is getting brutalized here.
Yeah, big move.
Gold's off. Gold's
Tesla's up almost 8 points after the from the close, I should say, moving with this.
I was having this conversation
risk-on move
just yesterday. Yeah, for sure. I was having this conversation with Victor just yesterday, and he was like, "Well, what's the weirdest out there move that might happen on this announcement?" I'm like, "Gold goes down."
10% across the board tariffs, according to the Wall Street Journal, who just got a copy of what Trump's saying in advance. Only 10% across the board. That's not 20%.
That's not the worst.
Yes. So this kind
of so it's go ahead.
I was just gonna say this kind of goes with that there's a fear of what could happen, but if it comes in lighter, I kind of see how I don't see how that could be a bearish thing, and you're kind of seeing that in the instant market reaction we're seeing now. But I think you need to see this sustained for multiple days, weeks, for it to kind of show the light at the end of the tunnel here. Still plenty of volatility.
Definitely. And ultimately, I mean, Mike, to your point, the key question here, as ever, is we know that we knew we were going to get some kind of a tariff rise out of this, right? And the big question was, is it going to be big? Is it going to be small? Is it going to be this? Is it going to be that? Nobody's questioning whether we were going to get a tariff rise. Tariff rises, as the Fed has explained to us most
Gold came all
recently.
the way back, by the way.
Yeah. There it goes, by the way. That was fun.
Stock still holding.
And really speaks to this point. No matter what it is, it's a tariff hike, and the Fed is telling us that historically, and they're right, certainly, tariffs are bad for growth and a lift on inflation. You can argue about whether it's a permanent lift or a temporary lift. That is debatable. But it is, for some period of time, a lift on inflation, and for a lot of the time, a hit to growth. Overall, oftentimes a long-lasting kind of cooling effect on economic activity. All of this then boils down to higher bonds pretty much either way. None of this is ostensibly good.
Well, Ilya, isn't this now? Do we have a small window here where the market got so ginned up about tariffs. We have now 5 cuts priced in, actually a little bit less than that here as we go into the end of the day, but basically 5 cuts priced in through the end of next year. We're going to get tariffs at a much lower rate than what's been dangled out there and feared. They're being implemented. We'll see how the implementation goes, but it looks like they're being done in a form and fashion that allows for some room for de-escalation.
Yeah.
So now you have the worst case scenario off the table with a Federal Reserve that thinks the economy is going to slow down, even if it hasn't yet, although Q1 data does look rough.
Right.
Why wouldn't the market see the lower rates now as the cushion beneath it with the tariff certainty in our pocket?
It may. We're gonna have to see. I think one of the more interesting things that's going to happen here over the next 24 hours is going to be the ISM service sector index, and if that suggests that, as the S&P Global version of the data has suggested, that service sector confidence is significantly eroded, then whatever firefighting the Fed has to do on growth will be that plus tariffs, a further hit to growth. If the baseline is okay, plus modest tariffs, okay, yeah, we readjust, but it's not the end of the world. But defining the point before will be very important. The NFP report, obviously, on Friday goes even further in that direction. And we might basically now take the next 2 days for the dust to settle and for the real kind of verdict on this to happen next week. Because if there's going to be some hit to growth, then it's very important to establish from where you start. And from where you start is in the Fed's own assessment. The survey data looks awful. Does it show up in the hard data, or is it just sentiment? Well, if it shows up in the hard data this week, then we have a different environment and a different tolerance level for a tariff hit to growth.
You can see the tariff impact in the commodity space right now. Last week, we spent some time talking about why the tariff impact is producing higher copper prices but lower wheat prices. How come not all commodities are benefiting? And it speaks to that structural supply-demand imbalance insofar as the U.S. consumes more copper than it produces, and then the U.S. produces way more wheat than it consumes. And so, if anything, you're creating a supply bottleneck for copper in the short term. We're going to have to pay more to get our hands on it now. Domestically, there's going to be more competition for the copper supply available. Whereas with wheat, you're just flooding the domestic market because we're not going to be able to adjust our production quickly, or otherwise all this food's going to rot. So prices could come down in that regard in the short term. We've seen that play out historically here. Stocks are holding on to most of their gains. The Russell's up 2.48% now, 2075. The Nasdaq's up 1.61%, 19,920. Dow Jones, who cares about that? We see here in the bond market, likewise, bonds aren't necessarily losing ground, though, right? Stocks had a very positive reaction to this. Bonds basically dropped back to where they were around lunchtime and stopped falling. Ilya, I think 2 things can be true throughout all this. The economy is going to see lower real growth as a result of the tariffs.
Yes.
It's also possible that this is a risk neutralizing event where we now have a North Star. And as long as there isn't a threat of further escalation at this point for any arbitrary or capricious reason, then we can begin to make those kind of plans to lay out capital, and we have a little bit more certainty. It may not be certainty that we like, but at least we have certainty.
Well, that's the thing, is the markets really want certainty. And that'll be really important here, because if it looks like what this is an opening bid in a negotiation, it's tough to have certainty because these things can change. We've seen that on a dime, you have 25% tariffs. Oh, we had a call with the president of Mexico. Never mind. 25% tariff on Canada. Oh, I don't think we're going to have an issue with Canada. They're not one of the countries that have taken advantage of us. I just had a great call with Mark Carney. So the question is, really of durability. Is this durable? Did we really just hear something that's going to hold and can be extrapolated by businesses and consumers for the next year? Because if you tell, let's say, a U.S. Steel manufacturer, these tariffs will hold for the next 12 to 24 months, well, then that manufacturer can make some adjustments and say, all right, I can build a factory, I can hire more people on the basis of this. Whereas people who consume steel might say, okay, I need to fire some people, I need to reorient resources, I need to cancel some investments over here, but this is not going away. None of those decisions can take place if you don't know that something might change tomorrow. And that's been the cadence of it.
Trump just said the Great Depression happened because we didn't have enough tariffs.
Beautiful.
I'm sorry. That's it for me. Like I can't intellectually that's not a defensible statement.
Well, no, it's almost like you go to the place of maximum consensus because, of course, the impact of tariffs is one of the few very consensus things in the economic research community around what caused the Great Depression. So I suppose you go to the point of maximum expert consensus and you go the other way. That seems to be the logic here.
I mean, it's widely understood and appreciated that countries erecting trade barriers in the early 1930s reduced trade globally, which in turn caused the Depression to go on because overall economic growth was lower. Yeah, like we have
data on this.
Yeah, was it the economic trade spiral graph of the 1930s, which it's a terrible visual, but it makes its way around all the time these days because of the tariff talk that's happening. But
it is as though somebody has been talking to the president about how the narrative around there has been, this is Smoot-Hawley again, and this is going to lead to the Great Depression again, and that was on the president's mind, and he wanted to go hard contrarian.
I hate this graph for a number of reasons, but it just shows as you move forward through time, trade is kind of like going down the drain here.
Yes.
The footprint of global trade is shrinking as you make your way from the late 1920s into the early 1930s. And if global trade in U.S. dollar terms is dropping, what happens? That's lower real growth. Mike, surely there has to be an individual stock play that you're interested in on the other side of this. Is it Tesla? Is it Ford, GM? Is it an Amazon, a Meta? Dylan's been playing in the pool for Amazon as a kind of anti-tariff trade. Not that it's worked out necessarily that well, but it is up 2% here right now and up to close to $200 here after hours.
Yeah, I think Amazon's interesting. I was told earlier that the Zuck from Meta was at the White House or near it today. I don't have any factual data around that, but that's interesting. But no, I think when you look at what we've heard today and the notion that Elon could be stepping away from his role in government and focusing more on the Teslas of his attention, I think Tesla certainly has room to the upside. I mean, it was trading at 500 at the beginning of the year. It's at 280. And we're seeing it continue to rally after the close, up 6 points. So yeah, I think Tesla, whether you like or hate Elon, it's still a product that could certainly go up 100 points. Like, even if it goes up 100 points, it gets to the middle of the range of where it was for the last 6 months. So I definitely think Tesla's interesting. They have earnings coming up, although it'll probably be muted with some of their numbers coming out, but still plenty of implied volatility from an options trading standpoint. There's lots of things you can do in there. I was looking at a calendar spread in there for smaller size accounts, like a 325 or a 300 strike calendar where you're long May, short April, and then you can just roll into the earnings cycle. I really like that setup if you're planning for an upside move. But yeah, we're seeing the market sell off here, down to only up 40 now. Volatility
coming back in.
Yeah, volatility creeping back in the 20s. we were kind of getting crushed in the near term cycles. The later cycles were elevated, but
that's a sharp reversal there.
Yeah.
Oh, hello.
What did he just say now?
Oh no. Ooh, we're red. Wow.
Oh,
yeah.
Whoa. Whoa.
So I guess this is another question too. With some people in the YouTube chat are asking, with our tariffs out now, what is the most probable retaliation tariff you could see? And do you think it would be? What's that?
I mean,
Europe is going to come.
Canada.
And I think if you're going to be. So this is what's moving the market here, by the way, folks. Trump just clarified that the 10% across the board reciprocal tariff rate will be half the overall tariff rate.
What?
The reciprocal rate will be. Oh, good. Thank you. I finally got filled on that.
Do we have a good sense of what this means?
It means that stocks now are down.
Wow.
In the session.
Wow.
So, what we giveth, we take away here.
Live rug pull within 30 minutes of starting.
Gold is obviously enjoying the news. 31.85 here.
Scratch everything I said about that.
Yeah, silver up here now, nearly 2%, approaching $35 an ounce in the SIK5 contract. Likewise, you're starting to see bonds turn the corner again. They never broke through their lows earlier, and now we're back into the mid 118s here on ZB. It's a quick turnaround here as more information is coming out, and obviously we're going to be looking for more clarity here in the markets.
Wow.
Okay, so yeah,
volatility's back. Look at that. Yeah,
no,
that's
sir,
really
I don't
interesting.
hate it. So I went into this thing long bonds, short a little SPY and triple Q, just a little bit, just some modest little put verticals, and it looks like maybe I wasn't totally wrong. It looked like I was going to have to do a lot of cleaning tomorrow when this first started.
I'm trying to figure this out here. Again, trying to figure this out in real time. It looks like that he's holding up a board right now of the tariffs that are charged against the U.S. versus what our recommended reciprocal tariff rate will be for those given countries. It looks like we're slapping on a 34% tariff for China, 20% for the EU, 46% for Vietnam, 32% for Taiwan, 24% for Japan, 26% for India, 25% for South Korea. And you go down the list. Okay, UK only got 10%. That's not bad. So it looks like there are different tariff levels by country, which, one of the considerations that we've talked about in recent months has been about NVIDIA and how come Singapore is importing all these NVIDIA GPUs that if you did the math, they would be using more electricity in a single quarter than the entire country produces an entire year. They must be a pass-through for something. If you give China a 20% tariff but only put a 10% tariff on Vietnam, you're incentivizing creating a system where Chinese companies set up subsidiaries in Vietnam. They export to Vietnam first, and then they go to the U.S. This is not that. This is absolutely not that. This is more aggressive. Yeah. So bonds here are getting a healthy bounce. Gold's getting a healthy bounce here. I don't think I'll be punching that 5,800 lotto ticket Friday.
Dollar is back storming, but interestingly, as we've suspected, Chris, it's doing a lot more moving up against the Aussie than it is against the euro or the pound. In fact, the pound is actually probably holding the best of the bunch here. Yen has gotten stronger as well because of the risk-off dynamics here. But the pound is holding up impressively, better than the yen even. The euro is holding up pretty well. The Australian dollar is getting taken to the woodshed.
It's not great, Bob. S&P now 5632. This is going to stay like this. And Mike, would you have preferred to have seen this on a Friday afternoon after the close? Because it feels like we're now going to have an hour to panic. I mean, usually the 5 to 6 p.m. Eastern hour in New York is when all the traders go to the gym or hit the bar. So
a lot of bar activity today.
Yeah. Okay. So it's more of a, like today's my off day, right? Like I guess I have Price of Truth later. Maybe not. Maybe I'll have an alcohol-free beer between shows. Because it feels like it's that kind of day. But what do you make of this whipsaw now, right? You're kind of now trapped, or you're running out of time to make any positioning updates, right? Futures market closes soon. Last trades need to be on the board already.
Yeah, they're pumping up the near-term volatility. We're now at a 50-cent-ish backwardation, in the J. The J contract's up to 21.
Up now.
Before this happened, right at the close, SPX expected move through Friday was like 110 points. So even though we're chopping up and down, we're still within the expected move. So I think if we open up or down 30 points tomorrow, I think you could see a big vol crush. I think the market was pricing in a lot more movement and one-sided movement. So we did sell off 80 points from where we closed pretty much, but I think this is just another continuation of more to come, like more 50, 100-point moves every single day until something happens to where that's not going to be the case. But it's good for a trader's market, that's for sure.
It's a great trader's market right now. I'm just kind of, besides myself in a funny way, right? I think net, I'm still up on the day. We're doing fine. Okay. We're doing fine. We survived today. That's all that matters. But it helps being long gold and silver. I don't know what else to say.
Yeah. There you go.
Yeah.
It's the only thing that's keeping me safe and papering over my equity cents. I think it's just so funny that we get this report. Trump says it's going to be 10% reciprocal tariffs. The Wall Street Journal comes out, says we got a copy of the plan. It's going to be 10% tariffs. And Trump comes and says, actually, that's not the entire plan. We have more, folks. And is this worst case scenario, Ilya? This isn't 20% across the board. This is some getting more, some getting less. Some are getting much more than 20%.
That we have chosen to do this on a country by country basis, I think really defines the negotiability of it. And that, I think, is the ultimate read through here for me. If we said 10% across the board and nothing else, companies could go, okay, take our cost structure. Here's the cost structure. Adjust. We'll see you next year. Good night. The markets would love that. I think that was the initial response. They would love the forecastability.
Which one is the market in the mood for right now?
If I could see better what that is, because your name tag is over.
Oh, sorry.
Lift higher.
Nicotine or lollipops.
Oh, nicotine for sure.
Okay.
Okay. For me, might be the lollipop, but I'm exposed on the bearish side of this. So send that over, and we'll utilize both. I should also point out that because my kids are 4 and 7, there are just bags and bags of lollipops stashed around this house.
Nicotine around the house, yeah.
Naturally.
Nicotine lollipops, yes. This is not certainty. This is the opposite of certainty. There are individual tariff rates on countries, which means that this is indeed an opening bid on negotiation bilaterally with those countries. And if that's what it is, nobody knows what's going to happen next, because we're going to talk about it for the next however many months.
So Trump's campaign rapid response team just put out the reciprocal tariff charts that are a little bit more legible to see than what we were pulling up here. In any event, let's talk about some of the numbers that we see that stand out. It's 10% as a minimum, as a floor for every nation on Earth. That's not the case for most countries. I'm most interested in Chile here, 10%. right? Thinking about what's going on with some of the commodity centers. Is China the most important one here? The 34%? Is it the EU at 20%?
Probably not, because that there would be aggressive tariffs against China was kind of a given. Just whether you do reciprocal tariffs or you don't. I think the jump on the European Union is probably the one that's going to get the most back and forth. The jump on Japan is not great. I mean, this is where the negotiations are going to come. I mean, I would expect that the one on Japan, given the kind of relatively cordial relationship between the two administrations there, you probably get that negotiated down fairly easily.
Stock S&P off 1.5% now, 55.82. Sorry, go ahead.
Yeah. No, Hegseth was just in Japan and sounding all the right friendly cues. So I think we're looking at probably something that's very negotiable. And to the extent that it's negotiable, it is uncertain.
Crazy.
New lows here for the S&P 500, 55.76. We can take a step back from our daily chart. Not thinking I'm going to punch that lotto ticket this week, guys. That does put us 50 points. Hey, listen, the gold stuff in the 3200s is making up for it. 55.33 is the low that we have from Monday in the S&P. The Nasdaq now down by 2.4%. The low that we have from Monday is 18,976. We're about 200 points away. The Russell, which was up, now back down, 1992. Which is 6 points off the low from Monday. All those gains that we saw accumulate this week have since dissipated because the tariffs have come in. If you just tune back into the show, folks, let me just start over here. Ignore everything we talked about in the first 10 or 15 minutes.
Yeah.
Come in now. Join us. The water's warm. Why is the water warm? Trump put a fire underneath it. Tariff rates are not 10% across the board. Tariff rates are not 10% across the board. They are a floor of 10% across the board. Treasury Secretary Bessent was telling us that they were going to put a cap in place, potentially near 20%, and there would be tiers, as apparently was leaked to UK, according to Sky News, according to The Guardian. None of that was true. So we have a market now that is in a more significant pullback. There is a risk-off move making its way through the market. Bonds are bid. Stocks are coming off the board. Gold and silver are all up. So, Mike, let's revisit those first 15 minutes. How does Tesla feel to you now at these levels?
Well, yeah, Tesla just sold off almost 10 points. So not even Tesla is safe. Seemed to be the darling of the day. But this one's tough. I mean, I totally agree with Ilya. I think we got it's 10% across the board market reaction with the market rallying and volatility getting collapsed. And then he pulled out the foam chart, the foam chart of death, and that changed the narrative.
Let's go to visuals. Oh, no.
Pretty immediately. But looking at volatility, we're seeing an uptick in volatility, but it's nothing crazy. I mean, we were at 20 across the board in all contracts, and now we're at 21. So we've seen a little bit of an increase, which is, still a sizable percentage increase, but we're not seeing a 20 to 25, 20 to 27 move into this 200-point reversal. So I think that's interesting. I don't know. I think we were already in the world of uncertainty, and we're still in the world of uncertainty. We got a 5-minute window of maybe a little sigh of relief, and that was taken away, swept out from under us. So again, I think it's more two-sided action. Good on you for being long gold and silver. I actually got into a long silver position as like a catch-up trade today, so that should be nice tomorrow. But yeah, this is interesting. This is wild. We are not out of the woods yet.
One of the more interesting things here is that the dollar, if you look at
haven't lost money yet today. Still made $60.
It's actually up, and yields are down.
God.
So this tells you what kind of a move this is.
Yeah, it's a kind of move that pissed away my whole trading day.
Yeah, dollar and yen are up, and everything else except gold is selling. If gold starts selling too, then we're going to the mattresses, as it were.
That would be the event. I'd say let's take a look at the sector performance today, but obviously the markets move so much here after hours that the final closing prints that we see here don't even really matter. For the juxtaposition, though, I suppose it's worth noting, we had retail, consumer discretionary, banks among the top performing names. The underperformers today were all of the things that have done well this year, or at least have held up during the swing lower in stocks. Oh, of course, not just DXY, $DXY. GDXJ, XLP, GDX, OIH, XLE were the bottom five. I have a feeling that might be reversed tomorrow. The past few weeks, discretionary has been up while all of the growthy stuff has been down. And with the NASDAQ off 2.5% right now here after hours, after being up nearly 2%, you're going to be looking at what looks like to be an ugly Thursday.
Yeah.
I think the bigger question we have to ask ourselves now is, do we trust anything that comes out of Scott Bessent's mouth moving forward? It seems to me that nothing that he has said over the past week has had any relevance to where the tariffs actually came out to. I would argue that about Kevin Hassett. I mean, what's the signal? Where do we get signals from the administration? Is it now just Trump and Trump alone? Because it feels like none of his surrogates or cabinet members portrayed any of this information accurately relative to the final product.
I'm going to revive the thing I've been saying yesterday and the day before, and really since the last CPI update, which is that the markets have stopped listening. They have heard the part from the administration that matters, which is we see the stock sell off, the market needs to detox, we don't care. And so the markets have turned to the Fed and said, okay, well, if they don't care, you are the one that has to care. That's why they went into the FOMC meeting going, if only the Fed would commiserate with us and tell us that we see what we see and we're not delusional, and that they also see what we see and will come and save us and help us to cushion all of this with cheap money, well, then that would be better. And the Fed kind of did that. And so I don't think that they're really listening to the administration, because I don't think they think that the administration is amenable to market discipline. Instead, I think they're looking to the Fed and going, well, those guys are going to keep doing what they're doing, so you have to come and backstop this thing. Much like what we learned in the wake of the 2008 crisis. Of course, the Obama administration gets shellacked in the midterms, and then we end up debating the spending priorities, debating every rise in the debt ceiling. We have a sequester. Fiscal policy in the middle of a recession ends up being a headwind, not what it's supposed to be, which is a stimulus. And so the markets, what do? They turn to the Fed and go, all right, well, you got to keep this QE train going, because otherwise none of this is going to work. And really, you're the only game in town. So I think the markets basically since then have been conditioned to say, when fiscal policy is incoherent, go to the Fed as the sanity of last resort. And that's what we're going to see here. I think the markets are looking at ISM, looking at NFP and going, okay, Powell, you're going to talk after NFP. Tell us that the cavalry is coming. And if he comes out and says, I don't know, we're not sure, it's not enough hard data, that's the risk. That's where things go really haywire.
Mike, what do you make of a market reaction that sees volatility futures jump up towards the weekly highs but doesn't clear them as a result of these tariffs?
I think if we were to expect a lot more uncertainty, and I see some people in the YouTube chat asking about circuit breakers and whatnot. Like that's a 7% move. You need a big move for that at these prices, but
please no.
Yeah, I think it's. I guess we're still within the expected move, which is the only way I can really explain why volatility futures are creeping up, but they're not creeping up as much. If the market was only projecting a 40-point range for the rest of the week or for this announcement, and we see a 200-point sell-off from the highs, you would have seen volatility futures react in a more violent way. But I also think the fact that, like we're saying here, Jay Powell speaks at 10:25 Central on Friday. There's still a 120-point expected move for the next 2 days. So normally when we come on a Monday, we see a 120, 150-point move for the week. So I think there's still a lot of uncertainty already priced in, and just the fact that we're within the expected move, even though it's a much more scary thing when you see up 90 green to down 90 red, you're still within the expected move. So I don't know. I don't know what to say anymore. Is
this the scenario that you and Mike were? Because you are Mike. You and Nick, at least from my understanding, have been talking about like what's the worst case scenario for traders and all this. Yeah, and it's like that we just kind of stay within the expected move. Vol doesn't really tank or go up. We're just kind of pinned. Does it feel like we're gonna get pinned here?
It feels like it. Yeah, that's what Nick was calling the pain trade, where the long VIX traders are playing for an upside move. They're paying too much for the move that doesn't happen. The call buyers think that tariffs are going to come in light, and they're paying more because volatility is inflated, and they just got a 200-point reversal. So this is currently the pain trade where vol doesn't move to any degree that's going to pay off anyone that was buying calls in the VIX, or even playing to the upside in the VIX upright. And if you were long the market, you are certainly going to feel pain tomorrow if this holds, which I assume it will. So yeah, we are in max pain territory. But again, I think we need to see, like, for us to really see a true bottom here. Like I said this before, I believe on this show specifically, you can't return to all-time highs when the VIX curve is flat, or if the VIX curve is in backwardation. So until you see that come out and you see the VIX return to the teens and go back into a steep contango, you're not going to see the E-minis back at 6,000 or above. So I think we could see this continue for the rest of the year. And if we do, again, that's great for two-sided action. It's great for a trader's market versus just a passively long market for sure.
Trader's market, 5,600 back in focus here. We're off the lows by what, 35 points, maybe 30 points. We're also off the highs by 200. So what's that? Between friends, we are seeing those moves.
Take
in the
a look
metals.
at the Atlanta Fed GDP update as of April the 1st.
No, we have to. It's so bad. It's so ugly, Ilya.
It's approaching 2% decline for the first quarter before factoring in this gold weirdness. If you leave it at face value,
it's minus 3.7.
Yeah. So if you thought that the model looked bonkers, as we've said, there's no way the economy contracts multiple percentages in the first quarter. Come on, this is weird. Not that weird.
The balkanization of trade and the eroding place of the U.S. economy in the world seems to be good for the metals here, which are holding up throughout all this, by the way. They spike after the tariff announcement. Even with the clarification on the tariffs, they're holding up. Gold did hit a new all-time high today, $3,201.60 an ounce in the GC M5 contract. I'm playing in the GC Q5 now, where we rolled out our exposure to some new out-of-the-money calls. Those are sitting in 3250, 3275 with 84 days to go. So we have some time on our side there. Same thing for silver. Those were bumped out into the SIN5 contract, a long 36, short 37 call spread on the follow page. And so that's starting to bump back up as well. The metals, I've been evangelizing them for the past 2 years, Ilya? You've been with me here along the way.
Sure. Sure.
It feels like this is the kind of picturesque environment for the metals right now.
The only reason I am not long gold with you right now, having been long gold with you earlier, is I got out and then didn't get back in enough because I was asleep at the wheel. But bias-wise, I'm there. Silver, to me, looks better here just because it's had less of an extrapolated move, and you have a clear high against which to look. So if you get a breakout, there you go. The gold chart looks interesting because we might have gone too far. If we look at the temporarily, the trend is up. Of this, there is no question. But markets don't move in straight lines.
Or
we
do
probably
they?
have. We probably or
Hear
do
me
they?
out.
Yeah.
Hear me out.
Yeah, we probably don't have a any kind of near-term reason why upside can't continue, because if you look at gold and the way it's behaved here, it's not behaved linked to the dollar or bonds or yields, which is its normal MO. It's not behaved relative to the dollar either, which is the other kind of element here.
Mm-hmm.
It's just moved relentlessly higher. And to me, it's kind of like what gold does when there's a war that breaks out. The markets just instinctively go to gold, not because it's helpful in a war. You're not going to throw gold bars at anyone. But that seems to be the sort of reflexive reaction where the markets go, I don't know what's going on. I don't know what variables to even look at. Buy gold. And so it seems like the on again, off again tariff thing has had that kind of a response in gold where they're like, we don't know what the variables are. We don't know what's going on. Worst case scenario, whatever, just buy gold. This is sort of like when Russia invaded Ukraine. What does gold give you as a hedge against Russia invading Ukraine? Nothing. But the markets reflexively do it anyway. And so I get the sense that maybe if the Fed actually injects a little bit of more dovishness into the conversation and the market level of concern and panic eases, that might, strangely enough, take something out of gold.
So can I ask? You're getting me thinking here.
Yeah.
Is the uncertainty removed? We just got a clear. We just got a clear plan, didn't we?
It's not removed because the plan is country by country with different rates, and so clearly an opening bid on a negotiation. This stuff can change within 48 hours if the Mexico-Canada example is anything to look at.
I couldn't help but notice that Canada and Mexico are not on these graphs at all. What does that mean to you?
I think it suggests that our thesis that what's been going on with Mexico and Canada is fundamentally a negotiation ahead of the renewal of the USMCA next year holds. I think that there are friendly leaders now as far as the negotiation process is concerned on all sides. Trump was absolutely effusive after his first conversation with Mark Carney. And that makes sense. Mark Carney is a crisis manager. He's not about any kind of nonsense. He probably went into that conversation in the transactional spirit in which it was offered. Carney saw the Bank of England through Brexit. He saw the Bank of Canada through the 2008 crisis. This is not anybody that's going to flinch at a sharp-elbowed conversation. I think the president seems to like that. The conversation between him and Claudia Sheinbaum in Mexico was cordial from the election onward. Mm-hmm. They've been having friendly conversations that both she and the president have talked up. So I think we are looking at basically something that is, again, a negotiating bid, much as we do with these reciprocal tariffs. And so that's where I think the uncertainty comes. Markets can't forecast this forward because who knows what it means. I mean, the EU tariff at 39%, is it going to stay at 39%? I don't know.
I don't know. We have
us a week.
It's the Orange Bowl. You have Christine Lagarde versus Donald Trump, the two most orange world leaders on the planet right now, who are leading the fight versus one another. Christine Lagarde, like, let's be, she that fake tan is no bueno. I did something, today was a day of me punching lotto tickets for various reasons. Wrong on the 5800 call. What can I do? I bought an 80-82 call spread in crude. I think that crude volatility is underpriced, which was the rationale for why I did it. And I know these trade barriers are going to be bad for growth, but I wanted to buy something deep out of the money. I saw today that Emmanuel Macron hosted a cabinet-level meeting with his top ministers in Paris. Usually not interesting because you never know what they're about. The French government never titles these cabinet-level meetings as anything other than a cabinet-level meeting. That was not the case today. The French government had explicitly titled the meeting to reference Iran's nuclear ambitions and how the United States may respond. And the reporting from that meeting was effectively one of two things is going to happen. Either Iran is going to sign a deal with the United States, or France is of the understanding that the United States and Israel are going to attack Iran. That also juxtaposes very neatly, or rather fits complementary with the reporting that we talked about last week, where there had been satellite imagery of a large number of U.S. military assets building up at Diego Garcia in the Indian Ocean. So connecting point A to point B, it's a straight line. It's not a pattern or a trend, but it's enough of a line for me to see with my tinfoil hat to think that maybe there's a bit of geopolitical risk looming around the corner for which the market doesn't have the capacity to price right now because we're so focused on the tariff conversation. And we're not really thinking about foreign policy at the moment as a mechanism to move the market. So I'm looking for a play to the back towards the top of the range here. It has long enough dated exposure. I think it's actually out in the CL N5 contract for 75 days. I just wanted some cover here for over the next 2-month window where if this reporting is accurate, we can have a vol expansion, and that's probably going to be bad for a whole bunch of other things in the world, right? So if there's a hedge in there with crude, if only for geopolitical risk to inflate, that in of itself is a trade, looking for the vol surface to change. And I think just at a 13.4 IVR when I was looking at it today, it was worth looking for a volatility expansion, broadly speaking, given some of the events on the ground. But guys, we're going to have to leave it there because there's more digestion ahead. We're closing out this hour. Futures markets are about to close for batch order processing here. S&P is going to be down 1.56% on the session after being basically up by that much and more. It looks like it's a 4% swing now from high to low here in the after hour. NASDAQ, same kind of play, 2.3% lower. You have your Russell off by 2.3%. Gold did touch $3,200 an ounce. We also see bonds rally back. ZB up in the high 118s once more. The next 48 hours are going to be interesting, folks. So while we take a quick break here, be sure to stay tuned, of course, next for Macro Money with Ilya Spivak. I do want to thank Ilya, of course. He's the co-host. And Mike Butler, the other co-host, continued champion, guest champion here on Overtime. So for the two of them, we will say Overtime is now out of time. See you soon. Ilya up next. I'm back for the Price of Truth with Victor. Much more Tasty Live coming at you.
See you there, everybody.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from tastylive to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
What happens when two titans of trading come together to harness the power of their prowess? You get a massive display of, whatever this is. Oh, they already had it there. Come on, gents, it's not that hard. Hit the ball with your paddle, mate. Oh, for the love of... Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to tastylive Cherry Bomb to get piping hot takes on the market, trade ideas, and more delivered right to your inbox. Sign up at tastylive.com/newsletters.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you see the star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
Oh, yeah. Tasty Nation, good morning.
of Voodoo Donuts. Let's go.
Okay, you guys.
Voodoo.
So we got a dozen of the classic voodoo and then a dozen of the voodoo dozen. So
These are basic.
Basic?
This one.
okay, that's gonna be your taste test.
Good.
How many stars do you give it?
3 1/4.
Yeah,
see, this doesn't work for me. This is for children. That's why there's cereal on top of it. This is my jam. Nice old school donut.
Old school buttermilk.
All right.
It's not a crow.
Okay, what do you rate it?
3.25.
That's sweet.
3 point. I know, because I've trained him how to be a market maker.
Now we load up the flotilla.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Liberation Day is here. How do you feel? We're going to discuss about how the markets feel and what they may do with this information tomorrow. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at tastylive. And what we'll do is go through where the markets were ahead of the news that we had today. Obviously, everybody was waiting with bated breath for the tariff announcement coming from the Rose Garden of the White House today. The hope was that we'd get some kind of certainty and the markets can unclench. And then we'll take a look at what this might mean going forward, because we do have some economic data to offer a nice little follow-on lens from which to look at all of what is going to happen next. So let's break this down. Here was the S&P 500 going into the close. This is before the after-hours action. Of course, we had the announcement come after the cash equity close. And as we can see here, the markets were not in any kind of panic. And we can see that here and reason that then our logic, as we've discussed it here on Macro Money over the past really months, has broadly borne out, which is to say that the markets are not afraid of tariffs. They knew about these tariffs back in November, or at least the concept that there were tariffs that were coming. The markets only really became unnerved by all of this here in the middle to late part of February. And of course, naturally, the question comes, well, if the markets don't like tariffs in general, where were they on them here, where clearly there was not a period of consternation? Why here? And it's the same story here as we were going into this announcement. What the markets wanted really wasn't a canceling of the tariffs, because clearly they knew that they were coming and they were not going to sell off on that realization alone. It's a similar story for the bonds. We see here that we have interest rates actually going up in the immediate aftermath of the election, basically saying, okay, we're going to have tariffs. They might increase prices a bit. Maybe interest rates need to go up some, but the economy is also doing relatively okay. And that probably is broadly little bit more inflationary. So maybe it means the Fed needs to cut rates a little bit more, not until a little bit fewer times, but the cuts are maintenance cuts, and what this ultimately is going to be is not anything terribly detrimental for the overall business cycle. Obviously, that's changed, and of course, stocks reflect this as well. We've seen a much more dovish view on what was expected. But in any case, today, again, ahead of the announcement, no panic. Just a sense that, okay, maybe we'll get to the clarity, and maybe that clarity will unwind this, or help to unwind it, and this. Because really, that seems to be the reason the markets are annoyed. If they weren't annoyed in November, what got them annoyed here isn't that the tariffs are coming, it is how they are coming. And the evidence that their arrival might herald some sort of inconsistency that doesn't allow businesses to plan, consumers to feel good about spending money, and so forth. And really, that came about as those forces started to appear in economic data. And of course, we start with the S&P Global PMI numbers that, as of January, February, show us that the economy is starting to rapidly decelerate. Now, these are preliminary figures for March, where we saw a little bit of a bounce. We've already seen the final one for the manufacturing side released earlier this week. Perhaps there'll be a little bit more of an adjustment up or down, but what we see here thematically is the most important thing. Clearly, the economy was looking very strong in the final 6 months of last year, powered by a buoyant service sector. You can see here, services powering ahead. As ever, these charts are in terms where 50 is neutral, above 50 is growth, and the further you go above 50, the faster the growth. Below 50 is contraction. The further you go below 50, the faster the contraction. So we can see here, first and foremost, services are what matter, because the composite index that takes in both services and manufacturing really just follows services. Moreover, manufacturing can be in contraction territory, where it was most of the second half of last year, and the economy can power ahead all the same because it's services that's pulling it. Then this occurs at the beginning of the year, and this is where the markets get upset, because it's showing that uncertainty around fiscal policy, and tariffs more particularly, is starting to weigh on business confidence and in expectations for economic activity. And that activity slows dramatically. It has since, again, rebounded a bit if these preliminary readings hold, but nevertheless, there's been a clear level change, even if they do, to a significantly lower level. And it's happened in the service sector, where you're not necessarily impacted by the tariffs directly, which tend to impact goods trade, not services, at least in their direct impact. But the real issue here is sentiment. And the idea that the way that the tariffs are being rolled out, and the way that fiscal policy more generally is being rolled out, is not giving businesses a level of confidence to plan forward. This is really where any of this becomes a concern. It's the same story in consumer confidence. You arrive at a place here where, again, really February and onward, consumers start to see the rollout of the tariffs, the rollout of some of these other policies, and we can see that there is a surge in inflation expectations back to where they were just at the peak of the inflationary cycle in 2022, and consumer confidence craters in its estimation, primarily of what's coming next. The assessment of the current environment, not great, not moving in the right direction, but not anything scary. But the overall sentiment index is getting pulled significantly lower, back to levels unseen since the second half of 2022, largely by this drop, this aggressive decline in expectations, which itself, not surprisingly, is linked to the surge in expected inflation. And lest we think that this is all just a collection of individual points in the sort of flood of macro data that we see, consider the Atlanta Fed GDP Now forecast, not for its levels. I mean, currently, certainly it looks quite ominous, where even if we factor out the disruptive influence of gold imports, which have, according to the Atlanta Fed, been an outsized downward sort of catalyst here for the overall model and the way that it's constructed, even if we sort of predict the model looks more like this. Nevertheless, we are looking at growth for the first quarter that's deeply into negative territory and in excess of negative 1%. Now, should we get married to this number? Of course not. It'll be quite a while yet before first quarter GDP numbers come out. But the important thing is the trajectory of the line here, which reflects real-time inputs from incoming economic data. When the data comes out, there are regular revisions. There was a revision yesterday. There will be another one tomorrow. There was no real big splash U.S. economic data today, but PMIs and ISM came out yesterday. There's more of that tomorrow. We'll see another revision, but this model is revised very frequently. And so the real takeaway here is the tone of the data that's been going into the bucket. And the slope of the line clearly tells you the overall thrust of data input into the model has been exceedingly negative. And so this is really why all of this is so dramatic. It is about the uncertainty of implementation and what it means, less so the substance of tariffs as such. So then we have the announcement. And what has been the market response? Well, not great. Initially, we get a pop because it seems like what we have is a 10% across the board tariff, which would, of course, give the markets the kind of forecastability and businesses and consumers the kind of forecastability that they've been pining for, hence the positive response. But then there is a clarification saying the 10% is a floor. And above that, there will be a diverse range of levels across various countries. And this is the table that we ultimately get from the White House and that the president presented. Now, beyond looking at individual rates, because that seems hardly the main takeaway here, the real issue is how many of them there are and how disparate they are. Because in setting individual rates across all of these countries, what we essentially do is open the door for negotiation. This looks like an opening bid to discuss these levels with the countries that are above 10%, say China, European Union, Vietnam. And from that, to reach some sort of new agreement and to bring these levels down. But of course, what that means is that these levels are subject to change. And if the experience of Canada and Mexico that gave us all this consternation in sentiment that we just discussed to begin with, if that's telling of an example, then we're going to be seeing very rapid reversals on a lot of these back and forth. Especially since this is being done through executive action, and so can be flexible that way rather than, let's say, an act of Congress, which goes through a lot of deliberation and is difficult to do, but then also to undo. And so if the markets were after certainty, that's not what they got here. They got a recipe for continued uncertainty while these negotiations are taking place. You see a similar response in the bonds. Initially, bonds come in, and then once it becomes clear what the tone of the conversation is, they surge. Volatility futures, initially down, then surging back to their recent highs. This is the current front month contract for VIX futures here. And so what we're looking then to see from here is the extent to which these moves hold, because clearly the initial reaction has not been more certainty, it's been less, which is precisely what the markets didn't want to see. So when we open tomorrow, the likelier scenario seems like these moves carry forward. But of course, this is where economic data comes in. If the economy is doing relatively okay, then this impact will be more digestible. If the economy is already looking weak, as the sum of the survey data that we just looked at implies, well then that makes this that much more damaging, and that makes the uncertainty around this that much more of an economic headwind. And with that in mind, the focus turns to ISM service sector data, which very pointedly has held up better than the S&P Global version. So just to check in here, this sort of spook that we saw, which has clearly spooked the markets as well, it has not shown up yet in this ISM version of the PMIs. Now, we did get the manufacturing numbers earlier in the week. They were a little bit worse than expected. The expectation was a slight contraction. We got a contraction at a slightly faster rate. The key now then is what happens with the service sector, because again, this is the lion's share of the economy. And if the negative sentiment from this policy implementation fog that has enveloped investors here, if that already shows up in a disappointing service sector number, which looks like it'll only cool a little bit from 53 and change to 53, then the level of concern in markets really ought to multiply. And of course, the calls for the Fed to rescue investors ought to grow louder. Because indeed, as we consider what the market's release valve is on all of this, it seems increasingly that it has become the Fed, much as it typically happens when the markets perceive some sort of incoherence in fiscal policy, and then, much as they did, for example, in the aftermath of the 2008 crisis, they turn to the Fed and go, okay, well, obviously the environment is difficult. You're going to have to give us cheap money as cushion against all of these headwinds. And so as a consequence of the response that we saw here and here, we, of course, see a significant dovish revision of Fed policy expectations that as of the close today, and this might get more revision tomorrow, are calling for 110 basis points in easing this year and next in total. And we can see the markets are tilting toward front-loading that. That's a little bit different than what the Fed has. The Fed had 100 basis points in its latest forecast, from 4.4 to 3.9 this year, then to 3.4 next year. That's 50 basis points this year, 50 basis points next. In some, the markets are not too far apart, although they're starting to lean in a more dovish direction than the central bank itself. But the makeup of the way that these cuts are meant to arrive looks like they want more of them now because the growth scare is more imminent. With that in mind, if this ISM data, with the benefit of everything we've just seen and the tariff situation, at least off the board as a event risk, not off the board as a risk, of course, because inherently what this means is more uncertainty and therefore more back and forth on incoming headlines. But at least with the event risk of the announcement out of the way, the question then becomes, well, how readily will the Fed come to the market's rescue? And that is very much a function of whether U.S. economic data beckons them to do it. We heard from Jay Powell at the press conference following the last FOMC meeting that the Fed is concerned, much as the markets are, but it needs to see the pain in hard, quote-unquote, data, not just surveys, in order to get to going. And so when we consider this ISM data, it is, of course, a survey, but it would be another brick in the wall of evidence that the Fed needs to see. And, of course, if this misses and starts to show the consternation that S&P Global has already been calling out, well, then the Fed has a much better case on its hands as we go into NFP, that's Friday, and Fed Chair Jerome Powell's speech on the economic outlook that follows just a few hours after. So the release valve here seems to be the Fed, and the direction of travel then becomes, if the Fed is dovish enough, or it isn't. That's what stocks may hinge on. But either way, the path of least resistance for bonds now looks like it points higher still. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after Overtime, a show I co-host with Chris Vecchio and Dylan Radigan, looking at the Wall Street close and where things may go therefrom. I'll be on with Chris for Futures Power Hour on Friday, as I am every Friday and Monday. I'll be back with Victor Jones next week on Tuesday, as I am every Tuesday, for The Price of Truth. On with Victor and Tom for First Call on Sundays, writing for the News and Insights portion of tastylive.com, and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. Thanks very much for joining. If you're watching on YouTube, like and subscribe. Macro Money's back tomorrow. Good luck.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive?
What?
Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again.
Oh, good.
So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive?
What?
Uh-oh, watch yourself. We don't want to get hit by a car.
Oh.
My brother did that once. He can't talk now.
Oh, my God, that's serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11?
Oh.
First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big. This is just moving a little too quick for me. You're a great kid.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace. My co-host today, Dan Cecilia, and special guest, Dan. We've got Ace of Flowmatic on the show with us today, continuing our interview series every Wednesday. Hackerman Ace on X. Give him a follow if you're not following him already. Ace, how you doing?
Good. Thank you very much for having me, guys. I'm super excited to be here.
Yeah, we're excited to have you on the show as well. And we've got some volatility in the markets, as we were talking about just before the show started. So we've got a lot to talk about here today. But before we do, I want to jump into it right away and get a little bit of your background for everybody that might not be familiar with you. Maybe take us on your crypto journey. How did you get started into crypto? And maybe more so recently, what are you doing in DeFi?
Yeah, definitely. So my crypto journey initially started probably around like 2016. I initially had seen something on Instagram where people were kind of talking about Ethereum, and I think the price was really, really cheap at like $200 or a little bit lower than that. And I would just keep checking in on it every week, and it would keep going up. And I was like, you know what? Let me take a chance on this crypto stuff and see what's going on. And I started getting deep into that stuff. And shortly after, I got into trading, and it got to a point where I was doing really well in crypto. So I decided to go ahead and drop out of school so I can do some of the crypto stuff a little bit more. And it's just been snowballing into what I'm doing now. And for the past about 4 or 5 years, I've been full-time crypto for a little bit now, and I absolutely love it.
And I guess to dig into that a little bit more, maybe we jump over to Flowmatic. You know, what are you doing in DeFi with Flowmatic? What are you into today?
What I'm doing in DeFi is pretty much everything on chain on Solana. I've kind of removed my trading on like centralized exchanges. I don't necessarily do it that much unless I'm doing some sort of hedge or unless I'm doing some sort of option play. So it's mostly focusing on some of this. Unfortunately, it's the meme coin stuff that I have to focus on since that's where the attention's at. And with Flowmatic, what we're doing is we're building a DLMM terminal, which kind of falls into play with a lot of the LP situation on Solana, where people can provide liquidity. And I'm sure everybody's pretty familiar this year with all the Trump stuff going on, and they were one of the biggest ones this year that used the concentrated liquidity tools, the DLMMs, and we provide tools for all that stuff.
Yeah, and with Flowmatic, as you know, in crypto, community is everything. What's your approach to building like a really solid core community over there, specifically for DeFi and on-chain
Yeah, when it comes to the community, I mean, I've always looked at it something as like an organic approach. I feel like that's something that goes much better in the long ways, especially when you do it with folks who have been in the community for a long time. So that's been my approach always. I value the mutuals that I have on the Flowmatic account. I value the people who've been in crypto and don't necessarily give up and are always looking for something. So I've always approached it with finding folks that are in the trenches, and that's how kind of we've built up Flowmatic at this point. Is we've had a bunch of the OG users who've been in crypto, and they've started to learn that there's more to the space than just buying and longing a token. There's these LP methods which are much different than when they were when everybody was doing it on Uniswap v3. Now you have this stuff available on Solana. So just teaching all my community that stuff, and everybody loves it when everybody's making money together. So I think working that with the community is probably the best approach, because at that point you'll have more feedback from proper users, and that stuff will just reflect in your product later on.
Yeah, for sure. And you said Flowmatic, you've specifically been focusing on DLMMs on Solana. Can you give us a high-level explanation of DLMMs? Obviously, we're familiar with like standard Uniswap pools or even concentrated liquidity, which Uniswap v3 came out with. But what about DLMMs? Why, like, how does it work, and why is it different?
I mean, it's not too far off from what's available on Uniswap v3, so it's still kind of the same thing where you're able to concentrate your liquidity. I guess the easiest way for me to explain it to folks would be it's like when you're setting up a range for like limit orders, whether it be to the upside or whether it be to the downside, you're able to put your money in that specific area. And versus a limit order which gets filled out, or a bid order that gets filled out, you're getting paid out for as long as the price stays within your range. So it's sort of like an option strategy that you do, trying to stay within whenever price is going sideways. And so that's kind of how I would explain DLMMs to, I guess, in a very high level aspect. So allows you to control something versus like an AMM, which is unlimited on each side. With the DLMM, you have a little bit more control, precision, kind of same thing like the Uniswap v3 stuff. Except on Solana, you are able to use a lot more higher of a fee rate, and they have something that kind of like combines everything in with, I think there's an echo. Yeah, it just combines everything in with like the swaps that happen on Jupiter, because you have Jupiter routing, which kind of takes into account with some of the DLMM pools, and it's just way more beneficial on Solana than it is on Ethereum, just because I'm able to charge something like a 4% fee. I'm able to get up to a max of 10% fees on single swaps. So when there is a lot of volatility, it just ends up being extremely worth it.
Wow. So that's on a per trade basis then, where you receive a fee of, like you mentioned, 4 to 10%.
Yeah, every single swap that happens that goes through your specific liquidity, let's just assume that you're the main LP and you're the only person in there, and there's people that are aping 5K per size in your specific bin position or price point. You'll be the person that's making that 4%, and if it's a large order, you'll make that 10% per swap that's going through. So when this stuff was happening back in April, when nobody was doing it and it was literally just me and maybe like 10 other people, I mean, it was amazing because I'm the only LP capturing all the volatility by myself. And that's still the case right now. It's a little trickier right now in the markets where you have to be a little in and out. But for my option traders and people who know how to kind of understand volatile markets and being able to be quick about things, it's still extremely profitable. Just have to adjust your risk a little bit.
Damn. And I thought the 5 basis points on a Uniswap V3 pool was pretty good annualized. What platform do you do this on?
So this is all on Meteora. I mean, there are other platforms to do it on, but they have platform fees. And the main reason I do it on Meteora is because they're eventually going to do that Meteora airdrop. So every dollar you make in fees is 1,000 points. And it's pretty easy to get up there on the leaderboard. And since not many people know how to do LPing on Solana until about like 2-3 months ago, it's pretty easy to kind of get yourself up there on the leaderboard and get a lot of points.
All right, I'm checking this out. I know Dan has mentioned this to me off the side of the desk at times, but I've got to check out Meteora because
we've been farming this during work, so we haven't even gotten anything done the last week. We've just been farming Meteora.
Yeah, you should definitely check it out, especially if you like understand options. That's kind of like the main lore that I kind of try to get my bigger brain friends into. I'm like, if you guys are able to play volatility with options, you can do the same thing with DLMMs without an expiration risk, and it's pure spot risk, and that just makes things so much more simpler for me. Because prior to about like a year and a half and 2 years ago, I was doing perps, I was doing options, I was doing so many other things that relied on directional plays or just a lot of volatility, and I would have like that leverage position open which had a liquidation. I'd have options which had expirations. But DLMMs, I can get the best of both worlds. I can play something that's just in range without having to bet directional, and I can make the same amount of fees that I would with an options contract that goes a little OTM as I would with a DLMM play that just stays in range for a few days with significantly less capital risk too.
I got a question here from Juicebox on X. He says he wants to know the story about the Bowden DLMM and how insane that was.
That was in the beginning. That was like when around like April time when Bowden was going really crazy, and there was like really insane swings that were going on, like 50-60% swings, and there was people that were buying 20 to 30K buys in every time, and I was the only person LPing it, and it was fantastic because there would be days where it was like 10-15K in fees in just a couple hours, and then towards the end of it, it got even better. So it was just a lot of fee stuff that was going through. So it's just something that kind of got me hooked in. I was like, unbelievable. I'm able to make double or triple whatever my initial LP was. So if I would put in like something like 20K, it wasn't something hard to walk away with 30K, 60K back in no time just because there was so much volatility. It's a little different now because there's more players in it, but it's still very good with like lower capital. You don't have to go all gung ho and go 6 figures in. You can still do very well with 30 to 40K.
So Ace, for anybody that's familiar with options trading, obviously on tastylive here, you talk about some of these LP strategies as being similar to option strategies. Is it fair to say that that's a strangle or an iron condor where you've got the range, you want it to stay within the range, you're implicitly short vol? Is that how you think about it?
Yeah, exactly. You're basically shorting the vol that's happening at the moment, or you're doing something like a straddle or something like that. So yeah, is exactly how it would end up being.
Awesome.
It also ends up being like kind of like the calls and puts as well if you wanted to. I just am not somebody that likes to go directional with my DLMMs because I know how difficult it can be when it's options too.
For sure. Yeah, I think when you're kind of acting as the market maker there, you want to take the delta out of it in a sense. That said, I want to switch gears on you really quickly. And as we mentioned at the beginning of the show, we got a lot going on in the markets. Let's talk markets now. For anybody that's been on X, I mean, it's just super bearish out there because the price hasn't gone up every single day like we wanted to. But what are you seeing? You know, how are you thinking about price action, whether that's Bitcoin or ETH, Solana? Like, what are you looking at? How are you thinking about things right now?
I've been kind of posting it on my Twitter page. I use Ichimoku, and that's like the same thing that the Robinhood CEO guy uses. And so it's been pretty simple for me. I'm just looking at the one-day chart, and I'm looking for a cloud entry on my end. If we can get that cloud entry, that's basically what's going to be a long play for us. So I don't know if you can go on my feed or not, but that's basically all I'm looking across the board. Bitcoin, Solana, a lot of the majors, they're all setting up with the same exact play across the board. And it's just a matter of waiting like a few days to see if we get that entry. If we get that entry, I'll go long. If we don't, then I'm going to have to pray and hope we don't go too far down.
Yeah, do you think this is more of a correction that's underway versus the beginning of a kind of more extended bear market?
I mean, we needed to pull back anyway just because we've been going so high. I see option players are positioning for like 70K, and I'm seeing order flow coming down to like the lower 68K levels. So I do think that it's going to be a little lower. I mean, for me, I've always been a fan of the whole sell in May and go away thing because it works for me in stock markets. and it's kind of applies a little bit more in crypto now that the markets have matured. So I kind of follow that same plan, and I think that's kind of what we're seeing right now. Since May is coming up, we're seeing a little bit of a pullback. We'll probably see one last final pullback, and then we should be able to continue back on summer. But I just don't see a hard dip really happening where like everybody's expecting 40, 50K. It's just we're in such a different environment than we were before to get those kind of pullbacks. Maybe on Ethereum, we'll get down to like sub 1,000, but Bitcoin, I have a hard time believing we get that low again.
Yeah, and speaking on Ethereum, on X, you've said that you'd rather play ETH's ecosystem rather than trade Ethereum directly, especially with foundation selling pressure. What DeFi projects or tokens in the ETH ecosystem are you eyeing for the next bounce, and why?
Yeah, I mean, I guess the main ones would probably be like Premia. Premia is probably the number one thing that I'm looking at, and the main reason is because they're building products to like improve my risk factor in crypto. So that's probably my number one. I guess the other one would be is I'm more of a fan of finding newer projects that are coming out or protocols that have things you can do airdrops with, because the airdrop space has been pretty healthy for the last couple months. It's been very easy to find something, whether it be on Ethereum, whether it be on like AVAX, or whether it be on Solana, to farm for a little bit and walk away with like a higher 4-figure airdrop for just a little bit of participation. So I mean, and like my comment for like what I said about finding things in the ecosystem was mainly because, I mean, when I look at things like, for example, XMW is one of the ones, they're like a Bitcoin miner type of situation. While Ethereum was going down or kind of staying stagnant, those things were just pulling out multiple X's, and they were a legitimate project. So it does take a little bit of research, but I rather not look at some of the dinosaur projects unless I know they're going to be doing some sort of token revamp, or they're actually pulling in some sort of revenue that I know is going to end up working out in my favor later on. But long term's really hard in crypto nowadays. I feel like it's kind of unfair to push those capital gains on people when it's really hard to hold something for a year without it going down like 75, 80%.
Yeah, it's been tough, especially with Bitcoin market cap dominance at, I think a new 3-year high here today. You've had a very short time horizon for a lot of things to work. We've got a question from our chat on YouTube, and if anybody is streaming this on Tasty Live, wants to ask a question to Ace, jump over to the Tasty Live YouTube channel, get into the chat there, or hit us up on Twitter. But just a quick one from Edward here. Would you play the Near protocol? Any view on that?
Yeah, Near is actually one that I was actually very bullish on last year, and I don't think I've changed any of my views, and I believe they're still kind of grinding out everything. So yeah, Near is one of the ones that when I feel like the market's taking a turn and we're finally starting to reverse out and the vibes are getting back on, I mean, that's on my top of the list, to start figuring out bags and starting to scoop those things up. So yeah, definitely very bullish on Near. I like that project.
Awesome. The chat likes you, Ace. We've got some kudos to you over here.
Appreciate everybody hopping on. Thanks for joining.
Yeah. I've got a question for you. As a lot has kind of been happening quickly here with the new administration. Trump kind of stood up a while ago and said, "I'm your crypto guy," and I think for the most part we've seen some follow through there. How do you see the DeFi landscape, industry, whatever you want to call it, evolving here, maybe on the back of some regulations? I mean, is there anything that you're paying attention to that has you bullish or maybe even bearish as we see some regulatory developments, as we see some legislation make its way through?
I feel like the regulation is a double-edged sword. Like, we asked for it. I don't know how it's going to end up being when it ends up actually coming in place. But I mean, the one thing I guess would be a positive is you saw the shift the moment he came into office, where projects were a little bit more apt to kind of go with the U.S. side of stuff and kind of start coming back over here. So I think that's where the main regulations are going to end up being beneficial for us, is us actually being able to make products in the U.S. and not have to go overseas, and being able to be compliant with what's available right now. that's probably the biggest bet for us, because I know several companies right now who they make great revenue. They're not located in the US. And that goes same with a lot of exchanges. Once exchanges introduce any kind of leverage or anything, it's pretty much off the table for any kind of US users. So if America wants to continue being on the forefront of some of this stuff, I think they're going to need to ease up on this regulations, and we'll have to see if we can get some of these companies either back in the States or start creating an incentive for these companies to open up in the States so users can actually use some of these products. I mean, it's just a shame because there's a lot of things that I would like to use, but I just don't have access to. And if I want access to them, I have to go through a whole process of becoming an institutional investor in the States, and not very retail friendly in the States right now for crypto.
Yeah, it really hinders innovation. I'm personally curious to see if we get to a point where there's some value that's unlocked. When you look at, what comes to mind for me is probably like the Uniswap token or Radium, where you have these exchanges, they're cash flow positive or revenue positive, if you want to think about it that way. But there's no real way for that value to accrue to the token itself. I mean, I get that we can vote on whether they'll pass some of the fees on, but I think that if you get some regulatory clarity, then you could see a lot of value unlocked for some of these exchanges or these decentralized exchanges.
The DEX space is absolutely booming. There's so much money to be made for so many people, whether you're building trading tools, whether you're building arbitrage stuff, market making stuff. There's just so much money flowing. I mean, just Meteor alone, I believe they've done almost like 178 billion in volume or something crazy like that. So, and then now you have Pump Fund, which just came out with their own decks and everything. So yeah, there's just tons of opportunity in crypto. It gets even more crazy every year I get into it, because I'm mostly focused on Solana stuff and AVAX stuff. And just on those sides alone, my time is like completely taken up doing AVAX projects and AVAX market making, and then doing stuff over here on Solana here and there. And I'm totally missing out on everything that happens on Ethereum, there's so many other chains, ADA, and I mean, I wish I could multiply my body.
So you have suggested that there's probably a little bit more pain coming in the market here, especially with the tariffs. But what on-chain trends or metrics do you track to know when it's time to load up and get long, or take advantage of some of these opportunities?
It just comes down to like the levels that I've seen before previously in the years. You typically see something like where it's like a 40% retrace, 60% retraced, or there's the classic 80, 90% retrace. And that's kind of like my main metric that I look for, see which kind of companies are still building and yet they've kind of hit that requirement point. Some of them might not end up hitting down to that 80, 90%. They might trend around like that 40, 60%. So that's kind of my main metric to look for, is like who's still building, who's still producing products for their community. Are they actually having any kind of volume rolled through their products? So I like to do a little bit more research on the utility side of stuff. I know right now the market is in a way where you have to do meme coins, and that's kind of the approach you have to take in DeFi. So I mean, I don't think the meme coin stuff is going to go away. So it's basically just using all my profits from meme coin to continue DCAing legitimate projects that I see are going to be worthwhile in the future. Doesn't matter what chain it's on.
Can you tell us a little bit more about what you're involved in or what you're looking at on AVAX? I personally have never owned the token. I'm not super familiar. It is one that we recently added to the list at Tasty Trade. But what has piqued your attention over there?
Yeah, I've actually been in the AVAX ecosystem now for like 2-3 years now. I actually got started with it in the arena, and the arena airdrop was really nice, and it was still ongoing, so I'm able to kind of grind out the arena airdrop. And Meteora and the DLMMs, they kind of got the inspiration from AVAX's liquidity shapes, which is nearly the identical same thing. So I'm able to do nearly the same thing I'm doing on Solana on AVAX as well with market making, and the environment is much different. I don't have a lot of people that are constantly dumping right away, so I'm able to market make a little bit better over there. More projects are doing airdrops and stuff, so the airdrop farming is fairly easy, and there's just a lot of volume going on to where I'm not worried about the downside as much as I am on Solana. Like Solana, things only last about 48 hours, maybe 24 hours over on AVAX, they at least last like 2 weeks for me.
You have some time.
I need that. I can't be focused all the time.
Yeah. Is there one specific DeFi trend or on-chain trend you're seeing right now in 2025?
I mean, it depends on like who you ask. For me, I would say this DLMM stuff is a pretty big trend right now. A lot of people are starting to LP again, and it's a big difference from previously when people were LPing. Previously, when people LP'd, it was normally the whales that were making a lot of money, and it wasn't really a space for like retail traders. But now with the DLMM stuff, I'm seeing so many more users that are finally understanding this stuff, and I'm seeing more and more people become experts on how to do LP stuff and realizing that there's market making tools available for retail. So that's kind of like the emerging trend I see on my side. There's obviously the whole RWA stuff, which I think is extremely huge. Like real world assets on chain is a big thing for me, especially when it comes because I'm a stock trader. And so I would love to see some of those companies or some of the commodities on chain. That would be huge. So probably those things like LPing is back again. Real world assets is a big thing. And I'm sure everybody would agree with the AI agent stuff, but that's a little tricky on that side.
When you think about RWAs, is there a macro trade there? I mean, I kind of see people mention Ethereum in the same conversation with real world assets. Is that accurate, or is there another chain that we should be focused on?
I mean, I don't necessarily know I don't think it's like a chain specific thing. I think there's several places that are working on like the RWA stuff, not only chains that are on Ethereum alone. So I think you could probably find that stuff elsewhere. I would say the leaders are probably going to be the ones who can kind of get stuff listed the fastest. Like I see a couple people that started listing oil contracts. I saw a lot of people starting to do silver and gold. So for me, I'm like a big precious metals trader, and that's my outlook on a lot of things. Is since Dixie's going down, there's a lot of crazy stuff happening in the world. So I kind of lean more towards finding any kind of RWAs that are related to precious metals.
So we got a couple minutes left here. I want to know what your one bold prediction is for Bitcoin, crypto, or crypto broadly, or DeFi over the next year.
Let's see.
Yeah, something crazy, Ace.
Yeah, something big.
All right, let's see what we got. I mean, Ethereum, unfortunately, I'll have to give a bearish take on that one. I think there's more of a chance of something else coming up or more people kind of going towards their own chain. So I would say a crazy prediction would be is ETH is probably going to get replaced or at least not be as important as other things will. So there's that take. As far as like Bitcoin goes, I mean, I have no choice but to be very bullish on it. As far as like a timeline goes, maybe I don't necessarily have one, but for people who say it's not going to come back over 100K and it's not going to hit higher numbers, I mean, we all said that about 100K, that it wasn't going to hit up over here. And now we have people who are buying millions and billions of dollars worth of Bitcoin at these kind of levels. And so it just leads me to believe that, I mean, 200K is likely possible. Maybe I don't necessarily have a timeline for that one, but next run we have, I could totally see 150K to 200K per Bitcoin.
I love it. Yeah, this has been a good show, man.
You guys, what's your guys' take on some of the markets? Are you guys bullish? Are you guys bearish?
Oh, absolutely. I mean, I'll just jump in really quickly. I think we've got a bit of a short-term correction here within a larger bullish secular trend. And I think that we ultimately are going to see prices when, we might not stay there. But if you've been in this long enough, you have seen some crazy shit. And I think that we will absolutely see that here again. I think it is contingent on kind of the macro backdrop and what happens with monetary policy. That tends to be the fuel that you need to see. But yeah, I'm with you on the 200,000 plus Bitcoin price. I think you see alts do some crazy things. So I'm very bullish, to say the least.
Yeah, I'm really bullish as well, price aside, but I'm just excited for what people are building now. Like I feel like we have a ton of consumer applications or just like applications that are easy for normal people to use. I'm really big in NFTs and just like on-chain social. I think you mentioned the Arena before, and I believe the Arena is a social app on AVAX. So really interested in like on-chain media and like the revival of just like content creators using on-chain to monetize their stuff. So yeah, I'm really excited about some of the consumer apps coming out aside from just price.
Yeah, we've been really excited to have you on the show as well, Ace. We've unfortunately run out of time, but we've got to have you back at some point here in the near future. We'll check in on some of all of our predictions as well, our forecasts, I suppose. And yeah, again, just want to thank you for coming on the show here and look forward to speaking to you again soon.
I'd love to come back on and maybe pick your guys' brain on some of these questions.
Absolutely. Yeah, we've got a lot of good feedback as well. So thank you, everybody, for tuning in here. Make sure to follow Ace over on X at HackermanAce. If you haven't already, get over there, give him a follow, and he'll certainly be back here on the show. But that's going to do it for us this week. We will be back, Tasty Crypto Show, on Monday. Victor Jones is up next with The Price of Truth. Until then, I'm Ryan.
I'm Dan.
Peace.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
Snow, let's take a look. They did not hold that rally at all. Phil, you got a partial.
973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
I had the what do you call the hot girls dinner?
Oh, you had girl dinner.
Cheese plate?
No.
Popcorn and wine?
Crackers?
I went snorkeling.
You went snorkeling?
But I said the last time I went snorkeling.
And the fact that you've ever been snorkeling is pretty amazing.
That it also implies a future time that you will be snorkeling, right? Not because you didn't say the only time I went snorkeling. You said the last.
The last time. It kind of has the implication.
What did you say? The fact that I've ever been snorkeling is amazing?
Yeah.
Why?
Because she studies physics and it's not supposed to work.
This doesn't, yeah.
Wait, you're going to Vegas?
I am going to Vegas, yeah.
Ooh, for what? For just funsies?
For my birthday.
Oh, wait, I didn't know it was your birthday this weekend?
Yeah.
Oh, happy birthday.
There you go.
I didn't know you were an Aries.
I am an Aries.
Yeah, that kind of tracks.
Something. What is your sign?
I'm an Aquarius.
Aquarius?
I'm Aquarius, yeah. Tom's a Pisces.
Pisces.
Yeah.
That makes a lot of sense.
It does.
Yeah.
It really does.
That kind of tracks.
I don't even know what that means. Sure. Whatever.
I think it means you like fish.
What happened, girl, during last call?
I lost my
You want to talk about it?
I lost my beret.
You didn't lose it.
I found it.
So you got...
I'm thinking of getting rid of it.
Oh, new look?
I'm thinking of the new look.
You should do a faux hawk.
Oh.
What is
I think you nailed it. I don't know.
No. Cornrows.
I could see rocking some cornrows.
Yes, cornrows.
I think you should go to Flavortown and just get the Guy Fieri spikes.
Boom, platinum tips.
Platinum, yep.
Is it true? Did you skip the beret yesterday?
On the clothes.
Oh, it looked like a decrepit old grandmother.
It was so gross.
It's like that old monster from Tales from the Crypt.
Get the full scoop by checking out the archives at tastylive.com.
We just ripped higher up to 50 points, and I just thought we would stay there, but
the thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
we just ripped higher up to 50 points, and I just thought we would stay there, but
the thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Oh, yeah, it's Wednesday, April 2nd, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world. And good God, did we just get some new and glorious incentives. Happy Liberation Day, Christopher.
You mean Obliteration Day, Victor?
Zing.
We did it. Everyone snap.
Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. But if you want to be part of this little chat in the middle of your screen, there's only one place you can do it, and that's on Tasty Live's YouTube channel. So head on over to Tasty Live. And start bashing your phalanges, your metacarpals, and maybe even your skull into your keyboard. Type in random ass characters if you have to. Just spoof the Google algorithm into putting us in front of as many people as possible. Shout out to all of you in the chat. I see you. I love you. My heart goes out to you.
I would talk to you. But we got the big brain in the house, Mr. Chris Vecchio. Chris Vecchio, my friend, do you feel liberated? Do you feel liberated?
My gold positions feel liberated. My silver positions feel liberated. The bonds that I hold feel liberated. That 5,800 2 DTE call that I purchased 10 minutes before the close today does not feel liberated. But it's a small loss. It's a small loss.
The interesting thing about today, cash closed higher, a little move to the upside. S&P during the regular hours up 2/3%. The Nasdaq up 0.75%. The Dow Jones, your grandfather's favorite index, up 0.5%, and the Russell was the massive outperformer, up 1 2/3%, on a really sort of interesting positioning into this April 2nd tariff announcement. I am fascinated by the announcement. I think it was, me personally, I thought it was a way lighter touch than I expected, and I think the market reaction is fascinating because it's almost the exact opposite of what you'd expect. I'd argue the market had already positioned for a 9 to 10% tariff, which means 3 to 4% downside, which is where we are now. The S&P down 3.5%, the Nasdaq down 4 and 1/3%, the Dow down 2.25%, and the Russell got obliterated, down 5.25%. No one thought April 2nd would be a clearing event. Volatility was not positioned for it, and lo and behold, if you're not positioned for it, you don't think it's going to mean anything. Guess what? It means something. The law of reflexivity. Chris Vecchio, what say you about the announcement and about the reaction?
Let's rewind. It's 2016. I am very much against Brexit because I think that in a world of a growing pie, cooperation serves everyone's interests. But the UK decides to Brexit. That also means that the scotch and gin that I like is pretty much exempt from the highest tariff levels now because the UK is only being tariffed at 10% compared to the EU at 39%. So thank you, Islay Scotland, for your botanist and your Lefroy. And that's the only silver lining that I find through today, Victor Jones. I'm going to sound a little maniacal and perhaps obtuse when I suggest that Pax Americana may have officially died today. One of the things that bothers me about this entire conversation about the U.S. losing its manufacturing share since World War II is that's a really fascinating starting point to begin from. Why did we have such a big manufacturing share in 1945? Because the rest of the Western world was obliterated because of World War II. So naturally, as those economies rebounded over the following years, their manufacturing capacity would build back up. Why do we have the tariffs in place? So that we, as the new global empire, could have all of these client states where we help them have access to our markets as they rebuilt in the shadow of World War II. And we built up a global economy that worked in a competitive but cooperative fashion. That ended today officially. Now, we can talk about bringing jobs back here to the United States, but when we look at the historical data, when we look at the studies that have been performed by independent, nonpartisan think tanks, hell, the Federal Reserve itself, tariffs that are done in such a nature do not bring jobs back into the country at all. They never have, they never will. And yet we are pursuing this policy for what reason? The numbers that were listed today, I was trying to work out the math for how they arrived at these tariff rates. I'm pretty sure it's just the trade deficit divided by the amount of stuff we import from that country. If you do the math on the EU and Vietnam and China, you're going to get those numbers within 1% or 2% for basically every single country. And the numbers that they use to talk about the tariff rates they impose on us is basically a non-GAAP EBITDA adjusted figure. So this is worse than I think anyone expected. It's worse than I expected. Otherwise, I wouldn't have bought that 2 DTE 5,800 call. That's now worth nothing. It's worse than expected. in almost every regard. Now, there are some wrinkles to this that make a lot of sense. Like, why would you employ an equal rate across the board, maybe even hit Vietnam more than China? You can make the argument that China's been using Vietnam as a pass-through in recent years to circumvent our tariffs. I've made that argument here with you before about NVIDIA GPUs, about how NVIDIA has been selling on a quarterly basis enough GPUs to Singapore that the entire annual rate of electricity production in Singapore we need to satisfy. So clearly they're not just holding on to them and warehousing them, they're passing them somewhere else. And then you have all these AI breakthroughs in China. Like, let's just connect the dots there. So you have to have some sort of rate that doesn't allow China to say, oh yeah, you're going to give us 34%. We'll just set up a subsidiary in Vietnam and we'll use that Vietnamese company now to sell to you with the 10% tariff. So you have to do something with that. That's understood. But this form and fashion today, arbitrarily, why are we Falkland Islands or some of these places in the oceanic region, 60, 70% tariff rates? It's because what on earth are they going to take from us? We're an advanced economy. They're not going to buy AI or airplane parts necessarily. And they do textiles, so we buy cheap cotton goods from them. Of course there's going to be a trade balance. I think that the root of this is that people think the trade balance is the same thing as the budget deficit. And it's not. So I'm personally perplexed. I'm grateful that I've been hiding in bonds and gold this year. I am angry at what this means for the short-term and long-term implications of the economy. It's disappointing. It's not going to achieve the stated goals that it wants to.
I fundamentally, Tom said this to me the other day. I tweeted, I put it out on Twitter. I fundamentally disagree with everything you just said.
I know. But most of the market does. Nasdaq's down 4.4% right now here from the close yesterday.
Okay. So long time ago, I think being right for the day could mean that you're wrong you're missing the opportunity and you'll be wrong for tomorrow. So being on the side of the 4% sell-off kind of means you're not going to take risk. It means you're not going to look for opportunity, and you're not going to be there for the swing. So let me ask a set of questions. I'm being hyperbolic. I don't disagree with anything, most of what you just said. I think it's a brilliant way to open the show. But I would ask the question: where is the opportunity? Putting your personal feelings to the side. Mm-hmm. I think the most important question today isn't whether you agree with it, whether you don't agree with it, whether you understand the logic or don't understand the logic. I would have argued that to come out light, it's not his style. It's not his style. You can't. I think you come out heavy, and I think they want this to be at worst like a month-long negotiation. I think they want to get a bunch of deals done within the next couple of weeks. And I think a worse than expected announcement puts a lot of people under pressure. This is the opening move. The question now is, how does everyone else respond? Do they respond like our friend from, is it Ontario? Where's Doug Ford from? Is it Ontario?
Ontario Premier. Yeah, the Ontario Premier. And they're important because they have the Ontario Liquor Board, which is the single largest body of liquor purchasing power in the entire world.
You've really got your eyes on this liquor situation. I think it's important. Do people respond in that way, which is, hey, I'm willing to take off all of our tariffs if you are as well? Do you get more of that, or do you get more of the Mark Carney type situation, or the China and Korea and Japan all teaming up for some sort of reciprocal tariffs? I think it's a big question, and I think that's the unknown. The unknown here.
Well, I said, Victor, we have countries that are still arguing 80 years later about the rape of Nanjing. And all of a sudden, what Trump is doing is enough for them to say, we should set that all aside. We haven't been able to get over this for 80 years, but this is so important that we need to work together.
Yeah, money is a wild motivator, bro. So then I would ask you, we know now that we're on the other side of the announcement, we know it was worse than expected, but we have an answer and we have something to operate on. what happens from here? Where's the opportunity? You're instantly down 4 or 5% in these indices. You're instantly back at the value area at 5,500. So the question becomes not whether you like the tariffs or not, because they're here. So the question becomes, where's the opportunity at this moment in time?
Yeah, I mean, that's, bonds have rallied, 5 points over the past 5 days? That's a hell of a move. So the opportunity may not be there. But ultimately, the opportunity is probably still in the recession trade, which, going back to 1980, the two best places to hide during recession fear episodes have been the long end of the curve and gold. That's been a point I've been making for weeks and months now. Stocks trying to pick a low here hasn't worked out. I've taken 2 swings. I did the short put spread on March 14th, which I'm still holding and is eating dirt right now. The long call spread was a small penny. I think that's like a $200 wipeout. I was happy to flip that and take the risk today, given all the other more defensive positioning I had in case I was completely wrong. I came into today with absolutely zero conviction. I'm usually a strong convictions held loosely kind of person. I have been a zero convictions held whatsoever coming into today. I used the opportunity to roll out all of my exposure because I didn't want anything that was too close to 21 DTE. And that effectively was rolling out long gold calls to deeper out of the money so I can get some convexity, rolling out the bond put spreads or the note call spreads. And so on the other side of this, I'm not mad today because I lost money. I made money today. I'm going to make money after this. I'm not worried about that. I'm more concerned with the fact that now I'm right. I don't want to be right, Victor, because I'm defensive. I like being bullish. I like when people get in the chat and say, you owe Ilya an apology because the market's down 1% after rising for, 60% over the past 3 years that I've been long. I like being that person. I don't like being this person.
You're a bear or a bull coming into today, Chris?
I was indifferent coming in today. I had no effing clue. I say I felt like I had zero edge, that comes from a place of deep honesty. And
you're right about what? You're right about a recession on the horizon, a growth scare? You're right about buying gold or bonds, or what were you right about?
I think I'm right about the recession, right? These tariffs are much more aggressive.
Meaning you are calling for a recession this year.
I think in the very short term, between 1Q and 2Q, the odds of a recession are north of 50% at this point.
Okay, but that everybody.
No, but
that's
have
implied in the market.
I'm speaking to your tweet that I think that you have pinned that says anyone who knows how Enber calls recessions is something, and that feels very personal, sir. Because you know that I know how Enber calls recessions.
so you think that's like some dig towards you?
It feels like a dig towards me.
What that means is, no, not at all, bro. Not at all.
I know. I'm joking.
So, the point is, people on Main Street start hurting well before the NBER calls a recession. You can talk to a stripper at the strip club, and they'll tell you people have stopped coming in and spending cash. I did that at
NPR recently.
Well before the NBER comes in and calls a recession. So that pinned tweet obviously has nothing to do with you. It has everything to do with just normal everyday people can tell you the state of the economy well before the NBER backdates a recession by 3 to 6 months. It's not helpful. That's my point.
Yeah, it's not helpful, right? But when real time, you see something like the Atlanta Fed growth tracker minus 3.7% for Q1, even when you take out the gold imports, it's still deep in negative territory. And it's the impulse, right? Forget the fact that you're still seeing some hiring data hold up like what you see in ADP. The sentiment surveys are pointing to consumers and businesses that are pinching and getting ready to pinch their wallets. Okay. You and I, last week, I said how many recessions start with a surge in imports. But this also may be a period where we're going through a regime change, economic regime change, right? From classical liberalism to Keynesianism to Thatcherism, Reaganism, right? And that's really where we are right now. People refer to this as the neoliberal era, okay? You have classical liberalism pre-World War II, and now after Keynesianism dies, you have neoliberalism. So neoliberalism may be dead. I think that's what today means. This neoliberalism era is dead, and that completely informs how we should be trading short term, which is there is a negative growth impulse for the US. Consumers and businesses are going to look at this data. I'm half a mind to go out and buy a car tonight after the show ends, right? Go to Target and get underwear and socks, because who knows what the supply chains will look like in a few weeks, if there's going to be any disruption there. But then very legitimately, long term, if we're going into a growth slowdown, because these tend to be adjustment periods, the tariffs hit, you get a ratchet higher in growth, you get a hit to, ratchet higher in inflation, you get a hit to growth, and it's like a J curve, right? Growth goes down fast and then it recovers, inflation goes up and then it comes back down. That's why the Federal Reserve treats the inflation spike coming out of tariffs as a one-off event and not something structurally that they need to actually address. They're more concerned with the bottoming of growth and the rebound to a lower state than where it was previously. So lower rates seem very likely, right? The Fed right now is going to give us 5 cuts to the end of next year. I wouldn't be surprised if it's 7. And bonds at 120, they feel a little rich right now. But if the recession trade is on, again, gold and bonds have been the place to hide during recession fears in this market. So I think we're going to be looking for a wipeout. I think a wipeout move in equities probably means 5,300 in ES, maybe 17,300 or so in the NASDAQ. And then I'd be very comfortable getting long down there.
At what level, you said?
Like 5,300 in the S&P and 17,300 specifically in the NASDAQ.
I've said this, I don't know what it is about this environment, but I don't know if I have the right mental model or the wrong one. I'm just not as spooked as everyone else is. I'm not as convinced that I should be freaking out. And maybe it's just because I have this, these ranges, that 6,000 plus or minus 200, and now I'm at 5,500 plus or minus 300, and it hasn't failed me. We're playing right around that fair value level, and I'm not freaking out. And I've also learned to be really careful about over rotating my narrative in a high vol environment, when the distribution curve gets wide. And I should expect 1.5%, 2% moves. Now, this is a multi-state deviation move, what's happening right now. But this is also an initial knee-jerk reaction. So give it 24 hours. There's a part of me that just, I don't know, maybe I'm dead inside now. I've been doing this so long that I'm dead inside. But I'm going to be really careful, Chris, not to over-rotate my narrative, not to get too hyperbolic, to recognize that I'm still at 5,500 playing plus or minus 300 poker, and somebody else just made a big bet. And I can either freak out and fold my cards, or I can stay in here, hang tough, and play the hand. And there's nothing about this move. Again, it's a big move. It's a big bet. But we're still right at 5,500. And I don't know. I'm just not. I'm not freaking out. And I'm looking at vol at 21.5 with forward VIX futures at 23.5. I can make the case. We are in a bit of backwardation. Don't get me wrong, but I can make the case that this wasn't a volatility freak out either. Your thought?
Yeah, I know the volatility didn't freak out. In fact, that's the one. Give me a second here just to pull that up on the chart. Did we even get through the highs? No, I don't think we did. 311 high is 23.97. Today we did 24.05, but we're currently sitting at 23.60 in the VXJ contract.
Mm-hmm.
Yeah, I mean, listen, like I said, when I'm freaking out, I didn't lose money today. Most of my positioning is in bonds and gold. I'm fine. It's been fine. I'm thinking about now, as someone who wants to be bullish in stocks, this is bad for corporate earnings. It's bad for corporate earnings because corporate earnings growth in the first quarter already started to slow down. We had double digits growth in Q4 2024. We're now looking at about 7% and change for Q1. It also comes with more companies than last quarter, any quarter in 2024, any quarter in 2023, revising down their EPS estimates. In fact, the number of companies that have thus far produced the estimates, more companies are revising lower their EPS estimates than the 5-year and the 10-year averages for the S&P 500. Okay, so contracting earnings growth and an economy that looks like it may have to price in the possibility of a sudden stop, that's very growth negative, right? It's the mirror image. Why was I so bullish last year? Corporate earnings are growing. The economy's growing between 2 and 3% in real terms. As long as you have those two things happening, everything's copacetic. Don't worry about it. Just buy the calls and go fishing. But now you're on the other end. And so this is still sell the rip. It's not buy the dip. And I made that mistake today. I tried to buy a dip in stocks, and it's a small loss. It was like a 3-to-1 reward to risk. So I think I'm going to be out like $300 on the trade altogether. I can eat that given how the bond and gold positions have performed over this week. But like that's where we are now. That's the regime. If we've now shifted into a regime of lower growth and the aggressive part of the J curve where you fall off, then bonds are a fine place to be right now. And volatility doesn't need to spike. I think that's probably the most difficult set of circumstances for people. You get a 4% move lower in the NASDAQ and you get a VIX at 30. Okay. But to get a VIX that sits around like 22 or 23 with a 4% sell-off, that sucks. That's really difficult to trade. And that's part of my rationale. It's difficult to trade. I don't feel like I have an edge.
My wife asked me last night, so I'm in Singapore, which is 13 hours ahead of Central Time. She goes, what do you every once in a while, she'll ask me a question about something she thinks is market related or in the ballpark of something I'm focused on. Most of the time, we don't talk about any of this shit. And she goes, what do you think, what's happening? And I go, they're going to take a little bit of money from us and they're going to spread it around. She goes, how do they do that? I go, it's complicated. She goes, all right. I say that. She goes, that kind of seems fair. I go, yeah, I think it is. And that was the extent of our conversation. Chris Vecchio, do you think that's a fair character?
No.
Do you think that's a fair characterization of what's going on?
Who pays the tariffs?
That wasn't. It's a consumption tax. I've said this before. It's not about who pays the tariffs, which I think is about which is what many people focus on. What I think happens.
But Victor, who consumes the most then? Do lower income people spend more of their income on consumption or savings? This is a regressive tax that is going to hurt the lower and middle income consumers more than higher income consumers, because higher income consumers spend a smaller proportion of their disposable income on consumption, right?
I'm actually glad you brought this up. This will be probably one of the most interesting things we talk about. You're 100% right. Somebody on the lower income spectrum has a lower marginal propensity to consume. Somebody with higher income or higher levels of wealth has a lower marginal propensity to consume or to spend. Meaning, you give someone on the lower income spectrum $100, the likelihood that they spend that $100 or even more is high. You give a wealthy person $100, the likelihood that they spend that $100 is low. In fact, the most likely use of that $100 to a wealthy person is to invest. It's most likely going into assets. I agree with you 100%. However, when you go through a period of massive inflation like what we just went through, and prices are already likely at some sort of elevated level where it's becoming difficult for companies to pass on prices on especially consumer discretionary goods. We've sort of reached this point where it's really hard to saddle higher prices on the consumer without them decreasing their consumption. Would you agree? We're reaching this stretching point. There's not much more room on credit cards or additional unsecured debt. I mean, we've got buy now, pay later on fucking Domino's pizzas right now. Like
we got burrito bonds, baby.
So then what happens if you get this big ass excuse my language, what happens if you get this big ass price shift right at the point where the consumer's already stretched? You get a change in behavior, Chris. Mm-hmm. So what I would say is, yes, it's regressive, but what we can also see is a shift in the demand curve. And I think what's very likely to happen, what has happened in the past is we said, okay, We have the printer. You guys have raw goods. We're going to print stuff. You guys can have the jobs. We're going to take the cheap plastic trinkets that you guys make, and we're going to send you this funny money, and you're going to send us the cheap plastic trinkets. And I think what happens here is we go, you know what? We don't need as much shit. We don't need as much cheap plastic trinkets. And in exchange, we get a little bit more employment. I think we get a little bit stronger labor force participation than we would otherwise. And where does that come from? It has to come from somewhere. And that's going to be funded by lower profit margins. It's going to be funded by lower stock prices or lower, like if we wanted to solve the housing crisis. You solve the housing crisis by building 4 or 5 billion homes. What happens if you build 5 million homes? You get an excess of supply, which is going to have an impact on all current homeowners. It's going to take from their equity. So what I was explaining to my wife wasn't about who pays the actual tariff. It's about what's going to happen to all the assets that we own. On the flip side of this announcement, those assets are going to be worth less, and that in effect is going to be distributed. And that was the nature of my question, which is, do you think stocks going higher undermines the administration? If the markets rip, would that undermine the administration or would that aid them? And I would have argued it is not helpful, because what they're trying to do is redistribute some of what's on paper into the real economy. Go ahead, sorry.
Well, yeah, that's from our Twitter conversation yesterday, so I have to make good on my promise. In a world where manufacturers, which face small margins already, now have this higher input cost.
Yes.
Do we think that these manufacturers are going to open or are going to be able to expand production and hire more people, or will they be forced to let go of employees as a result of the higher costs? We already heard from the National Association. Forces. The National Association of Manufacturers put out a report today, and I'll zip this back up. I don't want to distract everyone. The National Association of Manufacturers put out a report today that this is going to cost jobs in the country net. The industries that are being protected will gain employment, but everyone else will lose. So unless you currently work in a factory producing textiles, congrats. Like, your job is probably safe because Americans don't have access to $2 shirts from Vietnam. We can buy American apparel for $20 made in Los Angeles. But everyone now who consumes the t-shirts is now paying $20 instead of $2. And so incrementally, think of this like gasoline. When gas prices go up, why does that hurt? Because it means we have less money to circulate through the economy otherwise. So falling gas prices are good. It puts $50 back, $100 back in people's pockets, every single month. And you multiply that out over the course of the year, it can be a few $100 in additional spending going elsewhere. We literally don't need to buy something and use our money to light something on fire, right? Because once we buy gas, it goes up in smoke. That's kind of like what the tariffs do. We're going to have to use more of our money to pay for our basic goods. And so we're going to have less money to circulate into other parts of the economy now. It's just that simple. And
Correct.
Yeah, we're going to be able to get all the things that we want to get still. I'm still going to get t-shirts. I'm not going to run to Target after the show and go buy underwear for my, future newborn and my daughter until she's 9 years old, and until the next administration comes in and undoes this entire mess. But at that point, how much credibility we have taken? Will other countries even want to deal with us? I say yes, but not on the terms that we had prior to 2024 or 2025. But it just means less disposable income floating through an economy, and it means a lower velocity of money. And so perhaps you get lower inflation out of this. Well, not necessarily, but perhaps you get lower inflation out of this.
Mm-hmm.
But the immediate effect is that people stop spending money. And so then the jobs that you ultimately bring, do we really want to be building microwaves in America in 2025? Is that really the goal here, to bring back those kind of jobs? This is also like the whole.
Go tell that to the homeless people in the streets of Chicago. Do we really want to be building microwaves? I think any job
that's a disingenuous. That's a disingenuous argument.
No, it's not. I'm dead ass serious. Any job that gives somebody a sense of purpose, a sense of pride, allows them to earn money in the economy as opposed to get a handout from some government or some
work is dignity.
Some organization is a job that anyone would be proud of. And I would argue to you that 61% labor force participation and sliding is a problem we need to address. So I hear you on all of the issues with tariffs. I get it. Everybody who understands the difference between tariffs and free trade is going to come down on all of our stocks will go higher if we stop doing this nonsense. But then I ask you, Chris, what exactly is your solution to the millions of people sleeping in tents on some of our greatest cities right now? What is your solution? Because I hear a bunch of people on the left side of the aisle criticizing what's happening, and I saw none of them doing anything about it as we slipped further and further into just complete chaos in Chicago, in Denver, in San Francisco, in LA, in New York. All these places are run by Democratic policy. So I ask you, my friend, if you don't like what's happening, and I can sympathize and empathize with that, but what is the solution, and why isn't anyone on the left side of the aisle doing anything about it with the levers of power over 16 of the last 20 years or 12 of the last 16 years? What's the solution, man? Because anybody can be a Monday morning quarterback, but it takes real balls to sit in that chair and go do something about it. What's the solution, man?
We could just raise taxes.
We could.
Instead of having lower income people pay more to consume the basic necessities of life, we could just tax the rich. And this is the exact problem that we have with the homelessness problem on the streets of New York and Chicago, Victor. Instead of building more housing and investing more into social services, and instead of providing the things that people need, like job training programs, we didn't. And so what did the people on the left do? They said, you know what? We can't actually address the structural issues here. So let's make it okay to be poor in public. Let's allow for social decay because we have failed to help them. So you know what you do? You build more housing. You do jobs programs. You get people not into college, but into apprenticeships. In my county here in Westchester, north of New York City, for every 5 plumbers retiring, there is 1 person to take their job. Electricians and plumbers right now in my county make more after 2 years than a college graduate after 4. Okay, so we have to change the incentives, as you say, incentives guide outcomes. We have to change the incentives here and not hold out, a 4-year college degree as the end all be all. But the reality is we have the ability to solve these problems. We don't. And so both parties go into the pits of, we can't build more housing, so the homeless should be able to do whatever the hell they want. And, we can't solve the budget deficit things, so let's raise tariffs because it's an anathema to tax the rich. We have some of the lowest tax rates in the world. Forget the tariffs. We should be doing a destination-based tax.
What does that mean? What do you mean?
That means if companies want to sell into the United States, they pay taxes to the U.S. government, right? If you're in Ireland, Google can't just, or some pharmaceutical company can't just re-domicile in Ireland and pay their lower taxes. Yeah. You want to sell your pharmaceuticals here in the U.S., you pay U.S. tax rates. It doesn't matter where you're headquartered. So we got to close those loopholes. You want corporations to stop taking advantage of the system? Stop giving them loopholes to operate out of Dublin, for example. Go after the abusers of the system. And look, I don't know if you saw today, Lena Khan was with Steve Bannon. Okay? You need people.
I think Lena Khan was incredible.
Is great.
She's
amazing. Fantastic. You need people like that who are trying to address the antitrust issues in the country. And I really thought this was a place we were going to go a few years ago when you had the left, which thought that monopolies had too much power, and you had the right that thought the tech was abusing social media, right, and censoring free speech. And so there was a genuine hunger to address these absolute monoliths, these Goliaths that have grown in a Google and a Facebook and a what have you. And instead, both parties have been like, how can actually we get them to work for us? How can we control the beast and put them in our camp? And it just leads to worse and worse outcomes for your everyday citizen. So instead of embracing a zero-sum mindset, right, we got to get back to building. We got to get back to. I've been talking with, how I do in my free time. I talk to a lot of political people. I've been stressing the fact that if you're an elected official. I know some of what you do.
I know some of what you do in your free time. Quite frankly, I'm scared to know anything beyond what I know already.
You know about the adrenochrome and the.
I know you hang out at schools a lot. That's the extent of what I know about you. You
did put that on me. Yeah. Well, revenge is a dish best served cold, Victor. So I have something coming in for you. You wait for it. You'll be just walking down the street.
Before you continue, let me quickly respond. I agree with you 1,000%. And this is why it's so difficult. It's like we are talking about all the nonsense except the one thing that will change the incentive structure of our government and put elected representatives on the side of the people. And it's changing the incentive structure. But if I pay to get you elected, what is your incentive to turn around and go tax me? And by the way, this is a problem on both sides. This is a problem on both sides. Joe Biden in March of 2022 announced a wealth tax of 20 or 25% of people's wealth. It was all bullshit. It was a press release. It never went anywhere. You can go find it on the White House's archives. It was all bullshit. He announced this thing. He said he was going to do it. He announced it in March of 2022 in the middle of a stock sell-off, and it never went anywhere. And furthermore, there is an apparatus around our government that is purely there to suck taxpayer dollars, to lobby the government and suck away these taxpayer dollars, Chris. So my biggest issue with the wealth tax isn't that we shouldn't do it. It's that the current structure would be you tax a bunch of wealthy people and you're going to redistribute it not to people and not to services, but to a bunch of blood-sucking apparatus that is already structured to lobby government money away. And so we're going to redistribute it, but not to services that where we actually need to go. So on one end, I believe we do actually need to make government and government services more transparent first and more efficient. So it's like being in a boat and the boat has a bunch of holes in it. You don't go ask for a bigger sail, which is the wealth tax. You fix the holes in the boat first. Then you go get a bigger sail. And I think what's happening right now, is Donald Trump going to be the one to enable a wealth tax? No, 100% he's not. But if he wants to fix anybody could, but nobody does on both sides of the aisle. If he wants to fix the holes in the boat, that's fine. But the only way that the people are actually going to get a wealth tax or a billionaire tax is if they actually stop being divided as a people and go pressure their representatives for it. No benevolent leader is just going to step into that White House after being funded by billionaires and millionaires and then just go, I'm going to tax myself, all the people that got me into this office, and all the businesses that helped me to get elected. It's not going to happen unless there's public pressure to do it.
Yeah, but that's what these crises produce. Every time that you have, how should I say this? I have a working theory about left politics in America. America is naturally a center-right country, okay? The Republicans are the daddy party. The Democrats are the mommy party. Democrats make strides when there's a crisis. You see it with Obamacare. You don't get the Affordable Care Act until people lose their health insurance en masse in 2008 and go, you know what? Maybe having an option besides my employer is a good idea. You can either make social progress when there's something really bad happening and people say, you know what, the system isn't working, we need a new, fresh idea, let's try something different.
To be clear, you think the Affordable Care Act, you think that's on balance, you think is a net positive right now with the benefit of hindsight?
Philosophically, I think that having a public option is the right thing to do.
Philosophic, sure. I'm not talking ideology right now. I think you and I both agree on ideology.
Yeah, implementation hasn't worked out well. I think it says a lot that healthcare companies in the United States have outperformed the S&P 500 since the Affordable Care Act was put into place. It helped ingrain monopolies, in that regard, and it creates. So you just made a statement that was based on a false pretense that the Democrats make progress out of crisis, and you used an example that that's not at all. Came back and said it was an actual negative. Ideologically, it's progressive. No, it's not. In practical terms, it's not. That's not what I'm saying at all. Okay. Obamacare, Affordable Care Act is a net positive. Period. Full stop. Okay. Right. The implementation obviously didn't work out smoothly at the very beginning, and costs for people's insurance, private or public, have risen more than expected. But having more people insured for being the wealthy country that we are, I think is a good thing. I think when you look into communities with higher rates of health insurance, you actually see higher economic outcomes. You see lower rates of unemployment. Why? Because there's if you're stability. Insured, but you can't afford the cut. This is the problem that we're in right now, my friend. It's like we're talking.
we're not talking about like real circumstances. If I'm covered and I can't afford the copay, or I can't afford my upfront cost, I'm not really covered. I can't afford the medical costs that come along with my coverage. Am I covered in that circumstance, or am I not? Because I see a bunch of people that might have some sort of coverage that can't actually afford healthcare, and they go to these clinics, or they're wrapping their own arms instead of going into the doctor. Yeah, bro. I see a bunch of people getting into apothecary and eating honey and lemons versus actually going to the doctor, man. If you're covered and can't afford the care, are you actually covered?
I think that everyone should be covered. I think that we are a country that can afford the coverage. I think that we need a public option. So do I like the Affordable Care Act? No, it's not as far as I would go. It's incomplete. And, I'm not do you want to go as far as Medicare for all? Like Medicare for all we as people, as taxpayers, would spend less money on healthcare annually if we had Medicare for all than what we currently have. So if this is purely about cost savings, then why aren't we going all the way in that direction? And then you point to Canada and the UK and say, there's no real perfect healthcare delivery system. And I actually think if you take a step back, there are people on Twitter who is, I think it's a she. I think she outed herself on a podcast recently. Cremiu. It's like an old man with a taupe or sepia filtered picture that looks like it's from some Voltaire cartoon. Anyway, Cremiu. It's interesting. No, seriously, interesting follow. Like data analyst, leans center right to the right. But one of her recent posts yesterday was about healthcare expenditures and healthcare outcomes. And the data basically shows that there's not really any country on earth that has fully figured this out. There is some balancing act where you can have very high quality care at your fingertips on demand, but it's going to be super duper expensive. And there are countries where you have widespread care available to everyone, but if you need a specialist, it's very difficult to get a hold of them. And there are countries that have tried balanced approaches in between. And they have some moderate levels of success, but not everything is perfect. Our system is far from perfect. It's very expensive, and also you're not getting timely care. So are we really happy with it? No, I don't think so. But I think that there are, I think a lot about FDR's April 14th, 1938 fireside chat, when he was talking about why the Western world was sliding towards authoritarianism and fascism. And he made the point that when people don't have the ability to feed their children, they are willing to give up liberty for everything. Correct. And he says 100%. That people want 4 freedoms. They want the freedom from fear, they want a freedom from want, they want the freedom of speech, and they want freedom of worship. Okay? And so I think having healthcare helps achieve those 4 freedoms.
I agree.
And I think that if you want to build a robust society, then you need to give people, I don't believe in equality of outcomes, but I do believe in equality of opportunity. And that means
I think you and I, in many cases, we have the same. We are directionally very similar ideology, and it's just implementation. And I'm calling out that I think, from an ideological standpoint, I think the ACA is directionally right, in my personal opinion. The problem is just government has a really hard time fixing these types of big problems, and mostly because of the amount of trade-offs they have to make, right? If they wanted to fix the majority's problem, they could do it. But politics is about negotiating the majority and the minority, capital and labor. And you stick enough stuff in there that benefits labor, and then you end up with this monster that doesn't actually end up solving the original problem. It just creates new unintended consequences, which is what I'm speaking to. Chris, this has been a fascinating conversation, but I don't think we've answered the core question here, which is we have an S&P on discount. We got a NASDAQ on discount. We've got a lot of the Mag 7s that are now at, actually, give me just a second.
Did you hear his comment today? Did you hear Besson's comment after hours today? He goes, a Mag 7 problem isn't a MAGA problem. Just things going so much lower, man.
But I think Besson's been really clear. I mean, Besson has been.
I'm never listeing to a single thing he says again.
Why?
he said that we're going to get a cap on these tariff rates and they're not going to move. And that's just not what Trump told us today at the press conference.
I wouldn't listen to him on tariffs. I think Trump drives the tariff negotiation. But in terms of like, he's been super clear about where his focus and the administration's focus is, which is bond yields, and it's not on stocks.
What's going on with his 3-3-3 plan that he talked about so much over the past few months?
I think he might get. I think if he gets 1 out of 3 of those threes, I think we'd be lucky.
Yeah, so we'd be very lucky.
So I think when he said that, I think people are like, oh, okay, we got a plan. That sounds good. I'm like, so Ray Dalio was in Washington last week, I think, trying to get bipartisan support for this idea of 3% deficit to GDP, which we're at 6%. And I'm looking around going, does anyone know the pain that comes if you're going to try to cut these deficits in half and you got bipartisan support for that? That means defense spending in an era of hyper aggravated geopolitical tension. That means cutting services at a time when people are hurting out there. Like, this is going to be painful, man. And then 3 million barrels of oil or whatever there's 3 on oil was. We're already pumping max, bro. How exactly do you presume to do that? And then the 3% growth. How?
Yeah.
How?
We were already doing it. We're already doing it.
And you're cutting government spending, and you think we're going to just magically go to 3 because of a tax cut and 75 basis points in monetary policy easing? Not happening.
Well, that's what makes these tariffs and the implementation timeline so troubling for me, right?
Okay.
You know, it's when's the best time to buy flood insurance, Victor? When it's raining or when it's sunny out?
Mm-hmm.
Along that line of logic, we see consumer default rates, if it's for auto loans or number of people who are falling behind on their mortgages past 30 days, those numbers are going up, right? If you really wanted to implement the tariffs here, you have to do it in a way where you have an offset, where you have a monetary offset, where you have, dare I say, stimmy checks. I know that's something that we did in 2020, but like if you really wanted to do the tariffs then, Trump could have done this in April or May of 2020 and no one would have noticed because everything had already stopped. And so by the time that things were restarting, people are already looking for the differences in the supply chains. They could already source the goods because they're starting from zero. They're not starting from.
If you wanted to see if you wanted to see the Great Depression again, throw on tariffs at the exact same time the supply chain is shut down.
Oh, no. But you know what the difference is? You had 0% interest rates and you had stimmy checks going out to people, and the savings rate was through the roof. So people had a lot of disposable income to offset whatever cost of living increase there would be with this. And if you think about the number of people in the country and the number of spenders and the amount of money that the government wants to raise from this, tariffs are paid by consumers. And so this would cost about every family $5,000, right? So if you're going to incur a $5,000 cost onto a family, do it at a time that you can give them some monetary offset. Give it when you can give them some stimulus checks. Right now, you can't do that. So you're going to go into a period where consumer delinquencies and defaults are going up. And now you're going to have an additional layer, a burden. You're putting more weight on top of their shoulders at a fragile point. It can lead to a disruption in the system. It really, really can. Can this be done in a manner that I think Trump talks about? Yes. Is what he is trying to achieve, is this the way to do it? No, not at all. Not whatsoever. And the fact
so let me ask you this question. How could you be wrong? Where in your thesis and thinking could you be wrong? In other words, how can these events unfold to potentially put you on the wrong side of this?
Give me a country that's here by the end of the week that has negotiated a walk down from these tariff rates with the Trump administration. Exactly. I need to see and hear. I have been you know how difficult this is for me. I struggle to separate my political brain from my trading brain, although maybe I didn't this year because I've basically been long gold and bonds all year long. And I've avoided stocks for the most part. So maybe I didn't separate them. But I'm having now a very difficult time separating those two things. I'm kind of throwing my hand up in the air and saying, if this is really what you want to accomplish, why would you do it in this manner? Right? Like this, it seems like we're just swapping out Democratic Party elite for Republican Party elite. The deficit's going to be going up. They're looking for a $4 to $5 trillion expansion in the debt limit as part of the tax plan. There's no balanced budget coming. Fiscal year 2025, we spent more money than we did last year. Okay, what impact did Doge have? Besides disrupting things and making Elon Musk highly unpopular and potentially costing Republicans a seat in the Wisconsin race. Because, by the way, there were 2 statewide races in Wisconsin last night, and the one that Elon Musk threw all of his money behind, the Republicans did worse there. So, like, what are we doing here? Like, what is this actual stated goal? I see a lot of chaos, and it's not actually going to achieve what we want to achieve.
Okay, so in the case where
how would be wrong? How am I wrong?
Yeah, so
give me companies.
It's a two-part question.
Countries. Yeah.
How could you be wrong? And in that case, what does well first? In other words, where would you want to be positioned in the case where you get a bunch of people to the table, where this Nixonian madman strategy actually works, and other countries, instead of banding together, again, which I think is a 50-50 coin flip, I think this could work out very bad. If other people band together against the United States in retaliation, that's the worst case outcome, because then this could either spiral horribly to the downside and people trying to get the upper hand, or we capitulate and we get left out in a very weird position. So assuming that's not the outcome, assuming you get people to the table to negotiate, where would you want to be in terms of stocks or sectors or industries or companies? Where would you want to be?
If companies come to the table, or rather countries come to the table, countries come to the table to do this, then we drop the tariff rates down, don't we? So then why would any company change where their goods are manufactured?
Mm-hmm.
So those jobs aren't coming back to the U.S.
Well, I think that would be part of when they come to the table, you would have some sort of negotiation. And that negotiation, I'm guessing, would be a shift in manufacturing in exchange for a lower tariff rate, right? Otherwise, why would you lower the tariff rate?
So the EU is going to come to the U.S. and say, listen, we don't want this tariff rate. We're willing to order BMW and Mercedes to stop producing cars in Germany and start building them in the United States?
No, I think the way that I'm thinking this through, and again, I'm not saying this is my desired outcome. I'm trying to be objective and try to understand what the full range of outcomes in the distribution curve are. So let's say some country X has an already existing tariff on some American good of, let's say, 150%. And they just got slapped with some giant tariff, which is going to prevent them from getting to the demand of the world's most feverish consumer. And so perhaps they don't move manufacturing jobs here, but they lower their already existing tariff on some American good, which then makes it easier for investment in America for distribution overseas. That could be one potential outcome. Or it's an exchange for investment in America. You invest X amount of billions of dollars. You go on television with me in front of the American people and announce this, $10 billion investment. In exchange, I'll lower the tariff rate. I could see a lot of that stuff happening. I think those are the potential outcomes.
Again, so the German chancellor gets on TV with Trump and says, we're going to direct German companies to invest X billions of dollars a year in the United States and not produce this stuff here. We're going to take jobs out of our country and put them back into yours. Is that a political winning message for a politician in their home country? We're going to take jobs out of our country to give them back to the United States. Do you think that any politician is going to get reelected on that platform? What's the incentive there for them to do that, play that game? That's why China, Japan, and South Korea coming together to work in cooperation, to me, is a red bell that shows that this is not the United States throwing around its economic weight and demanding the rest of the world play by our beat. The rest of the world is saying, yeah, we can do this together without you. And that's when this falls on its face flat. That is a red flag. Again, we talk about, Trump talks about us being taken advantage. I mean, he said in his opening remarks, the United States has been raped by its friends and allies and enemies for several decades. Really? So what do we do? Okay, let's talk about a country that's in East Asia. Cambodia, for example. Cambodia is catching a lot of strays here. We come to an agreement with the Cambodian government to lower tariffs. So now we're going to make T-shirts in America, which if we made them in Cambodia, we could buy them for $2. Do we really think Americans are going to buy a T-shirt, same exact T-shirt here made in America for $20 versus those that are made in Cambodia for $2? No. So then we're still going to buy the stuff from Cambodia. The jobs aren't going to come back here. No one's going to open up a T-shirt manufacturing facility in the United States because you can't do it at the same cost. And again, the Cambodian government can't just tell their companies that you got to move locations. So unless we go to central planning, unless we all become Stalinists, no, none of this is going to work. No one's going to be compelled to move a private company's operations across sovereign borders simply to satisfy the whims of Donald Trump.
Okay, I don't think you're not answering. You're not participating in the premise of the question, which is fine.
I think it's a bullshit premise.
Yeah, I more enjoy you arguing your side of the point of view, or your point of view.
When I be wrong, when the S&P 500 is up at 5,800, that's when I'll be wrong. Until then, stocks are pricing in the future. It's a weighing and it's a voting machine, and the votes are coming in. And U.S. equities and the premium that U.S. stability and leadership affords the rest of the world is worth a 15% haircut on stock prices.
If Friday the S&P is at 5650, do you think you'll have this same? Do you think you'll have the same point of view, the same rhetoric?
Yeah, because my 5,800 calls won't be printing, so I'll be pissed for a different reason.
Okay.
No, I think that we need.
You're really digging in your heels here, and it's easy to do that on a down 3.5% day. But
I've been digging my heels all year long, though, because I haven't been playing in the stock side of the pool all year long for this reason.
So you've been a bear all day long. Here's the thing. I don't get it.
No.
You've been a bear, or who's the bear between you and Ilya? Is it you or Ilya? And if you're the bull, how are you right now? I'm getting turned around.
Because being a bull in gold, if I'm a bull in gold, that still makes me a bull somewhere.
Got it.
No, he's been very outwardly bearish on stocks. Me having my more discrete technical overlay. Again, I'm always going to miss the tops and bottoms. I admit that about myself. That's just not the trading strategy, and so you have to be comfortable with where you're going to lose and understand that's a fact of life. But I have, again, avoided long stocks for the whole technical reason about the 5 EMA and not closing above the prior day's high throughout February and March. And then I took a swing on March 14th at the short put spread, which is obviously not going to do well here, was the 5550, 5500. So we're kind of there. If we bounce from here, I'm not going to be too much in trouble. The long calls that I purchased earlier is just going to eat dirt. That's fine, right? So I'm tactically trying to pick some opportunities here, but I'm not taking the swing. The swings were like the last 2 years when it's just buy out of the money calls and go fishing. So I'm not doing that. I'm not blindly bullish like I had been. But we get another little bit of a pullback here. You really get the fear to set in. We get a few more weeks of this. 52, 5,300 in ES, give us another 4 or 5% downside. And then we see the whites in people's eyes. And I think the Trump administration is going to blink. And
I don't think they do. And I think what happens is this was very quickly going to shift from growth and just people freaking out over this knee-jerk reaction. I think that'll be the narrative tomorrow, because you can't be down 3 or 4% without that narrative. And then in a couple of days, we'll be talking about the Federal Reserve. People will shift their eyes to the fact that more easing is being priced in more quickly. And that this is opening up the path for the Federal Reserve to sort of to ease in monetary policy. And I don't know. Maybe you're right. You're a really smart dude, and I know you're really well researched.
I bought a 5,800 call today. That wasn't that smart.
But I try not to over-rotate on days like today. I think you got to be careful. But maybe you're right. Like you're trading with the trend right now, and the trend is down. It is for weakness. But
my rotation today again was just adding duration, right? So am I going to stick long bonds? Yeah. Am I going to stick long gold? For sure. I'm not rotating anything.
My word to the people would be, you're kind of supposed to start nibbling when things get cheap. It doesn't mean you need to be looking for the bottom. But if you liked Tesla at 500 and then you puked it at 300 and now you're looking at it and you don't want to touch it, and I'm not saying, I'm using Tesla as an example. All of this stuff is getting more fairly priced. It was ridiculous a few months ago. It was absolutely insane. It didn't make sense. And everyone's blaming it on this one single factor. And you can jump in with that bandwagon of a narrative if you want to. But the reality is it was unsustainable. Prices were unsustainable, and now they're getting more fairly valued. And if you don't have a list of things that you're slowly going to want to acquire at more reasonable prices, then this game is not for you. It honestly is not for you. If you're going to get freaked out by the markets and turmoil shit on CNBC, this game is not for you. When stocks get cheap, you're not looking for opportunities. This fucking game is not for you.
Did they do markets and turmoil? Hold on a second. You want to know what changes my tune? You want to know what changes my tune?
Chris Vecchio, dude, it's an honor and a pleasure. I enjoy this conversation more and more every week that we have it, my good friend. And not only did you bring the goods, and a strong, well-protected opinion or well-defended opinion, you brought the chest hair as well, man. So there was something for everybody on this podcast. If the people want more from you, and they should, tell them where they can go.
At CVecchioFX on Twitter or X, whatever we're calling it these days. You can always find me here on Tasty Live Monday through Friday, Futures Power Hour, 1 p.m. Eastern, Overtime Monday through Thursday, 4 p.m. Eastern, right after last call. Let Me Explain, Tuesday mornings, 9:40 a.m. Eastern, and then, of course, here with Victor on Wednesdays, The Price of Truth, 6 p.m. Eastern.
My man, I really appreciate this conversation. Thank you very much for doing this. For all of you out there, do me a favor, hit the like button before you get out of here. Subscribe to the channel if you haven't already. Follow our good friend Chris Vecchio on Twitter. I'm sure he's on Blue Sky as well. Follow me at Victor Jones. The Owen Jones is 0 because I like to be difficult. You can send me an email as well to tell me all of your grievances with my opinions. It's victor.jones@tastylive.com. I'll see you back here tomorrow, same time, same place, same great network, only on Tasty Live. Until then, peace.
Well, good morning. Welcome to A Brave New World. Yes, this has taken months. We have the new YouTube at last. It's all go from here, look.
This is it, A Brave New World. At Trade Live IG. Straight in there.
At Trade Live IG.